Check and let me know. Hari sir, check பண்ணுங்க. Visible, right? Does anyone have a phone which is working? Can you just quickly check if the YouTube is live? Audible? Perfect. இன்னும் பேசணுமா? Technology, I tell you, some days, no wonder I say still making you write papers. Stupid thing never works. Anyway, a very good morning, warriors. It's been a while, right? Been changing batches, but people come and go, that type model. Anyway, I think, sorry for the delay, we are 20 minutes late, but technology issues. Good. Welcome back. I think we met last at June. May? Someone old November, old May. I know attempt people are coming, no? So last Jan also will be there. Okay. I am standing here only. You are changing and coming back. That's the only problem. Anyway, let's make this attempt our last attempt. Let's not keep doing this every May and every June. Okay, that's not happening for everyone also. So with that intention is what we have started this marathon. I mean, that's what has been my practice over the years. For there's a special reason by keeping the marathon on 1st October, I think. It's because I think the students who are a part of this academy are writing something called as mock papers right now. You had just completed your costing yesterday. I'm not going to ask how it went. Let's not discuss about it itself. Okay, that's between you and the other faculty. But what I understand is your next mock of income tax is happening on 7th, something 7th or something. And so maybe 1 week's time will be a good idea for us to prepare this marathon. You take the marathon with you today, go tomorrow, revise the same pace. Day after tomorrow, you can start working on what you don't know. And then next 4 days, you can chill out and do IDT if you don't understand IDT. You won't. That's how it is, right? The point is, let's work with that model is what the idea is. And so we are going with this marathon. Certain rules which I have whenever I do this marathon. One, at this moment, your phone goes on silent. Okay. If you have anyone buzzing the noise and everything, I will get buzzed out. Okay. So let's not buzz noises. The only phone which can ring is my phone because I'm working today, unfortunately. Okay, beyond that, everyone else's phone goes on silent. No one else takes their phone out. For the next 7 hours, let the world assume that you're dead. Okay, no one should be calling you. No one should be discussing with you. Your other better half, how are you, what and all is happening after classes. Everything after classes, let's not happen it today. Okay, for the next 7 hours, tell her that you don't know her. She doesn't know you. Breakup has happened. Next 1 month also, let the breakup continue. Okay, after that, you go patch up. Generally, that's how it happened, no? Breakup, patch up, breakup, patch up, breakup, patch up. Okay, so patch up can happen after 1 month. Right now, you can sit on silent. Okay, rule number 1, keep your books, keep your mobile phones on silent. Rule number 2, ideally in a marathon, my request is that you discuss from your head. Okay, I don't expect that you open your book and you read it because at this point of time, when you're already starting with 1 month left in your hand, the provision should kind of be in your head. Okay, but yes, if you are the kind of person who is not prepared in the past, has been lazy in life, and all those things, you're free to use your books. Please feel free to use your books. The one who are not using your books, my request is have a pen and a paper in your hand. Have a pen and a paper in your hand. For the provisions which you can remember, good for you. Okay, leave that off. The provisions which you cannot remember, in the book you will have some page numbers, right? Just mark those page numbers. Tomorrow when you go home, you know that these pages is what you don't remember, right? So what you can do is today you can complete your marathon. Tomorrow you can go and revise just those pages. Just those pages. Day after tomorrow you're ready with everything. Yes, so day after tomorrow, then you do your fresh marathon once again, looking at the same videos, trying to do the same marathon, also trying to recollect the same provisions which you did not remember today. Okay, that would be the best way to do this marathon. Otherwise, it's not helpful. It's not helpful. The ones who are going to use your book and all and going to read it after me, probably fine for today. Probably fine for today, given the exception that tomorrow you again go and try this once again. Day after tomorrow, you again go and try this once again. 3 days maximum. If you try, 4th day, you know what the provisions are. Yes or no? Yes, keep that thing in mind. I do not want your books outside. If you want to take the chance, let's not have your books outside. The only thing which will be outside is one small register where you can write the page numbers. Is that clear for everyone? Yes. How many of you are not from my previous batch? Batch, whatever. Okay. My request, you will have your own materials. Okay. You are at a very last minute right now to change the material, so I would not recommend it. While I may come and tell you that my material is 198 pages, you can complete that in a single shot and all those things. At this point of time, it's not useful to you. Okay, no matter how small I make a material, at this point of time, changing a material of your faculty is not going to help you. So stick to your own materials. Stick to your own materials. At the end of the day, whether that faculty teaches or I teaches, the provision does not change. Okay, so how you have learned from your faculty remains the same. Follow that same material. Do not change the material at this point of time. Yes, if you have not even touched that faculty's material, okay, somehow something went wrong, don't trust the faculty, don't trust me also. In that case, you are free to use the materials. By the end of this marathon, let me put it right away itself so that at least the ones who are online can look at it. I will put the link of the PDF today itself. Okay, you can feel free to go and read from that also. Your choice. But please avoid changing a material at the last minute, because it becomes a lifetime of an issue to unread something and then reread something. And this is not the right time to do it. So for the ones who are having their own materials, feel free to use your own materials. If you don't remember any provision, put the page number of your material, not my material. Okay, put the page number of your materials. That would be the most helpful thing for you to do. Please do not change the material at the last minute is what my request would be. Is that clear, everyone? Yes. And yes, for the ones who are outside also, feel free to write the mock test paper on the 7th. If you want the link, if you want the PDF or the document, I will also send it to you. And I'm all open, kind of jobless right now. Not really, but yeah. If you feel like you want me to correct your papers, please feel free to send it to me on WhatsApp. I will correct your papers on the 7th also. Is that clear? Yes. The last rule for this marathon, unfortunately, given the time frame which we have right now, we will not be able to understand the provisions or discuss the concepts. Okay, so that's not going to happen for today. The only thing which we are here today is to revise the whole subject as we would have done at home. Okay, but yes, in case someone feels like you don't know a concept, why is it happening, what is it happening and everything, in my own YouTube channel, you'll find the fast track lectures of the May 23 available fully. Okay, all free of cost. Everything is available on the YouTube channel. You can go to that respective video and you'll find all the understanding and logics behind that concept. You can go and read it yourself. Clear, everyone? Yes. So for today, why, what and all will not happen. Just how will happen. We'll discuss the house, why and what you can discuss at your home using the fast track lectures. After that also, if you have some issues, feel free to WhatsApp me and I will take care of that. Clear, everyone? Yes, give me just exactly 1 minute. I'll drop the PDF and then we'll start over. Yeah, you can have your books ready until then. November 23. Yeah? Always keep forgetting. Perfect. And we are ready to go. Yes, let's start. There was something in my head. What was in my head? Yes, the last thing, see, while you people are reading for November 23, unfortunately, I am jumping attempts. Jumping attempts as in jump in attempts. Okay, so I have just now, yesterday did May 24 also. So kind of my memory is, with the latest things and the older things also. Okay, so I generally as a practice itself tell you wrong provisions in the class. Okay, for my ex-students or at least will know. Okay, so my job is to tell you the wrong provisions. Your job is to correct those provisions. Okay, at the end of the day, you are going to become chartered accountants. Yes, sir. So you are going to become chartered accountants. So your job is to correct me on the provisions. Somewhere I will stop, you will fill me up. Somewhere if I tell you wrong, you will fill me up. That's how the rule is. Last thing which I wanted to tell you is, generally last marathon, May 23, I got a little overexcited. While the marathon was for 7 hours, we completed it in 5.5 hours. Okay, konja overexcited. Okay, this time I'll try to go a little slower also. In case at any point of time you feel like I'm jumping too much, I'm running too much, let me know also. Here, whatever is in my concept book, if there is an illustration also, we'll do it today. So that we at least cover that 7 hours. Someone should feel, subject is tough also. Subject abhi easy pocha, then no one will have the worth of it. Yes or no? Hello? Yes, sir. And the worth achhe rakhno. Okay? You and me know that the subject is easy. But the world outside should never feel that the subject is easy. Illana see oda worth poidum. Okay, naalukku you will not get clients then. Yes sir. Yes, so you have to be careful about it. Outside we'll go and tell subject is stuff, pass panla, padikla, edume agla, everything we'll tell. We'll go silently pass and come back and we'll say, yeah, nothing tried, everything happened in life, all God grace and everything. Okay, our efforts should speak for ourselves, we should not speak for it. Yes or no? Yes, so let's not go and poach outside that I have done everything I know, world is happy, I am happy. No, let the world think that you are depressed, naalukku suicide da. Okay, let the world assume that, let everyone think life is bad. You know, it's easier to convince someone that you've passed after they think you're going to fail. Okay, it's very difficult to convince someone that you're failed after you have actually failed. Yes or no? Yes. So let the world think you're going to fail only. You're useless, worthless, all things in life. Okay, everything is less in you. Okay, naalukku pass panadukapro, then you go and tell, no, I'm brainy enough that I did not study but I still passed. Then they will, oh, you pass aitaru. Then they will think biggest. Yeah, that is how I am. I've always told in my class, no, first attempt everything, first attempt this, never studied, went for movies and all those things. What I did in my backside is not something for you to know. Okay, for you outside in the world, you should come and say, Rahul, chilled out person, cool person, blazer alla potrikaru, nalla vandirkaru. Everything should happen in that chilled model. Okay, keep that same flow in your level also. Let's not talk about yourself to the world outside. Let the world assume that the subject is tough. Let the world assume that the world is tough. Okay, you end up becoming the 10% in the, what is 10%? Population. Pass percentage. 10% of population is still bad only. Okay, you become the 10% in the pass percentage criteria and then you go and show off to the world. That's all the idea is. Yes, everyone? All right, perfect. This subject is going to come in your exams after the costing paper, which means you have one practical paper after this. So it will not be an issue. For the ones who are planning to do May 24, if you are planning to do May 24, it will come after the theory paper. Things will go ugly there. Right now, I don't have much comments to give. So we'll do one thing, we'll complete the marathon. And then in the end, I will also show you how the answer sheet looks like. And I'll give you some presentation tips and everything. You feel like following, you follow. You feel like, no, Rahul, I've done multiple attempts. I know better to present than you take care of yourself. Okay, I leave it to your choice. I will tell you how I generally feel a presentation will do well for you to pass. If you feel it works for you, works for you. If it feel it doesn't work for you, your choice. Try one more time. Yes, all right, perfect. From my book, we have this book of about 190 pages. In that 190 pages, I'm going to tell you some pages are still not relevant right away. So let's start with it. This is what the index will look like. My book will be having a little bit of split compared to your ICA study material. Concepts will be the same, but the chapters will be differentiated. In this, if I go, I have about 24 chapters. Ignoring the last chapter right away, not applicable for exam, which means one page saved. Okay, so 190 length, actually 3 pages are your summary pages. 187, one more removed, 186. We are going to discuss this 186 right away. Yes. Last thing, maybe I forgot. You will have sufficient breaks, one breakfast break and one lunch break. The breaks will depend on 9:30 or completing of the chapter, whichever is later. Another income tax either. Yes, it is whichever is later. Hey, I cannot leave a chapter in the middle and come and say pasikda valila polam. Varadu. Okay, we'll complete a chapter if you are in the middle of a chapter and then we'll go for the breakfast break. Same logic works for lunch. Possibly lunch pogumodu only one chapter will be pending, which is your useless tedious. Okay, because it is tedious. Yes, so we'll do only that one chapter after lunch probably. If things are going on fine, then that's what the plan of action will be. If not, one more chapter after lunch, most likely we should be done by 2-3 o'clock and then I'll sit and waste time along with you. Yes, sir. Yes, let's keep that in mind. Let's go forward with it. We're going to start with chapter number 1. Hey, I want everyone's participation here. Yes, I want chapter number 1, which is basics of income tax. Nothing for read in this chapter. The straightforward thing is income tax is a central tax or state tax? Central tax. Income tax is central tax. GST is a concurrent tax. Summa central it seems. GST is a concurrent tax. Income tax is a central tax. The one tax which is state tax is your agriculture income. Income tax comes and says that, boss, if you have any agriculture income which is earned from India, then it is exempt from income tax. It is taxable by the state. It is not taxable by me. Yes or no? Yes. Where does this income tax come from? It comes from an article number 265, which comes and says that no tax can be collected or levied except by an authority of law. Why levy, why collected and all we have discussed. Yes. Then they came and said, boss, there are two kinds of taxes. One is direct tax, one is indirect tax. Direct tax is progressive in nature. Indirect tax is regressive in nature. Something which levies on the income of the person. Direct tax. Something which levies on the consumption of a person. Indirect tax, something where you can shift burden. Indirect tax, something we cannot shift burden. Direct tax, customs duty. Indirect tax, equalization levy. Padikla final level portion. Yes, this is what you have. Then you have something called as Income Tax Act and Income Tax Laws. Income tax laws is bigger. Income tax laws comprises of act, rules, circulars, notifications, case laws. When it comes to acts, you have two kinds of act. One is Income Tax Act 1961, then Finance Act. Which exam for you, ma? 2022. It is Finance Act 2022. If you're writing May 23 and November 23, it is Finance Act 22. Planning for next year, we'll discuss about it later. Okay, your Finance Act 2022 comes into picture. For you, the exam assessment year is assessment year 23-24. 23-24 with the previous year 22-23. This is what the logic is. When it comes to act is passed by first Lok Sabha, then goes to Rajya Sabha, then goes to President for signing or consent. President for signing or consent. He does not give anything beyond that, and then it becomes an Gazette notification, becoming an act. Yes, for your exams, you have to read Income Tax Act 1961 along with the Finance Act 2022 for all your amendments. Then you have something called as circulars and notifications. In simple words, which is binding on the department? Both are binding on the department. But what is binding on assessee? Only circulars are binding on assessee. Nothing else is binding on assessee. Yes, notification is binding on assessee. Circulars are not binding on assessee, but assessee can use the circular provided it is beneficial. This is what we had when it comes to direct tax components: Income Tax Act, Income Tax Rules, Finance Act, circulars and notifications. When you have something called as rules are subset of act. Rules cannot override your act. Rules will come and tell you how to run an act. The rules are prepared by someone called as CBDT, Central Board of Direct Taxes. Then you have something called case laws, final level portion, so not relevant. You have some definitions for exam. Let's not worry about it. Never has come in exam. You have one definition called as an assessee. Okay, may come in your last question. The definition of assessee. We have come and clarified that assessee means any person who's liable to pay tax. Or any other sum under the act. Any other sum could mean penalty, interest, fees, late filing fees, and all those things. Yes, so any kind of person who is liable to pay tax or any other sum. It also includes those kind of people who are assessed for his income, assessed for his loss, assessed for his refund. 3 items: assessed for his income, loss, refund. Now, when you're talking about assessing, you're not just talking about his income or his loss or his refund. You're also talking about someone else's income, someone else's loss, and someone else's refund if it is accessible by him. Which means in the case of clubbing. Then I'm also including those kind of people who are liable as assessee in default. Assessee in default are those kind of people who are liable for TDS or advanced tax default. If you don't have a TDS or advanced tax default, then you will become an assessee in default, in which case you will also become an assessee. With me till here? Yes. If you are an assessee, you will also have another friend called as assessing officer. You both will play a game called as assessment. Where you will come and tell what your income is. He will come and tell some other income. You will go and fight about it. That will happen in an assessment. Then comes your charging section of the whole Income Tax Act, which comes and says every assessee is liable to pay income tax at the rates in force for the income earned in previous year in the assessment year. When they use the word previous year, for your exams, previous year is 22-23, assessment year is 23-24. In that assessment year of 23-24, they are coming and saying that, boss, assessment year is always for 12 months, but previous year may or may not be for 12 months. Because previous year can change in case you are starting your business just now or in case you are born just now. Previous year can be as small as 1 day also, can be as big as 12 months. Rahul, can it be more than 12 months? Not possible. Assessment year will always be for 12 months. That is how the policy is. Generally, previous year is 22-23, assessment year is 23-24. But in exceptional cases, previous year and assessment year can become same. This is a live case study called as Mr. Vijay Mallya and Nirav Modi. Vijay Mallya and Nirav Modi have come together for F1 racing. F1 racing has incurred losses. So Mr. Vijay Mallya decided to shut down the F1 racing and decide to leave India. When he decided to leave India, he has to do one thing. He has to shut down his business. For him to shut down his business, he has to sell the assets. So he sold the assets, shut down the business, wanted to leave India, called the friend Doraemon. Doraemon came with a ship, took Vijay Mallya, left India. Yes, what is happening? AOP BOI created in the same year, discontinued in the same year. Individual leaving India with no intention of coming back. Business or profession discontinued in the previous year. Sale, charge, lease or disposal of assets with an intention to avoid taxes. Non-resident coming to India, leaving India. Non-resident shipping coming to India, leaving India. Yes, these are all the cases when you have for previous year or assessment year. Then you have something called as income. Income has been defined in the Act as revenue minus allowable expense. It is revenue minus your allowable expense. If you have an allowable expense, you claim the expense. If you do not have an allowable expense, don't claim the allowable expense. You have income in the form of legal income also, illegal income also, capital income also, revenue income also. If it is a revenue income, always taxable. Capital income, if it falls into 224, then it is taxable, which means you need to define what is a capital receipt or a revenue receipt. Revenue receipts are those items which happen normally. Capital receipts which happen once in a while. Yes or no? Yes. Then if you are going to generate an income, it is revenue income. If you are using that item for generating income, it is a capital income, which means if you have an asset, if you use the asset, then it is a capital receipt. If you directly generate, it's a revenue receipt. If you are into share business, if you are not into the share business, then it is capital receipt. If you are into share business, then it is revenue receipt. Yes or no? Yes or no? And then they are coming and saying some examples. One example is gift. Gift is capital. Gift is capital. Compensation given for late acquisition of an asset, capital. Yes or no? Termination of employment, capital. Termination of agency, sole agency, capital. Termination of one agency in many agencies, revenue. All these are examples given to you. You have to decide whether it is capital or revenue. Basis then a discussion will happen whether it is taxable or not taxable. Rahul, how to decide taxable for subsequent chapters? Then they come and use the word total income. In your exams, total income means income from salaries, house property, full form of PGBP. It is profits and gains of business or profession. And or, yes, first and adukapram or, profits and gains from business or profession. Then you have capital gains. Final one is garbage called as IFOS. You add all the 5, you will get gross total income. In this you will reduce some items. Does someone remember the golden rules of taxation? Yes, step number 1, identify requirements of the question. Step number 2, identify the assessee and his residential status. Step number 3, determine whether the income is taxable or not. Step number 4, classify the income into 5 heads of income. Step number 5, provide any kind of deductions or exemptions provided in that specific head. Item number 6, at this point of time you will get your gross total income, then you have to club someone else's income. Item number 7, provide for any kind of losses or unabsorbed depreciation. Step number 8, you give your chapter 6A deduction or 10AA deduction, you will arrive at your total income. After you arrive at your total income, step number 9 is compute your taxes as per normal rates in force. Then compare with AMT, whichever is higher. Then you will compare with the 115 BAC, whichever is lower. For your attempt, 115 BAC is still an optional regime. Unless and until question comes and clarifies, you have to do both. If question does not clarify anything, you'll have to do both. Choose whichever is lower. So it is step 9 or AMT, whichever is higher, compared with step 10, whichever is lower. You will get your final tax liability. This final tax liability, you will reduce something called as TDS, TCS, advance tax, self-assessment tax. All these will be your credits to reduce. After you reduce all these, you will now know your tax payable. Add something called as interest. You will arrive at your final tax payable. This final tax payable, pay it off and shut down, and then file your return. With an amendment of the current year called as updated return. Where if you want to change your return in favor of department or assessee, department. In the favor of department, you will find something called as updated return. What is updated return? We'll discuss. This is what your golden rules is. Follow the golden rules. Yes or no? This marks the end of your chapter number 1. All clear? Any doubts? Can we go forward? Yes. with your chapter number 1 getting over, we are going to jump in our golden rules to step number 9, which is our rates of taxes. I want everyone's attention here. You're doing rates of taxes. In your rates of taxes, you have to learn about all rates of taxes, but for exam purpose, only one rates of taxes is important, which is your individual. Rahul, balance, why should I read? Because you have MCQs. You have to read the balance also because you have MCQs, but other than that, you only have to read individuals. You have to read individuals. With me till here? Yes. How do you do this? You have to start from individuals, HUF, AOP, BOI, AJP. 5 people together. You have a individual slab rate of first 2.5 lakhs at the rate of, after 2.5 to 5%, after 5 to 10, 20%, after 10, 30%. This is what your normal rates of taxes are. But yes, if you have to choose the optional regime called as 115 BAC, rates become 0 to 2.5, 0, 2.5 to 5, 5 to 10, 10%, 10 to 12.5, 15, 12.5 to 15. Told you, it is 0 to 2.5, 0, 2.5 to 5, 5 to 7.5, 10, 7.5 to 10, 15, Marla, loose. Try again. It is 0 to first 2.5, it is 0, then 5 lakhs, it is 5, 7.5 lakhs, 10, then 10 lakhs, 15, then 12.5, 20, 15, 25, above 15, 30, appadi. On the cha. Yes, this is what your slab rates are. Keep this in mind. Now, here when you do your slab rates, the income tax is coming and saying that, boss, whenever you do your slab rates, these are your normal rates of taxes for normal rate of incomes. You also have some special rate of incomes. First special rate of income is capital gains. In capital gains, you have 112A taxable at the rate of 10% in excess of 1 lakh. Then 112 taxable at the rate of 20%. Then 111A taxable at the rate of 15%. Any other short-term capital gains comes in the slab rates. Then you have something called as winnings 30%. Then you have something called as unexplained income. It is 60%. It is 60% tax rate plus mandatory 25% of surcharge plus 4% of cess, which becomes 78%. Now, whether you opt for 115 BSc or whether you opt for normal, these rates prevail. You have to give them the priority. The moment you have found out your normal rates of income as per the normal regime, you also have to take 2 more people. One is an individual more than 60 years, then individual more than 80 years. Now, when you talk about individual, please understand it is not just individual, it is resident individual. Resident individual, they are coming and saying that, boss, if you are a resident individual more than 60 years but less than 80 years, you have a slab of 0 to 3 lakhs, 0, 3 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%. After that, it becomes 30%. But if you are a resident individual aged more than 80 years, then you have 0 to 5 lakhs, 0, 5 lakhs to 10 lakhs, 20%. After 10 lakhs, it becomes 30%. This is what the rules are. In this rules, they are coming and saying that, boss, how do you check for 60 and 80? Until the 1st April of the assessment year. If your birthday falls on the 1st April of the assessment year, then you have completed that age. For your exams, it will be 1st April 1963 and 1943. If it is 1st April 1963, then you are 60 years of age. If you are 1943, then it is 80 years of age, which means you will be eligible for the highest slab. Higher slabs. Please keep this in mind because this will come as an MCQ. That if your birthday falls on 1st April 1963, then anything prior to that will become 60 years. If your birthday falls 1943, any prior to that will become 80 years. Which means you will now be eligible for 3 lakhs or 5 lakhs. But please keep this in mind that this is only eligible for resident individuals, not eligible for non-resident individuals, and only eligible if you opt for normal regime, not eligible for 115 BSc. If you are in 115 BSc, whether you are resident or non-resident doesn't matter. Whether you are 60 or 80 or 150 doesn't matter. Everything is 0 to 2.5. Yes, the moment you have identified your slab rates, you then have to ask yourself, are you rich or poor? Are you rich or poor? If you are poor, you will get something called as rebate. Rebate in your income tax starts for a resident individual with an income up to 5 lakhs. Income up to 5 lakhs. If your income falls up to 5 lakhs, then you will be eligible for a rebate of 12,500 or the actual tax, whichever is lower. But the problem is, whenever you get a rebate, you don't get rebate on 112A. You don't get rebate on 112A. 112A or LTCG is always taxable. You have to bare minimum pay the tax along with the cess. Yes or no? Yes, we have done some big examples on that. Yamagurka. Keep it in mind. And then if you are not poor, and you're not middle class, you're now rich person. The moment you are a rich person, income tax levies something on you called as surcharge. Now please understand, surcharge is not on a slab rate model. Surcharge is on a threshold model. Which means if your income is anywhere up to 50 lakhs, you will have zero surcharge. If your income is between 50 lakhs to 1 crore, you will have 10% surcharge. If you have 1 crore to 2 crores, you will have 15% surcharge. Anything beyond 2 crores will become, anything 2 crores to 5 crores will become 25% surcharge. 5 crores kamala, it will become 37% surcharge. Now please understand, this surcharge is directly levied on the tax itself. Which means you do not have to check for the slabs. Number adhikma acha, automatic surcharge will apply. This surcharge is applicable same under your old regime and your new regime. Alternate or optional, whatever you call it. Yes, all your old regime and 115 BSc, same surcharges, same rebate, no changes in that. No changes in that. With me till here? Yes. Then they came and said, Rahul, if you are going to levy surcharge, surcharge normally the 25 and 37 is called as enhanced surcharge. This enhanced surcharge is not applicable on 4 or 3. 4. It is 4. Comes and says 112A, 112, 11 money and dividend income. Yes, 112A, 11 money, 112 and dividend income. For your attempt, 112 is an amendment. Keep it in mind. It will definitely come for your MCQs. So they come and say that, boss, if you are under 112A, 11 money or 112 or dividend income, you will not levy the surcharge of 25 or 37. You will only maximum levy surcharge of 15. And if you are going to check your surcharge on other incomes, the other income should be checked on a standalone basis. If your income goes beyond 2 crores, what happens? If your income goes beyond 2 crores, split between your other incomes and these 4 incomes. If your other incomes standalone basis goes beyond 2 crores, then 25. If it goes beyond 5 crores, then 37. If it is anything lesser than 2 crores, minimum 15. You cannot go to 10, you cannot go to 5. You cannot go to 10, you cannot go to 0. You have to levy that minimum 15 the moment your income goes beyond 2 crores. We had a chart on this. Yes, ignoring the chart, let's do the illustration and let's see which one is right. Everyone? Yes, let's do the illustration. I'm going to show you the incomes. You're going to tell me the surcharge rates. With me? Yes, let's do the incomes. On the left side is called as specified income. On the right side is called as other income. The total is given to you as 40 lakhs. The amounts are in lakhs. You are going to tell me what is the surcharge for my normal incomes and what is my surcharge for my special incomes. Yes. The first one is coming and saying that your special income is 15, your other income is 25, your total income has become 40. Now, when your income is 40, do you have a surcharge? No. So therefore, surcharge on special will become 0. Surcharge on others will become 0. Coming to the next one, it comes and says your specified is 15, your other is 75. Total has become 90. When your total has become 90, you are liable for a surcharge of 50 to 1 crore or the 10%. Now, at this point of time, enhanced surcharge has not come into picture, so 10% on both. So therefore, it will be 10 on 10. Yes, sir. Next one. Then you have 15 and 160. Total becomes 185. Now you are in a slab of 1 crore to 2 crore. Surcharge becomes 15. You have still not touched the 25 and 37. So no problem. 15 will remain for both. So therefore, it is 15 and 15. Then you have something called as 15 and 395. Total has become 410, which means 4 crores and 10 lakhs. Now you have seen that the income has gone beyond 2 crores, which means enhanced surcharge will come into picture. The moment that comes into picture, you have to split between your special and normal. Special will become 15. Normal will become standalone basis. It is showing 395. Above 2 crores, less than 5 crores, therefore 25. Then they're coming and saying you have special of 15, you have others of 3. come here. மேல இருந்து ஆரம்பிச்சேனா சரி ஓகே வராது சரி விட்டுரு. You understand ma? Yes, then you have 15 and 565. You have 15 and 565. With 15 and 565 it becomes 580. Your income is now 5 crore 80 lakhs. When your income becomes 5 crores and 80 lakhs, special income will always be 15. So special income is 15. Other income standalone basis is showing more than 5 crores, therefore 37. Then you have 60 and 30. 60 has become special, others has become 30, total has become 90. This is now come back to the slab of 10%. You are under 1 crore. You are under 1 crore, so it's come to the slab of 10%. Therefore, it is 10 for both. It is 10 for both. Then they're coming and saying 60 and 135. Total has become 185. It is within the slab of 1 crore to 2 crore. Therefore, surcharge is 15. Have you touched the 25? No. Therefore, 15 for both. 15 for both with me. Next, you have 60 plus 350. Total has become 410. 60 is special, 350 is others, total has become 410. Your now income is more than 2 crores, which means you have an enhanced surcharge, but the enhanced will not apply on special income. So 60 will become 15. Others is how much? Others is how much? 25. Why 25, Rahul? Standalone basis it is showing more than 2 crores and less than 5 crores. Then you have 60 and 520, 60 becoming special, 520 becoming others. When you have 60 and 520, what will happen? You will have to come and say split. You have to come and say split. 60 will become 15%, 520 will become 37%. Then you have 130 and 55, 130 becomes special, 55 becomes others, total becomes 185. With your total becoming 185, you are now again back to 2 crores. You are again back to 2 crores. Surcharge has now become 15. 15 for both. So therefore 15 and 15. Then you have 130 and 280. Notice this carefully. You have 130 and 280. You have 130 of special, 280 for normal. Therefore total is 410. You are now more than 2 crores. Therefore enhanced surcharge should apply but will not apply on special. Special will become 15. Special will become 15. The other will become 25 because it is more than 2 crores. Come to the last one, it comes and says 130 and 450. Now notice your income is 5 crores kamala. Your income is 5 crores kamala, which means special will become 15. Others will now stop at 25. Why is Rahul? Why is others stopping at 25, Rahul? Because standalone basis it is not more than 5 crores. Standalone basis it is not more than 5 crores. Standalone basis it is still standing at 2 crores to 5 crores. Therefore you will become 25. You will become 25. Come to the last three. You tell me the last three. If you know the last three, then your answer is sorted. Then answer is sorted. You have 220 plus 190. Total has become 410. Total has become 410. If your total has become 410, you are now liable for enhanced surcharge but not applicable on specials. So therefore specified will become 15. Now others is 190. Others is 190. Standalone basis it is showing less than 2 crores, which means minimum 15. Minimum 15. Can we go forward? Yes. Then they're coming and saying on n column it is 220 and 360. Standalone basis it is 220, which means 15. 360 is 25. Why, Rahul? Because while the overall income may be 5 crores, I cannot pay tax on the other income. So therefore it will become 25. It will become 25. Now look at the last one very carefully. The last one is what will come for exam. The last one is what will come for exam. It comes and says that your special income is 525, your other income is 55. Total has become 580. Now you are in the highest slab. You are in the highest slab, but the special income ka surcharge is only 15. So left has become 15. Left has become 15. Now right is showing 55. Right is showing 55. Can you come down to 10? No. Why can't you come down to 10, Rahul? Because bare minimum 15 is mandatory. Bare minimum 15 is mandatory, which means 15 will become the number here. 15 will become the number here. Be extremely careful about the last illustration. Most of the people make a mistake here. They end up making it 10 or 0. They end up making it 10 or 0. You will lose marks. You will lose marks. Please be extremely careful on this. Clear, everyone? Any doubts? No? Can we go forward? Yes. This are your slab rates for your individuals, HUF, AOP, BOI, AJP. Yes. While you might notice there is an amendment here in the AOP part which comes and says that if you have an AOP which is a company, therefore you'll have a surcharge rate lesser and all those things. Somewhere here it is. Yes. Ignore all those things. Doesn't matter. Does not come in exam. AOP level discussions and all is there for final level portion. Is there for final level portion, not for inter level portion. So we don't have to worry about it. Moving on from our individuals, you now have something called as firms. You now have something called as firms. Income tax comes and says that if you are a firm, you will have a mandatory liability tax of 30%. I have no basic exemption limits, which means everything is liable for 30%. Everything is liable for 30%. But if you are a rich firm, then you have a surcharge of 12% coming excess of 1 crore. 1 crore is the revenue or the turnover or the income. It's the total income. It is the total income. If you are not a firm, you are a company. In case of a company, you have to split yourself into domestic and foreign company. Foreign company becomes 40. Domestic becomes 25 or 30. How do you check for 25? It is previous year or previous year. It is previous year. Therefore, for your attempt, it is 22, 23. Previous will become 21, 22. Adhik previous will become 20, 21. So, for your attempt, it is 2021. For your attempt, it is 2021. If the 2021 or the turnover becomes 400 crores, then it is 25. If not, it is 30. Please understand, I am looking at turnover, but the tax rate is on income. Okay. So, if the turnover is less than 400 crores, the tax on the income will become 25. If the turnover is more than 400 crores, tax on the income will become 30. That is what the rule is. Clear? Yes. And otherwise, if you are a foreign company, then it is 40%. That's all the answer is. That's all the answer is. Now, for the ones who are coming from another academy, you might have also seen some other rates in this company called as 115, BAA, BAB, 15, 22 and all those things. Please ignore for exam purposes. Again, final level portion. Okay, final level portion. You don't have to worry about it. It will not come in exam. It will not come in exam. Assuming you are a rich company. Assuming you are a rich company, you are now liable for surcharges. When it comes to surcharges, income tax comes and says that, boss, check what your income is. If your income is 0 to 1 crore or 1 crore to 10 crore or above 10 crores. If it is 0 to 1 crore, no surcharge. If it is 1 crore to 10 crores, domestic will pay 7, foreign will pay 2. If it is more than 10 crores, so domestic will pay 12, foreign will pay 5. That's what the rule is. That's what the rule is. If you complete all those things, then you have your marginal relief coming into picture. Income tax comes and says that, boss, after you complete your basic, after you complete your rebate, after you complete your surcharge, surcharge may also have certain issues. It may also have certain issues. The issues can be in the form of you coming on an income which is very close to the slab. It is very close to the slab where the surcharge will change, and the surcharge should change. The surcharge should change. If the surcharge is not changing, marginal relief will not come. Marginal relief will not come, which means you should be at an income which is like 1 crore 1 lakh, 51 lakh, 2 crore 2 lakhs, 2 crore 1 lakh, and the Mari scenarios. If you are at somewhere at that limit, what will happen is income tax will come and say that if you try to compute taxes, you will realize that your income is showing lesser than the tax which you have to pay. The income is showing lesser than the tax which you have to pay, in which case income tax comes and says it's not required for you to pay the whole of the tax. It is enough if you pay the income fully to me. If it is enough if you pay the income fully to me, I will surrender off the tax for you. I will surrender off the tax for you. The surrendering of tax is called as marginal relief. It's called as marginal relief. Let's look at an example very simply. It comes and says that you are a person who's having an income of 51 lakhs. I tried to compute my tax. My tax came as 14 lakh 74,000. Now understand, marginal relief will come before cess. So please do not compute your cess. Cess is coming afterwards. Cess is coming afterwards. You're looking at your income. Income is showing 51 lakhs. Tax on that was 14 lakh 74,000. You tried to check the tax of 50 lakhs. You tried to do what? Check the tax of 50 lakhs. You check the tax of 50 lakhs, it came as 13 lakh 10,000 rupees. Now notice the difference. How much is the difference? You're getting 1 lakh 64,000. You're getting an income excess of 1 lakh 64,000. But if you notice, you computed tax on 51, you computed tax on 50, which means there was an increase in income of only 1 lakh. I increased my income by 1 lakh. I have to pay tax of 1 lakh 64,000. Does it make sense to you? Income tax came and said, boss, if it's not making sense to you, do one thing. You don't have that income itself. You don't have that income itself. You give off the income to me. You give off the income to me. The moment you give off the income to me, the extra tax I will avoid for you. I will avoid for you. So I came and said, okay, sir, let's agree to that. So what happened is I came and told him, I will pay you the whole 1 lakh rupees. Instead of that, you will exempt for me 64,000 rupees. So this 64,000 rupees becomes your marginal relief. So you started with 14 lakh 74,000. You are going to remove 64,000 rupees. The number will become 14 lakh 10,000. The number will become 14 lakh 10,000. Why is it 14 lakh 10,000, Rahul? Understand, on 50 lakhs your tax was 13 lakh 10,000. I surrendered 1 lakh rupees worth of income, so the tax became 14 lakh 10,000. You can do it either ways. If you do from the top also, the number is the same. If you do from the bottom also, the number is same. You will have to take the tax as 14 lakh 10,000. On this you will levy cess and then pay the final tax. Pay the final tax. Rahul, this rule applies whether at whichever slab you are. Whether at whichever slab you are you at 50 lakhs, 1 crore, 2 crore, 5 crore, doesn't matter. Everywhere this will apply. You will have to make this check provided your income is very close to the slab. Provided the income is very close to the slab. Rahul, till what number should I check? Don't worry about it. I say I will only give you the known numbers, which means it will be 1,50,000 maximum. Okay, so it will be 2 crore 1 lakh, 2 crore 2 lakhs, maximum that number. Adukku keela pogadu. Adukku mela pogadu. You don't have to check against that. You don't have to check against that. And off late, I've been noticing marginal leaf questions only come as an MCQ. Only comes an MCQ question. They do not come as a full question, which means the question will be very apparent. They'll come and say there is a person earned an income of 51 lakh, compute tax. That's all. Now they very clearly come and told you it's 51 lakhs. Obviously, he will not give you 1 mark for you to compute the tax on your calculator. He's giving you that 1 mark rupees for finding out marginal relief. Yes, so be extremely careful on those questions. Don't think that I say stupid to give you some small questions like that. That will not happen. That will not happen. They have some logic behind it. They have some rules behind it. Let's focus on the rules also. Clearly, yes. This is what your marginal relief is. Please understand this marginal relief is applicable whether you are an individual, HUF, AOP, BOI, AJP, company, firm, every single person, as long as you have the incomes. Which means in exam, if they want to test you marginal relief, they don't necessarily have to test you for individuals. They can also test you for others. So please be extremely careful about it. In the exam, Rahul, will they come and tell me to find marginal relief? No. Your responsibility. You have to be careful about the fact that the income is very close to the slab. Okay, this whole chapter works on your method. Income tax will only, this ICA will only come and tell you the incomes. Your responsibility to find the whole tax. Whether you give rebate, whether you give surcharge, whether you give cess, whether you don't give cess, whether you give marginal relief, whether you do 1128, doesn't matter. Everything is your responsibility. ICA will not give you a single hint against it. You have to take care of the whole thing. Is that clear, everyone? Yes. After you complete your marginal relief comes your special rates of taxes. Before that, we have something called as cess. Cess comes and says that boss, cess has to be levied at the rate of 4%, regardless of what your income is, regardless of who you are, everything will be levied for a cess. Now, cess is applicable on the final income. Cess is levied on, the final tax is levied on the final tax, which means it is levied after basic, after surcharge, after rebate, after marginal relief. Final compute everything, you will get a cess. 4% is on the final number. You do that, the answer will come out perfectly fine. But at any given point of time, please understand there are 2 golden rules in this chapter. Golden rule number 1 comes and says that the total income should always be rounded off to the nearest 10. And total tax should always be rounded off to the nearest 10. Rahul, will I say I come and tell you that? No. That is also your responsibility. Total income should be rounded off. Tax should also be rounded off. You do the round offs, you get marks. You don't round off, half a mark lost for you there itself. Clear, everyone? Yes, this is what your whole chapter looks like. In this last part of the chapter, we had something called a special rates of income tax. We already discussed the special rates of income tax, but there are some rules against it. So let's discuss the rules. The rules basically in the special rates of income tax are coming and saying that, boss, whenever you have the special rates of income tax, there are certain rules. You have to mandatory pay this tax. This is not optional. You will not get any expense against these taxes because these are final taxes on the revenue itself, except if you are in capital gains, because capital gains has their own mechanism. You follow the mechanism. After that, no more taxes. No more expenses. You have to follow the same rule. At any point of time, these special rate of incomes will not be eligible for anything called as a chapter 6A, will not be eligible for anything called as chapter 6A and 10AA, or will not be eligible for losses also. But please understand, losses are eligible on capital gains also. But if you have a loss from capital gains, then it is not eligible to set off against any other incomes. We will discuss that when we go to set off chapter. But this is what the rules are. You cannot set off any losses against your other incomes like casuals or unexplained. They are not eligible. But any kind of income is eligible for rebate. Except for one income called as 112A. Every other income is eligible for rebate. At the same time, they are coming and saying, but surcharge is the same for everything except for unexplained income, where it is mandatory 25. Please understand, there could be a possibility that your income will also have a surcharge even if it is less than 50 lakhs. What are the scenarios? If your question has an unexplained income. If you have an unexplained income, regardless of what your income is, you will have a mandatory surcharge of 25%. No rules against it. There is mandatory there. But still, even if it is unexplained income, you can claim a rebate. And the most important concept from exam perspective is your set off of basic exemption limit. What? Set off of basic exemption limit. Income tax comes and says that when you have special rates of incomes, normally speaking, they are not your basic exemption limits. But if you do have capital gains, what do you have? Capital gains. And I find you as a resident person. Who? If I find you as a resident person and you have capital gains, I give you the benefit that if you're not able to utilize your basic exemption limit, you can utilize your basic exemption limit by using your capital gains. By using your capital gains, if you do that, then your tax will automatically come down. Your tax will automatically come down. Rahul, in what sequence should I do it? In the sequence of whichever is beneficial. I'm not going to tell you what is the beneficial part. You already know from the sums which we did. Yes or no? Yes. From the sums which you have done, you automatically know what is beneficial. Normally speaking, unless you have a rebate, normally speaking, the best beneficial is to set off the capital gains of 20%, then short term of 15, then come to 10%. That's what the priority of set off is. Please understand, this set off can only be done with your capital gains and can only be done if you are a resident individual. Cannot be done if you have special other incomes like casual or earnings. Those will mandatorily be liable for taxation. You cannot set off your basic exemption limits against it. Yes or yes? Everyone following me here? Yes. This marks the end of your chapter number 2. Any doubts here? Everyone is clear? Yes. What is the time showing? 1 hour? Perfect. Right on track. Can we go to the next one? Moving to the next chapter called as residential status and scope of total income. We have moved back from our step number 9 and 10 to step number 2. We've moved back to our step number 2, which is identifying your person and his residential status. Identifying person already done in your first chapter. We are moving back to the next one called as residential status. Now in the residential status, I don't have a policy to discuss the provisions. I only have a policy to discuss the chart. Chart is a little twisted in my book. You look it from your book. If you remember it from your head, you remember it from your head. Okay. The policy comes and says that if you are an individual, you have to check your residential status. Residential status check pandradhikku, the best and the basic condition is to check for 182 days. If you are going to stay in India for more than 182 days, come to the right side. You will become a resident. If you are not staying for 182 days, you come to the left side. In the left side, you have to check for 3 charts. Chart number 1 comes and says that you are an Indian citizen leaving India for employment through member of an Indian ship. If you satisfy those 2 conditions or any of those 2 conditions, you are now a non-resident directly because condition number 2 is ignored. Now you are in the second chart. The second chart comes and says you are an Indian citizen or a person of Indian origin. Hold. If you are an Indian citizen or a person of Indian origin will be that kind of person whose grandparents or parents are born in undivided India. If your parents or grandparents are born in undivided India, then you are a person of Indian origin. If that is not the case, question will come and tell you that you are an Indian citizen. If you are an Indian citizen or a person of Indian origin, I will come and ask you, tell me whether you are from outside India coming to India for a visit, or you are doing something else. If you tell me, no, Rahul, I'm from outside India, I'm coming to India on a visit, I will come and ask you, okay, now tell me what is your Indian income. I will come and ask you what is your Indian income. You will come and say me, Rahul, my Indian income is less than 15 lakhs. I say, okay, then you are a non-resident. You say, no, Rahul, my Indian income is more than 15 lakhs. I come and say, okay, now come and tell me, have you stayed in India for 120 days in the previous year and 365 in the last 4 previous years? If you tell me, yes, Rahul, I've done that, you directly become an RNOR. You don't satisfy that, you are now an NR. Rahul, you come and say, no, I am not from outside India visiting India. I am not satisfying any of those conditions. I'll put you in a slab called as others. I will club you with another person called as foreign citizen. Add both of them. I will ask you one simple question. Tell me if your stay in India is 60 and 365 in the last 4. You satisfy that condition, you will become a resident. If you don't satisfy the condition, you will become a non-resident. Now here you have a resident. Right side you had a resident. Club both together. Ask for 2 conditions. Condition number 1 says you stay in India for less than 730 days in the last 7 years. Stay in India for less than 730 days in the last 7 years. Or you have been a non-resident in at least 9 out of the last 10 years. Now you have to satisfy any one condition, you become RNOR. You satisfy none of the condition, you become ROR. At the same time, wherever you learnt about the non-residents, club all them together and check if you are an Indian citizen. If you say, yes, Rahul, I am an Indian citizen, then I'll ask you, tell me what your Indian income is. If you tell me my Indian income is more than 15 lakhs, I come and ask you, okay, tell me, are you not liable to tax in any other country? You say, yes, Rahul, I am not liable to tax in any other country. I'll come and say, okay, now you are a deemed resident. And because you are a deemed resident, income tax deems you as an RNOR. Did something go wrong? Did someone touch something? Okay. You become a deemed resident and you are an RNOR. You are an RNOR. With me till here? Yes, this is what the conditions are. Now, in all these conditions, income tax is coming and saying that, boss, whether you are staying in India or not will determine when you left and when you came back. The date of departure is considered in India. The date of arrival is also considered in India. The date of departure and the date of arrival both are considered in India. Yes, but at the same time, income tax is also coming and saying that, boss, when your date of departure and date of arrival are given to you, then you have to check for what is called as your crew member. You have to check for what is called as a crew member. If you come and tell me that, Rahul, if you are a crew member person, then in that case, whenever you are a crew member, you will come and tell me that the date of departure and the date of arrival will also become outside India. Will also become outside India, because if you're a crew member leaving India, then in that case, the date of boarding the ship till the date of signing off from the ship is all considered outside India. It's all considered outside India. Yes or no? Yes or no? At the same time, they're coming and saying, Rahul, how are you not liable to tax in India? Question will come and tell you that. Question will come and tell you that. They're coming and saying that, boss, if you're not liable to tax in India because of domicile, residency, this, that, and all that nonsense, doesn't matter. Doesn't matter. In your exam, they will come and tell you that you're not liable to tax in India. You directly come and treat them as a deemed RNOR. But please understand, deemed RNOR conditions only apply in case you are a non-resident first because of the above conditions. You cannot jump those conditions before you check for deemed RNOR. Okay. Don't come and say that, Rahul, the question comes and says not liable to tax in India, therefore I directly take him as RNOR. There might be a possibility that the person would have been an ROR also. Yes or no? Yes, when that condition is getting satisfied, this condition cannot be checked on. Is that clear, everyone? Yes, keep this in mind. Keep this in mind. At the same time, they're coming and saying, what is an Indian income? Indian income is any kind of income which is of an RNOR. If you are an RNOR, what income would have been for you? That is called as an Indian income. That is what the rules come and say. Yes or no? Yes or no? This is what your provisions are for residential status of individuals. Any doubts? No. Next comes your individuals ke appuram HUF. Income tax comes and says, if you are an HUF, I will come and check for your control and management. If your control and management is found wholly or partly in India, then it is resident. If I come and say, no, Rahul, it is wholly outside India, then it is non-resident. If I find out that you are a resident of an HUF, I also have to split your HUF into ROR and RNOR. ROR and RNOR. Income tax comes and says, if you want to split your HUF into ROR and RNOR, check for the Karta. Check for the Karta. Karta in the last 7 years has been for less than 730 days, HUF becomes RNOR. Karta in the last 9 out of 10 years has been non-resident, HUF becomes RNOR. HUF becomes RNOR. Please understand, Karta and HUF are independent people. They cannot be linked to each other. They cannot be linked to each other. You will not come and say that the HUF is resident, therefore Karta is also resident, or you will not come and say that HUF is non-resident, therefore Karta is also non-resident. There can be a possibility that both can be different people. Both can be different people. But at the same time, please understand, if they are identified as a resident, there is never a possibility that the Karta will be RNOR, but the HUF will be ROR. Not possible. Possible? Not possible. Not possible, because if the Karta is ROR, HUF is also ROR. If the Karta is RNOR, HUF is also RNOR. That is how the rule is. Residency kulla change aga mudiyadu. Ana resident non-resident change aglam. Resident non-resident change aglam. Let's see what I am talking about. The provisions are like this. The sums are like this. You will tell me what is happening for the Karta. You will tell me what is happening for the HUF. You will tell me what is happening for the Karta, what is happening for the HUF. I am coming and saying that the HUF C&M is foreign, which means HUF is a non-resident. I am coming and telling that the Karta is current year staying for 200 days. If the Karta in the current year is staying for 200 days, Karta has now become resident because he is satisfying more than 182 days. So therefore, Karta in the current year has become resident. Because Karta has become a resident, Karta will now have to be split into ROR, RNOR. I am coming and telling, boss, Karta has stayed in the last 7 years for 185 days, which means Karta in all 7 years has become more than 730. Since every year is staying for 185, every year he would have been a resident. None of the two conditions satisfied, therefore Karta has become ROR. Did you notice? Did you notice? HUF has become non-resident, but Karta is ROR. Come to the next scenario. I am coming and saying HUF is foreign, which means HUF will become NR. I am saying Karta is 200 days in the current year, which means Karta is resident. But I am coming and telling in the last 7 years he has been there for only 100 days, which means last 7 years he was there for 700 days, less than 730 days, which means Karta has become possible, not possible? Possible. Can we go forward? Yes. Next we are coming and saying that the HUF is foreign, which means HUF has now become NR. The Karta is current year staying for only 59 days. If you are currently staying only for 59 days, there is no possibility for you to become an R. because minimum at least you need 60. Therefore, you are directly NR. Rahul, do I have to split between ROR and RNOR? Not required. Next forward, it comes and says HUF is foreign, which means HUF is NR. Karta is showing 59, which means Karta is NR. Rahul, in the earlier example, it was 185 days each. Now example, it is 100 days each. Does it make a difference? No, because NR ka Puerto Rico, it doesn't matter. NR ka Puerto Rico, it doesn't matter. Clear? Yes. Then I'm coming and saying that Rahul, my HUF is India. What is my HUF? India. If my HUF is India, HUF now becomes R. HUF now becomes R. It will come. Yes. If your HUF is India, that means HUF becomes R. The moment HUF becomes R, now I have to split between ROR and RNOR. I don't know. So let's hold. I'm going back to my Karta. My Karta is coming and telling that, sir, I have stayed in India for 200 days. If I'm staying in India for 200 days, which means I am R. Now, if Karta is R, Karta has to be split into ROR, RNOR. I'm looking at Karta. Karta is coming and telling me that last 7 years I was there for 185 days, which means Karta has now become ROR. The moment Karta has become ROR, HUF will automatically become. Can HUF come and become RNOR? Not possible. Then you are coming and saying, Rahul, HUF is India, which means HUF is R. Karta is also 200 days, so Karta is also R. But what is happening? Karta has now stayed in the last 7 years only for 100 days, which means Karta has now become RNOR. If the Karta has become RNOR, HUF will also become RNOR. Hey, everyone is following? Yes. Notice, no? Whenever you are an R and the Karta is also R, there is no possibility that both can be interchanged. Both will be RNOR equally or both will be ROR equally. That is what the policy is. Coming to the last one, they're coming and saying you are in India, therefore HUF is R. HUF is Karta is staying for 59 days, which means Karta has become NR. But the problem is now because Karta is NR, I now need to decide what happens to the HUF. Now, can HUF become NR because of this? No. HUF still is R. I will assume that the Karta was R. If the Karta was R, what happens in the last 7 years? He has been there for 185 days, which means had he been in R, he would have been in ROR. HUF will become ROR. Yes or no? Last scenario, I'm coming and saying, boss, HUF is India, therefore HUF is R. Karta is in 59 days, therefore Karta is NR. But I want to find what my HUF is looking like. So therefore, I'm going back to the Karta. I'm saying, assume you are an R. Tell me what would have happened. He's coming and saying, Rahul, assume I would as an R. I was 100 days in the last 7 years, which means I would have been an RNOR, which means HUF will become RNOR. With me, everyone? Yes. This is what your resident status looks like when it comes to an HUF. If you are not an HUF, you are now a firm or an AOP or an BOI or an local authority or an AJP. They're coming and saying copy paste provisions of HUF. Which means I'm looking for control and management. If the control and management is wholly or partly in India, you become resident. If it is wholly outside India, you become non-resident. The moment you are at that position, you are no more going to check for your ROR and RNOR. Every resident is considered as ROR. ROR, RNOR split is there only for individual or HUF. Beyond that, everyone is ROR directly. Last person becomes your company. Now, when it comes to company, I told you when we did rates of taxes, you have two kinds of companies. One is domestic company, one is foreign company. Income tax comes and says foreign company is that company which is not a domestic company. Domestic company has been defined as a company which is an Indian company or a foreign company which is distributing dividends in India. Yes, any kind of Indian company or a foreign company distributing dividends in India. Rahul, what is an Indian company? Income tax comes and says if you're registered in India, you are an Indian company. What are you? If you're registered in India, you are an Indian company. Please understand, registered in India meaning you should have incorporated yourself in India also. Okay, foreign company registering in India does not make it an Indian company. I'm talking about a company which is incorporated in India and registered in Indian Companies Act. Therefore, it becomes an Indian company. Income tax comes and says that, boss, if you are a company, tell me what are you? Are you an Indian company? You say, yes, Rahul, I'm an Indian company. I'll come and say, okay, good, you're directly an resident. What are you? If you are an Indian company, I'm directly coming and calling you a resident. If you come and say, no, Rahul, I'm not an Indian company. I'm not an Indian company, which means you are either a foreign company or you are an domestic company distributing dividends. Or you are a domestic company distributing dividends. For those two people, I will find something called as POEM. I will find something called as poem. Income tax comes and says that if your poem is in India, then it is resident. If the poem is outside India, then it is non-resident. Simple, straightforward case. Simple, straightforward case. Now, please understand, regardless of your residential status, your tax rate is determined based on your status of the company. Okay. Just because you become a non-resident domestic company does not mean that your tax rate becomes 40. No. Even if you are a non-resident domestic company, your rate still becomes 25 and 30. Even if you are a resident for foreign company, also your tax rate is still 40. Your status does not decide your residential status. Your residential status does not decide your tax rate. They are independent scenarios. They are independent scenarios. We have a table against it. The table will come and say that regardless of what your status looks like, your tax rates will be 25 and 30 for domestic, 40 for foreign. You can be a domestic non-resident also. You can be a resident foreign also. You can be a resident foreign also. This is one very famous MCQ question which ICI comes and asks, where they come and say residential status is impacting your rates of taxes. Answer is no. No. Rates of taxes has no relevance to your income tax rates. It is only relevant in case you are a individual, because in an individual, resident individual, 60 years becomes 3 lakhs. Yes, firm Puerto Rico doesn't matter, company Puerto Rico also does not matter. Clear everyone? Yes, this is your end of your chapter called as residential status. With this completes your step number 2. With this completes your step number 2. Moving to the next step number 3. Step number 3 talks about determining whether the income is taxable or not. For this, we have to look at something called a scope of total income. Scope of total income. Income tax is coming and saying, boss, tell me what are you? Tell me what are you? Are you an ROR? Are you an RNOR? Or you are an NR? If you are an NR, Rahul, I will tax 4 incomes for you. I will tax 4 incomes for you. Income received in India, income accruing or arising in India, income deemed to receive in India, income deemed to accrue or arise in India. Rahul, I am not an NR, I am an RNOR. In that case, they are coming and saying, boss, take your NR incomes. Take your NR incomes, add one more item called as income accruing and arising outside India from a business controlled from India or profession set up in India. I am saying, no, Rahul, I am neither RNOR, I am neither NR, I am an ROR. Good for you, all income is taxable. All income is taxable, the global income becomes taxable for you. Please understand what is going to be taxed is your income and not a receipt. Which means if you are going to get money from outside India and put it into your Indian bank account, it does not become taxable on remittance. It will not become taxable on remittance, it only becomes taxable on generation. Okay, so if the question comes and says that you had earned money last year and you transferred it to your bank account in India in the current year, income tax will say not taxable. Whether you are an ROR, whether you are an RNOR, whether you are an NR, it doesn't matter. It doesn't matter. But if the question comes and says that you earned income in the current year and in the current year itself you are transferring, in the current year itself you are transferring, then in that case you will come and say, Rahul, transfer panamodu not tax, generate panamodu papo. Generate panamodu papo, generate panamodu ROR tax aidom. NR Puerto Rico, you have to check whether it is falling within the 4. You have to fall within the 4. Clear, not clear? Yes, be extremely careful about this. At the same time, if you have taxed something on receipt basis, you will not tax it on accrual basis. If you have taxed something on accrual basis, you will not tax it on receipt basis. Look at the scenarios. Tell me whether which income is taxable for which person. Okay, you have income received in India. Taxable for ROR. Yes, taxable for RNOR. Taxable for NR. Rahul, I have income deemed to be received in India. Taxable for ROR. NR, RNOR. Let's put names, no? Nane Marandirva. Rahul, I have income accruing or arising in India. ROR, yes. RNOR, yes. NR, yes. Rahul, deemed income receive or accruing or arising in India. ROR, yes. RNOR, yes. NR, yes. Okay, great. I have my income accruing or arising outside India, but it is from a business or profession set up in India. ROR, RNOR, NR. Very good. Please understand this. Please understand this. In exam, if they come and say that, Rahul, my income is accruing outside India, but the business is from India, RNOR, everything is taxable. NR Puerto Rico, if the question comes and says something is received in India, that will become taxable. Yes or no? Yes or no? Be careful. Yes. Then they're coming and saying my income is accruing or arising outside India from a business or profession controlled from outside India. ROR will say taxable. RNOR will say not taxable. It's from outside India. It's from outside India. NR will become not taxable. Then they're coming and saying, Rahul, my income is from other heads accruing or arising outside India. My ROR is taxable. RNOR is not taxable. NR is not taxable. Rahul, my income has been earned and received outside India. My income has been earned and received outside India, but later on remitted to India. later on remitted to India. Now I am on remittance basis. ROR will also say not taxable. NR will also say not taxable. RNOR will also say not taxable. Why, Rahul? Because remittance Puerto Rico, it is never taxable. Remittance Puerto Rico, it is never taxable. I will check on accrual basis. On accrual basis, if it is taxed, I will tax it. If not, I will ignore it. If not, I will ignore it. Yes or no? Yes or no? This is what your scope of total income looks like. This is what a scope of total income looks like. In the scope of total income, we learned about 4 words. One is called as income received in India, deemed to receive in India, accruing or arising in India, deemed to accrue or arise in India. Income received in India, straightforward. You get the money in your India account, it is income received in India. Income accruing or arising in India is a straightforward case. Your business is in India, therefore it is accruing or arising in India. Income deemed to receive in India is all those cases which are covered under salaries. When we go to salaries, we'll discuss it. Last and the most important thing is called as income deemed to accrue or arise in India. Income deemed to accrue or arise in India, I told you we have to learn it in a head of income format. We learn it in a head of income format. In head of income comes your first income called as salaries. Income tax comes and says, boss, if you are receiving salaries for rendering services in India, then income is taxable in India. If you are getting salary for rendering services in India, income is taxable in India. I don't care where you receive it. I don't care how you receive it. Okay. If you are rendering services in India, it becomes taxable in India. No, Rahul, I am not rendering services in India. Then you are an Indian government employee. What are you? Indian government employee, which means you are working in an embassy. You are working in an embassy. If you are working in an embassy of India, which is outside India, which means you are receiving salary from Indian government working outside India, then also your income becomes taxable in India, because then I don't care. Even if you are working outside India or where your money is coming from. Because the money is coming from government, it is taxable in India. With an exception where they come and say that, boss, any kind of allowances or perquisites will become exempt. Any kind of allowances or perquisite will become exempt, which means the only thing which will become taxable for you is your salary. Any allowance will become exempt, any perquisites will become exempt, nothing will be taxable for you. Is that clear? Yes. After you move from salaries, you have next thing called as HP. Income is coming and telling that if you have any income generating from a property which is situated in India, it is taxable in India. If you have any income generating from a property in India, it is taxable in India, which means HP should be in India. Then they are coming and saying you are not in HP, you are in PGBP. Income tax comes and says we will introduce a concept for you called as business connection. Nothing for you to read in business connection except for one thing, where they come and say you are an agent. Who are you? You are an agent. Income tax is coming and saying if I find you as an independent agent, then nothing is taxable. If I find you as a dependent agent, don't worry about your income. Non-resident income becomes taxable in India. What? Non-resident income becomes taxable in India if you are his dependent agent. If you are not into agency model, you have now something called a significant economic presence. Income tax is coming and saying that, boss, if you have a significant economic presence in India, how do you establish that significant economic presence? If you are having a revenue more than 2 crores from users in India, or you are doing any kind of survey, soliciting and all those things, and there your users are more than 3 lakhs. 2 crores or 3 lakhs is the condition. Satisfy any of these conditions, you will now establish a significant economic presence in India. Income tax comes and says if you establish a significant economic presence, also your income is taxable in India. But they have given you 5 exceptions. They are coming and saying if you are into any of these 5 exceptions, nothing is taxable for you in India. One is if your operations are outside India. Second, they are coming and saying if you have any kind of news and views from India transmitted outside India. Then you are coming and saying you are purchasing any kind of goods from India for export outside India. Next time coming and saying, Rahul, I have any kind of cinema shooting happening by a non-resident in India. Last time coming and saying, Rahul, if I am in a foreign company who is displaying diamonds, then also it's not taxable in India. Now please understand the last line talks about display, which means if you sell it is taxable, but if you sell outside India it is not taxable because it becomes an export. Clear, not clear? Everyone be careful about this. This is your PGBP. If it is not PGBP, then it is capital gains. Capital gains, simply they're coming and saying, boss, if the capital asset was from India, then the income is taxable in India. If the capital asset was from India, which means the asset is also in India or the shares are from India, whatever case matters. Whatever case, it doesn't matter. Those incomes will also become taxable in India. And the last thing is your IFOS. The last thing is your IFOS, where they're coming and saying if you are receiving dividends from an Indian company, then it becomes taxable in India. If you are receiving gift from India in the form of money, not in the form of assets, in the form of money. If you are receiving any kind of money by a non-resident outside India, then also it becomes taxable in India because the money is coming from India. The money is coming from India. But beyond this stands three important things called as interest, royalty, FTS. Interest, royalty and FTS. Income tax comes and says that, boss, if you are receiving any of these three, which is what? Interest, royalty or FTS, do not look from the perspective of who's getting the money. Look from the perspective of who's paying the money. I am telling that, Rahul, the payment can happen by three people. Three people: government, resident, non-resident. Rahul, if the payment is happening from the government, it is always taxable in India for the non-resident. It is always taxable in India for the non-resident. Rahul, the money is coming from the resident. It is generally taxable in India for the non-resident, except if I come and clarify that the resident is going to use this loan or service for outside India. For outside India. If you are getting the money from a non-resident, think about it. I am paying as a non-resident, person receiving is also non-resident. Normally it will be not taxable. But if it is established that this non-resident is going to use the loan or the services in India, then it will become taxable in India. But please understand, for it to become taxable in India, it has to be generating income from business or profession in India or generating income from other sources in India. But this generating income from other sources in India is not there for interest. It's not there for interest, which means a non-resident giving money to another non-resident, getting interest out of it. If this non-resident uses this loan for any purpose in India, which is not a business purpose, it will still be not taxable. It will still be not taxable. A simple example, if I have to give you, the example is there is a person giving money to another person. The other person is using the loan and buying shares in India. What is he doing? Buying shares in India. Because he's buying shares in India, he got something called as dividends. He got something called as dividends. Now this person is going to give him interest. Now both are non-residents. Is this income taxable? No, because the money which he got, which is the dividends, is not an income from business. It is an income from other source. It is an income from other source. So therefore it will become not taxable in India. It will become non-taxable in India. Yes or no? Yes. Everyone? Yes. If I have to note down the example, quickly note it down. There is a person called as a non-resident, another non-resident. A non-resident with another non-resident. You are going to give this non-resident what? Loan. You are going to give this non-resident a loan. This non-resident is going to give this person interest. Now, I need to look at what is happening with the second non-resident. If this non-resident is using the money for business or profession in India, what for? Business or profession in India, or this person is using this money for other source in India, or this person is using it for other source in India. If I find out that the person is using for business or profession in India, I will come and say, taxable. If it is there, I will say not taxable. I will say not taxable. Now please understand, this taxable and not taxable is not for the right person. It's not for the right person, it is for the left person, because the person receiving the interest is the left person, which means left person will have to pay tax in India, provided what the right person does with the money. Provided what the right person does with the money. If the right person uses the money for business, left person will have to pay tax in India. If the right person uses the money for other sources, the left person will have to not pay tax in India. Will have to not pay tax in India. Yes, sir, everyone. Makes sense. Yes. One of the very famous questions from IC exam perspective. Please be extremely careful about this. Please be extremely careful about this. Understand the business and profession part. Now, at the same time, if this same scenario was for royalty or FTS, if this same scenario was for royalty or FTS, then in that case, I will not care whether you are using it for business or for profession. This would have also become taxable. This would have also become taxable only if it was royalty or FTS. If it is interest, it is not taxable. If it is interest, it is not taxable. Yes, sir. Everyone? Yes. Any doubts? Can we go forward? Yes. Great. This marks the end of your chapter number 3. This marks the end of your chapter number 3. We are at 8:40. Almost about 3 chapters done. Almost about 3 chapters done. Yes. Let's do one thing. We'll complete salaries, then cut for break. Yeah. Okay. Salary should take that exact 40 minutes, which means 9:30 we can cut for break. Okay. You have a chart also for your 5 heads of income. You have a chart for your 5 heads of income. Kulurda. Make it 0, no? Perfect. Can we go forward? Yes. We are starting with this very important chapter of salaries. We are starting this very important chapter of this salaries, where income tax is now coming and saying we are in step number 4. We are in step number 4, which is classifying your income into 5 heads. Classifying your income into 5 heads of income. I am now into the very important chapter of salaries, where income tax comes and says, boss, if you want to tax something under salaries, there should be 2 conditions satisfying. One condition is there should be an employer-employee relationship. Second condition is you should have received the payment against that relationship. You should have received the payment against that relationship, which means if you receive salary as a partner of a firm, income is taxable under PGBP. If you are receiving salary as an MP, MLA, MLC, it's IFOS. Rahul, you are receiving gift from a manager of your company. IFOS. Receiving gift from a manager of the company. Manager is not the owner. Who's the owner? Employer is the owner. Receiving gift from a manager is still IFOS. If you are receiving gift from the company itself directly, where the company has a policy to do that, then in that case it becomes salary. Now please understand, whenever you talk about salaries is taxable on due or receipt, whichever is earlier. But if you are receiving money in advance, you have to ask yourself, when is the money received in advance? Is the money being received in advance because of a policy? Like for example, if the question comes and says that he is going to receive this money on 28th of the previous month, in that case it is a policy, which means it is taxable on 28th itself. But if the question comes and says, no, he's not received an advance, he's actually asked for a loan. He went to his employer and he came and said, sir, you give me 4 months of loan, I will give it to you back. That is not taxable. He comes and says, sir, you give me 4 months of loan, you adjust it in my future month salary, it will become taxable only in the future month's salary, will not be taxable on loan basis. Because I have to still satisfy my condition of service. That is what the criteria are. Yes. So any kind of salary received in advance is taxable, but any kind of loan taken from employer is not taxable. Any kind of advance against salary given is taxable only if it is due. Yes or no? Then comes something called as arrears of salary. Income tax is coming and saying generally salary and all would have been taxable on due basis itself. What I am referring here is all those salary which you did not even know about because of retrospective change. Income tax is saying that, boss, if there has been a retrospective change in your salary, it will become taxable when either you know about it or you receive it. If you know about it today but you are going to receive it tomorrow, it will become taxable today. If you know about it today, you receive it today also, it becomes taxable today. That is what the policy is. Yes or no? At the same time, I am coming and telling that, boss, whenever you are taxing something under salaries, I am taxing something under salaries during your employment, before your employment, or after your employment also. If you receive a joining bonus before you join, that is also taxable. If you receive pension after you quit, that is also taxable. If you make a change in your employment contract during your policy also, it is taxable. Okay, I don't care whether it is before, I don't care whether it is during, I don't care whether it is after, everything is taxable as long as you can satisfy 2 conditions. Condition number 1, there should be an employer-employee. Condition number 2, there should be a payment relationship. These 2 conditions to be mandatorily satisfied. At the same time, income tax is also coming and telling that, boss, if you are going to receive salary but you choose to divert your salary, it doesn't matter, it is still taxable in your hands because this is an application of income. But if the contract itself came and said that the income was never even taxable for you, or the salary was never even receivable by you, If the policy document itself comes and says that before you join this company itself, you are never eligible for that salary, then in that case it is not taxable, because then it is diversion of income by overriding title. Then it is diversion of income by overriding title, which means you need to check whether are you rightfully eligible for the salary. If yes, then it is taxable, whether you donate it or not. If you say that you are never even eligible for the salary, then it is not taxable. Then it is not taxable. Yes or no? Yes or no? Look at the scenario. I am coming and saying that any kind of waiver of salary accrued is also taxable, as it is only application of income. Example, if I am telling that I have given an instruction to my employer to donate whole of my salary to the charity, is also taxable in the hands of employee, as the same is accruing to him. So I am receiving the salary, then I am making a decision to donate, it is still taxable. It is still taxable. You can claim an ATG separately if you satisfy the conditions. If you satisfy the conditions. Clear, everyone? Yes. Now this is your basics of salary. Moving to the format. Now in my book, this is how the format is. I'm not going to switch my page. We're going to be on this page, and with this page itself, we'll complete the whole chapter. With this page itself, we're going to complete the whole chapter. So I'm going to start from the top. The first item is basic pay. Income tax is saying, boss, whether you have a basic pay, it is always fully taxable. Then you have something called as DA. DNS allowance has two types. One is forming part, not forming part. Forming part means in terms of employment, not forming part means not in terms of employment. Which one is taxable? Both are taxable. Then you have commission. Commission is two types. One is fixed commission, turnover commission. Rahul, which one is taxable? Both are taxable. Then you have something called as bonus. Income tax is saying, boss, if you have a bonus, it is taxable only when it is received. It is taxable only when it is received. First four items, simple, straightforward. Then you have something called as allowances. Income tax says allowance means those kind of money which is given to you in your hand. You have the money in your hand, then you make a decision whether you want to use it or not. Yes, if you have that money in your hand, then in that case you have to decide for an allowance. Income tax is coming and saying there are some types of allowances. First allowance is called as leave encashment. Income tax is saying that, boss, when you have a leave encashment, ask yourself if you are receiving the leave encashment during your employment or after your employment. If you are receiving it during your employment, it is fully taxable. Rahul, government case, fully taxable because it is during employment. If you are receiving the money after employment, ask yourself if it is with government or without government. If it is with government, exempt. Without government, least of the four. For those who wrote 3, please note the page number down. It is least of 4. First one is actual. Average salary for the last 10 months. Average salary per month into. That's average salary for the last 10 months. Average salary per month into leave credit unutilized. Last one is a limit of 3 lakhs. Rahul, how do you compute your average salary per month? It is basic plus DA forming part plus turnover commission for 10 months. Basic, DA forming part, turnover commission, last 10 months divided by 10. Then you are coming and saying how to find out my leave credit unutilized. I am coming and saying take your leaves for all the years you worked. Take the leaves for all years you work, but at the same time you cannot take leaves more than 30 days per year. You take all those leaves, then minus all the leaves which you have taken, you will get the number of days you are eligible. Divide that by 30. If you divide that by 30, you will get the number of months you have leave encashment eligible for, multiplied by average salary per month. This is what will become your third part. Yes, with me? Yes. Now, in that they are also coming and saying that the 3 lakh number which you have is not per employment, it is per lifetime. If the number has changed, if you have already encashed some leave encashment and made it not taxable, in the subsequent employments, the number will keep reducing. Yes or no? Then you have leave encashment. Next item is house rent allowance. Income tax is coming and saying that house rent allowance is taxable both for government and non-government. You have least of the 3. First item is actual 40 or 50%. And next item is rent paid minus 10% of salary. Here also salary is defined as basic, DA forming part, turnover commission, but at the same time you can only take it for relevant months. Take it for the respective relevant months. And when you talk about 50 and 40, 50 is for Chennai, Mumbai, Delhi, Kolkata. Apart from that, everything else is 40. Everything else is 40. Then we have something called as special allowances. Income tax is coming and saying that, boss, if you have some special allowances, we have some items. First item is child education allowance. Income tax comes and says that if you have a child education allowance, it is 100 per month per child, 2 children. Education in India. Child education allowance 100 per month per child, 2 child education in India. Child hostel allowance 300 per month per child, 2 child education in India. Traveling allowance only for disabled child 3200 per month. 3200 per month. Apart from this, any other allowances, ask yourself if the allowance is office or personal. If the allowance is office, then in that case exempted up to amount to spent. Exempted up to amount to spend. Any other allowance, if it is personal, then it is fully taxable. And it is fully taxable, with the exception which I told you, allowance and perquisite given to an government employee working outside India, exempt. Exempt. Yes or no? Yes. I'll give you some examples. You tell me whether it is taxable or not. Okay. First item is conveyance allowance. Assuming you spent everything. Assuming you spent everything. Conveyance allowance. Not taxable. Per diem allowance. Daily allowance. Not taxable. Daily allowance is also official purpose. Daily allowance is also official purpose. Lunch allowance. Taxable. Hey, no 50 per million. That is perquisite. This is allowance. This is lunch allowance. Fully taxable. Mobile allowance. Telephone allowance. Medical allowance. Taxable. Medical allowance is also taxable. Medical perquisite is not taxable. Medical perquisite is not taxable. Keep this in mind. Helper allowance. Not taxable. Helper edukada kudupan? Veetuka kudupan? Helper is for office purpose. Helper is for office purpose. Then research allowance. Not taxable. Yes, these are some examples. These are some examples. Repeat once again. I will tell you the numbers. Tell me once again. Okay. Conveyance allowance. Not taxable. Outstation travel expense. Not taxable. Again, outstation is for office purpose. Outstation is for office purpose. Research allowance. Uniform allowance. Helper allowance. Lunch allowance. Medical allowance. One more item. Sultan. Personal allowance. Taxable. This is what the items are. With me till here? Yes. These are your special allowance and other allowance. Medical allowance. Yes. Next item is retirement benefits. I'm coming and saying in retirement benefits, the first item is gratuity. Income tax is coming and saying gratuity can be received 2 types. One is during employment, after employment. If you're receiving gratuity during employment, taxable. After employment, government, non-government, government, exempt. Non-government, check for POGA, non-POGA. If it is covered under POGA, least of 3. Actual 15/26 into last drawn salary into number of completed years or rounded thereof. Last drawn salary means basic plus DA, all for which month? Last month. For the last month of employment. If you are non-POGA, then it is least of 3. Actual 20 lakhs. 1/2 into average salary per month into number of completed years. No round offs. Number of completed years will not get round off. Salary here is average salary per month, same as leave encashment, which is basic plus DA forming part plus turnover commission for 10 months. This same 20 lakhs is per lifetime. Yes. Next retirement benefit is annuity or pension. Next is annuity or pension. Taxable. We'll come to perquisites. Okay. Next you have something called as pension or annuity. Annuity is always taxable. Pension Puerto Rico, we have to check whether you are receiving commuted or uncommuted. For those who get confused, commuted means computed. Commuted means computed, which means big number, small number. Big number, lump sum, big number, lump sum, big number. Uncommuted is the regular pension. Uncommuted is regular pension. Income tax comes and says regular pension is taxable. If you have a completed lump sum pension, which is called as commuted pension, check if you are government, non-government. If you are government, exempt. Non-government, ask yourself if the person received gratuity or did not receive gratuity. If you received gratuity, exempt amount is 1/3 of total pension. If you are not receiving gratuity, exempt amount is 1/2 of total pension. 1/2 of total pension. Yes or no? Total pension here is not the pension which you got. It is not the pension which you got. It is the commuted pension divided by the commutation percentage. Yes. If you got 60% of the pension and you got some number, you have to find out what will you get if you had 100%. You will have to find out what you would have get if it is 100%. Someone on the chats have written, sir, government employees working outside India and getting allowance is exempt or not? It is exempt. It is exempt. Yes. Then after pension comes VRS, not a part of syllabus. Not a part of syllabus. Contribution to fund, one of the most important things from exam perspective. The first item is PF. The first item is PF. In PF, you have 4 kinds of PF. Statutory, public, recognized, unrecognized. Statutory, public, recognized and unrecognized. If you have to check, you have to imagine yourself with some cases. First is employer contribution, employee contribution, interest on employer, interest on employee, withdrawals. Withdrawals. Think that concept in mind. I'm going to talk. First one is statutory. Employer contribution, exempt. Employee contribution, 80C. Interest on employer, exempt. Interest on employee, up to 2.5 lakhs of contribution interest, exempt. Interest above the 2.5 lakhs, taxable. Interest above the 2.5 lakhs, taxable. Understand. Contribution 2.5 lakhs kila inda, adoda interest is exempt. Contribution 2.5 lakhs ka mela inda, adoda interest is taxable. Okay, that is what the policy is. Here again they are coming and saying 2.5 lakhs will become 5 lakhs if you are not getting contribution from employer in this. If you are not getting contribution from employer in this, will not generally happen. If you are not getting a contribution from employer, then ideally you would have taken a PPF. You would have not taken a SPF. So it is always 2.5. At the same time, if you are going to withdraw anything from SPF, it is fully exempt. Next item is your PPF. In PPF, employer contribution is not applicable. Employee contribution is 80C. Interest on employer is not applicable. Interest on employee is exempt. Withdrawal is exempt. Come to RPF, notice carefully. RPF, it says employer contribution for the first 7.5 lakhs, exempt up to 12% of salary. Exempt up to 12% of salary for the first 7.5 lakhs. What is salary here, Rahul? Basic plus DA forming part plus turnover commission for relevant months. PF is during employment. Therefore relevant months. They are coming and saying, Rahul, within 7.5 lakhs, exempt up to 12% of salary. After 7.5 lakhs, everything is taxable. Then they are coming and saying employee contribution, 80C. Interest on employer contribution. They are coming and saying for any contribution made up to 7.5 lakhs, 9.5% per annum. Please understand, it is not 9.5% of contribution. It is not 9.5% of the salary. It is 9.5% of the deposits. And at the same time, it is not 9.5% of current year deposit. It is 9.5% of every deposit. Which means in exam, you don't have to worry about the deposit amount. Income tax like question like they'll come and say, Rahul, the person has received 13,000 salary, which is 13%. Automatically you understand deposit was 1 lakh. You will automatically understand deposit is 1 lakh. You can only allow 9,500. You have to disallow. You have to offer to tax 3,500. You'll have to offer to tax 3,500. Everyone, yes, understand this carefully. It is not 9.5% of salary. It is 9.5% of deposits. It is 9.5% of deposits. Coming back, they come and say, Rahul, if your contribution was up to 7.5 lakhs, adoda interest varudhu is exempt up to 9.5% per annum. But if the deposit was more than 7.5 lakhs, the interest on that will become fully taxable. But the interest on interest will also become fully taxable. The interest on interest will also become fully taxable. Rahul, how did we do this? We created a box. We created a box, 4 boxes. Left side top to average of the all fund. Yes or no? Average of all fund, meaning opening fund plus closing fund divided by 2. Right side is total interest. Right side is total interest. Left side bottom, average of taxable fund. Average of taxable fund. Right side will give you the taxable interest. Right side will give you the taxable interest. If you do this formula, you will automatically get the answer. For those who didn't understand the formula, can follow the ICI method, which is P1 plus TC1 into R plus PC by 2 into R, where R is I divided by F average, where F average is opening plus closing by 2. Okay, this is what we did in our class. This is the 4 boxes. Top left is average of the total fund. Will take the total interest. Right side bottom is left side bottom is average of taxable fund and taxable interest. Average of taxable fund and taxable interest. If you want to learn this method, you can open the fast track and you will find the answer there. You will understand what the logic is in the fast track. You can go and check there. But this is how you have to do your taxable interest on above 7.5 lakhs. On above 7.5 lakhs. This is from an employer perspective. What perspective? Employer perspective. Coming to the employee perspective, income tax is coming and saying that, boss, if the employee had contributed up to 2.5 lakhs, it is exempt up to 9.5% of contribution. If it is deposited more than 2.5 lakhs, it is fully taxable. It is fully taxable. Here they have come and not clarified any kind of table and all. They have come and told, we will give you the number. We will give you the number. And the last one is withdrawal. Income tax comes and says, boss, whenever you are withdrawing money, it is generally not taxable if it is withdrawn after 5 years. But if withdrawn within 5 years, then in that case it becomes taxable. But generally it will not be taxable if it is any of the 3 scenarios. First one, it is withdrawn due to health or medical conditions. Health or medical conditions. Condition number 2, if the company is shut down for no reason of your default. For no reason of your default. Condition number 3, you have left the company and you have transferred this PF to an other PF or another NPS. You do any of these conditions, also it is exempt. It is also exempt, otherwise it will become fully taxable. This is what your RPF looks like. Clear, everyone? Yes. Last one is your URPF. In URPF, they are coming and saying, boss, during contributions, nothing is taxable. During interest, nothing is taxable. But during withdrawal, everything will become taxable. How do you tax it? You have to break it into 4. Employer contribution, salaries. Employee contribution, ignore. Interest on employer, salaries. Interest on employee, IFOs. This is what it is. This is what is there normally. But please understand, in your ICI materials, this last part is there, no, interest on employee, which I told as salaries. In ICI material, this is also clubbed under salaries. Interest on employee is also clubbed under salaries. Ideally, this is the wrong answer. But in case it comes in MCQs and you are not able to find the option, try adding your interest on employee. It will be there. So from exam perspective, if the option does not tally without the IFOS case, put the IFOS into salary and try to tally. You will find an option that way. Please be extremely careful about that. Okay. Practical world, it is not there. Practical world, it is always IFOS because it is my contribution, my interest. I will not like to pay it under salaries. But ICI thinks they know better income tax, so therefore it is how the answer is. Clear? Yes, this is what your PF looks like. After PF, you have something called a statutory superannuation fund. In your superannuation fund, they're coming and saying employer contribution is exempt, interest on employer is exempt, interest on employee is also exempt, withdrawal is also exempt. If it is unapproved statutory superannuation fund, it is same as URPF. And the next item is national pension scheme. Income tax is coming and saying that, boss, if the employer is contributing to pension scheme, it is taxable. Because you're going to get a 80 CCD. because you're going to get an 80 CCD on that. Yes or no? Yes. This is what your national contribution to funds looks like. This is what your contribution to funds looks like. Any doubts here? Can we go forward? Yes. If you have completed your allowances, if you have completed retirement benefits, you're now having something called as perks. Perks in income tax means any benefit which is granted to you. Any benefit which is granted to you with a specified reason. With a specified reason. In an allowance, I will give you the money and you can do whatever you want with it. In perquisite, I will give you the specific item. You have to follow the specific item. You have to follow the specific item. Yes or yes? Yes. In perquisite, the first item is given as leave travel allowance. Income tax assumption says that if you are planning to travel in India for personal, official, personal, for personal, official is always exempt. Official is always exempt. I'm talking about personal travels. If you're planning to make a personal travel in India, employer can sponsor your travel. Employer can sponsor your travel, in which case it will become exempt from taxes, provided you satisfy certain conditions. First one, who are you taking? Who are you taking? I am taking my self, spouse, children restricted to 2, and dependent parents, dependent siblings. Dependent parents and dependent siblings. If you have children restricted to 2, if the second birth was a twin, you can take 3 child. If the second birth was a twin, you can take 3 child. If the first birth itself was a twin, only 2 child. Only 2 child, that's what the policy is. Yes, yes. Then they're asking you, how will you travel? I said, Rahul, I'm traveling by air. They say, economy class ticket is exempt. Rahul, I'm traveling by train. First class AC is exempt. Rahul, I'm traveling by recognized public transport. First class AC is exempt. Rahul, there is no public transport also. First class, similar distance is exempt. First class, similar distances exempt. Then they're coming and saying, how much will you travel? I said, Rahul, you can only travel for 2 trips in 4 calendar years. 2 trips in 4 calendar years. If you have not used your 2 trips in a 4 calendar years, you can carry forward 1 trip to the next calendar year, provided you use it in your first year. Use it in your first year. Please understand, for your exam, it is important because you are in the first year. You are in the first year. Now only your slab started. Your block is 22 to 26. Your block is 22 to 26, which means 22 to 23, there can be one utilization happening. There can be one utilization happening from your 18 to 21. From your 18 to 21. So be careful about it. In your book exam, if they come and say, Rahul, from 18 to 21, they have carried forward 1 trip to the current year, and they have made 3 trips in the current year also, you will exempt all the 3. You will exempt all the 3 because this is the first year of the trip. This is the first year of the trip. If you do not utilize the trip in the first year, it is moved out. It is moved out. It is lapsed. It is a one-time limited offer. It is a limited offer. Use it in the first year, then it is okay. If you don't use it in the first year, next year you cannot use it anymore. Next year you cannot use it anymore. Clear, not clear? Clear. At the same time, they are coming and telling that, boss, if you are going for a travel, you can only claim the travel expenses. You cannot claim your accommodation, or you cannot claim your food expenses. You cannot claim your food or accommodation expenses. That is something which you have to bear. That is something which you have to bear. Yes. Yes. This completes your leave travel. Then comes your other perquisites. In other perquisites, the first item is medical treatment. Income tax now comes and says that, boss, I am talking about medical treatment. I am not talking about medical allowance. Medical allowance is taxable. Medical treatment is what we are discussing. Medical treatment is what we are discussing. Please be extremely careful about this. Yes. Yes. In medical treatment, income tax is coming and saying you can do treatment in 2 places. One in India, one outside India. If you are doing the treatment in India, I will tell you it is exempt in 4 locations. I will exempt in 4 locations. Location number 1, government hospital. Location number 2, employer's own hospital or employer's tie-up hospital. Location number 3, approved hospital for specified disease. Location number 4, any hospital for COVID disease. Any hospital for COVID disease. COVID is an amendment for the current year. COVID is an amendment for the current year. Rahul, if I don't satisfy any of the 4, it becomes taxable. It becomes taxable. Rahul, who and all can get treatment? I can get treatment for self, spouse, dependent parents, dependent siblings, any children. Dependent parents, dependent siblings, any children. No restriction on the children's here. No restrictions on the children's here. This is what is my condition for India. This is what my condition for India. If you are doing that, if you are doing this outside India, I'll have to break it into 2. I'll have to break it into 2. One is treatment and stay. The other is travel. Income tax is saying that, boss, if you are going to travel, if I find that your gross total income is less than 2 lakhs, travel will become exempt. If the gross total income is more than 2 lakhs, travel will become taxable. Travel will become taxable. Other side, they are coming and saying, Rahul, if you have any kind of treatment and stay expenses, you can get a treatment and stay for 1 person of your family plus 1 attendant. Plus 1 Attendant need not be your family, no restrictions on that. But the person getting treated should be your family. Person getting treated should be your family. In this case, they're saying, boss, if you're having a treatment and stay expenses, whatever RBI says, I'm okay. Whatever RBI says is okay. If RBI says some amount is exempt, that amount is exempt. Anything beyond that will become taxable. Anything beyond that will become taxable. At the same time, please understand, if the company has taken some life insurance policy on you, it becomes taxable. If the company has taken a health insurance policy on you, it becomes exempt. If the company has taken an accident insurance policy on you, it becomes exempt. Please understand that facts. Please understand that facts. Health insurance, accident insurance is exempt. Life insurance is taxable. Medical allowance is taxable. Medical allowance is taxable. With me? Yes. After medical treatment comes RFA. After medical treatment comes your RFAs. Income tax comes and says that, boss, if I am going to give a house to you, that is called as RFA. When it comes to RFA, you have to split yourself into two. Check if it is furnished or unfurnished. Unfurnished accommodation, ask yourself whether it is government or non-government. If it is government, license fee. Non-government, check if it is owned or hired. If it is owned, check on salary. Check on salary. For your exams, only one thing, 15% of salary. If it is hired, higher charges or 15% of salary, whichever is lower. Whichever is lower. Now, in this, salary has been defined as basic, DA forming part, all bonus, all commission, all taxable allowances. Basic, DA forming part, all bonus, all commission, all taxable allowances will become your salary. Will become a salary for which month? Relevant months. Will become for relevant months. Yes, this is what the provisions are. This is what the provisions are. At the same time, if you are also receiving a furnished accommodation, for the furniture or the gadgets which you receive, again ask yourself if it is owned by the employer or hired by the employer. If it is hired by the employer, then it is higher charges. If it is owned by the employer, it is 10% of. Very good. Please understand, it is 10% of cost. It is not 10% of salaries. It is 10% of cost. That too per annum basis. That too per annum basis, and it is 10% of cost, not on WDV. Not on WDV. I don't care what the WDV is. I don't care whether you follow SLM or WDV basis and all. It is 10% of cost whenever you buy it. Whenever you buy it. Clear with me? Yes. At this point of time, they are also coming and saying that, boss, if your company providing 2 RFAs, I will wait till 90 days. I'll wait till 90 days. In 90 days, if you change your RFA, then in that case, nothing will be taxable. If you don't change your RFA, 91st day, both will become taxable. Both will become taxable. When I said nothing is taxable, I meant only one will be taxable. Okay, I meant only one will be taxable. Up to 90 days, you make decision which one you want to tax. After 91st day, both will become taxable. Both will become taxable. If you are doing an RFA, you can also do something called as hotel. You can also do something called as hotel accommodation. In hotel accommodation, income tax is saying the charges are actual higher charges or 24% of salary, whichever is less. Salary here means same as RFA. Same as RFA. Here also they are coming and clarifying that if you stayed in hotel for 15 days, not taxable. Anything beyond 15 days will become taxable. Anything beyond 15 will become taxable. With me? Yes. After this comes concessional loan. After this comes a concessional loan. If the employee has taken a loan from employer, benchmarking will happen using SBI rate as on 1st April of previous year. As on 1st April of previous year. Take the benchmarking rate of 1st April of the previous year, benchmark it with your interest rate, less the difference will become your perquisite. Less the difference will become your perquisite. The only thing to keep in mind is this will be multiplied with your loan outstanding at the end of each month. At the end of each month, it is not loan outstanding at the start of each month, it is loan outstanding at the end of each month. You have to do this perquisite valuation every month basis. Every month basis. At the same time, they're coming and saying that if you've taken a loan up to 20,000 rupees, not taxable. If you've taken a loan for medical purposes, not taxable. Medical purposes, specified disease also not taxable. Yes. Yes. After medical claims, food allowance, food perquisite. It comes as food coupons. It comes as food coupons. Income tax comes and says that, boss, if you're going to provide food to your employees, 50 per meal is exempt. Tea, coffee, beverages and snacks are exempt. Alcohol is taxable. Offshoring food is exempt. Giving food on an offshore location is also exempt. Giving food coupons is also exempt. Giving food coupons is also exempt up to 50 per meal. But if you are into 115 BAC, it will become taxable. If you are into 115 BAC, also it will become taxable. Yes, sir. Yes, sir. Next. You have ESOP. Next, you have ESOP. ESOP comes and says that, boss, if at all the employee is given any kind of ESOP from the company, you have to benchmark it using average share price in the market. Average share price in the market, which means opening plus closing by 2. Yes, opening plus closing by 2 on the day on which it was traded. Assuming that day it was not traded, take the last traded. Take the last traded. Take the last traded. If it is not listed, then it is value. If it is not listed, then it is value. This is what the provisions are. Yes, after your employee stock option comes transfer of movable properties. Transfer of movable properties. Income tax is coming and saying when you transfer movable properties, you can transfer 3 kinds of properties. First kind of property is computers or electronics. Second kind of property is motor cars. Third kind of property is other assets. If you are transferring any kind of computers or electronics, it is cost minus 50% WDV method. It is cost minus 50% WDV method for every completed year of usage. No round offs. No round offs. Second, if it is motor car, it is cost minus 20% depreciation WDV for every completed years of usage. No round offs. If it is other assets, it is cost minus 10% SLM method for every completed years of usage. No round offs. No round offs. This is what the provisions are. This is what the provisions are. If you're not doing transfer, you're doing use. You're not doing transfer, you're doing a use. Again, in use, you have to take 3 kinds of items. One is computers or electronics, motor cars, other assets. If it is computers or electronics, it is fully exempt. If it is motor car, we'll discuss later. If it is other assets, it is owned or hired. If it is owned, 10% of cost. If it is hired, higher charges. Coming to the motor car part, they are coming and telling, check and tell me what are you doing. Are you using for fully official purpose? Exempt. If you are using for fully personal purpose, if it is hired, 10%. If it is owned, if it is owned, 10%. If it is hired, higher charges. There is no nothing whichever is lower. There is no whichever is lower. It is owned or hired. If it is owned, it is 10%. If it is hired, it is higher charges. Plus all the fuel and maintenance incurred, plus all the driver incurred, plus all the driver incurred, minus whatever you have recovered. Minus whatever you have recovered. The challenge comes when you have part owned and part hired. If you have part owned and part hired, then income tax is coming and telling, tell me what is the CC of the car. Tell me what is the CC of the car. At the same time, tell me what is happening from the employer side, what is happening from the employee side. If you come and tell me that Rahul, employer is owning the car, employer is taking care of runnings and maintenance. Employer is owning the car, employee is running the maintenance up to 1800 cc. Up to 1600 cc, it is 1800 per month. After 1600 cc, it is 2400 per month. At any point of time, if you give a driver 900 per month, I am coming and saying, Rahul, employer owns the car, but I will take care of the maintenance. Employer owns the car, but I will take care of the maintenance. Now I am coming and saying, Rahul, whatever is the 1600 cc, it will become 1600. CC is always 1600 only. CC is always 1600 only. In 1600 cc, I'll come and say 600 and 900. 600 and 900 with a driver of extra 900. With a driver of extra 900. Then I'm coming and saying, no, no, Rahul, if the employee is owning and the employer is running and maintaining, then in that case, whatever is the employee running and maintaining will be fully taxable. Will be fully taxable. In that, I will exempt 1800 or 2400 depending on the CC. 1600 for 1800, 1600 kamala pochana 2400 will become exempt. Will become exempt. At any point of time, if you're providing a driver, again 900 will become reduced. 900 will become reduced. The whole driver salary will be included, 900 will be removed. The whole driver will be included and 900 will be removed. Last one is if the employee is owning, employee is running, nothing is a perquisite. Nothing is a perquisite. If you have been given 2 cars, one car will become part official, part personal, second car will become fully personal. Second car will become fully personal. You cannot have 2 cars which are part official and part personal. Not possible. Yes, this is your use of motor car. This is your use of motor car. Then we had something called as transport benefits. If you are working in an airline industry or a railway industry, it is fully exempt. If you're working in any other industry, whatever is given to others, that will become taxable for you. Whatever is given as others will become taxable for you. If you are providing any kind of education facilities, then check if the education is for the employee. If the education is for employee, exempt. If the education is for child, you will check for 1,000 rupees. You will check for 1,000 rupees. There are two conditions. Condition number one, it should be in employee's school or employee's tie-up school. It should be in employer's own school or employer's tie-up school. In that also the cost of education should be less than 1,000. Should be less than 1,000. If it is less than 1,000, fully exempt. If it is more than 1,000, everything is taxable. Everything is taxable. And if you are not providing this, you're providing this to any other person, any other family member, then everything will become fully taxable. Next item is gift. Gift comes and says that if you receive a gift in cash, taxable. If you receive a gift in kind, if it is anything less than 5,000, fully exempt. Anything more than 5,000, fully taxable. Anything more than 5,000, fully taxable. You have alternate assumptions. Don't worry about it. Don't worry about it. Next item is your servant charges, gas charges, water charges, all these things. They're coming and saying that, boss, if it is an specified employee, taxable. If it is not specified employee, not taxable. If it is a specified employee also, if it is a non-specified, if it is a specified employee also, it is not taxable. If it is a non-specified employee, it is taxable if you have incurred it and you have recovered it back. If you have incurred it and recovered it back, which means employer should directly give it. If the employer is directly giving it, non-specified employee exempt. If the employer is reimbursing it to you, then it is taxable for non-specified also. Then it is taxable for non-specified also. Rahul, what is specified, non-specified? Don't worry about it. Does not come in exam. Does not come in exam. In case you want to know, you have to be a director of the company. You should have a salary more than 50,000. Should have a salary more than 50,000. In that case, it will become taxable to you. In that case, it will become taxable to you. Yes or no? Yes. This is the end of your perquisites. This is the end of your perquisites. At the same time, in a perquisite, you have to also keep in mind that, boss, any perquisite which is given to you, if it is identified as an official purpose, then it is exempt. If it is not identified as official purpose, it becomes taxable. Rahul, I have been given a telephone for using in office. Exempt. Rahul, I have been given food in office. 50 per meal. I have been given food in office, 50 per meal. Rahul, I have been given medical, what did I tell you? First item, what did I tell you? Telephone. I've been given internet charges. Exempt. All these will become exempt. All these will become exempt. These are not allowances. These are perquisites. These are perquisites. In all these cases, it will become exempt from taxes. Yes or no? Yes. If you complete all these things, you will arrive at something called as gross salary. In gross salary, you have to add one item called as your advance salary or arrears in salary. Advance salary or arrears in salary. You will get up your gross salary. In this gross salary, you have to reduce 50,000 of standard deduction. Item number 2, professional tax, which is paid either by the employer or by the employee. If the professional tax is paid by the employee, directly reduce it. If the professional tax is paid by the employer, you first add as perquisite, then you remove it. You add as perquisite, then you remove it. Last item is your entertainment allowance. It is fully taxable for other employees. Government employees, you bring it on the top. In the bottom, you will reduce least of the 3. Actual 1/5 of basic pay and 5,000. 1/5 of basic pay and 5,000. Here it is basic pay. Here it is basic pay. For which month, Rahul? Relevant months. Relevant months. Rahul, how to remember which month? Keep in mind, if it is a retirement item, then it is average salary for 10 months. If it is continuing item, then it is respective months. There is only one exception to this, which is your gratuity. In gratuity, it is last drawn. For POGA. For POGA alone, it is last drawn. Keep it in mind, and then we'll go for. Yes, this will arrive at your income from salaries. This chapter also has a concept of 89. Doesn't matter. Will not come in exam. It's too complicated to solve in exam, so therefore it will not be coming in exam for you. Clear? Yes. Since we are in this chapter, let's also complete the 115 BSc part. Konja time irukku. 8 minutes irukku. Yes, so let's complete the 115 BSc part. Starting from the top once again. I will look at the item. You will tell me whether 115 BSc eligible or not eligible. Okay. Basic pay. DNS allowance. Commission. Eligible. Bonus. Eligible. Leave encashment. Eligible. Please understand. 115 BSc removes only those items which are recurring. Leave encashment is non-recurring, therefore eligible. Then HRA, not eligible because it is recurring, because it is recurring. Then special allowance. Most of the items are not eligible. Most of the items are not eligible. Only some items are eligible. One is your traveling allowance for disabled. Second is your daily allowance. Third item is your conveyance allowance. Third item is your conveyance allowance. And the moon mattam eligible. Adu thavara everything is not eligible, which means education, hostel, all are removed. Kudutade 100 rupees adu eduthuran. Yes. Next item is your other allowance. Anyway, it was taxable, so still taxable. Next, come to your retirement benefits. First item is gratuity. Eligible. Pension, eligible. Voluntary, eligible. Retrenchment, eligible. PF, eligible. Only one thing not eligible, ATC. ATC, not eligible. Then they're coming and saying perquisite. Leave travel. Leave travel, not eligible. Why? Because recurring item. Every month, every year you will claim it. Every year you will claim it, therefore not eligible. In other perquisites, medical. Medical, eligible. Medical ellame ஊர் இருக்காதுடா. Yes, medical, eligible. Then gift. What is not eligible? Gift was anyway taxable. I am only looking at items which are exempt. I'm only looking at items which are exempt. Gift considered. Then food. In food they are coming and saying normally eligible, but food coupon kurta not eligible. Food coupon kurta not eligible. Office la சாப்பாடு kurta eligible 50 per meal. ஆனா coupon கொடுத்துட்டு வெளியில போய் சாப்பிட்டுக்கோனா not eligible. Not eligible. Clear? Yes. What other items do we have? ESOP. ESOP eligible. RFA eligible. Transport eligible. Servant eligible. Helper eligible. Everything else is eligible because all are anyway taxable. All are anyway taxable. Then you have advance. It's an item. It's an item. Deductions, Rahul. None of them are eligible. None of the deductions are eligible. You arrive at your income from salaries. You will arrive at your income from salaries. Yes, sir. Everyone? It's perfect. This marks the end of your salaries. This marks the end of your salaries. Let's do one thing. Let's take a break. We'll come back at 10 o'clock. It's 9:25 right now. Exactly. Let's come back at 10 o'clock. We'll come back and we'll do HP, PGBP, capital gains, IFOs. Yes. Most likely that's what the plan is before lunchtime. Yes. Yes. Let's take a break. Let's come back. Yes. Moving to the next set of income. Moving to the next set of income, we are moving to the heading called as income from house property. Moving to the next set of income called as income from house property. A very simple, straightforward heading, nothing great to discuss in this chapter. So let's quickly understand this chapter. We are moving to the head of income called as income from house property, which basically comes and says that if you want to tax something under the head house property, there are two conditions to satisfy. Condition number one is that there should be an house property. Second is that the house should be owned. The house should be owned. Satisfy two conditions, the income will get taxed under IFHP. If it is not satisfied, it will not be taxed under IFHP. You will move to the other heads of income. Yes. Scenario number one, if you are having any kind of land and you are renting a land, it is taxable under IFOS because there is no house property. Scenario number two, you have taken a house, you have rented the house to someone else. For you, this income will become IFOS because again it is subletting. Again it is subletting. So understand there are two conditions to satisfy. One is that there should be a house. Second is that there should be an ownership to the house. This is what the rules are. Yes. Yes. In this, they are coming and saying that Rahul, what is a house? House is any kind of building with the land attached to it. House is any kind of building with a land attached to it. They have not given any conditions, no nothing. They simply, you have a land and a building attached to it, then it is called a house. Whenever you discuss about the house, any ancillary items are also considered. Like if you have a garden against it, parking garage against it, all are considered, all are part of it. At the same time, they are coming and saying, boss, ownership is extremely mandatory. If you don't have an ownership, you will not be taxed under the HP, but you will be taxed under IFOS or PGBP with just one exception to it. With just one exception to it. What is the exception? We'll discuss right now. They're coming and saying that, boss, generally I'm looking for an ownership, but I also permit something called as deemed ownership. I also permit something called as deemed ownership, where you have tried to give the ownership of the house to someone else because you wanted to cheat. You wanted to cheat. What are the examples? They're coming and saying a transfer of a house happening from the spouse to his spouse. The spouse to his spouse. The condition here is that there should be an inadequate consideration. Then only it is clarified that it's done for avoidance. It is done for an avoidance. So it's a transfer of a house between one spouse to another spouse for inadequate consideration. The house will be considered as owned by me. The house will be considered as owned by me with an exception that if the house is given because of a agreement to live apart, or in simple words, divorce, then in that case it will become a new ownership. Then it will become a new ownership. Second condition, I'm coming and saying, no, I did not transfer to my spouse. I gave it to my son's wife. I gave it to my son's wife. Again, inadequate consideration. Then in that case, I'll become the owner. Exception is minor married daughter because it is covered under clubbing. It is covered under clubbing. Then last scenarios are not important. The last scenario is important, which comes and says, you have a house which you have rented for more than 12 years. If you have rented for more than 12 years, then in that case, you also become the owner. This is the only exception to subletting, where I'm coming and saying if you've rented a property to someone for more than 12 years, you have now become the deemed owner. Therefore, your income will become taxable under HP. Your income will become taxable under HP. These are the simple conditions of HP. Coming to the part of HP, they're coming and saying, boss, when it comes to HP, you have two kinds of house properties. One is called as self-occupied property. One is called as let-out property. In self-occupied property, they are again putting a further subdivision, coming and saying you can only have two properties as self-occupied property at the option of assessee. Balance properties will become DLOP. It will become deemed let-out properties. If you have a format of SOP, LOP and DLOP, answers become simpler. So therefore, the format in the book basically comes and says you have to start from municipal value or fair value, whichever is lower, whichever is higher, compared with your standard rent, whichever is lower. This answer will give you what is called as expected rent. This expected rent will be compared with my actual rent. Hold. When you talk about actual rent, it is not the actual rent which you receive. It is the actual rent which you would have received if you had not vacancies. If you had no vacancies. So they are coming and saying compare your expected rent with the actual rent, ignoring vacancies, whichever is higher. If I find out that your actual rent ignoring vacancies become higher, I find you as a genuine assessee. The moment I find you as a genuine assessee, your vacancy loss will be allowed as a deduction. If I find out that even after me considering the vacancy, your expected rent was more, then I will directly take the expected rent. I will not care about your vacancy loss. We'll do an example. So it is expected rent or actual rent, whichever is higher. That will become your gross annual value. In this, you will reduce something called as municipal taxes. You will arrive at your net annual value. This net annual value, please understand, is only applicable for LOP and DLOP. It is not applicable for SOP. SOP Puerto Rico, municipal tax is not allowed as a deduction, so NAV will also become 0. NAV will also become 0. If you have an NAV, include inside one more item called as arrears of rent or advance rent. Advance rent or arrears of rent. You will now get a net NAV. You will now get a net NAV. On this net NAV, you will allow two deductions. One is your 30% standard deduction and interest on loan. Interest on loan. You make those two deductions, you will get income from house property. You'll get income from house property. This is what the conditions are. Yes. What is municipal value? The value decided by the municipal authority. In case it is not given, they have given a different formula. You can take the municipal tax divided by the percentage. You'll get the municipal value. What is it? You can do municipal tax divided by municipal tax percentage. Okay. Generally, municipal tax is levied on the value of the municipal. Therefore, they will come and tell you that the municipal tax is 10,000. The percentage is 10%. Automatically, it becomes 1 lakh. Automatically it becomes 1 lakh. So it is municipal value versus fair rent. Fair rent is nothing but the rent which is decided by the open market. Decided by the open market, whichever is higher. Compare with standard rent. Standard rent is the rent which is defined by the Rent Pollutions Act. Rent Control Act. Sorry, not Rent Pollution Act, Rent Control Act, whichever is lower. That will give you the expected rent, will be compared with your actual rent. Now, from ICAI perspective, ICAI comes and says, whenever you talk about actual rent, it is not just actual rent, it is actual rent minus unrealized rent. What rent? Actual rent minus unrealized rent. Technically, unrealized rent should be reduced from your GAV only, but ICAI comes and prefers it directly from actual rent. So, we will also follow the same method. Same method is actual rent minus unrealized rent. What is unrealized rent? We'll discuss, but it is actual rent minus unrealized rent, and this should be ignoring vacancy. This should be ignoring vacancy. Rahul, what is this vacancy issue? Notice this example. Look at the first example. It's coming and saying that the expected rent is 2,10,000. The monthly rent is 20,000, which means for the whole year you would have got how much? 12. So 2,40,000. For the whole year you would have got 2,40,000. You have expected 2,10,000. Who's expecting 2,10,000? Government. Government is expecting 2,10,000. You are ready to pay 2,40,000. You are ready to pay 2,40,000. If you are ready to pay 2,40,000, government is expecting 2,10,000. Your rent will become 2,40,000. But because it became 2,40,000, I found you as a genuine assessee. Because you are a genuine assessee, I will come and say, claim the vacancy loss. If you claim the vacancy loss, your rent will become 2,10,000. 2,10,000. Clear? Yes. Look at the same example. I'm sorry, not 2,10,000, 2 lakhs. Because the actual rent is 2 lakhs. Yes. Come to the second example. I'm coming and saying government is expecting 2,50,000. Your monthly rent is 20,000, which means yearly rent will become 2,40,000. Compare 2,40,000 with expected rent, it becomes 2,50,000, which means government was expecting 2,50,000. You are ready to give only 2,40,000. Government will come and say, I want rent on 2,50,000. Now, because government is expecting 2,50,000, but you are ready to give 2,40,000, government will say you are non-genuine assessee. If you are a non-genuine assessee, will they give you vacancy loss? No, they will not give you vacancy loss, which means your rent will now become the whole expected rent, which is 2,50,000. Which is 2,50,000. Clear, not clear? Yes. Come in the last example. The last example comes and says that the expected rent is 2,40,000. The expected rent is 2,40,000. Your monthly rent is 20. If your monthly rent is 20, your annual rent will become 2,40,000. Government was expecting 2,40,000. You are also ready to give 2,40,000. GAV will become 2,40,000. But because you are doing what the government is expecting out of you, you are a genuine assessee, which means government will allow you vacancy loss, which means now your rent will become 2 lakhs. Your rent will become 2 lakhs. With me till here? Yes, this is your vacancy loss. Any doubts? No. You have arrived at a GAV. On the GAV, you will now reduce something called as municipal tax. Income tax comes and says, boss, municipal tax is a tax which is paid by the municipal, which is levied by the municipal authority and will be allowed to you only in the year in which you actually pay. In the year in which you actually pay the tax, you will get the full municipal tax. It doesn't matter whether you're paying the municipal tax for the current year, past year, next year, next to next year, doesn't matter. Whenever you pay, you get the full deduction. Whenever you pay, you get the full deduction. This municipal tax will be claimed only for LOP and DLOP, will not be claimed for SOP. Will not be claimed for SOP. Please understand, whenever you're talking about municipal tax is allowed as a deduction. If you delayed paying municipal tax, you will be levied interest and penalty, cannot be claimed. You will only take your municipal taxes. With me? Yes. After you allow your municipal taxes, you get something called as NAV. In this, you include two items called as arrears of rent and advance rent. I told you already in salaries also, what is arrears of rent? It is a rent which is changed retrospectively. In that case, it will become taxable in the year in which you have received or known about it. Where at the same time you have advance rent. Advance rent means you have received rent for future years. You have received rent for future years. It doesn't matter, both are taxable. It doesn't matter, both are taxable. And then you have something called as unrealized rent. What rent? Unrealized rent is nothing but bad debts. Is nothing but bad debts. Income tax is coming and saying that, boss, if you were planning to get some rent but you did not get that rent, you can claim it as a bad debt subject to 4 conditions. Subject to 4 conditions. Condition number 1, tenancy should be bona fide. Condition number 2, you have tried to get the money from him. If he did not give the money, you have tried to ask him to vacate. You have asked him to vacate. If he has vacated, you have not given him some other house. You satisfy these 4 conditions. Whatever rent you were not getting, you can claim it as a bad debt. But please understand, you can claim it as a bad debt only from actual rent. You can claim it only from your actual rent, which means expected rent versus actual rent minus unrealized rent. Whichever is higher. This is what the policy is. Yes. At the same time, if you have got a rent as bad debt, in the future you may get it back. This is called as realization of unrealized rent. In that case, it will become taxable in the year in which you receive it. In that year, I don't care whether you are owning the property or not owning the property. What you get is taxable. But please understand, since you claimed it as a deduction earlier, your 30% also fell earlier. So therefore, in the year in which you realize, that year you will get the 30%. That is why in my format, it is before NAV. NAV la add pannittingna automatically 30% vandrum. Yes or no? Yes. After you complete that, you get NAV. In that NAV, you have to reduce 2 items. First item is 30% of NAV, standard mandatory rule. At this point, I want to clarify to you, if you are in salaries chapter or you are in HP chapter, you should be extremely careful on what the question says. If the question says salary received, it means what you got in your hand is the actual money. In which case in salaries you have to reduce 50,000, in HP you have to reduce 30%. If the question comes and says no income from salaries, then in that case assume 50,000 is already given. Assume 30% is already given. Yes or no? If the question says computed, then also it is assumed that it is given. But please understand, you have to be extremely careful about it. If you are in salary chapter and the question comes and says salary is computed as per 115 BSc. What? Salary is computed as per 115 BSc, in which case 50,000 is not given. And they are coming and telling you, tell me what is the salary as per normal regime, you have to give 50,000. So just because the word computed is used does not mean that 50,000 is given. Computed as per which regime is what you have to check. I have noticed this one in the case study questions. In case study questions, they came and said, boss, the income as per new regime is given as so and so number. And they came and said, what will happen if you take the old regime? In that case, you have to reduce 50,000, you have to reduce all those numbers and be careful about it. Clear? Be extremely careful about it. Received indale, you have to reduce the deductions. Income word indale, don't reduce the deductions. Computed indalo, don't reduce the deductions as long as it is old regime. If it is a new regime, then you have to do that. Clear? Yes, this is your 30% criteria. The moment you are giving this 30% criteria, no other deductions are permitted to you, which means rent, land tax, this tax, the tax, any kind of higher charges, painting charges, nothing is allowed as deduction. Coming to the last part called as interest on loan. Income tax is coming and saying that, boss, if you have an interest on loan, tell me whether the interest on loan is for a SOP property or a LOP property. When I use the word LOP, I also mean DLOP. If you have a property which is either SOP or DLOP, income tax comes and says, if it is LOP or DLOP, I don't have a problem. Any interest you got is fully allowed as deduction. But if you are in SOP property, I'm giving you a limit. You have to satisfy the limit. If you satisfy the limit, you get 2 lakhs per house. If you don't satisfy the limit, you get 30,000 per house. Yes. What are the limits, Rahul? You have been given 4 conditions. Condition number 1, loan should be taken after 1999. Condition number 2, it should be for purpose of acquisition or construction. Condition number 3, the property should be completed within 5 years of taking the loan. Fourth condition will not be there in the MOOC. Just to clarify, fourth condition is CA has to give a certificate for it. Condition number 4 is not important from exam perspective. No one is going to ask you to give certificate in office and all. Okay, exam Puerto Rico, no one is asking certificates and also first three conditions: loan after 1999, loan taken for acquisition purchase, loan house completed within 5 years of loan. Satisfy the condition, you will get 2 lakhs per house. Don't satisfy the condition, you will get 30,000 per house. But please understand, if you have two houses, both houses put together also you cannot claim more than 2 lakhs. What? Both houses put together also you cannot claim more than 2 lakhs. That is what the rule is. That is what the rule is. Clear? Yes. At the same time, please also understand this 2 lakhs or 30,000 which I have told you is per owner. Which means if at all this house is jointly owned by two owners, in that case I can also claim a separate 2 lakhs. He can also claim a separate 2 lakhs. Yes or no? Yes or no? This is what your conditions are. At the same time, they are coming and clarifying that, boss, you can take a loan. I will allow the interest. If you have taken a loan to repay your old loan, new loan or interest is allowed. But if you have taken a loan to do anything else, interest is not allowed. If you have taken a loan to pay municipal tax, not allowed. If you have taken a loan to pay municipal tax, not allowed. If you have taken a loan for paying loan only, it is allowed. Okay, loan taken for the purpose of municipal tax and all is not allowed. I have taken a loan for repaying my interest on the old loan. Not allowed. The loan should be taken for the purpose of repaying the old loan which is used for the house. This loan is taken for the purpose of repaying interest. Not allowed. Rahul, interest on interest. Not allowed. Penalty paid. Not allowed. Okay. The only one amount which I am going to allow is the interest on the loan which is taken for the house, or the interest on the new loan which is taken to repay the old loan. That is what will be allowed. At the same time, if you have taken the loan from a foreign company or a foreign place, then in that case you will allow interest only if TDS is deducted. TDS not deducted, no interest allowed. TDS not deducted, no interest is allowed. Clear, not clear? Yes. This is what your interest on loan is. Any doubts? No. At this point of time, you will complete your income from house property. You will complete your income from house property with some special scenarios given to you from your exam perspective. First special scenario comes and says that you have one house. That one house part is self-occupied, part is let out. Same house, part SOP, part LOP. Same house, part SOP and part LOP. Income tax comes and says you do one thing, you split everything off. Municipal value will get split, fair rent will get split, standard rent will get split, actual rent will be only for the LOP part. Actual rent will only be for the LOP part. Compare and find out the GAV for the let out portion. GAV for the SOP will become 0. Loan also will get split. Between SOP and LOP. SOP portion you can claim 2 lakhs or 30,000. LOP portion you can claim full thing. Yes or no? Yes, this is your first thing. Second one, they are coming and saying, Rahul, I have a same house. Part of the year it was SOP, part of the year it was LOP. What? Part of the year it was SOP and part of the year it was LOP. Income tax is now coming and saying, if that is the scenario, assume that the house was LOP for the whole year. For the whole year put together you got the actual rent. Which means in this scenario, you will not assume the actual rent ignoring vacancy and all. You will take the actual rent. What rent you received for that respective months will be compared with your expected rent for the whole year. So even if you have got expected rent for 12 months and actual rent only for 9 months, compare those two, whichever is higher. But here what will happen, since you have considered the whole house as LOP house, interest fully will become allowable. I will not come and say, boss, split into SOP, split into LOP, not required. Everything will become allowable for you. Rahul, in exam, how to understand whether this is a part SOP, part LOP house or is it a vacancy house? Question will come and tell you. It will come and say that the house was vacant for so and so months. It means it is vacancy. Question comes and says, no, the person itself was living in that house. That means it is part SOP and part LOP. Understand the difference very clearly. Yes? Last scenario, I am coming and saying the house is joint owned. What owned? Joint owned. Two owners are there of the house. In that case, what I will do is I will recommend you do one thing. You take till NAV. Assuming there is only one owner. Then after you get the NAV, then split it into both the parties. Don't split after finding the income itself. Split at the NAV level, because I told you per owner will get 2 lakhs interest. NAV level split off, then do 30% for both partners individually, and then do interest loan for both partners individually. Both partners will get 2 lakhs each. This is what the criteria are. Clear? Yes. The last part of the chapter is called as pre-construction or pre-acquisition interest. What interest? Pre-construction or pre-acquisition interest. Income tax comes and says that, boss, if at all the loan was taken prior to the house being completed, that interest can never be allowed as a deduction because the house is not ready. Okay, so for all the period where the house was not ready, it will be called as pre-construction interest or pre-acquisition interest. Rahul, how to find out when is the house ready? The house will be ready the moment the house is ready in one financial year, which means the whole of that financial year will not be considered as pre-construction period. Will not be considered as pre-construction period. In simple words, from the date on which you took the loan till the last day of the preceding previous year. The last day of the preceding previous year, assuming your house got completed in 22-23. What 22-23, you will take the loan up to 31st March 22. You will take the loan up to 31st March 22. That will become your pre-construction period. The interest will be allowed over a period of 5 years. Will be allowed over a period of 5 years. Please understand, when I say the word allowed, it means it will be added to your SOP or LOP. It will be added to your SOP or LOP. If after adding also you are not satisfying 2 lakhs, then only you can claim the number. If after adding it goes beyond 2 lakhs, restricted to 2 lakhs. Understand, it is not that you can take current year interest up to 2 lakhs and then last year's order interest fully allowed. Current year plus last year all put together, maximum 2 lakhs. Yes or no? Look at the example. It comes and says, Manshika has taken a loan of 25 lakhs at the rate of 10% on 1st October 2019. For constructing her house property. The construction was completed on 30th June 2020, which means the house was completed in the previous year. 21. House was completed in the previous year, 22-23. House was completed in the previous year, 22-23, which means your pre-construction period will be for the period 1st October 19 to 31st March 22. 31st March 22, because this year order full interest will be allowed. Last 31st March the interest will become your pre-construction interest. This period order interest is computed as 6.25 lakhs. How much? This 6.25 lakhs. This 6.25 lakhs will be divided by 5. Number will become 1.25 lakhs. This 1.25 lakhs is the interest of pre-construction period, which I am going to allow for the 5 years. Rahul, from when? From the year in which the house was completed. Which means from 22-23. Then I have to also include my current year interest. Current year the loan was available till 30th October. Yes, basis that my interest has become 1,45,833. 1,45,833. On this I will also include my last pre-construction interest, which is 1,25,000. Total has become 2,70,833. Rahul, can I claim this 2,70,833? Yes, provided it is LOP. If it is SOP, Rahul, restrict to 2 lakhs. Why, Rahul, 2 lakhs? Because all conditions are satisfied. Loan was taken after 1999. Loan is taken for construction. House is completed within 5 years. All conditions satisfied. So the loan amount has become 2 lakhs. Rahul, I wanted interest full. I only got 2 lakhs. Balance 70,000 wasted, Rahul. Yes, the balance 70,000 is wasted, but you can utilize it in chapter 6A. Provided some conditions are satisfied. What conditions we will discuss? Yes, the conditions we will discuss, but this is what the rules are. Any doubts here? No? Great. This marks the end of your HP chapter. In this HP chapter, from 115 BSc perspective, Rahul, what is changing? From 115 BSc perspective, SOP part is deleted. Which means if you have any kind of interest on the loan taken for SOP, it will not be allowed as a deduction. LOP, DLOP continues. Which means 30% allowed, interest on loan also allowed. The only thing which is not allowed is SOP. Clear with me? Can we go forward? Yes, awesome. Completing chapter number 5 or 4 or whatever. Moving to the next big and the important chapter called as PGBP. The first chapter itself starts with the charging section. The first chapter starts with the starting section. Not important from exam perspective, but just to give you a hindsight, some items are taxable for you. Some items are taxable for you. First item is the PGBP. Then items are coming and saying any kind of indirect tax benefits and all which you have is taxable. Any kind of gifts and all which you get on account of business relationships. Any kind of gifts you get on account of business relationships will become taxable. In this exam, 99% you are getting a question on that. 99% you're getting a question on that because you have 194R coming this year. You have a 194R coming this year, and therefore they will 99% give you a question where they'll come and say some person has given a business gift to another person. What are the implications? You will come and say implications are this person gave a gift to that person, so that person income it is taxable under the head PGBP. Because this person has given a gift, he also has to deduct TDS at the rate of 10%. At the rate of 10% with a threshold limit of 20,000. Very good. With threshold limit of 20,000. This is what the rules are. Please keep it in mind. Please keep it in mind. Yes, sir. Yes, sir. Yes. This is one thing to keep in mind. And then they're coming and saying, boss, any other items? There are some items called termination or modification of business contracts, etc., and all those. With an important item called government grants. What grants? Government grants. Income tax is coming and saying that, boss, if you have received a government grant, generally it is taxable under PGBP. But if the government grant is received against an asset, then in that case you will reduce it from the asset. Grant is an income. Grant is an income, so you will reduce it from the cost of the asset. You will reduce it from the cost of the asset. This is what the rules are. Yes, sir. Yes, sir. Yes, sir. Next, this section is also coming and saying that, boss, when you have income from business has to be split into two. One is speculative and non-speculative. Rahul, what is speculative income? Income of those items which are earned without a transfer of, which are transferred without a delivery. It's a transfer without a delivery. Any kind of transaction which you undertake where there is a transfer taking place but there is no delivery taking place, that is called as a speculative transaction. There are some exceptions which they have given from exam perspective. The only thing which you need to keep in mind is commodity derivatives which are agricultural in nature. And second one is derivatives, normal derivatives. They're coming and saying that, boss, if you have a derivatives, it is not a speculative transaction. If you have a commodity derivatives, it is not a speculative transaction. If it is agricultural commodities. What commodities? Agricultural commodities. If it is any other commodities, it is not speculative. If you pay CTT, what is CTT? Commodity transaction tax. So in simple words, agricultural commodity never speculative. Any other commodity non-speculative if it is CTT paid. This is what the rules are coming and saying. Rahul, what is the big issue with the speculative? They are coming and saying if you have a speculative loss, what do you have? Speculative loss. If you have a speculative loss, it can only be adjusted against speculative income. If you are not having speculative income, then you will carry forward for a period of 4 years. Return filing mandatory. Carry forward for 4 years. Return filing is mandatory when you have a speculative loss. This is what the criteria is. Rahul, I have business loss. Can I adjust it against speculative income? Yes. The restriction is only for speculative loss. The restriction is not for the other way around. Keep this in mind. People make hell lot of mistakes in this. Okay, you can adjust your speculative loss only against speculative income, but business loss can be done with whatever you want. Yes or no? Yes. If you have understood this, now comes the format of PGBP. The format of PGBP basically is a very simple format where they come and say always start from net profit before tax. Add items which are disallowable. Add items which are deemed profits. Reduce items which are allowable. Reduce items which are other head of income. There is no standard sequence in which you have to follow. Any sequence is fine. As long as you keep it in track. In this chapter, we are going to start from disallowances and then we are going to go forward. Yes. So starting from the disallowances part, they're first coming and saying that, boss, if you have any kind of building or any kind of machinery, there are certain expenses which you will always incur, like rent, allowable, repairs. Only revenue repairs are allowable. Capital repairs are not allowable because it will be added to the cost of the asset. Any rates and taxes paid, allowable, subject to 43B. Payment within the due date of return filing. Yes, because it's a tax paid. Tax has to be paid within the due date of return filing. Yes, this is all the conditions. Then they're coming and saying that, Rahul, if this property was used part for business, part for office, part for personal, to the extent it is for business, you can allow, balance will be disallowed. balance will be disallowed. This is your 30, 31. This is your 30, 31. Then comes the most important section from exam perspective called as 32, which is your depreciation. Income tax comes and says that you can claim depreciation only as per the rules of income tax, which means any depreciation claimed as per accounts is disallowable. Any depreciation as per accounts is disallowable. Only depreciation allowed as per Income Tax Act. Rules are very simple. They are coming and saying if you want depreciation, you should be the owner. You should put the asset to use, and you should put the asset to first use. You should put the asset to first use, and you will not get depreciation on two items called as, very good, land and goodwill. Land and goodwill, you will not get depreciation on land and goodwill. This is what the conditions are. If you want to claim depreciation, you have two methods of depreciation. One method is called as SLM, the other method is called as WDV. SLM method is only applicable for power generation units. WDV is applicable for everyone, including power sector. Including power sector, which means power sector can choose between WDV and SLM. WDV and SLM. How do you do SLM method, Rahul? Same accounts. Same accounts, no changes. Same accounts and no changes. How do you do WDV method, Rahul? You have been given a block of asset concept. What concept? Block of asset concept. They're coming and saying that, Rahul, if you want to do depreciation as per WDV method, take your opening block. Take your opening block. Add additions. Add additions. Additions can be of two types. What is more than 180? Put to use is for more than 180 days or put to use for less than 180 days. If you're going to put to use for more than 180 days, you will get full depreciation. When I say full depreciation, it does not mean 100%, it means 100% of the rate given. It means 100% of the rate given. If I say, no, Rahul, I've put to use for less than 180 days, they're coming and saying, okay, boss, half of the rate given. Half of the rate given. This will give you your additions. Then you will reduce something called as sale value. Then you reduce something called as sale value. Please understand, in your accounts, you would have reduced the closing WDV, block of the asset reduced per income tax Puerto Rico, directly reduce of the sale value. Directly reduce of the sale value. If you still have the block available, if the block is still alive, which means there should be a positive number. Which means there should be a positive number, you can give depreciation on it. Depreciation will be at the rate of 100% on the more than 180 days and opening WDV, and 50% for less than 180 days. Reduce the depreciation, you will get the closing block. Reduce the depreciation, you will get the closing block. Clear? Yes. Looking at the formats, opening WDV means nothing but last year's closing. Rate is the rates which is given under Income Tax Act. Income tax has prescribed some rates. Let's quickly revise. Building is 10. Temporary building. Temporary building. Temporary building. 40%. Understand? No, I told you, when the item can be destroyed faster, rate will be the highest. What is the highest rate? Temporary building is 40%. Yes. Residential building. Plant and machinery. Vehicles. 15. Furniture. Furniture is 10. Intangible assets. 25. Computers. Patents. Patents are intangible assets, therefore 25. Ships. Where are 5, 10, 15? It is 20. It is 20. Ships are 20. Ships are 20. Yes. Mold. Mold is 40. 30. Mold is 30. Mold is 30. Rahul, airplanes. 40. Items which are fast depreciable become highest rate. Airplane and all, tomorrow you won't even know if you're alive in that or not. Yes. Next, books. This and all, no doubt, definitely. Computer software. 40. Computer software is 40. Clear? Yes, keep the rates in mind. Keep the rates in mind. Ella 40 thanda. Any book is 40. It doesn't matter. Okay, in annual publication vechalo okay, ni ICI book vechalo okay. Ellame nalugu thooki dhaan poda pora. Yes, so all books are 40. All books are 40. Clear? Yes, these are what your rates are. These are what your rates are. In this, you also have some additional rates in motor vehicles. You have some additional rates in motor vehicles where they come and say if the motor vehicle is for hire, 15 becomes 30. 15 becomes 30. And at the same time, they have some motor vehicles where they come and say if you have bought it in 2019, put to use before 2020, all those nonsense, not coming for exam. Not coming for exam, you can ignore it and go. Manda half mark. Yes. Yes, this is your rates. This is your rates. Then you have opening WDV. Opening WDV is the closing WDV of last year. When it comes to additions, I told you it is more than 180 and less than 180. But how to compute your additions, Rahul? I am coming and saying find the cost of the asset. Find the cost of the asset. How do you find the cost of the asset? Purchase price, add indirect taxes which are non-ITC, then any installation charges, transportation charges, any charges which are incurred up till the date of put to use, any interest cost which is incurred up to the date of put to use, less government subsidy which is directly linked, less income from sample sales, then anything else? One more item is there, foreign exchange fluctuation. Any kind of foreign exchange fluctuation. What is that? We'll discuss. Yeah, foreign exchange fluctuation, that all will become your additions. If you have an additions, no problem. But if you are going to make the additions payment other than by account pay check, account pay draft, electronic clearing system, any other prescribed modes, more than 10,000, one person, one day, the additions will be ignored. Understand, it is not disallowed, it is ignored. Additions will be ignored. This is what the conditions are. And then they've given some special scenarios to you. The two scenarios to keep in mind is, if you have received a building from your personal to office, assume the depreciation for the period had it been in office. The new revised WDV will become your addition block. Second thing, they are coming and saying, boss, if it is not building but a non-resident bringing any asset from outside India to India, assuming that this asset was a part of income tax, what depreciation you would have given, ignore that depreciation, balance will be included. Either tavare, any other asset which you have will be taken at actual cost. Even if you have used a car for 50 years, it doesn't matter what cost you bought it at, same cost will come here. No depreciation, no nothing. Clear? Yes, this is what the rules are. Same rules will apply. If you have taken the asset part for office, part for personal, depreciation will be split accordingly. To the extent it is for office, it will be allowed. To the extent it is for personal, it will be ignored. It will be ignored. You have not claimed a depreciation. This is income tax depreciation. You have claimed, then and only disallowed. It will be ignored. Yes or no? Yes. At the same time, I am coming and saying, if you have taken an interest on a loan, which is loan used for asset, then the interest will be capitalized up to the date on which the asset is put to use. Clear with me? Yes, this is what your additions look like. Then you have something called as sale value. Understand, in income tax, what you are going to reduce is the sale value of the asset and not the cost of the asset or the WDV of the asset. You will directly reduce the sale value of the asset in case you have a sales. In case you don't have a sale, it is zero. Just like that, leave it off. Yes, this will arrive at something called as the net block. In this net block, you will claim depreciation. Depreciation are of two types. One is normal depreciation, one is additional depreciation. Normal depreciation is the rates which we discussed. Additional depreciation is only allowed for manufacturing sector or power sector. If you are going to buy any new plant and machinery, I will give you an additional 20% of the cost of the asset. But Rahul, I have put to use the asset only for less than 180 days. You will give 10 in the current year, 10 in the next year. 10 in the current year and 10 in the next year. Rahul, what do you mean by new plant and machinery? I am telling any plant and machinery which is not second hand, not used in office, not used for production. That's what, not used in office. Yes. Any kind of machinery which is not a second hand, not installed in office, not a motor vehicle, and last, not claimed 100% depreciation. If you satisfy any of these, all of these conditions, then it becomes a new plant and machinery eligible for 20% or 10% year 1, 10% year 2. Please understand the 10% in year 2 is not the 10% of the next year's opening WDV, it is 10% on the cost. It is 10% directly on the cost. This is what the rules are. Yes or no? Yes or no? This is what will happen. You will arrive at a depreciation, find the closing WDV. Now, please understand, from income tax perspective, closing WDV is the net block minus the depreciation actually allowed. Which means if there is any depreciation which you have ignored because it is a personal, you will not reduce it from your closing WDV. You will reduce it only to the extent of the actual depreciation which you claimed. With me till here? Yes, there is one other change which comes in your SLM method. In SLM method, they are coming and saying that, boss, if at all you have an asset, you are going to do depreciation on each asset, not in a block concept. Not in a block concept, you're going to do it in each method. In that each method, if you sell the asset, you tell me what is happening. You tell me what is happening. If you tell me that, Rahul, I've sold it for a loss, income tax will come and say whatever is a loss will be allowed as a deduction in the current year in the form of terminal depreciation. If you have sold it for a profit, then the question will ask you how much profit have you earned. If you have earned a profit up to the cost, then it is PGBP income. If you have earned any profit beyond the cost, it has now become capital gains. Rahul, what are you talking about? It is somewhere here. Somewhere here. Notice what is happening is the original cost of the asset was 1000, WDV was 600. You are required to show the tax implications if the sale value is 400. Understand what is your WDV right now? 600. What is your sale value? 400. 200 has become a loss. That loss will be allowed as a reduction in the current year itself, saying terminal depreciation. This is same as change in accounting estimates. You are estimating wrong depreciation in the income tax. Therefore, income tax is giving you the balance depreciation. Next is the scenario where it is 900 rupees. Income tax is coming and saying that, boss, you should have got a profit of 300, which is within the depreciation which you claim. Therefore, reverse the depreciation, which means offer it as PGBP income. Last scenario, I'm coming and telling Rahul it is 1300. I bought it itself for 1000 rupees. I'm selling it for 1300, which means 300 rupees is capital profit, which means it will go into capital gains. Balance items will be PGBP income. Straight, simple, okay. Yes. In this, they are also coming and saying that, boss, please understand what you have to allow is the asset depreciation from the date on which it is first put to use. If the asset is put to use and then stopped using, also doesn't matter, depreciation will continue. At the same time, depreciation will be allowed only from the date on which it is first put to use. But in some exceptional cases, I will also allow depreciation from the date on which the asset is ready to use, which is called as passive use assets. Examples are fire extinguisher or sample machineries, spare machineries or fire extinguishers. In these cases, I will allow depreciation from the date on which the asset is ready to use. In cases of leases and everything, you will get the depreciation to the main owner. I don't care whether it is finance lease or operating lease, unless and until the asset is sold off to the other person, depreciation will still be continued by the lessor. Clear? Yes. The second section which we learned is 32. Now, when you have 32, you may also have losses. Income tax is coming and telling that if you have depreciation and you have incurred a loss in the current year, first weightage of the PGBP loss will be given to depreciation. Assuming you have a loss of 1000 and you had claimed depreciation of 800 in that, income tax will come and say this 800 will now become unabsorbed depreciation. Balance 200 will be PGBP loss. Assuming you had a loss of 1000, depreciation you claimed is 5000. Then 1000 will become the unabsorbed depreciation. To the extent you have a loss which can be put into my depreciation, that will become unabsorbed depreciation. Rahul, what is the benefit of having an unabsorbed depreciation? Unabsorbed depreciations can be set off against any head of income other than salaries and can be carried forward for indefinite period of time with a return filing not mandatory. Yes, sir. This is what your depreciation rules are. Can we go for? Yes. If you have completed your depreciation, the next section is 35. Correct? Huh? Your next section is 35. 35 comes and says scientific research. In scientific research, I told you to ignore the whole chart. The only thing which I told you to remember is any asset 100% deduction except for land. Goodwill and all is there in scientific research, not in in specified business, not in here. Okay, here it is only land. Any asset is allowed for 100% deduction except for land. That is what the rules are. But yes, it is not just about you incurring an expense, it is also about you giving donations. Even if you give donations for scientific research or social research, also it is allowed as a deduction. No restrictions on that as well. Yes. This is what the rules are when it comes to scientific research. In scientific research, they are coming and saying, assuming you bought an asset. What did you bought? Asset. Assuming you bought an asset, you would have got 100% deduction. If you take the asset and you give it to your non-scientific purpose, If you take the asset and you give it to non-scientific purpose, the block led asset value will become 0 because you have claimed full depreciation. Assuming I don't give it off to my block, but I directly sell it off. What do? I directly sell it off. Income tax will come and say whatever scientific research deduction you claimed will become fully income. But if you sold it beyond the deduction you claimed, that item will become capital gains. Look at the table. See, if you have sold it without using it in the business, you will charge the whole thing into your PGBP income because you claimed the 100% in your PGBP income. But if you are selling it beyond your cost of the asset, anything excess will become capital gains. But if you are transferring it to your block without selling it, then the cost of the asset in the block will become 0. Clear? Yes, this is what is scientific research is. Next item comes is your specified business. Income tax is coming and saying, boss, some business I like too much. Some examples are hospital with more than 100 beds, hotels with more than 2-star, warehousing for storage facilities of agricultural produce or sugar. I am not including edible oil. Yes, all these items are there. In these items, income tax comes and says whatever expenses you incur, whether it is capital or revenue, everything will become allowed as a deduction except for land, goodwill, financial instruments. This is what will not be allowed as a deduction. Balance items will fully be allowed as a deduction in the year of incurrence. Rahul, I did not incur it in the current year. I incurred it prior to me starting the business. Claim it in the year of incorporation. Assuming you capitalized it. You can claim the whole thing in your expense. Yes or no? Income tax is coming and saying that, boss, because of the scientific specified business, if you incur a loss, please don't set this loss against your normal business income. Any specified business loss can be set off only against specified business income. Rahul, I don't have a specified business income. Carry forward for a period of infinite years. Return filing mandatory. Return filing is not mandatory only for HP and depreciation. Everywhere else return filing is mandatory. So here also you have to file return on time, but you will get an infinite set off of losses for infinite period of set off for the specified business loss. You can set it off against your specified business income. Yeah. Next, they're coming and saying, boss, if you had a specified business asset, if you plan to directly sell it off, then in that case the rules are same as scientific research, which means whatever deduction you claimed will be offered as income to the extent of sales. But if you have sold it for beyond your sale price, then the excess will become capital gains. The change comes when you transfer it to the block. Income tax comes and says, if you plan to transfer it to the block, if you transfer within 8 years, I have a problem. But if you transfer beyond 8 years, I don't have a problem. So income tax is coming and saying, if you transfer beyond 8 years, then in that case to the block you add 0. That's all. But if you plan to transfer within 8 years, I will assume that you never even had a specified business asset. Which means I'll compute normal depreciation. Which means assuming the asset cost was 100, you claimed 100. 3 years later, you sold it off. You transferred it to the block. 3 years later, you transferred it to the block. That day, assuming you had not claimed the whole 100, depreciation block, you would have claimed only 20. How much? 20. Now, you should have claimed how much? 20. You claimed how much? 100. What will you do? 80 will become income. Which means income tax will come and say, do one thing, boss. You claimed 100. You should have only claimed 20. Therefore, 80 I will offer as income. What will happen to the 80, Rahul? 80 will now add to the block. Basically, I am assuming that you should have claimed normal depreciation. Clear, everyone? Yes. Where is it, Rahul? It is here somewhere. Yes. Within 8 years, you will take the amount fully claimed minus the depreciation which would have been allowable. That will become your income. The same thing will be added to the cost of the asset. But if you transfer it after 8 years, then cost will become 0 in the block. If the cost is 0 in the block, then the income to be offered is also 0. But yes, please understand, if you transfer this directly off, then in that case, whatever deduction you claim will be income to the extent of sale price. Yes or no? Yes or no? Now here also the same conditions are there where they have come and told that boss, if you have incurred any kind of expense which you have paid otherwise than by account pay check, account pay draft, electronic clearing system, other prescribed modes, more than 10,000, one person, one day, 10,000 per person per day. In that case, that deduction will not be claimed. That deduction will not be claimed. That expense will be ignored. That expense will be ignored. Clear up? Yes. This is your 35AD. After 35AD starts the simpler activities called as 35D, which is your preliminary expenses. This is same as your pre-construction interest. This is same as a pre-construction interest. Income tax is coming and saying that if you have incurred any kind of preliminary expenses, you can claim it over a period of 5 years. What are the deductions you can claim? It is the actual preliminary expenses or 5% of the cost of the project, whichever is, that's all, 5% of the cost of the project. Right side and all is not important because it is Indian company. It is only for final level portion. It is only for final level portion. Talk to the left side. Left side is coming and saying actual cost or 5% of the cost of the project, whichever is lower, will be allowed over a period of 5 years. Next, they are coming and saying you have any kind of VRS scheme. If you have a VRS scheme, any kind of deductions can be claimed over a period of 5 years. Can be claimed over a period of 5 years. Then they are coming and saying, no, Rahul, you have something called family planning. Family planning for inter-syllabus is disallowed. Family planning for inter-syllabus is disallowed because it is only applicable on companies. It is not applicable for others. It is not applicable for others. So, in your inter-syllabus, if you see the word called family planning, take the number directly disallow. Take the number directly disallow. Nothing is allowable for you. Clear? Yes. After this, they come and say, boss, you have something called as PF and zero coupon bonds. Zero coupon bonds. They are coming and saying, boss, if you have incurred some zero coupon bonds, whatever is the discount you have given, amortize it over the number of months. Because zero coupon bonds is going to be only for lesser period. So amortize it over the number of months. In the month, if there is more than 15 days, then consider the whole month. If it is less than 15 days, ignore the month. Ignore the month. Simple, straightforward game. Yes. Yes. After zero coupon bonds comes something called as interest on loan. We have already discussed this in length, where I came and told you that if you have incurred an interest on loan, check whether it is for personal or official. If it is personal, disallowed. If it is for official, check whether it is for asset or normal business. If it is for normal business, allowed. If it is for asset, then it is up to put to use. Up to put to use, capitalized. After put to use, allowed. Same as your borrowing cost. Same as your borrowing cost. The only difference is in borrowing cost, they come and say asset is ready to use. Here the asset is put to use. Where the asset is put to use, same logics. Same logic. Clear up? Yes. Now, whenever you are talking about interest, you also have to keep in mind that interest will only be allowed as a deduction in PGBP subject to the conditions of 43B. Subject to the conditions of 43B. What is 43B? We'll discuss. Yes. This is your interest, and then we have something called as pension scheme. They're coming and saying that, boss, if you want to give national pension contribution to a employee, if you want to give a national pension contribution to employee, you can only give contribution to the extent what is permitted under 80CCD. Now 80CCD comes and says you can only give contribution up to 10% of your salary. So they're coming and saying 10% of salary is what you can give. If you give anything beyond that, it is disallowed. It is disallowed. You cannot give more than that. You cannot give more than that. Next comes the most important thing from exam perspective. This has become very famous of late. This has become very famous of late. This is called as contribution to PF. Contribution to PF. Income tax is coming and saying that, boss, contribution to PF can happen from the employer side in two ways. One is that he has taken the contribution of his own contribution. He has taken his own contribution. Second is where he has taken employee's contribution and kept with himself. Kept with himself. Income tax is coming and saying that, boss, if you have your own contribution, deposit within the due date of filing of return of income, you will get the full deduction because 43B. Because 43B. You don't deposit within the due date of filing of return of income, you will get it in the year of payment. You will get it in the year of payment. No problem. Temporary disallowance, you can get it in the year of payment. But the problem comes with the employee contribution. Employee contribution, they come and say, boss, you should have deposited employees' money within the due date of the act. Within the due date of the act. What act? PF Act. It is not IT Act, it is PF Act. You should have deposited within due date of the PF Act. If you deposit within the due date of PF Act, no problem for me, allowed as it is. Okay. It was not my income anyway, so I am not going to do anything with it. I'm not going to do anything with it. But if you make even a single day of delay, whatever is employee's contribution will become your income permanently. Not even one deduction will be allowed to you, even if you make the payment later. It will become permanent income in your hands. Please be extremely careful about this. I remember a question in November 22, I think. I saw a question on this in November 22, where they basically came and said that, boss, there is a contribution happening from the employers of contribution of 5,000 rupees. In that 5,000 rupees, 2,000 is employers, 3,000 is employees. 2,000 is employees and 3,000 is employees. Where what happened is they came and said this is the contribution for the month of March deposited by 16th of April. Deposited by 16th of April. The due date as per PF Act is 15th April. In which case what has happened? Employer's contribution, no problem, fully allowed because it is still within the due date of return filing. But employee's contribution of 3,000 rupees will become permanent income. Will become a permanent income where you have to come and say, boss, employer contribution ignore and go, employee contribution permanent income. Be extremely careful about this fact. Yes, sir. Yes. If you have done with what is PF contribution, next comes your bad debts. Next comes your bad debts. I came and told you when it comes to bad debts are allowable if you follow the proper accounting policies. If you follow the proper accounting policies, first accounting policy, you should offer an income. Second accounting policy, you should write off the debt. You should write off the debt. Yes or no? Yes. Two conditions to satisfy. First, you should have an income. Second, you should write off the debt. If you satisfy both the conditions, whatever bad debts you incurred will be allowed. But if you receive the bad debts in the future, this is called as bad debts recovered. In that year, you will have to offer this as income, irrespective of the fact whether you are running the business or not running the business. That is what the rule is. Irrespective of whether you are running the business or not running the business, you will have to offer the bad debt. You'll have to offer the bad debt. At the same time, please understand, if at all you have a bad debt which the assessing officer did not allow, what happened? You had a bad debt but the assessing officer did not allow. In the year in which you recover, you can reduce it off. In the year of income, you can reduce it off. What is the scenario, Rahul? You're basically talking about a case where, let's assume that the bad debt was 1 lakh. How much is the bad debt? 1 lakh. You tried to claim how much? 1 lakh. Assessing officer only allowed for you 80,000. How much? 80,000. Assessing officer only allowed 80,000. Yes or no? Yes. Now, when you were trying to recover the money, you got in your hand full 1 lakh. No, actually, let's make it 60,000. How much? 60,000. Now, the question which has come to you is, Rahul, I have got a bad debts recovery of 60,000. How much should I offer to tax? How much should I offer to tax? I only have to offer 40,000. Why, Rahul? I already offered the 20,000 in the past. Back then time itself, I was supposed to claim 1 lakh. Assessing officer made it 80,000, which means 20,000 technically I offered off. Which means now only I have to offer extra 40,000. Now only I have to offer extra 40,000, which means if the whole 60,000 is there in the P&L, you will allow 20,000 off. You will allow 20,000 off so that the P&L only has 40,000. The P&L only has 40,000. Clear, not clear? Yes. Next is your other deductions. You can ignore the other deductions. You have residuary expenses. This is your general expenses. If you have expenses and you do not know whether these expenses fall within 30 to 36, it will fall under 37. It will fall under 37. 37 comes and says that, boss, if you have any kind of residuary expenses, follow the general criteria of accounts. Which means it should be a revenue expense, should be owner's expense, should be for the current year. Other owner's expense. Should be official expense, should be revenue expense, should be owner's expense, should be for the current year's expense. Last item is income tax expense, where they come and say, boss, expenditure should not be in the form of a penalty which is in violation of an income tax act, or any kind of payment which is in violation of it should not be an expenditure which is in violation of any act. Not be an expenditure which is in violation of any act, which means bribe, penalty, secret commission, any nonsense is not allowed. Those things will be ignored for you. At the same time, income tax is also given some explanations. You tell the explanations and you tell me whether it's allowed or not. Okay. The first item, they're coming and saying premium paid by policy on keyman insurance by a firm or keyman insurance policy of partner. Why? You have taken it for your partners, so allowed. Benefit perquisite to a person, acceptance of which is violation of an act, rule, law, guideline governing conduct of such person. Not allowed. Any kind of expenses incurred for compounding an offense. Not allowed. You have gone to the department and come and said, sir, I'll pay lower penalty. No problem, still not allowed. Then they're coming and saying any kind of CSR expenses. Why? It's a donation, not for the purpose of business. Next, any kind of expenditure representing contribution for political parties. Again, not allowed because donation. not a business purpose. Then interest payable as per MSME Act is a special item. It's a special item where they're coming and saying if you had to pay any kind of MSME interest, that is disallowable. That is disallowable. Yes or no? Yes. These are the items given to you. But at the same time, please understand, if the question comes and says that you have interest and penalty, what do you have? Interest and penalty. Income tax comes and says no problem with the interest, disallow the penalty. Disallow the penalty because interest is a compensatory item. Interest is a compensatory item. Penalty is a I forgot the name, whatever it is. Yes, penalty is an item which is not allowed to you. Penalty is an item which is not allowed to you. Interest is allowed as a deduction. Talking about general. Talking about general. General interest is always allowable. Penalties are not allowable. But please understand, if you have to make any payment under Income Tax Act, Income Tax order, ella payment is disallowed. Income tax order, ella payment is disallowed. We'll discuss that later. Right now, this is what the provisions are. Any interest is allowable. Any penalty is not allowable. Any penalty is not allowable. For ICI inter perspective alone, late filing fees is also not allowable. For what? ICI inter perspective alone, late filing fees is not allowed. Late filing fees is not allowed. With this completion, you have completed what is called as your allowances. What is called as your allowances. Income tax also says that, boss, since I've told about the allowances, I also have to speak about disallowances. Income tax comes and says the first and the biggest disallowance for your exam perspective, which is mandatory coming, is your TDS. Income tax comes and says that, boss, I had asked you to deduct TDS on a person. If I find out that you have not deducted the TDS on the person before 31st March, or if you have deducted the TDS on that person but you did not give me the payment before due date of return filing, then I will consider you as a defaulting person. In which case 30% of the expense in case of a resident and 100% of the expense in case of a non-resident will be disallowed for you in the current year. Will be allowed in the year of payment of expense or TDS? TDS will be allowed in the year of payment of TDS. Look at this example. It's coming and saying that you have incurred an expense in 22-23. You deducted the TDS on 21st October. You deposited TDS on 7th November. Allowable, not allowable? Have you deducted before 31st March of your previous year? Yes. Have you deposited before 31st March, before the due date of return filing? Yes. Therefore, allowed. No problem. Come to the next scenario. I'm coming and saying you have deducted on 1st Jan. You have deposited on 1st August. You deducted on 1st Jan. Have you deducted before the due date? Yes. 31st March ko panita. So therefore no problem. Have you deposited before the due date of return filing? Yes. 1st August hai na. 31st July is presumptive cases ra. You have deducted it before the due date of filing return. Generally your due date of filing return is 31st October. If you don't want 31st October, you have to go to 31st July. In 31st July, it's a presumptive case. Presumptive case in the section hai varadu. So which means your due date for exam is only 31st October. Yes, if you have satisfied both the conditions, deduction is allowed. Then they're coming and saying, Rahul, you have deducted on 5th May. Your previous year or next previous year? Check, no. 22-23 is your previous year. So therefore, allowed. Paid on 10th December, within the due date, after the due date? After the due date, which means will be disallowed and allowed in the year of payment of TDS. When did you pay? 23-24. So allowed in the assessment year 24-25. Allowed in assessment year 24-25. Next. You have deducted on 9th April. Your previous year, next previous year? Next previous year. Inge stop. You are disallowing. Allowing it in the year of payment of TDS. When have you made the payment of TDS? 6th June 23. The moment you have made a disallowance, it is only allowed in the year of payment. I don't care about due dates anymore. Which means it will be allowed in the previous year, 23-24. It will be allowed in the previous year, 23-24. Yes or no? Yes. Next time coming and saying, boss, I deducted on 26th July. Within your previous year, next previous year. Which means disallowed. The moment I am disallowing, I am not caring about when that payment is happening. I am only caring about I'm not caring about what the due date is. I am only caring about when the payment is happening. Payment is happening in previous year, 24-25. So therefore allowed in the assessment year, 25-26. Allowed in the assessment year, 25-26. Clear, not clear? Everyone? Yes. Now this is what the conditions are for your TDS conditions. In this also income tax comes and says that boss, generally this is what the conditions are. But if at all I find out that the other person, what if the other person goes ahead, files the return, shows this income, pays the tax and everything, then in that case you can stop the disallowance on the date on which he files the return. He files the return. So if the other person has filed the return, including this income, paying this taxes and giving me the return, I can stop this disallowance on the date on which he files the return. That date will be assumed as payment of TDS. That date will be assumed as payment of TDS. Yes or no? Yes or no? This is what the criteria are. Can we go forward? Yes. If you have completed a 40I, then comes your 40A2. 40A2 simply comes and says, boss, any payment under Income Tax Act disallowable. Any payment under Income Tax Act is disallowable. When I speak about any payment, I mean any payment. Even interest is disallowable. Any tax is disallowable. Cess, late filing fee, penalty, whatever it is, everything is disallowable. It doesn't matter. It doesn't matter. Everything will be disallowed for you. Please understand at this point of time, also clarifying that any other taxes are allowable. Any other taxes are allowable. GST and all you can claim. GST and all you can claim subject to 43B. Subject to 43B. Then next items and all you can ignore. Royalty and all you can ignore. TDS default you can ignore. This is what the perquisite valuation is. If you are paying any non-perquisites to your employees, if you're giving any non-perquisites to your if you're giving any non-monetary perquisites to your employees, and the tax on that is what you want to bear. The tax on that is what you want to bear. You can bear the tax so that employee can get a exemption. So that employee can get an exemption. If you are bearing the tax, it will become disallowed for you. It will become disallowed for you. Has never been tested in exam. Don't worry about it so much. Yes. And the last few items is called as your related party payments. Is your related party payments. Income tax is coming and saying that, boss, if you are going to make a payment to your related party, which the assessing officer finds as unreasonable or excessive, in that case, assessing officer can disallow the excess payment. Disallow the excess payment. This payment should go to related parties. Related parties means left side of the family. Left side of the family, which means spouse, brother and sister, parents, lenient ascendants, lenient descendants. That's all. Left side of Rahul's spouse and all is how left side. She has become left side, ma. Okay, she or he has become left side. Don't discuss about that too much. Okay, after they come to the family, parayadhan only. Parayadhan in Hindi is whatever. Okay, point is she's become a part of your family. She's become a part of your family, so it's still the left side of the family. Still the left side of the family. Understand, in this section, you are only disallowing excess payment. You are not disallowing any short in income. You're not disallowing any short in income. You have to be on the payer side. You have to be on the payer side. From a payer side, if you pay more expenses, then it is disallowed. If you are on the income side, it doesn't matter. It doesn't matter. Even if you get a lower income also, this section is okay. Even if you get a higher income also, the section is okay. The section is okay. The section is only bothered about expenses. The section is only bothered about expenses. With me till here? Yes. If you have completed 40A2, the next one is 40A3. The next most important section from exam perspective, which basically comes as says that if you have a payment which you have to make a person, and the payment is made other than by account pay check, account pay draft, electronic clearing system, or other prescribed modes, more than 10,000 one person one day. 10,000 one person one day. In that case, I will disallow that payment. I will disallow that payment permanently. I will disallow that payment permanently. At the same time, assuming you have incurred the expense today, you have incurred the expense today, but the payment has happened in the next year. In the payment has happened in the next year. Next year, I will assume it as income. Next year, I'll assume it as income. But here they have given certain exceptions. Exception number 1, they are coming and saying 10,000 will become 35,000 for a transport operator. 10,000 will become 35,000 for a transport operator. There are certain cases where I will not like to get the payment in permissible modes because it is not possible. It is not possible. Some examples are payment made to farmers, payment made for places where you don't have a banking facility. Then crew member employee sent to a rural area where there is no banking facilities, money given to agent, any kind of retirement benefits given more than 50,000. All these examples are there. And I think one other place is there, book adjustments. If you're doing internal book adjustments also, it is allowed. Then they're coming and saying, what is permissible modes for me? It is credit card, debit card, UPI, Bheem Aadhaar Pay, Done? Yes, all these items are there for you. Then they are also clarifying to you that, boss, please understand what I'm talking about is account pay check, which means crossed check, bearer check, both are disallowed. Crossed check and bearer check, both are disallowed, both are not allowed. Both are not allowed. Clear, not clear? Clear? Yes, this is what your 40A3 looks like. This is what your 40A3 looks like. After that, I think everything else you can ignore off. 40A7 can be ignored. 43A is what we were discussing. Yes, this is more of a final level portion, but just to clarify to you, since it's there in syllabus, the provisions come and say that if you have ended up buying an asset from foreign country, if you're buying an asset from foreign country and you have bought the asset on credit basis, what basis? Credit basis. If you bought the asset on a credit basis, when you make the payment, you may incur something called as foreign exchange gain or foreign exchange loss. Whatever gain or loss which you have will also be capitalized. I will not claim it as a deduction. I cannot claim it as a deduction. I have to capitalize it off. If it is a loss, then you will add it. If it is an income, then you will reduce it. This is what is a simple logic. Idu mattum nyamam vecha porom. Clear? Yes, in case it comes. Generally doesn't come. In case it comes, you just take care of that. Yes. After this comes your next section called as 43B. From exam perspective, there are some sections which are extremely important. Depreciation. Scientific research, 40A3, 40A2, payment to related parties, 37 and the penalties and all those things, and 43B. These things are the ones which keep coming again and again in life, and they don't have any new ideas also. Same numbers will keep repeating. Okay, sometimes same adjustments will keep repeating, sometimes numbers will also repeat. Depreciation, scientific research, related parties. 40A3, 40A2, 37 penalty, and then 43B. And TDS, yes, very good, TDS. 40IA. Presumptive is a secondary thing. I'm talking about disallowances. PGBP compute pannamodu enna varum. Okay, 40IA also. 40IA and 40I, both. TDS also. Yes, these are the things which keep coming, and for some reason they don't have any fresh ideas, so the same numbers will keep repeating. Go before exam hall போறதுக்கு முன்னாடி your last two papers ஓட adjustments பார்த்து போறோம். அதே வந்துரும் திருப்பி அப்படியே repeat ஆகும். Okay, just keep that in mind. 43B is what we're discussing right now. 43B comes and says that there are certain items which will be allowed to you only on payment basis, and payment basis means payment is not today, payment can be up to due date of return filing. What are the 5 items? Our first item I'm coming and telling is any kind of taxes paid to government. Then any kind of interest payable to banks or NBFCs, then any kind of leave encashment, any kind of bonus or commission, then any kind of use of railway assets. All these items will become 43B items, which means these payments will only be allowed as a deduction only in the year of payment or before the due date of filing of return of income. If you have incurred it in the current year, you have time until the due date of filing of return of income. You pay until the due date, you will get the full deduction today itself. You don't pay, I will allow it in the year of actual payment. Clear, not clear? Clear? Yes. Now in this also they are coming and clarifying that, boss, whenever you talk about interest on loan, I am meaning interest on loan. If you have converted the interest into a loan also, it doesn't matter. Even if the interest has been converted into a loan, which means you have gone to the company and you have gone to the bank and come and said, sir, I don't want this interest anymore. Capitalize it as a loan. In that case also, I will not allow the deduction of the interest unless and until you repay the loan. What example is this? You're looking at the bottom example. It comes and says, Mr. Punctual has not paid interest due to ABC Bank for the over 5 years, which has been disallowed in 43B. Then they're coming and saying that interest payable is 6 lakhs per annum, which means 5 years is 30 lakhs. Where was I? ABC Bank and Mr. Punctual enter into a loan restructuring wherein the interest due would be payable in 30 monthly installments. Now what has happened? Interest has become a loan. EMI loan. It has become a EMI loan. If Mr. Punctual is paying 10 installments in previous year 22-23, can he claim the whole 30 lakhs or can he claim only the 10 installments? He can only claim the 10 installments. What will it be? 30 lakhs into 10 by 30 which will become 10 lakhs. Will become 10 lakhs. Therefore 10 lakhs will be allowed in the current year. Balance 20 lakhs will be allowed in the year of payments. It's an amendment in the current year, so be careful. Okay, there are some small amendments. Loan ku thavara depreciation debenture ella potrukanga. Adu mattum paathukonga. Okay. And done. I think yes, this is pretty much your PGBP chapter from the computational perspective. From the computational perspective, coming to the more procedural aspects like income tax is coming and saying that, boss, where is it? Yes, on the procedural aspect, they're coming and saying, boss, when you come and do PGBP, you have two kinds of items. One is called maintaining books, one is called as audit of books. In maintaining books, they're coming and asking me, tell me who are you? Are you a business person or are you a professional person? Profession has been defined as certain people, accountants, engineers, lawyers, doctors, architecturals, all the vocational people, any kind of camera people, film, cinematographic film people, film actors, cameramans, directors, producers, etc. Yes, these are all your notified professionals. Income tax comes and says that, boss, if in the last 3 years, all the last 3 years you have had a gross receipts of more than 1,50,000. All the last 3 years you've had a gross receipts of more than 1,50,000. I will tell you what books to maintain. You have to maintain that books. What books, Rahul? Cash book, journal book, ledger book, carbon copies, bill copies, carbon copy, bill copy, and all those things. Some important items are your inventory register, medicine register, daily case register. What register? Daily case register. It is not daily cash register. It is daily case register. This daily case register is only for medical people. Yes. So for all those people, you have to maintain that. MCQ question, nothing else. Yes. Now they have come and said that, boss, if you have a gross receipts more than 1,50,000 in all of the last 3 previous years, you have to maintain books, and I will tell you what books to maintain. Assuming you don't have this more than 1,50,000 in last 3 years, I will also check for whether you are expected to have 1,50,000 in the current year. If that is also there, then also I want you to maintain books, which I come and tell you. Assuming you say, no, Rahul, I am not having in the last 3 years also, I am not expecting in the current year also. In that case, I'll come and say, no, you have to maintain books, but I will not tell you. You maintain whatever books you want. Tomorrow, assessing officer, if he comes and asks you for something, you should be able to support it. Yes or no? Yes. Coming to the business part, they're coming and saying, boss, split yourself into individual HUF separately and others separately. Check for the sales also and the PGBP also. They're coming and saying, if I find out that your PGBP is more than 2,50,000 and turnover is more than 25 lakhs for individual and HUF, or your PGBP is more than 1,20,000 and turnover is more than 10 lakhs for other people in any of the last 3 years. What year? Any of the last 1 year also enough. In that case, I will come and tell you that you have to maintain books. So what books to maintain? I don't have to tell you. You maintain whatever books is required. You tell me, Rahul, no, this is not happening. Then I come and say, I will check this for the current year as well. In that also, if it is satisfied, then also you have to maintain books. You tell me, Rahul, this is also not getting satisfied. Then I'll come and say, no, required to maintain books. So forget it off. Not required to maintain books. You can ignore it off, because anyway, you are going to fall into presumptive. PGBP 2.5 lakhs kamala kuda polena onno agu pordilla. Yes or no? Then you're going to fall into presumptive models. Yes or no? Yes, they're coming and saying, boss, if you don't maintain books of accounts, you have to maintain a books of accounts for a period of 6 years. I thought penalty is there. New syllabus. Okay, good for you. New syllabus la penalties alla notify panniranga, old syllabus la illa. In that time pass pannittingna nalla irukum. Yes, the next part is, if you maintain books of accounts, you have to also do audit. Now on audit, they are coming and saying that, again, I'll ask you whether you are into business or profession. If you are into profession, I'll come and say you have to maintain, do an audit if your turnover is going more than 50 lakhs. If you are into business, I'll come and tell you that you have to do that tax audit if it is more than 1 crore. But if I find out that your cash payments or cash receipts, is not more than 5%, then in that case, I will permit this tax audit only after 10 crores. Now, please understand, the cash receipts or cash payments is 5% of, cash receipts is 5% of receipts, cash payment is 5% of payments. And when I use the word receipts and payments, I have no criteria as to what receipts are you talking about and what payments you are talking about. It can be a capital receipt also, it can be a revenue receipt also. Okay, the total cash receipts which I make should be less than 5% of the total cash total receipts which I have in the current year, and the total cash payments which I make should be less than 5% of the total payments I make in the current year, whether it is capital, revenue, doesn't matter. Okay, if that is happening, then in that case you will have a turnover of 10 lakhs. Now please understand, when I use the word cash, account pay check tavara, bearer check and cross check is also considered as cash. is also considered as cash. In simple words, permissible modes. In simple words, permissible modes, you should have payments more than 95% in permissible modes. If you have your payments more than 95% in permissible modes, I have no problem with that. I have no problem with that. Clear? Yes. At the same time, they're coming clarifying that boss, these tax audit conditions will not apply in case you opt for presumptive taxation. In case you opt for presumptive taxation, in case you are liable for a tax audit has to be submitted 1 month before your return filing due date. Since your return filing due date is 31st October, you have to submit 1 month before, which is 30th September. Now only due date got over. Okay, and everyone is making a human cry today. Today is the next day of the tax audit due date, right? Everyone in CA world is making a human cry saying we have not filed our tax audit reports. Please extend the due date. Not happening. Okay. Go see the market now, you'll know. Every CA firm they are going and protesting right now. Na panla. Unakku yaar panna solla. Pandirukkumonla. Kadasi varaikum thoongirpaanga. Anyway, the point is this is what your tax audit looks like. Coming to the next part where they're coming and saying, Rahul, so much we learned in PGBP, so much information to keep in mind. I don't think I am capable enough to do it. Income tax is no problem. You will not be capable only if you're poor. I will tell you when you are poor, I will tell you when you don't have to do all this. Yes, which comes in the concept of presumptive, where they're coming and saying that if you are into business, and I find out that your turnover in the business is less than 2 crores. How much? 2 crores. If your business is less than 2 crores turnover, then in that case, I'm coming and telling that boss, no problem. You don't have to maintain books of accounts. You don't have to get them audited because I'm making you under presumptive taxation. Where the rules come and say that whatever is your turnover, 6% of that I want as PGBP income. 6% of that I want as PGBP income. Only if I find out that the turnover is received by permissible modes. Only if I know that the turnover is received by permissible modes and the money is received within the due date of filing of return of income, which is 31st July. Within 31st July, you should have received your permissible mode payments. Within that, if you do, then your turnover will become 6%. If you don't satisfy the condition, it will become 8%. They're coming and saying, boss, satisfy these two conditions. You are not required to do any books of accounts. You're not required to do any tax audit. I don't want you to do PGBP income also. Your advance tax due date will become last 15th March. Nothing else is required from you. You can do your life simple as that. But if you want to make it complicated and offer lesser than what I have told you, two things to do mandatory. One, maintain books of accounts. Second, get it audited. At the same time, I'm coming and clarifying that, boss, if you have chosen to be in presumptive, stick with me for 5 years. The year when you choose to betray me, from that year for the next 5 years, I will not call you back. Which means if you have chosen to opt out of presumptive in any of those 5 years, from that year to the next 5 years, no more presumptive for you. Mandatory books, so mandatory audit. That's what the criteria are. Yes. Next, they're coming and saying that, boss, if you are not into business, but you are into profession, then in that case, I'm coming and saying, I want 50% of your turnover as profits. 50% of your turnover as profits, subject to the condition that the turnover should be up to 50 lakhs. If your turnover is up to 50 lakhs, 50% of the profit turnover you give me as profits, I will let you go. I don't want books from you. I don't want audit from you. Same conditions as 44 AD. That last 5 years of concept alone is not there. And the 5 years of block alone is not there. Balance everything is the same. Please understand, this presumptive criteria are only for individuals, HUF and firms. Only for individual HUF firm. Firm la kuda LLP it is not there. For any other people, presumptives are not applicable. Clear with me? Yes. And the last presumptive comes back to you. The last presumptive comes and says that, boss, you are into transport business. What are you into? Transport business. Income tax comes and says that if you are into transport business, I will come and check how many vehicles you have. If you come and tell me that, Rahul, I don't have more than 10 vehicles at any day during the previous year. Not more than 10 vehicles, I will say you are eligible. In which case I will ask you to split yourself into light good vehicles and others. Heavy good vehicles and others. Heavy good vehicles are defined as those kind of vehicles whose capacity weighs more than 12 metric tons. 12 metric tons. If you are found out to have a heavy good vehicle, I want 1000 per ton per truck per month. 1000 per ton per truck per month from you. Mandatory. And if you have anything other than a heavy good vehicle, I want 7500 per month per truck. 7500 per month per truck from you, mandatory. If you give me this much income, I will let you go. I don't want you to maintain books. I don't want you to get them audited. I don't want PGBP income also from you. I don't want PGBP income from you. This will become my PGBP income. This will become my PGBP income. Now, please understand, when I spoke about per month per truck, I am talking about per month per truck when you owned it. When you owned it, I am least bothered about when you put to use. I am least bothered about when you put to use. If you bought the asset in April and you put to use in July, I will still compute income from April. I will still compute income from April. And second thing, they're coming and saying, Rahul, I will take income for the whole month, even if the asset is there for one day. Even if you bought the asset on 30th April, I will still consider that applicable for the whole month, which means for the whole month, you are liable for 1000 per month per truck or 7500 per month. Simple, straightforward rule. Simple, straightforward rule. The only exception or the difference between this and the 44AD and 44ADA is that in those two scenarios, advance tax was only one installment. Here, advance tax is all 4 installments. Advance tax is all 4 installments. Second thing, they're coming and saying, if you are into a firm, you have something called as interest on capital and salary. Yes, those two things were not allowable in 44AD and ADA, but can be claimed in 44AE. Can be claimed in 44AE. Now, Rahul, what is this salary and interest? Let's discuss. The provisions are coming and saying that if you are not an individual, but you are a firm, if you're not an individual, but you are a firm, in that case, income tax is coming and saying that, boss, whatever profits you give from the firm is exempt for the partner. But whatever interest you give from the firm will be exempt, will be deductible for the firm, will be taxable for the partner. Whatever salary you give from the firm will be deductible for the firm and will be income for the partner. How do you compute this, Rahul? They are coming and saying, boss, whenever you get any kind of interest, it is deductible up to 12%. It is deductible up to 12%, which means partner can also be taxable only up to 12%. Yes, this is what the rule is. Coming to salaries, the question is coming and saying, before even you start salary, you have to check whether this is permissible as per the deed. So they have put some conditions. Condition number 1, they're coming and saying you can give salary only to working partners. Condition number 2, they're coming and saying salary can only be given to those partners which are authorized by deed. Condition number 3, they're coming and saying even if the salary is authorized by deed, you can only give it prospectively, you cannot give it retrospectively. In that case, they're coming and saying, boss, if you want to compute your salaries, tell me what is the profit of the firm. How do you compute the profit of the firm, Rahul? PGBP income of the firm. Full PGBP income of the firm, disallowing your salary which is already debited. Take the full PGBP of the firm, disallow the salary which is fully there, you will arrive at your book profit. With the one exception that if you have unabsorbed depreciation of previous years, that has to be reduced. Only for the purpose of computing salary. After you compute the salary, you can leave it away. Only for the purpose of computing salary, you have to reduce your unabsorbed depreciation. Please do not reduce any other loss. Only unabsorbed depreciation. You will arrive at a book profit. Follow the slab model. For the first 3 lakhs. It is 90% or 1,50,000, whichever is high. Rahul, how to remember high or low? Understand, if the firm does a loss, you still have to pay them 1,50,000. That is what the logic is. Therefore, it is whichever is higher. So for the first 3 lakhs, it is 90% or 1,50,000, whichever is higher. Anything beyond the 3 lakh rupees, it is 60%. Add both the salaries, check with the actual salary you are planning to give, whichever is lower. That will be allowed as a reduction to you. That will become a new PGBP income. That PGBP income will be allowed as a deduction in your hands and will be taxable in the hands of the partner. In their own slab rates. Under what head? PGBP. Salary paid to partners is taxable under PGBP head. Clear with me? Everyone? Awesome. This marks the end of your chapter called as PGBP. Any doubts? All clear? Yes. Last thing before I move to the next chapter, which I want you guys to please keep in mind, is this chapter is the favorite chapter for ICI, not because it is tough, it is because they play around a lot. They play around a lot. They have a very different mechanism to play around, and you have to be extremely careful on what you're talking about. Okay, you cannot complete this chapter in exams unless and until you know proper accounts. You know proper accounts. In some places, ICI will come and tell that the income is given to you, which already includes these items. In some places, they'll come and say this item is not included. In some cases, they'll come and say exclude this item. Some cases, they'll come and say include this item. Unless you clearly understand what you would have done in accounts, you cannot do income tax. Be extremely careful about that fact. In simple words, if the question comes and says that there is a net profit, there is a net profit without considering the salary to partners, will you again disallow salary? No, because it is still not there. It is not there. Whereas they come and say net profit after considering the following items, adala salary kuttirkarna, you have to disallow. Clear, not clear? Yes. At the same time, they may also come and say this is the net profit without considering profit given. And if you find out that the profit is not taxable under PGBP, will you again reduce? No. In that case, you let it go. If they say no, net profit is after considering this profit, then in that case, you will do reduction from here and move it to other head. So you have to be extremely careful about what the net profit is given and whether the item is there in the net profit or not. Then decide whether you have to remove it or not remove it. Clear, not clear? Yes. At some point of time, you may also come across scenarios where ICA may have not clarified it itself, saying that whether it is included or not included. You are free to make your own assumptions. The general policy is, if the question comes and says net profit after considering the items, it means these all items are there. And then if they give you the word called as additional information, that means that's a breakpoint. From there, whatever items are there are generally not there. Which means these items are extra to be taken. Unless and until clarified. Clear, not clear? Yes, keep that in mind. With that, if you do, PGBP will come properly well. Okay. In case you are not confident about it, I think we have done a good amount of comprehensive questions. Please solve all the questions once again, just to see where you stand. Because I think there are about 18 to 20 questions in that. In that 18 to 20 questions, we have already done, like, some places they'll be included, some places not included, some places added, not added, and all. Be extremely careful about it. Yes or no? Yes. And be careful about the wordings you use. If you use the word disallowed means it should be there, then only you disallow. If it was never there, don't disallow. You'll use the word ignored. If you are having that item and you want to remove it, then you will come and say allowed. You will say, if you have an income which you have to remove, then you will use the word allowed. If you have no expense claimable, but you want to claim something now, that is also called allowed. Simple example, scientific research capital expenses. Will it be there in the net profit? No, which means you have to allow it. Keep that in mind. Clear? Yes, using of words are more important. Ideally, the answer will remain the same, but your English will help you make an impression before the examiner. Okay, so that impression carries marks also. Okay, sometimes that impression also carries marks, because at the end of the day, you have to pass also. Yes or no? Yes, all clear? Perfect. What is the time right now? 11:50. Okay, it's almost about 11:50. How much time did it take for PGBP? 10:15 we started. It is the time. Yes, 1.5 hours. Solid 1.5 hours, PGBP is done. Yes, this is all the time that will be cut. Okay, we'll do one thing, we'll complete capital gains and then we'll cut for lunch. Because everything else is all cakewalk. Then I'll just run only, nothing else to do. Okay, yes, we are completing capital gains and then we're cutting for lunch. Hey, don't worry about this, we'll discuss when we do capital gains. Okay, perfect. In my book, capital gains is split into 3 chapters. For the sake of convenience, I'm going to start in the same sequence. Pages turn pandradhukku. Yes, we're starting with the first chapter called as capital gains. Income tax simply comes and says that, boss, if you have to make a transfer of a capital asset, it will be taxable under the head capital gains. Will be taxable in the previous year in which the transfer took place, which means 2 conditions to be satisfied. 1, there should be a capital asset. 2nd, there should be a transfer. 3rd, there should be taxable only in the year in which the transfer took place. Will be taxable in the year in which the transfer took place. Please understand, I am telling that it will be taxable in the year in which the transfer took place. Payment of tax can maybe happen in different year. We'll understand that. Right now, this is what the provisions are. Yes. What do you mean by capital asset? Income tax is coming and saying capital asset means any asset of the assessee except for stock and trade. But they are also removing anything called as movable personal effects. movable personal effects. In the movable personal effects also they are coming and saying some items are not removed, which means these items are still there. What are those items? BA pass DJ, bullions, archaeological collections, paintings, any work of art, chairs and sculptures, DJ, drawings and jewelry. Drawings and jewelry. Yes, these are all the items. These items, though they are movable personal effects, are still taxable. These things have to be kept in mind. Either tavara, if you have fridge sale, phone sale, mobile sale, all these are non-taxable. All these are non-taxable unless and until they are business assets. Unless and until they are business assets. With me till here? Yes. At the same time, they're also clarifying that, boss, when you're talking about immovable properties also, it's not every immovable property which is taxable. I am not taxing rural agricultural land. I'm not taxing rural agricultural land, which means you need to understand what is a rural agricultural land. Income tax comes and says rural agricultural land is those land which is not an urban agricultural land. So what is urban agricultural land? Urban agricultural land is those kind of lands where the population has gone beyond 10,000. The population has gone beyond 10,000. So if you have a land in a municipality where the population has gone beyond 10,000, it is called as an urban agricultural land. Assuming your land is not in the municipality but within 2 kilometers, same 10,000. Same 10,000. If it is not within 2 kilometers, it is within 6 kilometers. It is within 6 kilometers. Then the population has to become 1 lakh. The overall population from that municipality to that 6 kilometers has to be more than 1 lakh. Then it will become urban. Otherwise, it is rural. If it is anything beyond 6 but up to 8, it is 10 lakhs. It is 10 lakhs. And if it is anything above 8, it is always rural. It is always rural. This is what the criteria are. This is what the criteria are. And this distance which you are looking at is distance from the aerial level. This distance from the aerial level. With me till here? Yes. Now this is what your capital assets looks like. Capital assets in income tax are defined into two models. One is called short-term capital assets. One is called long-term capital assets. They all are decided by short-term and long-term basis your period of holding. Basis your period of holding. Income tax comes and says that, boss, if you are having any kind of zero coupon bonds, listed securities, zero coupon bonds, listed securities, UTI mutual funds and equity oriented funds. All these items will have a short term capital asset if the period of holding is less than 12 months. If it is more than 12 months, it is long term capital asset. If Rahul, these are not the assets, then it is immovable property, unlisted securities. Immovable property and unlisted securities, those will become 24 months. If Rahul, this is also not there, then it is 36 months. 36 months will be comprising of debt, equity and all those things. Yes, your slump sale, debt, equity funds, business unit trust, all those items. Yes, all those items will become your long term if it is 36 and above. If it is 36 and above. Clear? Yes. Then after you classify your assets, you have to define what is transfer. If you define what is transfer, income tax comes and says transfer is sale, exchange, extinguishment, relinquishment, conversion, compulsory acquisitions, all those items. At the same time, they're coming and saying that, boss, there are some items which may not be regarded as transfer. From exam perspective, not everything is important. Some items which are important is any kind of gifts is not regarded as transfer. Any kind of partition of HUF is not regarded as transfer. Any kind of gift is not regarded as transfer. Any kind of partitions of HUFs are not regarded as transfer. And then they are coming and saying that, boss, if you have any kind of transfer between holding subsidiary holdings, amalgamation, demerger, business reorganization, conversion of assets into, conversion of shares into debentures into shares, inna mechanism vechalo, everything is not taxable. At the same time, they are also clarifying that if you have received any kind of asset under a reverse mortgage, under what? Reverse mortgage. What is a reverse mortgage, Rahul? I have given my land, I have given my building to bank in exchange for getting monthly income. In exchange of getting monthly income, which will later on be repaid back. When I transfer my capital asset to the bank, it is not regarded as transfer. When the bank sells the asset, it is not regarded as transfer for the bank. It is regarded as transfer for me. Any payment which is coming from the bank to me is also not taxable. Which means in the whole transaction of reverse mortgage, only one item is taxable, which is the sale of the house. And that is also taxable in the hands of the senior citizen. Yes or no? Yes, this is what your transactions not regarded as transfer. Simple, straightforward game. Yes, after that comes your format. After that comes your format. You have two different formats for your short-term capital gains and long-term capital gains. Income tax is coming and saying that, boss, if it is short-term capital gains, you start from full value of consideration, reduce your cost of transfer, you will arrive at net consideration, reduce your cost of acquisition, cost of improvement, you will arrive at short-term capital gains. You will arrive at short-term capital gains. But if you are in a long-term capital gains model, you will start from full value of consideration, cost of transfer, net consideration, indexed cost of acquisition, indexed cost of improvement, long-term capital gains. Long-term capital gains. And then you have certain exemptions. Yes or no? Yes or no? Now when you come to capital gains, I told you that anything which is taxable in the previous year in which the transfer takes place, but there are certain exceptions. Exception number one is your insurance compensation. Income tax comes and says that, boss, whenever you have an insurance compensation will be computed in the year in which the asset is destroyed. But will be taxable only in the year in which the money is received. Yes. Exception number one, they're coming and saying that the asset is taxable in the year in which the asset is destroyed, but it is paid only in the year in which the asset is received, which means if you have to do any kind of indexation will stop on the date on which the asset is destroyed. Yes or no? Yes. Next item is, after insurance compensation, you have conversion of capital asset into stock and trade. Question is coming and saying that, boss, if you have converted your capital asset into stock and trade, the taxability will happen in the year in which the asset is converted, but the payment will happen only in the year in which the asset is sold. Yes or no? Yes. Rahul, how do you convert? You convert it using the fair market value on the date of conversion. Okay. So from the capital asset, the sale value will become the fair market value of the cost of the asset, and for the stock in trade, the cost of acquisition will become fair market value of the cost of conversion. Fair market value on the date of conversion. Yes or no? But the same in the reverse scenario will not work. If you are converting your stock in trade into capital asset, the stock in trade will be taxable in the year in which the asset is converted. And the capital asset will be taxable in the year in which the asset is sold. Rahul, how to keep the difference? The logic is very simple. Capital gains can be deferred. PGBP cannot be deferred. Look at the sequence of events. If PGBP is happening first, PGBP will happen first. If capital gains is happening first, capital gains will happen along with PGBP. With me till here? Yes. After you complete your conversion, next item is called as compulsory acquisition. The next item is called as compulsory acquisition. Income tax is coming and saying that government has the authority to buy over your property forcefully also. In case they buy over your property forcefully also, the date on which the asset is compulsorily acquired from you will become the date of transfer. Tax will also be computed on such date. But the tax will be paid in the year in which the first installment is received. This is what the rule is. Yes or no? Now, in case you have taken a further appeal, income tax is coming and saying you will receive something called as enhanced compensation. Now, enhanced compensation will also be taxable in the year in which it is received. And the nature of the enhanced compensation will be the same as the original compensation. But at the same time, in case the enhanced compensation came to you by way of an interim order. What order? Interim order. Then in that case, I cannot tax it on the date of receipt. I will tax it on the finalization of the order. Nature of the enhanced compensation will remain the same as the original compensation. Rahul, how do you compute this? This is how it will look like. You have initial compensation, your full value of consideration minus index cost of improvement, you will get your capital gains. Enhanced compensation, if you have received something by interim order, tax it in the year of final order. If you received anything else, you will be taxing in the year of receipt. There you will have a full value of consideration, which is nothing but the amount which you received minus any kind of legal cost which you incurred. You will arrive at your capital gains. This capital gains will be the same as left capital gains. The capital gains on the right will be the same as left capital gains. The same period of holding will apply. Everything else will be the same. Yes or no? Then they are also coming and saying that, boss, along with enhanced compensation, if you also receive an interest, then in that case, interest will also be taxable in the year in which it is received, will be taxable under the head IFOS, will be allowed over a period of, will be allowed 50%. We'll be allowed 50% of the income as deduction. We'll be allowed 50% of the income as deduction. The next item I think is called a specified agreement. You can ignore it from exam purposes. You can ignore it from exam purposes. Clear? Yes. Coming back, if you notice the format, I told you it is full value of consideration less cost of transfer coming at net consideration, reduce cost of acquisition or indexed cost, and then reduce cost of improvement or indexed cost of improvement, arrive at your capital gains. Let's look at the items one by one. The first item is full value of consideration. Income tax is coming and saying full value of consideration is the consideration which you have received. The consideration which you have received. In case you are not able to find out the consideration, consideration will be deemed to be the fair market value. Consideration will be deemed to be the fair market value, but there are some exceptions to it. One exception is where they're coming and saying if you have done a immovable property, if you've had an immovable property, in case of an immovable property, if you have sold that immovable property for lesser than the stamp duty value, then you will take the full value of consideration as the stamp duty value, but you will not do this nonsense if the stamp duty value is within 110% of the consideration. Is within 110% of your consideration. This is section 50C. This is section 50C, where they're coming and saying stamp duty value or full value of consideration, whichever is stamp duty value or actual consideration, whichever is higher, but ignore this provision if the stamp duty value is within 110% of the consideration. At the same time, they're coming and saying, boss, if you have two stamp duty values, you have to take the stamp duty value on the date of registration. But you can also take the date of agreement if you satisfy two conditions. If you satisfy two conditions, condition number one, you should get advance money. Condition number two, the advance money is paid through permissible modes. Third, they're coming and saying, Rahul, if you are not happy with the stamp duty value, you can go and fight with the valuation officer. If a valuation officer comes and gives you a value lower than stamp duty value, take the value. If the valuation officer is giving a value above the stamp duty value, ignore the valuation officer, take the stamp duty value. Take the stamp duty value. This is what the provisions are. Yes or no? Yes. Something similar like this is also there for unquoted shares, where they're coming and saying if you have sale of unquoted shares, you have to take the actual consideration or the fair market value, whichever is higher. Whichever is higher. Yes or no? Yes. This is your full value of consideration. Next item is cost of transfer. Income tax is saying, boss, any direct cost which you incurred for transferring will be allowed as a deduction. You will not be allowed anything called as STT. What if? Any security transaction tax which is incurred is not allowed as an expense. Is not allowed as an expense. You will arrive at something called as net consideration. In the net consideration, you have to remove cost of acquisition. You have to remove cost of acquisition. Income tax is coming and saying cost of acquisition is the actual cost which you incurred. Is the actual cost which you incurred. But yes, there are transactions where transactions are not regarded as transfer. The examples we did, gift, transfers and all those things. Yes, in all those cases, cost of the new owner will become cost to previous owner. Cost of the previous owner. This is what the provisions are. Yes, cost of the new owner will become cost of the previous owner. Period of holding will also be from the previous owner. But indexation will start from, the indexation will continue to start from the new owner unless and until you opt for Manjulasha. Unless and until you opt for Manjulasha. If you opt for Manjulasha, then it becomes previous owner. Then it becomes previous owner. Your choice what you want to do. Make sure you put the notes. Make sure you put the notes. But Rahul, assuming that I bought this asset before 2001. Yeah, assuming I bought the asset before 2001. Now there is a problem because my indexation only starts from 2001. Income tax comes and says, no worries, boss. In that you can take the actual cost or FMV, whichever is higher. Actual cost or FMV, whichever is higher. But if it is an immovable property, you have to compare FMV with SDV also. FMV and SDV, whichever is lower, compared with your cost, whichever is higher. Compared with your cost, whichever is higher. This is what the provisions are. Okay, this is what the provisions are. Look at the example. It comes and says that your actual cost in scenario 1 is 100, your FMV is 110, your SDV is 90. What will you do first? 110 or 90, whichever is lower, which is 90, compared with 100, whichever is higher. Therefore, 100. Next, 100, 120, 110. 110 and 120, whichever is lower is 110, compared with 100, whichever is higher. Therefore, 110. 100, 130, 120. 130 or 120 is 120, compared with 100 is 120. Therefore, 120. Yes, this is only if it is an immovable property. This is only if it is an immovable property. Keep that in mind. Yes. Next thing they're coming and saying, Rahul, if you have an asset which you have got on account of gift, if it was not a taxable under gift, then it is cost to the previous owner. But if it was taxable under gift, then whatever value you paid on tax, that is what the amount is. That is what the amount is. Yes or no? Yes. This is what your normal cost of acquisitions are. Anything else is not so important. You can ignore it and go. Next thing is your cost of improvement. They're coming and saying, boss, any asset cost which you incurred, which is improving the asset on a significant level. is called as cost of improvement. General repairs and all is not considered. General repairs and all is not considered. It should be a capital cost of improvement. If you have incurred this capital cost of improvement before 2001, ignore. Before 2001, you have to ignore. If you have incurred it after 2001, you can consider it provided you have capitalized it. Provided you have capitalized it. If you have not capitalized it, you will not get the deduction. You will not get the deduction. This is what your cost of improvement looks like. Now, both the cost which you have, the acquisition and improvement, can be indexed if it is a long-term asset. If it is a long-term asset where income tax is coming and saying you can take an indexation benefit by using the formula cost of acquisition into CII in the year of transfer divided by the CII in the year of acquisition. In the year of acquisition, you don't have to remember anything on the acquisition CIIs. Only one you have to remember, which is 2001, which is 100, and your current year transfer year is 331. Yes, so this is 2 you have to remember. So it is 331 for the year of transfer, 100 for the year of acquisition. Acquisition can change. If it changes, income tax books, ICAI will come and tell you that number. ICAI will come and tell you that number. Yes or no? Yes or no? This is what the provisions are. Then we can move to special scenarios. The first special scenario income tax is coming and telling us, boss, you have issued bonus shares. What have you issued? Income tax is coming and telling that, boss, if someone has got bonus shares, the cost of acquisition in the new person's hand will become 0. The cost of acquisition for a bonus shares is 0. But if you have got the cost of the acquisition before 2001, then it is fair market value. Because it is fair market value or actual, whichever is higher. Therefore, it becomes fair market value. Rahul, no, it is not bonus, it is a rights. It is not bonus, it is rights. Ask yourself, are you availing the right or are you transferring the right? If you say, no, Rahul, I am availing the right, then in that case, cost of acquisition for you will become the price you pay to the company. If you say, no, Rahul, I am actually transferring the right, they'll come and say, okay, boss, then you transferred. No, you got an income. So your sale value will be the money which you got. Cost will be 0. Because you did not incur anything for this. That will become your pure capital gains. I am the person who has bought it from someone else. In that case, I have paid 2 costs right now. One cost is to buy the rights. Second cost is to buy the shares. In that case, my cost of acquisition will be the rights price plus the share price. Both will be added to my cost of acquisition. My period of holding will start from the date on which I get the shares. Simple as that. Yes. The next special scenario, they are coming and saying that, boss, you have depreciation assets. What assets? Depreciation assets. Income tax comes and says, generally when it's a depreciation asset, capital gains will not come into picture. You will always do PGBP. There are only 2 scenarios where capital gains will come into picture. Scenario number 1, the block is fully gone. You have not even a single asset in the block. Scenario number 2, the block is still there, but the sale value is so high that the cost has become lower. The sale value is so high that the cost has become 0. In that 2 scenarios, income tax comes and says, you come to capital gains. Forget PGBP, come to capital gains. In capital gains, they will come and directly say, take the sale value, less the WDV. That will become your capital gains. And income tax very clearly clarifies that, boss, if it's a depreciable asset, capital gains will always be a short-term capital gains or a short-term capital loss. It will always be a short-term capital gains or a short-term capital loss. Cannot be anything else. Yes or no? Yes or no? This is what a depreciable assets looks like. After depreciable assets comes, this is what we have discussed. 50C is done. Then comes your forfeiture. Income tax is coming and saying that, boss, if you have any kind of forfeiture of income, what do you have? Forfeiture of income. Tell me whether the forfeiture happened before 2014 or after 2014. If the forfeiture happened before 2014, you will reduce it from the cost of the acquisition. Rahul, will you reduce it from cost of acquisition after indexation or before indexation? Before indexation. If you have done this forfeiture after 2014, then directly IFRS. At the same time, please understand, you have to reduce it from cost of acquisition only if you are the person who has forfeited it. If someone of your predecessor has done it, then you don't have to do it. It will not be reduced from your cost of acquisition. That will become a free profit for the old person. With me till here? Yes. Have you completed your, since you have completed your gross long-term capital gains and gross short-term capital gains, now comes something called as exemptions. From exam perspective, there are only 3 exemptions to keep in mind. First is 54. Second is 54F. 54EC. 54 and 54F come and say that you have to obtain a house property. You have to obtain a house property. For this, if you sell a house property, it is 54. If you sell any other property, it is 54F. That is what the rules are. That is what the rules are. Where they're coming and saying that, boss, if you are planning to buy a house property, you can buy one house property. You can buy one house property. But yes, if you are in 54, where are you? You are in 54, and I find out that your long-term capital gains is less than 2 crores. In that case, I am permitting you 2 house properties also, provided it is once in lifetime. Provided it is once in lifetime. In 54, they are coming and saying what you should deposit is the capital gains. In 54F, they are saying what you should deposit is the net consideration. What you should deposit is your net consideration. When should you buy the asset, Rahul? 54 comes and says if you are buying it, then it is 1 year before or 2 years after. If you are constructing it, it is within 3 years. Within 3 years, whether you go 54 or 54F, it doesn't matter. Okay, this is what the rules are. And then they're coming and saying, boss, if you have bought an asset, good. But if you're not able to buy the asset within the due date of filing of return of income, please deposit this money in an account called as CGAS. If you deposit the money within CGAS, within the due date of filing of return of income, I will assume that you have bought the house. But you have to buy this house within the specified time. If you don't buy the house in the specified time, whenever you make a miss out, that year I will tax it off for you. Next, they are coming and saying that, Rahul, if I have an asset which is the new house property, I have to hold it with me for a period of 3 years. If I don't hold it for a period of 3 years, income tax comes and says, check and tell me whether the old asset and the new asset are the same. If you tell me, Rahul, that the old asset and the new asset are the same, then what I will do is whatever exemption I claimed earlier will be reduced from the cost of the acquisition. Which means in 54, house and house same. So what will happen is in the new asset, I will reduce the exemption of the cost. I'll reduce the exemption from the cost. And I will do new capital gains. But if it is 54F, income tax says, boss, different assets, so don't judge each other. That old exemption which you took, tax it separately. This new asset you tax separately. Okay, so whatever you exempted earlier will become taxable now. Whatever is taxable now will become taxable now. That is what the rules are. At the same time, 54F is also coming and saying that if you want to buy a house by selling some other asset, ensure that the day when you buy the house, you only have maximum one more house. You should never have more than 2 houses, including this house. Maximum you can have one more house, which means this house plus that one house, maximum 2 houses. If you have more than 2 houses, no more exemptions under 54F. Yes or no? Next, they're coming and saying 54EC. EC is basically coming and saying that, boss,
if the property was bought by the assessing stock made, then that can be claimed with your or not.
Who paid the money? Then he's a deemed owner. If assessee paid the money for the spouse's house, then he's a deemed owner. No? The moment he becomes a deemed owner, then the asset is eligible for deduction. Permitted. Okay. Yes. Where were we? Doesn't matter. Deemed ownership does not care about it. No? It's an inadequate consideration of transfer to your spouse, so it's almost as good as yours. 54EC. Now 54EC basically comes and says that if you're planning to transfer any kind of immovable property, if you're transferring any kind of long-term immovable property, and if you're buying against that NHAI, REC notified bonds, NHAI, REC or notified bonds within 6 months from the date of transfer. If you're buying it within 6 months from the date of transfer, then I will allow a deduction of that as well. If you deposit capital gains, subject to a maximum of 50 lakhs, in per asset per financial year, which means if the asset is already claimed 50 lakhs, next year you cannot claim it. If the asset, overall many assets have claimed in this financial year, then you cannot claim the same thing in the next financial year. Yes, so 50 lakhs per asset per financial year. They're coming and saying that, boss, if you're going to buy it within 6 months, anyway CGS is not applicable. And if you're going to buy a bond, you have to stick with the bond for a period of 5 years. If you don't stick with the bond for a period of 5 years, different asset, same asset. Which means exemption will become taxed separately and bond will become taxed separately. In this, they have put one more extra condition where they're coming and clarifying that if you put the bond for a mortgage, If you put a bond for a mortgage or you convert the bond also, it is as good as transferred. It is as good as transferred. So you should keep the bond free of any charge. Free of any charge, then it is only not a transfer. These three you have to remember from exam perspective. In your book, you will find two more exemptions called 54B and 54D. Don't have to read. Don't have to read. In exam, just to keep in mind, if you see an asset which is being transferred, if you see an asset which is being transferred, and at the same time they're buying an asset, assume there is an exemption coming. Assume there is an exemption coming, give off the exemption and close it off. Okay, rules will remain the same. Rules will remain the same. Same asset transfer acha, then it is reduced from the cost of the acquisition. Different asset transfer acha, exemption will be taxed separately. This will be taxed separately. Baki alla same rules. Baki alla same rules. You don't have to worry so much about it. Clear? Everyone? Yes. Great. This is what your exemptions look like. With your exemptions getting over, now you have understood what your capital gains is. Now you've understood what your capital gains is. The next question which then comes is how to tax the capital gains. How to tax the capital gains, which is where income taxes come and told. There are four kinds of capital gains. One is long term 112A, long term 112, short term 11 money, and others. Income taxes coming and saying 112A and 11 money are those cases where you have transferred any kind of listed equity shares, listed equity oriented funds, and listed business trust units. How do I use the word listed? You should have paid STT on those. You should have paid STT on those. If you have paid STT on those, then the income tax comes and says the tax rate will be 10% in excess of 1 lakh for 112A and 15% for 11 money. If you are not transferring any of these assets, then it is 20% for LTCG and slab rates for STCG. Slab rates for STCG. This is what the format is. If you notice on the top, you will see with indexation, without indexation, and all those nonsense. Final level portion. Don't worry about it. Don't worry about it. Yes, coming to the 112A, they're coming and saying, Rahul, you have to transfer listed equity shares, listed equity oriented funds, and listed business unit trust. You'll get 10% in excess of 1 lakh. But here they have come and clarified that Rahul, STT is paying mandatory. STT paying is mandatory. If you don't pay STT, then no 112A. No 112A, then it will become 112. Then it will become 112. At the same time, they also had to clarify that boss, rebate is not eligible. Rebate is not eligible. You are not eligible for rebates. And then they came and clarified that boss, if you have any kind of 112A, cost of acquisition will change. Cost of acquisition will change. How will it change, Rahul? They came and said, Rahul, if you have bought the asset after 1st February 2018, I don't have a problem. I'll take the direct cost. After 1st February 2018, I'll take the direct cost. But if I've taken the asset before 1st April 2018, I now have to come and do a computational mechanism. What is a computational mechanism? It is the sale value of the asset or FMV as on 2018, whichever is lower. That will be compared with the actual cost, whichever is higher. That will be compared with the actual cost, whichever is higher. This will become your new cost of acquisition. This will become your new cost of acquisition. Will be set off with your full value of consideration in order to arrive your capital gains. Rahul, can I claim indexation for 112A? No. No. Yes. Yes, this is your 112A. Can we repeat it together? What is it happening? They are saying it is fair market value as on 2018 or full value of consideration, whichever is lower, compared with your actual cost, whichever is higher. Whichever is higher. In your exam, in case they come and tell you to find out how the fair market value works out, it is the highest price as on the date of 2018. It is the highest price as on 2018. Assuming the asset was not listed on 2018, if it is a mutual fund, then it is the NAV price on that date. If it is shares, then it is indexed cost on that date. Then it is indexed cost on that date. Simple mechanisms. Simple mechanisms. It has been a while since they have tested all this, so they may not test it this time also. Okay, very long lead to happen. Yes, after you have completed 112A, they came and said you are into 111A. Whereas they came and said same assets, same logic, it is short term. Same assets, same logic, it is short term. The only difference is now you can claim rebate. Now you can claim rebate. Cost of acquisition will be the same cost of acquisition because the asset will be acquired after 2018. The asset will be acquired after 2018. Yes or no? Yes or no? This is what the computation mechanism is for short term capital gains. If it is any other asset, then it is 20% long term. Then it is 20% long term. And if it is any other asset short term, then it is slab rate model. Then it is slab rate model. Like I told you in the first start when we started, if you have a basic exemption limit which is not exhausted, you are free to use your capital gains against that, provided you are a resident individual. Provided that you are a resident individual. In the order of priority, you can choose to do 20, 15, 10. But if it's a rebate case, things become a lot more complicated. Let's not get there. Let's not get there. Yes, this is what your computational mechanism is. Any doubts? No. Great. This marks the end of your chapter of capital gains. Two more chapters which I have in my small part, which is called as business reorganization and transaction with owners. Transaction with owners. In transaction with owners, there are simple two things. One is called as liquidation, the other is called as buyback. The other is called as buyback. Income tax is coming and saying that, boss, if you are going to do a buyback, tell me whether the buyback is happening for the shares or for securities. Tell me whether the buyback is happening for shares or securities. If the buyback is happening for securities, then capital gains will apply. If the buyback is happening for shares, then in that case, buyback tax will apply. What will apply? Buyback tax will apply. Income tax comes and says buyback tax is nothing but 20 plus 12% plus 4%. It is 20 plus 12% plus 4%. The company will pay it on your behalf. You don't have to pay anymore. You can exempt it off. But please understand, this is only for shares, not for securities. If it is securities, what will happen? Company will let it go. The assessee will have to pay tax as per capital gains. Same mechanism. Yes or no? Yes. Next item is your liquidation. Liquidation, like income tax comes and says, if at all there is any liquidation which is happening, to the extent of the accumulated profits of the company, the income will become deemed dividend. To the extent of accumulated profits of the company, the income will become deemed dividend. Balance items is what you can consider as the full value of consideration for the purpose of capital gains. Balance you can consider as the full value of consideration for the purpose of capital gains. So you split your income into two. The money which you received will be split into two. One is called as deemed dividend, the other is called as full value of consideration. Deemed dividend taxed under IFRS. Full value of consideration will become your sale value minus your cost of transfers, minus your cost of acquisition, minus your cost of improvement. You will get your capital gains. Simple, straightforward game scenario. Yes or no? Next, last item is called as your business reorganization. In business reorganization, they're coming and clarifying that, boss, if you have any kind of business reorganization, it is not taxable under Income Tax Act. Whether you call it amalgamation or you call it demerger. The only difference is, if at all it's an amalgamation, the cost for the new owner will become the cost of the old owner. Period of holding of new owner will be period of holding of old owner. Indexation of the new owner will be indexation of the new owner. It will not be from the old owner unless and until you choose for Manjulasha. Yes. Same thing in depreciation, ulta scenario. The asset of the new owner will become asset of the old owner. Asset of the period of holding of new owner will become period of holding of old owner. But if it's a share transfer, understand the share is getting split. So shares of the demerged company will be pro rata shares of the old shares. Which will be divided using the cost of the assets which were transferred to the new company. And the old company or the shares new price will become whatever you transferred, remove it off. In simple words, cost of acquisition for the resulting company shares is cost of acquisition of the old company shares into the assets transferred to the demerged company divided by the net worth of the old company. The cost of acquisition of the old company after demerger is the cost of acquisition earlier minus the cost to transfer to the resulting company. It seems simple, so therefore it's not coming. Yes, what is coming in exam is slump sale. Now in slump sale, they are coming and clarifying that, boss, if you have any kind of business undertaking which you are going to transfer as it is, what are you doing? You have a business undertaking which you're transferring as it is. In that case, it will be called as a slump sale. Income tax comes and says that, boss, whenever you're transferring a slump sale, you need to check for the same format of full value of consideration, cost of transfer, etc. The only difference is full value of consideration will now not be the sale price alone. It is the sale price or fair market value of the assets transferred, whichever is higher. That will become your full value of consideration. This is same as your 50 CA, unquoted shares. Unquoted shares with the same logic. It is the actual consideration or fair market value, whichever is higher, minus the cost of transfer. You will arrive at net consideration minus the cost of acquisition. Now, when it comes to cost of acquisition for a business, cost of acquisition is nothing but the net worth. How do you find the net worth? Net worth is nothing but A minus L. Assets minus liability. In assets, you have many assets. One asset is called as fixed assets. You will take the value as WDV as per income tax. You have other non-current assets. Book value. Other current assets. Book value. Everything is book value. But if you have done any kind of goodwill, Zero. Any kind of revaluation, ignore. If you have any kind of liabilities, book value. Any kind of liabilities, book value. So you'll take your assets minus liabilities. This will become a net worth, and you will not have any kind of cost of improvement. Therefore, it will become your capital gains. Now, capital gains may be long term, may be short term, depending on the period of holding of the date of incorporation of the business. Date of incorporation of the business. But even though it is long term or if it is short term, it doesn't matter. You cannot claim indexation. You cannot claim indexation benefits. Yes or no? Yes, great. This marks the end of a chapter called as capital gains also. Yes, since we have completed 2 chapters, let's consolidatedly understand where you will not be eligible for 115 BAC. Yes, starting from PGBP. In PGBP, you started from 30, 31. Eligible, not eligible? Eligible. 32, depreciation. Not eligible for additional depreciation. Not eligible for additional depreciation. After 32, we did scientific research. Eligible for in-house expenses. Not eligible for donations. Not eligible for donations. Then we had after 35, we had 35 AD, specified business. Not eligible. Specified business is a big deduction. So therefore, not eligible. Your business will now become a normal business, which means you will claim normal depreciation. You will claim normal depreciation. After 35 AD, we did all those other items. Preliminary expenses, PF, ESI, all those are normal items. All those are normal items. Everything else will remain the same in PGBP. Okay. So the only 3 items which are not eligible in PGBP is your additional depreciation, scientific research for donations, 35 AD, which is your specified business loss. Which is your specified business loss. Capital gains remain as it is. No change in 115 BSc. No change in 115 BSc. Your capital gains will remain as it is. Yes or no? Yes. Great. We are parallelly also completing our 115 BSc so that we don't have to revise it once again. Okay. So we are done with salary, HP, PGBP. Wonderful. When we come back, we have IFOS, clubbing, set off, chapter 6A, 10AA, TDS, TCS, return filing, and the advanced tax payments. That's all. Yes. The next part of the class is going to be a lot faster as compared to the current time because easy mocha chapters, nothing much to discuss also. Yep. Don't have too heavy also because I know TDS is coming. That's the problem. Okay. So have some light lunch. Don't have very little also because then you will not have a mind to work. Okay. Have some decent amount of food. Just don't have போயிட்டு சாப்பாடு சாப்பிடலாம் சொல்லிட்டு அப்படியே உட்கார்ந்து மொத்தம் அப்படியே 56 சப்பன் போகோட சாப்பிடணும் வேணாம். Okay. Chappan Bhog in Hindi is that we have a big thali ma 56 sweets வச்சிட்டு பெரிய தாலி இவ்ளோ பெரிய தாலி கொடுப்பாங்க. Okay, அந்த லெவலுக்கு எல்லாம் சாப்பிடாதீங்க, தூங்க வந்துரும். Okay, go have lunch properly. Let's join back at 1:30. 1 hour. Okay, have some good amount of lunch. 1 hour we'll come back, don't worry. 3.5 hours is a big number for me to easily complete the whole syllabus. தானா போலாம். Yes. Have your lunch and come back. All right, let's start. Yep. Settle everyone quickly. Yes, let's complete what is left of this subject. We are now moving to the next chapter called as IFOS. Moving to the next chapter called as IFOS. Quickly understanding the subject. Chapter is basically a garbage section, which basically comes and says that if nothing is taxable under other heads of income, it becomes taxable under IFOS. Simple garbage. Yes, where they're coming and saying if nothing is taxable under other heads, you tax it under IFOS. Some examples are given to you like dividend income, because dividend is always taxable under IFOS. Then they've come and said gift, premium on issue of shares, any item of income, rent and all those things which are not taxable under other heads of income. Simple, straightforward IFOS incomes. In this, what you have to know is that there are some items which you have to keep in mind. First item is your interest on enhanced compensation will be taxable under the head IFOS with a 50% deduction. Advance received on forfeiture after 2014. Yes. Then you have interest on post office savings. You will get a 3,500 exemption here. Then you have to go to chapter 6A. The 3,500 of exemption is very important. Just keep that in mind. You get a 3,500 exemption here. Then you go to chapter 6A. Then you have family pension. And family pension, they come and say it is 1/3 or 15,000, whichever is less. Any amount received under family pension is also taxable under this head with 1/3 exemption or 15,000, whichever is less. Yes. Apart from that, the most important items under IFOS are your premium on issue of shares and gifts. So we'll discuss about the premium on issue of shares. The provision is coming and saying you have to satisfy certain conditions. Condition number 1, you should be a closely held company. Condition number 2, the closely held company should issue shares at a premium. Very good. At premium. Section number 3, they're coming and saying the issue of shares to premium should happen to a resident person. And point number 4, they're coming and saying if you are making the shares at a premium, the share value including premium should be more than the fair market value. So assuming that the share is 10 rupees, you have issued it in premium of 100, total share price is 110. If the fair market value ends up being 80, then 30 rupees becomes taxable. At this point of time, please understand, if the shares are not issued at premium, the section does not apply. Even if the fair market value is lower. Premium is mandatory, resident is mandatory, private company is mandatory, and the total price should be more than the FMV. Satisfy all these conditions, then only the section will apply. Clear, not clear? Yes. Simple, straightforward section. Will normally come only as MCQ, cannot come anything beyond that. After you complete your premium comes your most important section from IFOS called as your gift. I told you when you do gifts, we have a certain format. First is to identify the asset. In gifts, we have 3 kinds of asset. One is cash, mobile, specified mobile, immobile. Yes, cash, specified mobile, immobile. This is step number 1. Step number 2, we came and said determine whether it is falling within the exceptions or not. We told boss exceptions the format is dirt, min, clot. It's dirt, min, clot. D for death, I for inheritance, R for hold. Relative means spouse. Let's do left. First spouse, then brother, sister, parents, brother and sister, grandparents, grandchildren and grandchildren. Yes. Then let's then do left side. Then do the right side. You have spouse left side ra. Then do the right side. It is spouse or brother and sister, spouse or parents, spouse or grandparents, spouse or children. Ada left na. Yes. All these people and their spouses. Keep that in mind. All these people and their spouses. At the same time, they are also clarifying that boss, niece, nephew and all not covered, which means my brother, sisters or children not covered. Spouse, brother, sisters, children not covered. Spouse, parents, brother, sisters not covered. Okay, these are all not covered people. D for death, I for inheritance, R for relative. T for trust. Very good. Any gift received by trust or given to trust, both are exempt. Then M for marriage. Please understand what is exempted is marriage and your marriage. Marriage and your marriage. Anyone else's marriage you getting gifted, taxable. Your wedding anniversary, taxable. Your wedding anniversary is also taxable. Then Ada muchta. Individual private trust. Then N for non-profit organization. Then C for COVID. Yes, any kind of gift given, any kind of gift சொல்ல முடியாது. Any kind of compensation given on account of COVID. Compensation given on account of COVID. Here is where they are coming and clarifying that boss, it can be on two types. It can be on two types. On death also, on alive also. On death also, on alive also. If you are giving on alive, they have given some condition. What is the condition? Read it out with me. It says any kind of medical expenditures actually incurred by him to treat COVID-19 disease, which means on alive, whatever you give is fully exempt. Fully exempt. Then on death, what is happening? They're coming and saying death la irukumbodhu employer kudutha exempt. Death la irukumbodhu employer kudutha exempt. If you get it from someone else, it is subject to a maximum of 10 lakhs. It is subject to a maximum of 10 lakhs. 10 lakhs மேல போச்சுனா above 10 lakhs is taxable. Above 10 lakhs is taxable. See, understand, it's subject to a maximum of 10 lakhs, which means 10 lakhs மேல போச்சுனா 10 lakhs மேல தான் taxable. Not everything is taxable. Not everything is taxable. At the same time, they're coming and saying, boss, this and all should happen if the death is happening within 12 months. Death is happening within 12 months. When you receive the money, adukku munnadi 12 months kulla, you should have got the COVID death. You should have got the COVID death. Then only it is applicable. Then only it is applicable. After C is L, local authority. Then O, general cases not covered. T, transactions not regarded as transfer except for gift transfer. Except for gift transfer, any other transaction not regarded as transfer under the head capital gains. Under the head capital gains, these are all exceptions. These are all your exceptions. With me till here? Yes. Now in relatives, the HUF also has a relative. If the relative is of a HUF, then HUF also has a relative. For HUF, relatives are any members. How do you become a member of HUF? It is either by birth or by bringing into the family. It is either by birth or bringing into the family, which means you have born into the family or you have been bought in as a spouse, adopted child, etc. etc. cases. Yes, that is how you will become a member of the family. Clear? Yes. Who are not a member of the HUF? Not a member of the HUF would be basically daughters or a husband. Yes, no. Daughters or a husband. Daughters, husband, child. All these people will not be covered because they are that side's family. They are that side's family. They are not part of my family. They are not part of my family. Yes or no? Yes. Now, step number 2 was to determine whether it is taxable or not taxable. Step number 3, determine the limit. Determine the limit. Now, the limit comes and says when it is a money. When it is a money, if you receive more than 50,000 per year, it is 50,000 per year from every people or single person? Every person. Totally, you should have not received more than 50,000 rupees. If you have received more than 50,000 rupees, everything is taxable. Everything is taxable. Coming to specified mobile, they came and said specified mobile are BA, pass, DJ, bullions, archaeological collections, paintings, any work of art, shares and scriptures, sculptures, drawings, jewelry. Very good. If these are the items, then it is covered. If these are not the items, anything else given is exempt. Anything else given is exempt. Any fridge, TV, motor car, mobile phone, anything given is exempt. Anything given is exempt. If you are in specified mobile, again they're coming and saying, tell me whether it is an inadequate consideration or no consideration. Adequate consideration section abapom. We will look at inadequate consideration or no consideration. At any point of time, if the gift element goes beyond 50,000 rupees, whole of the assets are taxable. Whole of the assets are taxable, meaning the gift element is taxable, but for all assets. But for all assets, what do you mean by gift element? Your actual consideration compared to your fair market value. Take your fair market value minus the consideration will be your gift element. If that gift element goes beyond 50,000 rupees, the gift element will become taxable. In this, please understand, you have to look at the gift element for all assets together. All assets together. It is not for each asset, it is for all assets together. Yes or no? Yes. Coming to the immobile property, same conditions, nil consideration and inadequate consideration. If it is nil consideration, they are simply coming and saying if the stamp duty value goes beyond 50,000 rupees per asset, please understand, for money it was all assets, for specified mobile it is all assets, but for immobile it is per asset. It is per asset. If stamp duty value per asset goes beyond 50,000 rupees, that asset or stamp duty value will become taxable. If it is inadequate consideration, I am coming and telling check for two conditions. Check for two conditions. Condition number one, I'm coming and saying, boss, the stamp duty value minus the consideration should go beyond 50,000. What? Stamp duty value minus the consideration should go beyond 50,000, which means gift element, which means the gift element. Point number two, I'm coming and saying stamp duty value should be more than 110% of consideration. If you satisfy both the conditions, then it is taxable. If you don't satisfy any one condition also, not taxable. Not taxable. So what are the two conditions? Stamp duty minus the consideration should go beyond 50,000. Stamp duty should be greater than 110% of consideration. In that case, whatever is the gift element will become taxable. If not, nothing is taxable. If not, nothing is taxable. And please understand, for immovable property, it is per asset. It is per asset. For other items, it is all assets included. It is all assets included. Yes or no? Yes. Here also they're coming and saying that, boss, the moment you have taxed something under the head IFOS, the amount which is taxed will be added to the cost of the asset. What is stamp duty? How to compute stamp duty? Check for valuation officer. All those the same are capital gains. And the last and the most important provision, they're coming and saying, boss, what is going to be taxed under gift is only capital assets, not stock in trade, because stock in trade is under PGBP. The money and the gift apart, the money and the gift part, stock in trade will go into PGBP, anything else will be under capital gains. With me till here? Yes. Now we have a chart in the book. I don't have to discuss the chart so much, but let me just clarify it quickly. The chart basically is coming and saying, for immovable property, ask yourself, are you the transferor or you are the receiver? Or you are the receiver. If you are the transferor, you are now going to have an income. You're now going to have an income. So I will come and ask you, are you transferring as a stock in trade or as a capital asset? If you tell me, no, Rahul, I'm transferring it as a stock in trade, then I'll come and say, whatever income you have will be taxable under the head PGBP. In that case, I will come and say, go and check PGBP section. PGBP comes and says, stamp duty value greater than 110%, amount will become taxable. Amount will become taxable. I'm coming and saying, no, Rahul, it's a capital asset. From whose side? Transferor side. From a transferor side, if it's capital asset, I'll go and look at section of capital gains. In capital gains, if you understand, if I give it for nil consideration, it is a gift, which means transaction will not be regarded as transfer. If I say, no, Rahul, I've given some consideration, at least 1 rupee is there, then in that case, I will go and check for 50C, where I'll come and say stamp duty is more than 110% of consideration, take the stamp duty value directly. Take the stamp duty value directly. With me till here? Yes. Now come to the other side, you are the receiver. Now receiver can receive it in the form of capital asset or stock in trade. If I tell that the receiver has received it as a stock in trade, I will go into the head of PGBP, directly tax it off fully. Directly tax it off fully. I am saying, no, Rahul, I am the receiver receiving it as a capital asset. Then I will come and say, okay, let's come and talk together about IFOS. In IFOS, I'll do step number 1. This is an immovable property covered. Step number 2, covered in the exception. No. If it's covered in the exception, not taxable. Cost of the asset will become cost to previous owner. Hey. Then I'm coming and saying, no, Rahul, it is taxable. It is taxable. Then I look for 110% or 50,000. If I say, Rahul, 110%, 50,000 covered, which means taxable, which means whatever gift I put will become added to the cost of the asset. The new cost of the asset will become the whole of the SDV. If I say, no, Rahul, it is not covered, gift not coming into picture, IFOS is not taxable, then I'll come and say cost is cost to the previous owner. Cost to the previous owner. Yes or no? The chart is there in the book. If you feel like you don't understand, you can try it once again. Try it once again. Yes or no? Yes, this is the mark of the end of chapter of IFOS. Within second item in the same chapter called as dividends. Same chapter called as dividends. Nothing much to discuss in dividends. They come and say, what is dividends first? You have 5 items in dividends. First one is distribution of assets. Second one is giving bonus shares to only to preference shareholders, not to equity shareholders. Giving bonus shares to preference shareholders or giving debentures to any shareholders. Giving debentures to any shareholders. Point number 3, liquidation. Point number 4, reduction of share capital. Point number 5, and the most important point is giving of loan. Giving of loan, where a closely held company ends up giving a loan to the individual having more than 10%. Having more than 10% of the voting power, then the loan given to him will be deemed as a dividend to the extent of accumulated profits. To the extent of accumulated profits, I don't care what is percentage and all this, whatever loan I give will be fully deemed a dividend to the extent of accumulated profits. Assuming I'm not giving it to the individual, I can then give it to a firm or any other company in which this person has more than 20%. More than 20%. Somewhere it will be here, yeah. Giving more than 20%, in that case, then also it is deemed a dividend. And if that is also not happening, I can give it to any third party for his benefit. no percentage, no nothing. I'm giving to a third party for his benefit, then also it is taxable. One exception given to you where they're coming and saying if the lending is the primary business. What? Lending is the primary business, or the loan or advance I've given is against a business transaction. Against a business transaction, then it is not taxable under deemed dividend. This kind of questions in exam, two things will hit you hard. One is that they will silently come and tell you private company gave a loan. Second, they will come and restrict it to the accumulated profits. You have to be very careful. If the loan is given as 5 lakh rupees, but the profit is 50,000 rupees, you will restrict it to 50,000. Rahul, 50,000 is the profit, 10% is the share, so it is only 5,000. No, 50,000 fully. 50,000 fully. Please understand, just because his percentage is 10 does not mean that the profit will be 10%. Doesn't matter. Loan will be taken as full 50,000. Loan will be taken as full 50,000. Yes or no? Yes or no? Be careful about this. This is one question which may come in exam. Which may come in exam, because this is from individual perspective. It becomes a dividend in my hand, which means it is taxable in my hand. Yes or no? So if the question somewhere comes and says that the company has given me loan and I am holding more than 10%, then it will become income in my hands. Yes sir. This is what is the provision definition of dividend. Coming to the provision of dividend, they simply come and say whatever dividend you have will be fully taxable under the head IFOS. You can only claim one expense against it, a silent adjustment of 20% of dividend income as interest cost. As interest cost, only if you have interest expense. Only if you have interest expense, you can claim maximum of 20%. If there is no interest expense, no deduction, no one else can be claimed. No commission, no bonus, no brokerage, no nothing. Yes, only interest expense can be claimed as a deduction, that too maximum of 20% of the dividend income. Okay, this is the next MCQ question which is most likely to come in. Please be careful about it. Silent adjustment. They will give you a dividend amount of 1 lakh rupees. I mean, number solran sumathukku. They'll give you a dividend income of 1 lakh rupees and they'll come and say interest cost is 30,000 rupees. You can only claim 20. You can only claim 20. 80 will become taxable. 80 will become taxable. Please be extremely careful about this. Yes or no? Yes. Then they're coming and saying that boss, if at all you're going to give dividend, if you're going to give dividend, company has to deduct something called as TDS. Company has to deduct TDS at the rate of 10%. At the rate of 10%. 10% of TDS will not apply in case you're giving dividends to a individual. To whom? Individual, provided the payment is not happening in cash and the amount is less than 5,000. And the amount is less than 5,000. Next part you can ignore. Mutual funds and all is not coming for exam. The dividend is coming for exam, which they are coming and saying that you have to deduct TDS at the rate of 10% only if the dividend goes beyond 5,000 and the payment is not by cash. Rahul, the payment is by cash, dividend is 4,000 rupees, TDS varom. If the payment is by cash and TD amount is less than 4,000, then also TDS is applicable. The payment should not be in cash and the amount should be less than 5,000. What? Payment should not be in cash and the amount should be less than 5,000. Both the condition to be satisfied. Both the condition to be satisfied, then only TDS will not apply. Anyone violated, TDS will apply at the rate of 10% on payment basis. On payment basis. With me? Yes, great, perfect. This marks the end of your 5 heads of income called as salaries, HP, PGBP, CG, IFOS. In IFOS, Rahul, what is not covered under 115 BAC? They are coming and saying that boss, that family pension item is there. No, that is not allowed under 115 BAC. Only that family pension alone is not allowed under 115 BAC. And one more item is that MP, MLA road income, that is anyway not coming for exam. That is anyway not coming for exam. So keep that in mind. Keep that in mind. Can we go forward to the miscellaneous parts? Yes, great. With the golden rules, step number 4 is also done. Step number 5 is also done. Moving to step number 6, called as clubbing. Called as clubbing. Income tax is coming and telling that boss, when it comes to clubbing of income, certain incomes can be earned by other persons, but I can also tax it in my hand. I can also tax it in my hand. Why will I tax it in my hand? Because I gave it to the other person for cheating income tax. For cheating income tax. Examples are transfer of income without transferring the asset. What have I done? I have transferred income, not to transfer my asset, which means I told someone that I'll give you the FD interest, but I did not transfer the FD. Amount is fully taxable. In my hands. Whose hands? Transferor's angle. In the transferor's angle, please understand, when you're transferring income and not transferring the asset, I don't care whether it is revocable transfer or irrevocable transfer, because the only thing which is getting transferred is income. The only thing which is getting transferred is income. I don't care whether it is revocable or irrevocable. It is always taxable in the hands of transferor. I'm saying, no, Rahul, I have not transferred income, I have transferred the asset. Then they're coming and saying, boss, if it is a revocable transfer of asset, then also it is taxable in your hands. What have I done? I have transferred the asset. In that case, also it is taxable in my hands only if it is revocable transfers. I'm saying, no, Rahul, it is irrevocable transfer. Then I'll say not taxable. then I'll say not taxable. But if I find out that the benefit of that irrevocable transfer is coming to either me directly or indirectly, then also it is taxable in my hands. And please extremely be careful about this fact. It doesn't matter what amount of benefit I'm getting. Even if I'm getting 1% of benefit, the whole of the income will become taxable in my hands. Even if I'm getting 1% of the benefit, the whole of the income becomes taxable in my hands. A simple example in the exam question came is, I have given the asset to the servant. I've given the asset to the servant. The dividend income on that asset was being given to my wife. Only 10%. Only 10%. 10% of the dividend income was being transferred to my wife, which means irrevocable transfer, benefit coming indirectly to me, but only of 10%. Only of 10%. Rahul, how much is taxable? The whole 100 is taxable. The whole 100 is taxable in whose hands? My hands. It will become taxable in my hands, not in my wife's hands, not in the servant hand. Everything will become taxable in my hands. Yes or no? Yes or no? Yes. If this is not happening, then I'm coming and saying I've opened up a business. I've opened up a business. In that business, I'm planning to give salary to my spouse. Salary to my spouse. Income tax comes and says, if you have substantial interest in your business, and a word of caution, it is not substantial interest of yours alone. It is you along with your relatives. Whose relatives here? Again left side of the family. So me along with the left side of the relatives of the family are holding more than 20% in the business. In that case, if that business ends up giving salary to my spouse, whatever salary you give to the spouse will become taxable in my hands. Under the what head? Same head. Under the same head. If it was taxable as salaries for her, it is salaries for me. If it is taxable as IFOS for her, then it will be IFOS for me. Please be extremely careful about this. Yes, this will not apply in case I'm able to prove that my spouse is having technical knowledge and skills to do the service. If she has technical knowledge and skills, then it will not be taxable. If not, it will be taxable. At the same time, please understand, what is getting clubbed in my hands is not the money, it is the income. Which means standard deduction to my wife has to be given, then only it comes to me. So if I am giving 1 lakh rupees of salary to my wife, what will be clubbed in my hands is only 50,000 rupees. Because what is to be clubbed is income, not money. Clear with me? If this is not happening, I'm coming and saying, Rahul, I have any property. I have planned to give this property to my spouse for inadequate consideration. If that is not happening, I'm planning to give it to my son's wife for inadequate consideration. Income tax says, if you are going to transfer any property to your spouse or to your son's wife for inadequate consideration, whatever income which comes to the son's wife or the spouse will become clubbed in your hands. With an exception that this does not cover HP. Why does it not cover HP? Because HP is covered under HP chapter. Any other asset is what I'm talking about. With me? Yes. Rahul, I am not doing that also. I am transferring this asset to anyone else for my spouse benefit or for my son's wife benefit. That is also clubbed. So now they're talking about transfer of asset happening to third party for the benefit of my spouse or for the benefit of my son's wife. Then also it is clubbed in my hands. Yes, sir. Last item, I'm coming and telling Rahul, I've opened up a business. In the business, my spouse is contributing some money. I'm using that money along with my money and running my business. Income tax comes and says, boss, if you have got money from your spouse and you're using that money for your own business, then whatever profit comes will be split between both the partners. When I say partners, spouse, life partners will be split between both the life partners, but the proportion split will happen using the opening capital. I will only look at the amount of contribution the opening capital has for my spouse and myself, which means in the question, if they come and say that, Rahul, I have contributed 1 lakh rupees. My spouse has also contributed 1 lakh rupees at the opening balance. Then during the year, I put in an extra 2 lakhs and my spouse put nothing. Current year profit is 60,000. How much? If the current year profit is 60,000, Rahul, the 60,000 will be split between me and my spouse. In what ratio? 1:1. It'll be split into 1:1. I will not bother about the 2 lakh rupees. I'll not bother about the 2 lakh rupees because it is a current year contribution. It is a current year contribution. And please understand, all these only happen if it is a sole proprietorship. It does not happen if it is a partnership, because Rahul, share of profits in a partner is exempt from tax. So நீ club பண்ணாலும் exempt தான். நீ club பண்ணாலும் exempt ஆயிடும். அதனால this only applies in a sole proprietorship concern. It does not apply in a partnership concern. Yes or no? Yes or no? Last item they are coming and saying, boss, if you have any kind of child which is a minor in nature, any income coming to the minor child is taxable in the hands of the parent whose income is higher. The parent whose income is higher. The moment you have decided a parent whose income is higher, this parent will continue forever. This parent will continue forever unless and until there is a decision to divorce. Unless and until there is a decision to divorce. Until such time, the parent which has been decided the first go will be always the parent. Any income of the child will be clubbed in the hands of the parent whose income is higher, regardless of who gives the money. Regardless of who gives the money. But whenever you club some child's income to the parent's income, you can claim a exemption of 1,500 rupees maximum. You can claim an exemption of 1,500 per month or per annum. Per annum. It is 1,500 per annum per child. 1,500 per annum per child. The two items which are not taxable in the hands of parents are if the income is coming to a disabled child or the income is coming because of his skills. Because of his skills. Any of these two cases, it will not be taxable in the hands of the parent. Yes, sir. Yes. To conclude this chapter, the chapter also comes and clarifies that, boss, when it comes to the incomes which you have, the first level of income is what is clubbed in the hands of the transferor. The second level of income is not clubbed in the hands of transferor. The only exception to this is the clubbing of income. Only exception to this is the minor income. In minor income, even second level or subsequent level incomes can also be clubbed in the hands of the parent. But anywhere else, accretion of income is not clubbed. Accretion of income is not clubbed. Rahul, what do you mean by accretion of income? It is here. If Aishwarya is gifting 10,000 rupees to her husband and she invests the same in an FD for 7% interest, the interest of 700 rupees will be clubbed in the hands of Aishwarya, because this is transfer of money. This is transfer of money used for the purpose of generating an income. Used for the purpose of generating an income. Assuming this 10,700 fully is deposited again in an FD. Is deposited fully in an FD and she has earned how much? She has earned 750 rupees. I will only get 700 rupees as taxable in the hands of Aishwarya. The 50 will become taxable in the hands of the new spouse. Will be in the hands of the spouse. In the hands of the spouse, because second level of income cannot be clubbed. Second level of income cannot be clubbed. Idhe scenario change pannittu. If Aishwarya had given this money to her child, 700 would have been taxable in the hands of Aishwarya. 50 also would have been taxable in the hands of Aishwarya, because for a minor child, every income is clubbed in the hands of the parent except for handicapped, specialized. Except for handicapped and specialized. At the same time, please understand, let's assume that the child has earned 1 lakh rupees from singing competition. From what? Singing competition. This 1 lakh rupees will be clubbed in the hands of minor. Rahul, this 1 lakh rupees was deposited in an FD and 10% interest was earned on it. 10,000 rupees came in the bank account. This 10,000 rupees will be clubbed in the hands of. Even if the money was specialized, the clubbing was done on the interest income, which was not specialized. Which was not specialized. So even the second level of income can be clubbed, even if the first level of income is not clubbed. Even if the first level of income is not clubbed. Yes. Yes. And the final conclusion of this chapter, they come and say about cross transfers. They're coming and saying that, boss, I give money to my family's wife, brother's wife, any family's wife, and my family is also giving it to my wife. This is a cross transfer happening. In that case, to the level of common income, interest will be clubbed in the hands of respective transferors. Will be clubbed in the hands of respective transferors. If there is any excess, the excess will remain with the same person. Excess will remain with the same person. In this example, what is happening? There is 45 and 54. So in this case, what will happen? The 45 will be clubbed in the hands of both V and brother, and balance 9 will be remaining with brother's wife. Balance 9 will remain with the brother's wife. Yes or no? Yes or no? Careful about it. Yes. When you talk about clubbing, clubbing also talks about losses. Therefore, if you have a loss from clubbing, clubbing from losses also clubbed. Yes. Any kind of income from loss will also be clubbed in the hands of the owners. Respective owners. In an exam, please be extremely careful. Assuming a question comes where it comes and says that the husband has transferred some money to her wife as a gift. The first instance which will come to your head is IFOSL, it is exempt, which is right. which is right. But if after that they come and say that this money was deposited somewhere and they got some interest income or some FD income or some capital gain income, while Giftlight was exempt, the clubbing will still apply. The clubbing will still apply. So please understand, both are together. Both are together. Just because you have exempted the income does not mean that the clubbing will not apply. The clubbing will also have to apply. Please be extremely careful about that. Yes?
Yes, sir.
Yes, you have to look for both the conditions. You have to look for both the conditions. Condition number 1 in IFOS is exempt, but condition number 2 of clubbing is applicable. Yes, applicable. Yes or no? Yes or no? Yes. Now, when you talk about minor child, minor married daughter is also covered in the minor child, so there is no problem. Whatever income comes to the minor married daughter will also be clubbed in the hands of parent whose income is higher. Parent whose income is higher. Clear? Yes, this is your end of step number 6. This is the end of your step number 6. Moving to step number 7. Talks about losses. Talks about losses. In losses, I am not going to discuss the whole chapter. I am only going to look at one table. I am going to look at one table. I told you when you look at losses table, you only have to look from the perspective of losses, not from the perspective of income. So let's look from the perspective of losses. Going to the head of income, the first head of income is salary. Can you have a loss from salary? No. So therefore ignore. Next, HP. Can you have a loss from HP? Yes. If you have a loss from HP, it can be set off against first HP loss, first HP income. First HP income. Assuming you don't have HP income, you can set off against any other head of income. Any other head of income up to a maximum of 2 lakhs. In this, the order of priority to always set off is salaries. Order of priority is always to set off with salaries. A, understand, salary set off can only happen if HP income is not there. HP income in the Adana first. Adana first. Set off against HP income. If that is not there, move to salaries up to a maximum of 2 lakhs. Rahul, if that is also not there, you can carry forward for a period of 8 years. Return filing, not mandatory. Return filing, not mandatory. Then I'm coming and saying, Rahul, it is not HP loss, it is a PGBP loss. I'm saying if PGBP loss, there are multiple losses. First loss is speculative loss. Can be set off against speculative income. If speculative income is not enough, carry forward and set off against speculative income. Period is return filing. If you don't have speculative loss, you have scientific research loss. Specified business loss. Specified business loss. Only specified business income. Rahul, not there. Carry forward. Period. Infinite. Specified business loss. Infinite period. Return filing. Mandatory. Return filing. Mandatory. Rahul, that is also not there. You have unabsorbed depreciation. Unabsorbed depreciation can be set off against first business income. If that is not happening, then any head other than salaries. Rahul, I'm not having that also. Carry forward. Period of carry forward. Unlimited. I can carry forward and set off against any income other than salaries. Any income other than salaries. Rahul, please understand, when we did HP income, when we did HP loss, if you are carrying forward HP loss, future years you can only set off against HP income. You can only set off against HP income. You cannot set it off against any other income. Only in carry forward years. But unabsorbed depreciation is an exception. You can set it off against any head other than salaries in the future years also. In the future years also, return filing is not mandatory. Rahul, I don't have unabsorbed depreciation. Now I have normal PGBP loss. What do I have? Normal PGBP loss. This normal PGBP loss will be first set off against PGBP income. Then will be set off against any head other than salaries. Rahul, that is also not there. Carry forward and set off against. Carry forward and set off against only PGBP income. I told you carry forward only same head of income you can set off except for unabsorbed depreciation. Except for unabsorbed depreciation. So PGBP loss will be carried forward and set off only against PGBP income. Period of carry forward. Return filing. Mandatory. Hey, understand, whenever I use the word return filing, I don't mean you have to file a return. I mean you have to file return on time. You have to file return on time. Rahul, na later file panna loss pochukali. Cannot be eligible. Cannot be eligible. Yes or no? Yes. Next, you have something called as capital gains. Capital gains, there are multiple gains. One is called as long-term capital gains, short-term capital gains. Rahul, I have long-term capital gains. I can set it off against I have long-term capital loss. I can set off against long-term capital gains. Rahul, I don't have long-term capital gains. Direct carry forward and set off only against long-term capital gains. Period of carry forward 8 years. Return filing on time. Mandatory. Rahul, I have short-term capital loss. Can be set off against both long-term and short-term. Rahul, I don't have capital gains. Carry forward. In carry forward year. Both. Again both. Hey, same head only, no. So again both long-term and short-term. Period of carry forward. Return filing. Mandatory. Return filing. Mandatory. In all these scenarios, please understand, if you have a loss which is from an exempt income. Loss from an exempt income, that will be ignored. Loss cannot be set off against your special incomes like casual income and unexplained income. Casual income and unexplained income. These two things cannot have a loss set off. These two things cannot have a loss set off. You can set off against capital gains. You can set off against capital gains. Rahul, I have business loss. Can I set off against capital gains? Yes. Rahul, I have business loss. Can I set off against speculative income? Yes. Rahul, I have business loss. Can I set it off against scientific business, specified business income? Yes. Can I set it off against speculative income? Can I set it off against salaries? Can I set it off against HP? Yes. You can do that. You can do that. Yes or no? Yes or no? Last is your IFOS income. In IFOS, they're coming and saying, boss, there are one kind of loss which is called as your loss from owning and maintaining horse races. If you have a loss from owning and maintaining horse races, it will be adjusted only against owning and maintaining horse races. I don't have that income, Rahul. Carry forward, set off only against owning and maintaining. Period of carry forward. Return filing. Mandatory. Rahul, I don't have that. I have a normal IFOS loss. I have a normal IFOS loss. I can set off against IFOS income. Rahul, I am not able to set off against IFOS income. Set off against any other head, including salaries. Including salaries. Rahul, that is also not there. That's all. No carry forward. Lost there itself. Lost there itself. You cannot have a carry forward. Return filing. Doesn't matter. Doesn't matter. Yes or no? Yes, this is your set off and carry forward chapter. Yes or no? Yes. Since we have completed clubbing and set off, let's also discuss about their 115 BSc. In clubbing, there is one item called this 1,500 rupees. Not eligible under 115 BSc. Not eligible under 115 BSc. Coming to your capital gains, coming to your set off and carry forward, there are two rules here. One rule they are coming and saying is, boss, if you have a loss pertaining to any income which I have told not eligible. If you have a loss from any item which I have told not eligible, like for example, additional depreciation or unabsorbed depreciation, scientific business loss, from not scientific business, specified business loss, all those things will be ignored. All those things will be ignored. Second rule they're coming and saying, when it comes to HP, you were permitted to set off the HP income against any head other than, any head up to 2 lakh rupees. That condition has been taken away. That condition has been taken away, which means if you are under 115 BSc, if you have a loss from HP, it can only be set off against income from HP. If you don't have income from HP, carry forward and set off against income from HP. That's all is the logic. That's all is the logic. Keep that in mind. Yes or no? Yes. In case you don't understand 115 BSc, don't worry. We have a chapter. We have a chapter. That time we can look at it once again. Okay. Yes. This completes your step number 5 and step number 6 and 7. Comes to step number 8. At 7, when you complete it, you find out something called as gross total income. After you find your gross total income, comes your step number 8 called as your chapter 6A. Called as your chapter 6A. Can we? Yes. Okay, great. Chapter 6A is a chapter where they're coming and saying that, Rahul, I want to give you some general deductions without looking at the specific head of income. This chapter 6A is only allowed directly from your gross total income. Assuming you don't have a gross total income, can I carry forward chapter 6A, Rahul? No. Second, they are coming and saying, boss, chapter 6A can only be claimed against slab rate incomes, cannot be claimed against special rate incomes. Even capital gains you cannot claim it against. Okay. So chapter 6A is not permitted against capital gains, winnings and unexplained. All the three are not eligible. You can only claim it against slab rate incomes. Be extremely careful about this fact. After you complete your total income, always go and verify that the total income should bare minimum be your special rate incomes. Then only the answer will tally properly. Yes or no? Yes or no? Yes, this is what the provisions are. Now coming to your chapter 6A, there are two heads of chapter 6A. One is called as expenditure level deductions, and the other is income level deductions. In an expenditure level deductions, which is heading B, the first and the most important one is called as ATC. ATC comes and says that we have certain payments and investments which you can make to claim your chapter 6A. Maximum limit is 1,50,000. Maximum limit is 1,50,000. In that, the first item is your life insurance policy. If you pay any kind of premium against your life insurance policy, you can claim it as a deduction, subject to the condition that if the policy is taken before 2012, you can claim 20%. If it is after 2012, 10%. But if it is after 2013 and a handicapped person, 15%. Rahul, this is the maximum you can claim. If you have anything more than that, it will be ignored. Now, life insurance policy is not just for you. It can also be taken for spouse, children or parents are? children. It is spouse and children. Children and all dependency not required. Parents are fully not eligible. Parents are fully not eligible. If you are not doing life insurance, then you can do PF. Any kind of contribution made by employee, not employer, employee. Any employee contribution made to any PF, which is statutory PF, public provident fund, recognized provident fund. Okay, all three. And along with that superannuation fund. And along with that superannuation fund, all these will be eligible for a deduction. Rahul, this is not happening, then you can claim the tuition fees which you're paying for your child education. Rahul, this is also not happening. You can pay any kind of stamp duty charges which you have paid for a house. Rahul, this is also not happening. If you have taken any kind of term deposit for 5 years and more. Term deposit for 5 years and more. All these kind of things you can claim Chapter 6A up to a maximum of 1,50,000. Next, what is happening, Rahul? If ATC is not helping you out, you have something called as ATCCC. ATCCC comes and says if you have a pension fund, you can deposit money in the pension fund, you will get a deduction on that. Rahul, that is also not happening. I have now something called as ATCCD. Understand the difference? The other one was pension fund, this is pension scheme. That one was pension fund, this is pension scheme. In pension scheme, they're coming and saying, Rahul, pension scheme, two people can contribute. One is I can contribute, one is employer can contribute. If employer is contributing, employer can contribute 10% of my salary. 10% of my salary. But if the employer is the government, then he can contribute 14% of the salary. Current year amendment, government can be in central and state, doesn't matter. Both. Central and state both. Earlier it was only central, now state is also covered. 10 and 14. Now salary here means basic plus DA forming part. That's all. It is basic plus DA forming part, no commission and all. It's only basic plus DA forming part. Yes, Rahul, if the employer is not contributing, I can contribute. Who am I? Own contribution need not be employee, it can be any person. In this, what will happen is, Rahul, whatever I contribute, first 50,000 park aside. Flat deduction. Then they're coming and saying, Rahul, if 50,000 is not helping you out, you can also claim 10% of your salary. Only if you are working. If you're not working, then it is 20% of your GTI. If you're not working, it is 20% of GTI. If you're working, it is 10% of salary. You can claim that over and above your 50,000. Which means one person will get 2 deductions. Self-contribution, you can get 2 deductions. Always, as a matter of priority, keep 50,000 as the first priority, then move the balance. Yes or no? Then the provisions come and say, Rahul, if you have ATC, you have ATCCC, and you have ATCCD also. All three put together, you cannot claim more than 1,50,000. But in ATCCD, employer will be moved aside, 50,000 will be moved aside. Which means, in simple words, it is ATC, ATCCC, CCD, employee contribution 10% rule. All three put together will become 1,50,000. Separately, you can claim employer contribution. Separately, you can claim 50,000 limit. This is what the rule looks like. CCE. This is what the rule looks like. With me till here? Can we go forward? Yes, perfect. Next is your ATD. Next is called your ATD. This is your medical insurance. In exams, please be extremely careful. If they use the word life insurance, it is ATC. If it is medical insurance, it is ATD. Why am I telling this difference, Rahul? Sometimes in exam, they will not tell you either. They'll come and say insurance, that's all. Now you have to make an assumption as to what will happen, because the family will change in both the scenarios. In life insurance, we came and told family is self, spouse, children, full stop. Here ATD comes and says it is self, spouse, dependent children, any parents. Which means in exam, if they are coming and telling you, Rahul, life insurance for parents, not eligible. Health insurance for parents, keep in mind. Yes or no? Yes. Now, when it comes to ATD, the provisions are coming and saying that, Rahul, if you have an ATD, you have to prepare 2 buckets. One bucket will sit for me, my spouse, and my dependent children. The other bucket will sit for my parents. Both bucket will be eligible for 25,000 each. If any bucket has a resident individual more than 60 years of age, that bucket will become 50,000 each. Now understand, 25,000 is not per person, it is for the bucket. So in that bucket, if I am a person who has more than 60 years of age, my bucket will become 50,000. If parents have a bucket more than 60 years of age, parents bucket will become 50,000. Both together will become 1 lakh. Rahul, I am less than 60, but parent's bucket is 60, then it has become 75. Rahul, I am also less than 60, parent is also less than 60, 25, 25, 50. That is what the answer is. That is what the answer is. Clear? Yes. Now, in this, what and all can I claim, Rahul? The first item I can claim is my health insurance premium. What I can claim? Health insurance premium. Second item I can claim is any kind of payment made to CGHS, Central Government Health Scheme. Central Government Health Scheme. Third item, what can I claim, Rahul? I am coming and saying I can also claim something called as preventive health checkup. 3 items I can claim: medical insurance, CGHS, preventive health checkup. The rule is, if you are claiming any kind of preventive health checkup, you can only claim 5,000 rupees for both buckets together. For both buckets together. Rahul, which bucket should I give priority? Look at which bucket is not getting exhausted. Look at which bucket is not getting exhausted. Use that bucket off. You can claim the maximum deduction. Maximum is 5,000. Both the buckets put together. Both the buckets put together. At the same time, they're coming and saying, boss, if you want to make a payment under ATD, you have to ensure that all the payments happen other than by cash. Only one payment is allowed in cash. Preventive health checkups are allowed in cash. Yes. Rahul, I am a senior citizen, but I don't have an insurance. I don't have an insurance. No problem. They're coming and saying, if you are a resident senior citizen, do not have an insurance or not able to take an insurance, whatever expense you incurred can also be claimed. Only for resident senior citizen. Only if you are a resident senior citizen, you can claim the actual expense also. You can also claim the actual expense. At the same time, the last provision of this section comes and says, if you have made a lump sum payment for your premium, the premium will be allowed over the years. Not in the same manner. It is allowed over the previous years in which the policy is in force. It is allowed in the previous years in the policy in force. In simple words, let's say for an example, the policy was taken on 2nd May 2021. The policy was taken on 2nd May 2021. This policy is applicable for 5 years. The policy is applicable for 5 years. In this, income tax coming and saying that, boss, if your policy was applicable for 5 years, then what will happen? The policy will be valid from 21 May. Will be applicable from 21 May, then 22 May, 23 May, 24 May, 25 May, 26 May. Yes or no? Ideally speaking, you have taken the policy for 5 years, but the years is 6. The years are 6. It will be amortized over 6 years. It will not be amortized over 5 years. Please keep that in mind. While the policy is applicable for 5 years, it is spreading over 6 financial years. Therefore, you will be eligible for 6 previous years, which means you have to divide it over 6 years. This is one exception given to you. You have to be extremely careful about this one. Yes or no? Yes, sir. Yes, keep that in mind. Yes. If you have completed what your 80D looks like, then you have something called as 80DD or 80U. 80DD or 80U. This one basically comes and says that, boss, if you are having a handicapped person at home, it can be either you itself or it can be your family member. It can be either you itself or it can be a family member. Who is the family member, Rahul? It is self, spouse. Then. Who is it? You have self, spouse, parents, children, siblings. Is there. Okay, self, spouse, parents and siblings. These are all the people. If you are handicapped or any of your family is handicapped, then in that case you can get a flat deduction, a mandatory flat deduction of 75,000 rupees regardless of what you spend. Rahul, I spent only 1 rupee, 75,000. I spent 1 crore rupees, 75,000. Doesn't matter. Flat deduction of 75,000. But if it's identified that the person who's disabled is severely disabled, severely disabled, it will become 1,25,000. Rahul, how to know it is severely disabled? Question will come and tell you that. They will come and say that the person is disabled 80% or more. 80% or more, then it is severely disabled, then it is 1,25,000, otherwise it is 75,000. Now please understand, if I have taken the deduction, then the family member should not take the deduction. If the family member has taken a deduction, I should not take the deduction. One way benefit. Yes or no? Yes. After 80DD, you have something called as 80DDB. 80DDB comes and says that you have a medical treatment for a specified disease. What do you have? You have a specified disease. I have identified that you have a specified disease for which you have to incur a medical treatment. Now, if this medical treatment is sponsored by your employer, it become by salary chapter 4 exceptions. Assuming it is not sponsored by anyone, I am making the payment. They're asking, okay, boss, tell me who are you? Tell me, who are you? I say I'm not a resident senior citizen. He'll say 40,000 deducted. 40,000 deducted. If you say, no, Rahul, I'm a resident senior citizen, 1 lakh rupees deducted. 1 lakh rupees deducted. That is what the rule is. Now understand, this is not a flat number. This is maximum number. This is maximum number, which means amount incurred or 40,000, whichever is lower. Amount incurred or 1 lakh, whichever is lower. That is what the rules are. That is what the rules are. Yes or no? Yes. Rahul, I've completed my 80 double DB. After 80 double DB starts my loans or interest. My loans and interest. 80E comes and talks about my interest on loan taken for my education. Interest on loan taken for my education. If I have taken a loan for doing education, should be an education after 12th standard. Should be an education after 12th standard, which means it should be higher studies. It should be higher studies. It is okay if I take the loan for myself, for my spouse, for my children, or for any guardian student. Or for any guardian student, if I have taken a loan, then in that case, whatever interest I incur on that loan, fully allowed as a deduction for a period of 8 years. For a period of 8 years. Now, please understand, in the question, they'll come and say, Rahul, 1 lakh rupees is what he's made a payment in the current year. In that 1 lakh rupees, he made a payment of 60,000 for principal, 40,000 for interest. You can claim 40,000. You cannot claim 60,000. You cannot claim 60,000. You can only claim 40,000. The principal amount is not allowed as a deduction. The interest amount is allowed as a deduction. Yes, sir? Yes. The next section is your 80EE and 80EA. 80EE and 80EA. In this 80EE is not expected from exam, so let's focus on the 80EA. 80EA comes and says that if you have taken a house, the house should be an SOP house. The house should be an SOP house. If I find out that you have taken a house, it's a SOP house. You have taken the loan between the period 1922, 2122. 1922, 2122. If you have taken a loan between such period, then whatever interest you could not claim under HP, come and claim it here. Whatever interest you could not, understand the carefully, whatever interest you could not claim under HP, come and claim it here, which means if you already claimed something in HP, nothing is eligible here. Nothing is eligible here. It should be an interest more than the 2 lakh rupees. Correct? No. Should be an interest more than the 2 lakh rupees. If you are not able to have claim under HP, you can come and claim it here for an additional 1 lakh 50. For an additional 1 lakh 50. The rule is that the stamp duty value of the property should not go more than 45 lakhs. It should be an affordable house. Should be an affordable house. Should not go more than 45 lakhs. If it is happening like that way, then you can claim your 1 lakh 50 of extra deduction in the current 80EEA over and above your HP. Over and above your HP. In exams, please be extremely careful about this fact. Question is not mandated to come and tell you that you have to claim 80EEA. You need to check whether all the conditions are being satisfied. If the conditions are being satisfied, you will have to give a deduction both under HP and under 80EEA. You have to be careful about that. Be extremely careful. I have never seen questions like that coming in exam, because generally whenever question comes, they always take the stamp duty value more than 45 lakhs. So adanala in the question generally has not come in exam. In case it comes, please be extremely careful about it. Yes. Yes. Rahul, if it is not 80EE or EEA, you have 80EEB. You have 80EEB. This is a loan taken for buying electronic vehicles. This is a loan taken for buying electronic vehicles. In this electronic vehicles, they are basically coming and saying you have taken a loan from 1922, 22, 23. 1922, 22, 23. In that case, you can take a loan for electric vehicles buying. And if you take a loan for electric vehicles buying, whatever interest you pay on that will be allowed as a deduction of 1,50,000. Of 1,50,000. No conditions attached to it. This is what the final conditions are. This is what the final conditions are. Yes or no? Yes. If you have completed 80EEB, there is no 80F. There is directly 80G. There is only 80G. Now 80G, like I have been discussing, we have 4 categories. We have 4 categories. Category A is called as 100% without limit. Category B is called as 50% without limit. Category C is called as 100% with limit. Category D is called as 50% with limits. 50% with limits. How do you differentiate, Rahul? Category A will always talk about ministers and national. Will always talk about ministers and national. Category B will always talk about Gandhi and Nehru. Gandhi and Nehru, with an exception that Prime Minister Drought Relief Fund falls under Category B. With an exception that Prime Minister Drought Relief Fund falls under Category B. Balance every other ministry falls under Category A. Balance every other ministry falls under Category A. Then you have Category C, which is talking about family planning and Olympics. And Category D talks about charitable organizations. It talks about charitable organizations. These are all your categories. These are all your categories from exam perspective. Yes or no? Yes. Now, Rahul, if you have a deduction, how do you compute the deduction? For A and B, you have no problem. Whatever you have, 100% or 50%. But if you have C and D, if you have CND, they are coming and saying that you can maximum claim a donation of 10% of your qualifying limit. 10% of your qualifying limit. Rahul, what do you mean by qualifying limit? They are coming and saying find the whole total income. Find the whole total income, ignoring ATG. Ignoring ATG, and when I say ATG, I mean all ATG. I mean all ATG, even A and B is ignored. Even A and B is ignored, which means you will take your whole gross total income, allow for every other sections. Allow for every other sections except for the whole of ATG. Except for the whole of ATG, you will get an amount. That amount is called as qualifying limit. Adukku mela 10%. Adukku mela 10%. That will become the donation amount which you can give. That will become the donation amount which you can give. If your donation falls into category C, you will give 100%. If the donation falls within category D, you will give 50%. Okay, that is what the rules are. Please understand, the 10% of qualifying limit is not the final deduction. It's the final donation. It's a final donation. If the donation falls into category D, you can only give 50% of that donation. Yes, sir. Just keep that in mind. Be very careful about that. Be very careful about that. If then it is happening, then they're coming and saying that, boss, if you want to make any kind of ATG payments only has to happen other than by cash. If you want to make a payment in cash, it has to be only up to 2000. It only has to be up to 2000. Anything beyond 2000 rupees should be happening other than cash. If it is happening in cash, you cannot claim that deduction. Second, they're coming and saying if you want to do an ATG can only happen in monetary terms, cannot be in kind payments. Cannot be in kind payments. Go and tell that I have given furniture and all, not eligible. Not eligible. Then if you have ATG, you also have ATGGB, GGC. GGB and GGC. GGB and GGC simply come and say you have a donation made to political parties. What parties? Political. You have made a donation to political parties, and in that case, whatever donations you made to political parties will become allowed as deduction. 100% allowed as deduction, subject to the condition that zero cash, full transaction in permissible modes. Full transaction in permissible modes. One payment in cash not allowed. Simple, straightforward game. Yes? Yes. If you have done with ATGGB and GGC, you also have a section after that called as ATGG, which is your rent payment. Only for those assessees who are not eligible for HRA. Ignore the provision, not coming in exam. Next, after GG completes your expenditures, moves to the next thing called as income based deduction. Move to the next thing called as income based deduction, where income tax is coming and saying, boss, if you want to claim an income based deduction, what do you want to do? If you want to claim an income based deduction, you have to ensure that you file your return on time. If you miss to file your return on time, no deduction. No deduction. For all these things which I am going to discuss right now, income based deduction is mandatory to have a income return filed on time. Yes, yes. Coming to that, in that we have the first item called as ATJJAA, one of the most important sections from exam perspective. If at all they have to test you, this is the best way to test it. This basically section comes and says you should be a business person. What should you be? Business person. Who is liable for tax or it. In that scenario, I will come and ask you one simple question. Tell me, have you increased your employment in the current year? Which means I look at your closing balance of current year versus your opening balance of current year. If the movement is more, then you are eligible. If the movement is less, not eligible. Then I will come and say, Rahul, if I find out that you have more employments, I will now come and ask you to tell me who are your additional employees. How to find out my additional employees, Rahul? First rule, they're coming and saying, boss, he should have worked for more than 240 days in the current year. Rahul is not worked for more than 240 days in the current year. Bring last year's 240. When I say bring last year's 240, meaning last year they did not satisfy 240, current year they'll become eligible. Rahul, okay, condition satisfied. Next, your salary payment should not go more than 25,000 per month. 25,000 per month. Rahul, how to calculate per month and all? I say I will come and do. They'll give you monthly salary only. Also. Rahul, it is more than 25,000 per month. Ignore the employee. Rahul, it is less than 25,000 per month employee. Consider him. Rahul, 240 days would a condition. Can it be come down? Yes, you can bring it down to 150 days if it is manufacturing of leather apparel industry. 240 will become 150. How much? 150. Now that employee also has now become eligible, which means the employee has satisfied more than 240 or 150, employee satisfied more than 25,000. Then I'm coming and saying, if that is the condition, tell me how did you make the payment? I'm coming and saying, Rahul, I made the payment by cash, not eligible. Rahul, I said, no, I made the payment by bearer check, not eligible. I made it by cross check, not eligible. What do you want? Permissible modes. You make the payment by permissible modes, eligible. Don't make the payment by permissible modes, not eligible. Not eligible. Yes or no? Yes or no? Rahul, employee 240 days satisfied, 25,000 satisfied, payment made by permissible modes. Now what to do? Take the salary of that employee for the current year, multiplied by 30%, that is what your deduction is. What? Take the salary of the employee, multiplied by the 30%, that is what your deduction for the current year. This deduction of current year will just like that be carried forward for the next 2 years also. Will just like that be carried forward the next 2 years also, which means 30% you claimed in the current year, 30% in next year, 30% third year. Simple logic. Straightforward. Yes, yes. Instead of reading so many provisions, you can directly read the step formula. You can directly read the step formula. The step formula will help you answer the whole section. At the same point of time, please understand it's not tested in exam, but just to clarify to you, if the question also comes and says that the employees which you have are casual employees. What employees? Casual employees. Then also they are not eligible because casual employees are generally not liable for PF. Not liable for PF. There is one hidden condition somewhere where they're coming and saying if the employee is not contributing to the PF, the employee is not contributing to the PF, or the employee's PF is being sponsored by government, not eligible. Not eligible. Yes or no? Yes or no? So please be careful about that as well. Yes, 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 yes. Great, perfect. After you complete 80JJAA, you have two more income sections. One is called QQB, one is called RRB. Both are royalty. Both are royalty. One is royalty for invention, the other is royalty for books. One is royalty for books, the other is royalty for invention. It doesn't matter what royalty you have, both royalty are eligible for a deduction of 3 lakhs. Both royalty are eligible for a deduction of 3 lakhs. But the condition in this 3 lakhs is that you should get the money in India. You get the money in India. Rahul, you are paying the money outside India. Get the money in India within 6 months. Get the money in India within 6 months. Rahul, I did not get the money within India in 6 months. Not deduction eligible. Income will be offered. Mandatory. Income will be offered, but the deduction will not be eligible. The deduction will not be eligible. At the same time, they are coming and clarifying that Rahul, if I am receiving some money like that, if I am receiving some money like that, if it is recurring payments, what payments? You can only claim 15% of the number. You can only claim 15% of the number. 15% of the books sold is what your royalty can be eligible for. If it is anything more than that, ignore the number. It is added to your income but never claimed as deduction. It is added to your number but never claimed as deduction. If I remember one question properly, the question was you have a royalty of 2,88,000. You have a royalty of 2,88,000, which is 18%. Which is what? 18%. Income tax will come and say, boss, add the 2,88,000 on the top, but when you claim deduction, you can only claim 2,50,000, which is the 15%. Which is the 15%. Now, in this 2,50,000 also, the question came and said, what came to India is only 2,40,000 in 6 months. So, therefore, the income will now become, sorry, the deduction will now become 2,40,000. Then also they came and said that, boss, in the person, when he incurred the royalty, he also incurred 40,000 rupees as expenses. What you would have done? This 40,000 would have been allowed as a reduction in IFRS. This 40,000 will be reduced here also. Will be reduced here also. So, therefore, 2,40,000 will become 1,90,000. So, the final deduction you can claim is only 1,90,000. But the amount which you would have offered as income would have been 2,88,000 minus 40, 2,48,000. Yes or no? Yes, there is one question like this. If you have not done it, please do it. It's there in the study material also. Okay, if it is not there, it's there in my book also. Just work it out. Okay, 2,88,000 has become 2,48,000. Income is offered as 2,48,000, but the deduction which you granted is only 1,90,000. Income which you granted is only 1,90,000. Please be extremely careful about these kind of questions. I've seen questions coming in the full-fledged answers. Done. Yes. Great. Moving to the last heading called as heading CA. The heading CA only has two kind of sections. One is ATTTA, ATTTB. This ATTTA and TTB comes and says that if a person is earning interest income, what income? Interest income. If a person is earning interest income, then the interest income can be claimed as a deduction subject to a maximum of 10,000 for TTA, 50,000 for TTB. TTB is applicable for resident senior citizens. In ATTTA, you can claim only on savings and post office savings. In ATTTB, you can claim for any deposits. You can claim it for any deposits. So therefore, in exam, if you see the heading called as post office savings will first get an exemption of 3,500. Then they will get a deduction of 10,000 or 50,000. 10,000 or 50,000. If it is any other kind of incomes, you will get a no exemption under IFRS. Then you will get an exemption of 10,000 if it is savings and 50,000 if it is any person. 50,000 if any deposits. Yes, sir. Can you imagine it? Yes, great. Ending this chapter of chapter 6A with clarifying of 115 BSc, which comes and says that if you are opting for 115 BSc, motto chapter is not eligible. Motto chapter is not eligible. Only 2 items are eligible for you. One is employer contribution to NPS, which is 80 CCD subsection 2, which is nothing but 10% or 14%. That is option number 1. Option number 2, you can claim 80 JJAA. You can claim 80 JJAA. In the ரெண்டு section மட்டும் நீ claim பண்ணலாம், அது தவிர ஒண்ணுமே claim பண்ண முடியாது. Yes or no? Last, after your step number 8, in your step number 8 you have 2 options. One is chapter 6, the other is 10AA. Without even moving the chapter, I'm going to tell you in 5 seconds. The chapter 10AA comes and says you have 3 slabs. For the first 5 years, 100%. For the next 5 years, 50%. For the next 5 years, 50%. Rahul, what am I talking about? I'm talking about 100% of export profit, 50% of export profit, 50% of export profit. Rahul, how do I compute export profit? Take the profit of the undertaking. Take the profit of the undertaking multiplied by ETO divided by TTO. ETO is export turnover, TTO is total turnover, which means it is profit of the undertaking into export turnover divided by total turnover. The only thing which is to be kept in mind in this chapter is that profit is of the undertaking, not for the company as such. Not for the company as such. It is only for that respective undertaking. Balance any other undertaking will be fully taxable. Keep it separately. Should not be part of your ETO and TTO. Should not be a part of your ETO and TTO. Second thing to keep in mind, whenever you read about the word ETO, provisions are coming and saying that ETO means, hey, lose it. ETO means any kind of turnover which is brought into India. No condition given. No condition given. Just a set brought into India, which means if you have made any kind of payment like telecommunication, freight charges, this charges, that charges, anything which you paid outside India, anything which you paid outside India, that money will be reduced from your ETO. That money will be reduced from your ETO. If the question comes and says, Rahul, the export turnover is 1 crore. I have paid 1 lakh rupees as freight charges which is paid outside India. Your export turnover now becomes 99 lakhs. Your export turnover now becomes 99 lakhs. With the second condition where they're coming and saying, if you have ended up reducing something from your export turnover, it will also be reduced from your total turnover. It will also be reduced from your total turnover, which means when you're computing a total turnover is 1 crore plus some number. That will now become 99 plus some number. That will now become 99 plus some number. That is what the section says. What are the section? 3 things. First 5 years, 100%, 50%, 50. Both 150 is for export profits, which means profit of the undertaking into ETO by TTO. ETO means remove all the expenses paid outside India. TTO means remove all the expenses paid outside India only if it is removed from ETO. Only if it is removed from ETO. Yes or no? Munaj is the section. Munaj is the section. This is what the chapter comes and tells. And from 115 BSc, not eligible. From 115 BSc, this is also not eligible. Yes or no? Yes or no? Great. This marks the end of your section, step number 8, which means now you have also computed your total income. You have also computed your total income, and then on that you have paid taxes, and you have completed step number 9 and step number 10. Step number 9 and step number 10. There are some small 2 chapters which are pending in the very last, called as unexplained income and agricultural income. What is this unexplained income, Rahul? They're coming and saying in a simple word in exam, if they come and say that you have some income or you have some expense for which assessing officer is asking you for explanations, is asking you for explanation. You give him the explanation, he is not satisfied, unexplained income. You don't give explanation, unexplained income. That's all, chapter over. That's all is the chapter. Any kind of income, any kind of asset, any kind of investment, any kind of expenses, assessing officer is asking for reasons. You justify the reason, he is happy, good for you. You don't justify the reason, unexplained income. You justify, he is not happy, unexplained income. Take all the incomes, no deduction of expenses, directly tax at the rate of 78%, no set off of losses, no set off of basic exemption limit. Chapter is over. That's all. Yes. Last chapter is your agricultural income. This chapter basically comes and says that if you have any kind of agricultural income in India, it is exempt from tax. If you have any agricultural income outside India, it is fully taxable. How do you find out you have an agricultural income in India, Rahul? They're coming and saying the income should come from a land in India. This land should be an urban land, rural land. Correct, Danda. This land should be an rural land. How do you find out a rural land, Rahul? It should not be an urban land. Same provision as capital gains. Same provision as capital gains. So you should have an income from an rural land in India. This income can also be from a activity which is necessary to make the product ready to use, like threshing, thrashing, hitting, killing, whatever you call it. Okay, all things. Any kind of activities which is necessary to make the product fit to sell in the market. Fit to sell in the market will also be considered as an agriculture income. At the same time, if you're renting out this premises also, it is agricultural income. If you are renting any kind of warehouse in this process also is agricultural income. The one thing which is also an agricultural income, although it is not a land, is a nursery saplings. Yes, any kind of saplings grown in a nursery. What? Nursery. Any kind of saplings grown in a nursery will also be an agricultural income, even though it is not on a land. Even though it is not on a land, this is what is an agricultural income. Now, income tax is coming and saying that, boss, if you have an agricultural income, you also need to come and tell me how to find out the PGBP income and how to find the agriculture income in case of a composite income. In case of composite income, income tax is telling that, boss, I have given you 3 items which I don't like. One is tea, coffee, rubber. If you have any kind of incomes from rubber, your PGBP income will become 35, agriculture will become 65. If you have an income from tea, agriculture will become 60, agriculture will become 60, PGBP will become what? Kale. Yes, if you have coffee, in coffee there are 3 words and 2 words and 4 words. If you have 2 words, it is 25 and 75. 25 is PGBP. Always the lower is PGBP. Always the lower is PGBP. 2 words, 25 will become PGBP, and 4 words, 40 and 60. 40 and 60. Rahul, what is this 2 words and 4 words? It is grown and cured. The other is grown, roasted, cured. One more. Grounded. One more, grounded. Some 2 words, some 4 words. It doesn't matter. Okay. If you have 2 words, it is 25, 75. If it is 4 words, then it is 40 and 60. Which one is the lower? PGBP is the lower. PGBP is the lower. Rahul, in this case, assuming it is not the 3 cases, it is any other case like sugarcane and all those things. Assume what you will do is you will take your product and you will sell it to your factory. At what price? Fair market value. So what you will do is you will take the cost of your product, you will complete your whole cultivation, you will sell it to your factory for FMB. That number will become agriculture. Since you have sold it at FMB, for your factory this has become cost. Yes or no? Yes. On this they will do further production and then they will sell it the final product outside. That income will become PGBP. That income will become PGBP. In simple words, you will do your process costing. You will do your process costing. From one process to another process, the difference will be FMB from here and FMB from there. My FMB of sales will become their FMB of cost. My FMB of sales will become their FMB of cost. Simple, straightforward answer. Yes or no? Yes. If you are done with all this, in step number 9 and 10 will come a change. In step number 10 and 9 will come a change, because now you have to compute tax on your agriculture income using something called as partial integration, which means agriculture income is not exempt from tax. Agriculture income is partially integrated in tax. Agriculture income is partially integrated in tax. Rahul, what does this mean? They are coming and saying, boss, if I find out that you are a slab rate person, who are you? If I find out that you are a slab rate person and your agriculture income in the current year has gone more than 5,000, agriculture income in the current year has gone more than 5,000, I will call you as a partial integration person, in which case what I will require from you is, I will want you to first compute tax on all income assuming agriculture income is taxable. What? I want you to compute tax on all income assuming agriculture income is taxable. Then I will come and say, you do one thing, you take the agriculture income and add it to your basic exemption limit and then compute tax on that also. Which means step number 1 is computing tax on total income plus agricultural income. Step number 2 is computing tax on agriculture income plus basic exemption limit. You have 2 taxes. 1 minus 2 is the answer. 1 minus 2 is the answer. Now please understand, in this when you do it, step number 1 should be done till cess. Step number 2 also should be done till cess. Step number 3 is 1 minus 2 directly. Step number 3 is 1 minus 2 directly. No cess and all before. It will always happen after. Complete the whole step number 1 till the final answer. Complete the whole step number 2 till the final answer. Get the minus of both, and that is what your final answer will be. Yes or no? Why is this happening, Rahul? The reason is happening is because agriculture income is making your slab change. Which means if you find a question where the slab is not changing, forget the partial integration, everything is exempt. Everything is exempt. At the same time, if you're not a slab rate person, if you're a flat income tax rate person, then anyway partial integration will make no sense. Therefore, it is exempt fully. Therefore, it is exempt fully. The one thing which is to be kept in mind is if you are in composite incomes, income tax comes and says that when you're trying to claim depreciation, what are you trying to do? You're trying to claim depreciation. Now you know that the depreciation on the building which you have is 10%. But you know that 40% of that has become PGBP income and 60% has become agriculture. Can you come and say that no Rahul, depreciation Puerto Rico only 40 I will reduce from my block? No. They'll come and say reduce the whole 10%. Reduce the whole 10%. In simple words, whenever you're trying to find out your closing block, whatever depreciation number you computed, no, that number is the final reduce. That number is the final reduce. That is what the number is. Simple as that. Yes, which means if it's a personal nature item, then you would have anyway reduced the depreciation. So which means that will be reduced from a closing WDV. But if you have any other agriculture income, you would have anyway taken the full depreciation and the number will take care of itself. 40, 60 will take care of itself. Depreciations individually you wouldn't have split, yes or no? So whatever depreciation you computed, directly reduce it off and close the answer. Directly reduce it off and close the answer. Yes or no? Perfect. This completes your agriculture income and your unexplained income. With this completes satisfactorily your step number 9 and step number 10. Step number 9 and step number 10. Moving to the next part in this chapter is called as AMT. Page number da. Time kula mudijinome. Am I going fast? No, you are going slow. 180 up. Awesome. The next smaller chapter, which has no relevance but is there, is called as AMT. Full form is alternate minimum tax. This chapter is basically some section which income tax is trying to beg money from you. Income tax is trying to beg money from you, where this section is basically coming and saying that Rahul, you are ready to pay some taxes. You are ready to pay some taxes, but I'm expecting a little bit more from you. I'm expecting a little bit more from you, worse than girlfriend also. Yes, they're expecting some amount from you, so therefore you end up paying that extra amount. You end up paying that extra amount and then promise that you will get it back in the future. In a promise that you will get it back in the future. This is called as alternate minimum tax. In simple words, I am coming and saying that Rahul, as per the normal provisions of that, I was liable to pay 100. How much? 100. Government is coming and saying, no, I am expecting 150 from you. I'm expecting 150 from you. You will come and say, okay, I was ready to pay 100. You are expecting 150. I have no choice but to pay 150. So I end up paying 150. Yes or no? Yes. Next year, what happens is I am ready to pay 200. I am ready to pay 200. Government is only expecting 100 from me. Government is only expecting 100 from me. Will I pay 200? No. I will come and say, hey, last year I paid you extra 50. So I will now pay 150 only. I'll now pay 150 only. Yes or no? Yes. Take the second example in a different manner. I'm coming and saying that Rahul, I was ready to pay 200. I was ready to pay 200. Government is expecting 180. How much is government expecting? 180. I am telling boss, I've already paid 50 in the past. I've already paid 50 in the past. So I'm reducing the 50. I'm reducing the 50. But the moment I reduce 50, it will become 150. Government is expecting, which means I have to pay 180. I have to pay 180, which means at any point of time, I cannot go lesser than what government is expecting. At any point of time, I cannot go lesser than what is government expecting, which means I can only pay 180. 200 length 180, meaning 20 I used off. Balance 30 will be carried forward. Again, subsequent year will check. Again, subsequent year will check. What is this mechanism is called as? This mechanism is called as AMT credit. This mechanism is called as AMT credit. In simple words, they're coming and saying the year in which you pay higher taxes than your normal provisions, then the money will become AMT credit. The AMT credit can be utilized in your subsequent years when the normal becomes higher. When the normal becomes higher, subject to the condition that you do not go lower than your AMT tax. You do not go lower than your AMT tax. Rahul, how does this work? Look at the example. Damn slow this is. Look at the example. It comes and says that boss Rahul, there is a normal tax liability of 2 lakhs. Normal tax liability of 2 lakhs. Expectation of government is 1 lakh 75, which means I will have to pay 2 lakhs. Now, have I paid more? Have I paid less? I've paid more. How much more have I paid? 25. So hold the 25. Hold the 25. Next year, I'm coming and saying I am ready to pay 3 lakh 50. Government is expecting 4 lakh 35. Am I paying more or less? More. How much extra am I paying? 85,000. I already paid 25 in the past. I am now paying extra 85. Total becomes 110. 110. Now in year 3, I am ready to pay 4 lakh 47. Government is expecting 5 lakh 28. I have to pay 5 lakh 28 because government is expecting more. Government is expecting more. How much extra is the government expecting? 80? 81,000. So 1 lakh 10 plus 81 will become 1 lakh 92. 1 lakh 92. Now, till now I have paid extra of 1 lakh 92. With me till here? Next. You are in year 4. Year 4, you are ready to pay 5 lakh 11. Government is expecting 3 lakh 56. Government is expecting 3 lakh 56. You will come and say, I will not pay 5 lakh 11 because I already paid 1 lakh 92. Reduce the 1 lakh 92. How much is it coming to? If you reduce 1 lakh 92 from 5 lakh 11, 320? 320. Okay, 3 lakh 20,000. So if I reduce the whole number, I will end up paying 3 lakh 20. But government wants 3 lakh 56. Can I pay 3 lakh 20? No, I'll have to pay 3 lakh 56, which means I have not utilized my whole number. I have not utilized my whole number. I still have a pending of 36,000. I still have a pending of 36,000. I was to pay 3 lakh 20. I ended up paying 3 lakh 56, which means 36 is still pending. Yes or no? Yes. Coming to the last second last scenario, I am coming and saying I am ready to pay 5 lakh 78. Government is expecting 5 lakh 35. Will I pay 5 lakh 78? No. Will I pay 5 lakh 78? No, because I also have still 36 pending. I also have 36 pending. How much if I reduce 36? How much will happen? 5 lakh 42. So now I am ready to pay 5 lakh 42. Government is still expecting only 5 lakh 36. I will end up paying 5 lakh 42. I will end up paying 5 lakh 42 because government wants more always. Government wants more always. Now I have ended up paying 5 lakh 42. Do I still have some credit pending? No credit pending. Come to the last year. I am at 6 lakh 12. Government is expecting 6 lakh 1. I will pay 6 lakh 12. I cannot help it. I cannot help it. This is what the provisions are. This is what the provisions are. This provision is called as AMT credit with a set of mechanism. The rule comes and says that if you have an AMT credit, you have to utilize the AMT credit within a period of 15 years. How much? Rahul, I didn't utilize within 15 years. Loss for you. Loss for you. I don't care. Okay, you have to utilize within 15 years. That is what the policy is. Now, Rahul, how to understand how much is government expecting? There is a provision. The provision comes and says, I want 18.5% of the adjusted total income. How much? 18.5% of the adjusted total income. Rahul, what the hell is this adjusted total income? Income tax is coming and saying, boss, take your total income. Take your total income. There are some claims which you have made which is hitting my life. There are some claims which you have made which is hitting my life. One biggest claim which you made is the 35AD nonsense, which is your specified business. Your specified business. So therefore, remove your specified business. Remove your specified business. Second, 10AA. Second, 10AA. You have claimed a big 10AA for me, which is causing a problem for me. Remove that 10AA. Next, any heading C of chapter 6A, which means 80, JJA, QQB, RRB, QQB and RRB. Rahul, these are the three items. These are the three items. But please understand, when I removed my 35AD, it's not like I am not eligible for anything. What is that coming and selling? They're coming and saying they have a problem with my deduction. They don't have a problem for me to consider it as a normal business. So I will assume it as a normal business. If I would have done it as a normal business, I would have got depreciation. So therefore, they're coming and saying, do one thing, boss, you disallow the whole deduction. You allow the revenue expense. From a capital expense perspective, you allow depreciation. If you do that for me, you will automatically find something called as adjusted total income. You take this adjusted total income, you multiply by 18.5%, you will automatically get what the government is expecting. You will find out what the government is expecting. This is what your AMT tax is. Compare with your normal tax, whichever is higher. Yes or no? Now, because this provision is not very friendly to me, 115 BSc came and said, boss, if you are opting for 115 BSc, get loss don't require. Which means if you are opting for 115 BSc, AMT tax not to be checked. not to be checked. That is why if you notice in step number 9, it is actual or AMT, whichever is higher. That is compared with normal, which that is compared with 115 BSc, whichever is lower. That is compared with 115 BSc, whichever is lower. Yes or no? Yes or no? Rahul, how does this work? Let's take an example. I'm going to put my normal. I'm going to put my AMT. I'm going to put my AU. Okay, tell me what happens. I have my normal, I have my AMT, I have my 115 BSc. I'll give you numbers, you tell me what is happening. Okay, which one you have to pay. In normal it is 100, in AMT it is 200, in 115 BSc it is 150. You tell me which one you want to pay. You have to pay 150. Why, Rahul? A normal or AMT, whichever is higher. Normal or AMT, whichever is higher, that will be compared to 115 BSc, whichever is lower. Yes or no? Yes. Next, Rahul, I have 100, 150, 200, 150. Okay, Purida. Yes. Rahul, I have 150, 100, 200, 150. Rahul, I have 150, 200, 100, 100. Clear? Yes, be careful about this. Be careful about this. This is what your provisions will look like. Any doubts? No? Great. Now, Rahul, when is my AMT applicable? AMT is applicable only if you have an income more than 20 lakhs. The adjusted total income should be more than 20 lakhs. Then only they are looking for these conditions. Otherwise, they are not looking for these conditions. How do you check, Rahul? In simple words, in exam go, check if you have 10 AA, 35 AD or heading C. In that case, try out AMT and check. Try out AMT and check. If it goes more, then you'll do it. If it doesn't go more, ignore it off. Then you ignore it off. The one and the most important thing to be remembered in AMT is 18.5% is on the full adjusted total income. Is on the full adjusted total income, which means I don't care what this adjusted total income comprises of. It may comprise of capital gains, winnings, unexplained income, PGBP, salaries, doesn't matter. Doesn't matter. All of the income is liable for 18.5%. All of the income is liable for 18.5%. I do not go and split here. I will not come and say capital gains 20%, balance 18.5, nothing. I will take the whole of the income and do 18.5%. I'll do the whole of the income and do 18.5%. With me till here? Yes, great. This marks the end of your chapter called as AMT. If you completed AMT, what is pending now? What is pending? You have return filing, advance tax, TDS. Yes, but on a sum level, everything is done. On a sum level, everything is done. Yes or no? Yes. Anyone, any doubts? On a sum level, do you understand what is happening? Yes. When you go for an exam hall, when you see an adjustment, please note that this adjustment may not be from one chapter alone. It may be from multiple chapters. It may be from multiple chapters. Unless you have a clear cut understanding of every chapter, numbers will not come out right. Numbers will not come out right. You may think that this is from one chapter, but it may hit you very hard. It may hit you very hard. That is where you have to be careful. That is where you have to be careful. Like I told you, if you are receiving a gift from a spouse to wife, husband to wife, if you are receiving a gift from a husband to wife, many places will come. Many places will come. First, IFOS. Second, clubbing. Third, capital gains transfer. Capital gains transfer. Yes, all the three are important. All the three are important. Touch yedume aglana ellame gali. Yes or no? Yes. So please be extremely careful. Any one small item can take a toll on you. ICI will not, in MCQ level at least, give you straightforward questions. If they're giving you a question and you try using calculator and if it's coming out in a single shot, it means something is wrong. Please understand. Please understand. It is not that way. It is not that way. If you open up a question, now when I say sure shot, doesn't mean that the first time right on the channel, adana doubt on the chapter. I mean that you open up a calculator and you see that the numbers and you feel like, oh, okay, we have to directly do a slab rate income. No. Then something is wrong. Then something is wrong. If they're giving you an MCQ where they're expecting you to find out tax rate because it is just a number, that means you have missed out something. It may either be marginal relief, or it may be 115 BSc, or it may be partial integration. Can be anything. Can be anything. Take a second, be open mind on what you're discussing about, and then write the answer clearly. Yes or no? Yes. When you have 4 options, just because you see one option matching with your number, don't jump and tick off the answer. There may be other options which are important. You might have noticed from the test we did in the class also. ஏதோ யோசிச்சிருப்பீங்க ஆன்சர் வேற மாதிரி வரும். Yes or no? Yes, please be extremely careful. How do you prepare for all this, Rahul? Simple. Do test. Do test. Doing sums and all you can keep doing lifelong also, but you'll never do anything with that. Okay, because you're just doing the same sums again and again. When the more and more you do test, the more and more your mind become blanks. The more and more the mind become blank, you start working on it. Simple. Yes or no? Yes, keep that in mind. Let's go forward to the multiple chapters. The first chapter is your payment of taxes. The first chapter is your payment of taxes. In payment of taxes, there's not much to discuss. The one thing which is very simple to discuss is that you have multiple taxes. One tax is your TDS, the other tax is your advance tax, the third tax is your self-assessment tax, and the final tax is your final level portion within foreign tax credit. Final level portion with a foreign tax credit. Now, when it comes to your advance tax simply comes and says that if you are having an income, I expect you to pay some tax during the previous year. During what year? Previous year. Rahul, how do I find out what is my advance tax liability? Simple. Take out your total tax liability, reduce your TDS which is deducted. TDS which is mandatory. TDS should be deducted, not estimated. TDS should be deducted, not estimated. If you remove that number, you will find out something called as advance tax. You'll find out something called as advance tax. This advance tax, if it goes more than 10,000 rupees, more than 10,000 rupees, income tax is asking you, then you have to pay tax on that as an advance tax. Rahul, it is not going more than 10,000 rupees. What to do? You can choose to let it go. You can choose to let it go, pay it as self-assessment tax. You can pay it as self-assessment tax. Yes, if the advance tax is going more than 10,000, you have to pay it as advance tax. If the advance tax is going less than 10,000, you can pay it as self-assessment tax. Clear? Yes. Now, how to pay this advance tax, Rahul? They have given you 4 quarters. They've given you 4 quarters. 15th June, September, December, March. 15th June, 15th September, 15th December, 15th March. 15th June, you have to pay minimum 15%. 15th June, 15th September, you have to pay minimum 45%. When I say minimum 45%, including that 15. Including that 15. If you are not there on 15th September, 15th December, you have to pay 75%. If that is also not happening, you have to pay 100% by 15th March. You have to pay it by 15th March. This is what your advance tax obligations are. Now, this advance tax obligations may not be applicable for a resident senior citizen not having PGBP income. Not having PGBP income. This is what the criteria are, which means 2 people are not liable to pay advance tax. 1, tax is less than 10,000. Tax is less than 10,000. Second is resident senior citizen not having PGBP income. These 2 people are not liable to pay advance tax. They can also pay self-assessment tax and close it off. But other people are mandated to pay advance tax in 4 quarter installments. With an exception that if you are following 44 AD presumptive and 44 ADA professional presumptive, you only have to pay 15th March. You only have to pay 15th March. You don't have to pay any other one. You don't have to pay any other one. Rahul, what the hell will go wrong if I don't pay this? What the hell will go wrong if I don't pay this? I will have to pay now something called as interest under section 234C. Under section 234C. This 234C comes and says that, boss, for every quarter which I am telling you to pay the money genuinely. Pay the money genuinely. If you don't pay the money on time, I will levy interest at the rate of 1% for the next 3 months. 1% for the next 3 months. Rahul, 15th June I made a payment, but it was less. 16th June I made the balance payment. Can I do interest only for 1 month? No. It will become advance tax of next quarter. It will become advance tax of next quarter, which means you will be liable for 3 months. You will be liable for 3 months, which means quarter 1 order default interest is 3 months. Quarter 2 order default interest is 3 months. Quarter 3 order default interest is 3 months. Quarter 4 order default interest is 1 month. That is what the rules are. That is what the rules are. In this, they are giving you some benefits. In this, they are giving you some benefit. The benefit is in quarter 1, if you are liable to pay 15%, no problem. No problem. At least pay 12%. How much? At least pay 12%. Rahul, I paid 13%. Interest is 0. Rahul, I paid 11%. Interest will be on 4% fully. 12% is a threshold check. 12% is a threshold check. If I don't satisfy the 12%, the shortfall fully will be liable for interest. The shortfall fully will be liable for interest, which means if I have paid only 11% of the advance tax, whereas I was supposed to pay 15%, income tax will come and say you did not pay 12, which means your shortfall is 4%. On that 4% ke mele 3% interest. 4% ke mele 3% interest, mandatory rule. Mandatory rule. Yes or no? Yes. This is for quarter 1. 15 becomes 12. Quarter 2, 45 becomes 36. How much? 45 becomes 36. 45 becomes 36, which means you pay bare minimum 36, no problem for you. You don't pay 36, 45 in the shortfall compute agum. 45 in the shortfall compute agum. Around third one, 75 will become 75, fourth one 100 will be 100. Fourth one 100 will be 100. No changes in that. No changes in. Yes or no? Yes. Now, when it comes to interest, income tax is coming and saying that boss, there are certain incomes which I know can be a problematic area. I know you cannot estimate these incomes from the first day itself, which means I then cannot expect you to pay interest from the first day itself. So let me come and allow you to pay interest only from the date on, let me allow you to pay advance tax only from the quarter in which you earned it. What are the 4 incomes? Dividend income, winnings, capital gains, business income earned for the first time. How much? Dividend, capital gains, winnings, business earned for the first time. These are the 4 kind of cases where I'm coming and telling no problem, I don't want advance tax from the first quarter itself. You can pay advance tax from the quarter in which you started earning. Rahul, I started earning this income only from 20th March. Doesn't matter, don't pay. 31st March kulla pay pannadu. I will not levy a single 234C on you. Because quarter 4 is already over. At the same time, please understand, just because 15th March has been given a due date does not mean that 16th to 31st whatever is paid is called as delayed payment. That is also advance tax only. Just that for the purpose of 234C you will stop on 15th March itself. What? For the purpose of 234C, 15th March will be the head point. But if you still pay on 16th to 31st, it will still be called as advance tax. Why, Rahul? Because 234B will not come then. 234B will not come. Yes or no? Yes, this is what the provisions are. Any doubts? No. Now, if you have computed advance tax, next comes after advance tax as 234B. Because now you are going to pay something called as self-assessment tax. Income tax is coming and saying, boss, you made some delay in your quarterly payments. No problem, forget it. At least ensure that you paid before 31st March. If you ensure that the whole of the payment is made before 31st March, I will let you go. If not, I will now levy something called as 234B from 1st April of assessment year. Till the date on which you make the payment. Now, from 1st April of assessment year, interest will only be levied at the rate of 1% per month or part thereof, provided you have not paid 90% of advance tax also. Rahul, I have paid 92%, no interest. Rahul, I have paid 89%. Interest on the whole 11%. Will start at 1%. Again, 90% is a checkpoint. You satisfy the 90%, no interest. You don't satisfy interest on everything. Now, when you are doing the computation of interest, the rules simply come and say that if you end up paying self-assessment later on, that day you can start reducing your interest. But how does the self-assessment tax be paid off? Self-assessment tax paid will first be adjusted against my late filing fee. Then it will be adjusted against my interest. Then it will be adjusted against my tax. Which means the last priority will be given to tax. Whatever you adjust from your tax, balance tax is what you'll start paying interest for the next months. Yes or no? And please understand, it is 1% per month or part thereof. With a silent adjustment in this chapter, which comes and says that whenever you want to compute interest, the tax which you have should be rounded down to the nearest 100. Which means they are coming and saying that, Rahul, my tax was showing as 12,900. I will levy interest on 12,000. Around 900 rounded off panno illa. It's rounded down. Rahul, this is 12,100. Same 12,000. Same 12,000. It is always rounded down. Only for the purpose of interest calculation. Only for the purpose of interest calculation. The moment you complete your interest calculation, forget off and come back to your tax. Forget off and come back to your tax, where you have the rule of rounding off total tax as 10. Where you have the concept of rounding off your total tax to nearest 10. To the nearest 10. Yes or no? Yes. Yes. Perfect. This marks the end of your chapter called as payment of taxes. Payment of taxes. அதான் சொன்னேன். Acha, 12,900 is 12,900. Sorry. What is 12,100? What is 12,198? 12,000. Number அதிகமா போட்ட வேற ஒண்ணு இல்ல. Yes. This is what the provisions are. Can we go forward? Yes. Perfect. Completing your payment of taxes leaves us with two small chapters called as one small chapter and one big chapter called as return filing and TDS TCS. Yes. In return filing, what I'm going to do is I'm going to discuss the provisions with one small amendment. So pay focus on the amendments. Pay focus on the amendments. The first is your return filing. The first is your return filing. Now this chapter comes and says that, boss, any person who is computing your taxes is liable to file returns. Is liable to file returns. When are you becoming liable to file returns? First of all, if you're a firm or a company, mandatory return filing. Who are you? Firm or a company, mandatory return filing. If you're any other person who's in the slab rate model, income tax comes and says your GTI, your GTI ignoring your capital gain exemptions. Your GTI ignoring your capital gain exemptions is showing more than basic exemption limit. What? Your GTI ignoring your capital gain exemptions is showing more than basic exemption limit, which means you don't take your total income, you don't take your gross total income, you take gross total income removing your capital gain exemptions. Removing your capital gain exemption, that should show less than basic exemption limit. What is your basic exemption limit, Rahul? 2.5 for normal, 3 for senior not opting for 115 BSc, 5 for senior not opting for 115 BSc, super senior not opting for 115 BSc. Yes or no? Yes. This is what the primary conditions are. This is what the primary conditions are. But beyond this, income tax now comes and tells that I am also giving you certain criteria and rules basis which I want you to file a return. Basis which I want you to file a return. Now here I don't care what your income is. I don't care what your tax is. You have satisfied the condition, so you have to file a return. You have satisfied the condition, you have to file a return. First condition they're coming and saying in current account you deposited more than 1 crore. How much have you deposited? In current account you have deposited more than 1 crore. I want you to file a return. I don't care what you have done. I don't care what you have done. Second, I'm coming and saying you have deposited more than 50 lakhs in savings account. How much? 1 crore in current, 50 lakhs in savings. Yes. Then I'm coming and saying you have incurred more than 2 lakh rupees in electricity. How much? 1 lakh in electricity. You have incurred more than 1 lakh in electricity, or you have incurred more than 2 lakhs for foreign travel. 1 lakh for electricity and 2 lakhs for foreign travel. Now please understand, I am coming and telling that you have incurred this. You have incurred this. I am not bothered who traveled. I am bothered who incurred. I am bothered who incurred, which means if I have made the payment for the foreign travel for my daughter to travel and come, I am filing the return. Daughter is not filing the return. Daughter is not filing the return. It is more important as to who is paying the money. It is not important who is traveling with the money. Yes. So it is 2 lakhs paid for foreign travel by me. I file the return. I file the return. It is 1 lakh of electricity payment done by me. So I file the return. Yes or no? Yes. Then they're giving some additional conditions where they're coming and saying your total sales from business is more than 60 lakhs. Your total gross receipts from profession is more than 10 lakhs. If you have a TDS or TCS showing in your account as more than 50,000 for resident senior, more than 25,000 for others. Rahul, you satisfy any of these conditions, do you have to file a return mandatory? Yes, you have to file a return mandatory. It doesn't matter what your income is, it doesn't matter what your tax is. Rahul, this is also not happening. This is also not happening. I am an ROR. Who am I? I am an ROR. I am an ROR. I have foreign assets outside India. I have foreign assets outside India. Mandatory return filing for you. Mandatory return filing for you. If I found out to be a beneficial owner of an asset outside India, then I have to file a return in India. If I am found out to be a person having signing authority in any foreign bank, then also I have to file a return in India. If I am not the owner, I am the beneficiary. which means someone else is the owner, I am the beneficiary. In that case also I have to file a return. In that case also I have to file a return, but anyone only has to file it. Anyone also has to file it. If the owner is filing the return, beneficiary is not required. If beneficiary is filing the return, owner is not required. Owner is not required. This is your basic conditions for filing return. This is your basic conditions for filing return. Yes or no? Yes. Now in this conditions also they are coming and saying, if you want to file a return, when should you file a return? They are coming and saying you normally should file a return on 31st October. You normally should file it on 31st October. If you are not liable for audit, it is 31st July. If you are opting for presumptive, it is 31st July. Okay. Normally it is 31st October from your exam perspective. From your exam perspective, because if you are not having 31st July, then it is presumptive. If you are having 31st July, then you are presumptive. Generally that will not happen. Generally that will not happen. So therefore they are coming and saying, boss, 31st October is a normal due date, but if at all you are not liable for audit, which means you are in salary case. You are in salary case. Or if you are not, if you are opting for presumptive, then in that case you have to go for 31st July. Otherwise it is always 31st October. That is what the rules are. That is what the rules are. At the same time they are coming and saying, boss, if the firm is liable for audit, the firm will file it on 31st October. If the firm is filing on 31st October, the partner will also have to file on 31st October. The partner will also have to file on 31st October because partner will not know his income or salary unless and until the partnership firm completes their return. Unless and until the partnership firm completes their return. Yes or no? Yes or no? Now, in this scenario, they are also coming and saying that, boss, if you want to file a return on time, you have to file a return within this due dates. Within this due dates. Assuming you made a mistake in the return. What did you do? You made a mistake in the return. No problem. You can file a revised return. You made a mistake in the return, which means you can file a revised return. Rahul, when can I file a revised return? You can file it by the December of that AY. You can file it till the December of that AY, which means 31st July, 31st October is there. If you have made a mistake, you can file it till 31st December. Rahul, I've made a mistake in the return I filed. Again, file a revised return, no problem. But you can only do it up to 31st December, which means until 31st December, how many ever times you want to change, you keep changing. No one cares. No one cares. Rahul, I completely forgot to file the return itself. I can file a belated return. I can file a belated return. Rahul, what is the due date for filing belated return? Same 31st December. Same 31st December. Rahul, I filed a belated return. Adle mistake irukku. No problem. Belated return can be revised. Belated return can be revised. It doesn't mean that the revised return will become original return. It will still be considered as a belated return. The revised return will just replace the original return. The revised return will simply replace the original return, which means if the original return was filed on time, revised return is also filed on time. If the revised return was filed belated, if the original return was filed belated, revised return is also filed belated. Yes or no? Rahul, I filed belated return. What is the problem? What is the problem? First problem, no loss. Second problem, no heading C. Third problem, I now have a late filing fee. I now have a late filing fee. Income tax comes and says that, boss, if you have not filed your return on time, you now have to pay me late filing fees of 5,000 rupees. You now have to file me late filing fees of 5,000 rupees. But if I find out that you are a poor person eligible for rebate, you are a poor person eligible for rebate, meaning your total income is less than 5 lakhs. Your total income is less than 5 lakhs. Your late filing fee will become 1,000 rupees. Your late filing fee will become 1,000 rupees. The first mistake, I told you loss is not eligible, deduction not eligible, late filing fee. Late filing fee. The last item which will happen is something called as 234A. 234A. What is this 234A, Rahul? They are coming and saying, boss, if you have a tax payable, what do you have? If you have a tax payable and you have not filed a return on time, from the time when you have not filed the return till the time you file your return, I will now levy an extra interest called as 234A at the rate of 1% from the period after the due date. From the period after the due date till the date of filing the return. Till the date of filing the return. What will I levy this 1% on, Rahul? 1% will be levied on the amount which is pending on the due date. Amount which is pending on the due date. In simple terms, take my total tax, reduce my TDS, reduce my advance tax, reduce my self-assessment paid up to due date. Reduce my self-assessment paid up to due date. Number which will come to you, adukku mela 1% for the period after the due date till the return is filed. Hey Rahul, 234B will stop on. No, 234B will also continue. 234B will also continue until the time you make the final tax payment. Until the time you make the final tax payment. This is called as 234A. So when it comes to belated return, you have 4 compliances to follow. One, loss of deduction, payment of late filing fee, payment of interest. With me? Next. Yes. Now I have filed my return. Either I filed it belated or I filed revised. The returns which I filed, department is not happy. Because there is a mistake in the return. He will issue me something called as defective return notice. The moment he issues me a defective return notice, I have to respond within 15 days. Rahul, I did not respond within 15 days. It will be deemed that the return is not filed. Rahul, I found the mistake in 15 days, I rectified it. No problem, return will become valid. This is called as defective returns. Rahul, now I have filed an original return, revised return, belated return, defective return. Who will verify all these returns, Rahul? The returns will be verified by the assessee. First, you verify panno return. Yes, who can verify, Rahul? If it's an individual, return will be verified by assessee himself. Rahul, assessee is unsound mind. Guardian. Assessee is a non-resident. The agent who is appointed in India. Yes or no? Assessee is minor. Guardian. Yes. Rahul, assessee is Karta. Assessee is HUF. Karta not available. Any other? What is senior na 60 Kamalaya? Any other non-minor? Senior na 60 poidama. Okay, any other non-minor? Rahul, it's a company. MD not available. Any director? Rahul, foreign company. Agent. Rahul, firm. Any active partner. Any non-minor partner. Rahul, it's an LLP. Designated partner. Rahul, designated partner not available. Any other partner? Yes or no? Yes. Rahul, it's a local authority. Principal officer. Rahul, it's a trust. Not trust. Political party. CEO. Yes, some examples like this and there. At any point of time, if you found out that the company is liquidated or something like that, then liquidator will file it. Yes or no? Yaar disturb pandra. Yes, you have a return, original return, revised return, defective return, then you have the authority persons. Then you also have something called as TRP. Who is it? Tax return preparer. They have come and said that, boss, if you are not able to prepare your own return, you can also bring in someone else for preparing your return, which is called as TRP. This TRP generally should not be an employee of the company, should not be a bank person, should not be a qualified CA. Can be a semi-qualified CA. You all can do it after you pass inter. Okay, inter pass pannadhukku appo papo foundation not eligible. Okay, you can also do it after you pass inter, not foundation. Until you qualify. After you qualify, then you cannot do it. Okay, after you qualify, then you will get more money for reviewing return. Yes or no? Yes, this is a TRP case. They're coming and saying, boss, if you have not to file your original return through a TRP, revised return cannot be filed through a TRP. If you are a person who is liable for audit, then also TRP not eligible. This is what the TRP conditions are. What else is pending in this chapter? And that is an amendment. After that, you have PAN conditions and all. They are coming. You have PAN conditions and all, where they have come and said that, boss, you have to generally get a PAN for yourself. Some conditions are given to you. You have been given some conditions and all. Generally, you have to get your PAN within 31st May of that following year. And in some amendments of the current year, where you have some deposits and all made, bank deposits and all made, you have to get it within 7 days. Sorry, 1 second. Hello. Yes. Put at home. Useless. What was I doing? So yes, you have a PAN condition and everything where they're basically coming and saying that boss, whenever you have a requirement to get a PAN, the requirement has to be satisfied. Some 31st May conditions are there, 7 days conditions are there. You can ignore all those. Nothing comes in exam. The amendment is only that last 3 parts, some current account deposit and all those things, where you have to get it within 7 days. You have to get it within 7 days. Vanda the MCQ mari varum. Yes. Apart from that, they have also come and told if you have a PAN, you have to quote it in some places. You have to quote it in some places. Some list of some 25 items, something are there. Not so important from exam perspective. Okay, it has come in exam. I'm not denying that it has come in exam, but it has come in the last question, the theory part of the question. Okay, so if you are not able to answer any other question, then only that comes in your rescue. Generally, if you are my student and you are aware about the other questions, you don't have to worry about the last question. Okay, so my recommendation, you can ignore it and go. You can ignore it and go. Vandalo maximum 4 marks. You cannot take a chance. I mean, you can take a chance. It's okay because there's too much to remember. There are some numbers of 2 lakhs, 1 lakh, 50 lakhs, and all. Too much numbers are there. Too much to remember also will not help you right now. Okay, so you can ignore those conditions and go. The last part of the chapter talks about Aadhaar and PAN linking. Aadhaar and PAN linking, where they're basically coming and saying that boss, if you have an Aadhaar and you have a PAN, the Aadhaar should be linked to your PAN. The last date was given as 31st March 2022. The last date was given as 31st March 2022, where they came and said that boss, 31st March 2022, Kula, you should have linked your Aadhaar with PAN. But now recently extensions have come in, which means your book would have shown some other extension date. September. They have now put a September 30th order condition to link your Aadhaar and PAN, but they came and said, boss, it doesn't matter. It doesn't matter. 31st March, 1st April, and they started levying something called as late filing fee. They started levying something called as late filing fee for the first quarter, which means April, May, and June. They levied a late filing fee of 500. After June, it became 1000. After June, it became 1000, but they extended the due date to 30th September. They extended the due date to 30th September, which means they came and said, boss, late filing fees will apply on you. Late filing fees will apply on, but 30th September variko I will not penalize you for it. I will not penalize you for it. What do you mean by penalize, Rahul? They're coming and saying that if I ask you to link your Aadhaar with PAN, I want you to link your Aadhaar with PAN. Rahul, I didn't link my Aadhaar with PAN. What will happen? My PAN will become inactive. My PAN will become inactive. If my PAN becomes inactive, it's as good as I don't have a PAN. It is as good as I don't have a PAN, which means if at all they want to levy a penalty on me, they can levy a penalty on me. That is what the rules are. That is what the rules are. That due date was extended to 30th September. Now it is, I think, 31st March 23 also, so no one cares about it. Okay, but the late filing fee is still there, which means first quarter it is 500, next quarter length it is 1000. Next quarter length it is 1000. Understand, it is 500 flat fee. It is not 500 per day and all. No one is going to pay so much. Okay, and along with the condition saying that if you are not having an Aadhaar, then it's okay, because 3 people are not required to have an Aadhaar. 1 person is a non-resident, the other person is a Jammu and Kashmir person, the third person is a senior citizen more than 80 years of age. Senior citizen more than 80 years of age, Jammu and Kashmir person, 80 years of age person, and non-resident person not required to have an Aadhaar, which means linking of Aadhaar and PAN is not required. Linking of Aadhaar and PAN is not required. அது சொல்றதுக்கு தான் இருக்கு, ஆனா practical world போய் பார்த்தா எல்லா non-resident க்கு hold பண்ணி வச்சிருக்காங்க. They're bloody coming and saying get an Aadhaar in India. He's like, I'm not even a citizen of India. He's like, I don't care. They want everyone to become Indians now suddenly. Okay, நாளைக்கு Barack Obama will come to India and they'll be like, get Aadhaar for you first. அதுக்கப்புறம் தான் வேலை கொடுப்பாங்க. Yes. Anyway, the point is, this is what your return filing conditions are. This is what your return filing conditions are with the current year and the most important amendment for the current year called as updated return. The current year amendment called as updated return. Rahul, what the hell is this updated return? The provisions are coming and saying that boss, if I find out that you have a return where you have tried to disclose wrong information so that you can avoid taxes, tomorrow if I catch hold of you, who am I? Assessing officer. Tomorrow if the assessing officer catches hold of you, he will also levy something called as penalty. He'll also levy something called as penalty. If you feel like you don't want to pay the penalty right away, you can itself pay the interest and tax right away. You can itself pay the interest and tax right away in the form of something called as updated return, which means this section has been brought in only for the benefit of department, has not been brought in for the benefit of assessing. The provisions come and say that boss, if you have found a return where you feel like you have made some mistakes, I'm giving you 2 more years. How many more years? 2 more years. 24 months from the end of your assessment year. From the end of your assessment year. Understand, no? 31st December, your revised return will stop. Until in the 3 more months, your assessment year will stop. Until in the 24 months. I will give you some more time for you to file an updated return. I will ask you to file an updated return, but they have also put some conditions. They have come and said, but updated return, everyone cannot file. Everyone cannot file. To the people who cannot file updated return, first person, if you are not going to give me benefit, who am I? assessing officer. Assessing officer. Why will I not give you benefit? Because I'm not going to pay extra tax. I'm not going to pay extra tax. In simple words, they're coming and saying updated return cannot be filed unless the return ends up in a tax payable scenario. Unless the return ends up in a tax payable scenario, which means, Rahul, I should have an income. Income should become more income. Rahul, income is becoming less income. Not allowed. Rahul, loss is becoming less loss. Not allowed. Rahul, loss is becoming income. Allowed. Yes or no? Yes. Your income should end up becoming a tax payable. Next, they're coming and saying, boss, if I catch hold of you and I've already put an assessment on you, which means now I itself caught hold of you. When I have caught hold of you, I will ask you for penalty only, because now you tried to file return after I pushed you. Had I not caught hold of you, you would have not filed the return, so therefore not eligible. Therefore not eligible. This is what they came and said. This is what they came and said. You should end up in a tax payable scenario. I should not catch you for assessment. I should not catch you for assessment. If that is the conditions being satisfied, you can file an updated return. But the rule is, once you file an updated return, one more time you cannot revise it. Nee kurtadu final return. Nee kurtadu final return. One updated return once in lifetime. That's all. For that assessment year. For that assessment year, you can file one updated return. Yes or no? Yes or no? At the same time, I'm also coming and telling that, Rahul, if at all I have filed an updated return for 1 year, because of which my loss has become an income. My loss has become an income. If my loss has become an income, loss குறைஞ்சிச்சு. அந்த லாஸ் நான் ஃபியூச்சர்ல போய் செட் ஆஃப் பண்ணிருப்பேன். அந்த வருஷத்துக்கு நான் ரிட்டர்ன் ஃபைல் பண்ணிட்டு அந்த வருஷத்துக்கு நான் அப்டேட்டட் ரிட்டர்ன் ஃபைல் பண்ணனும். Yes, in simple words, let's say I have done for 2021, I filed an original return with 5 lakhs loss. This 5 lakhs loss I claimed in 21-22. Now 2021 I filed updated return, made the 5 lakhs losses an income of 10 lakhs. Is the loss eligible for me? Is the loss eligible for me? No, but I have used it off in 21-22. So what I will have to do now? For 21-22 I'll have to file an updated return. So which means I have to file updated return for both the years. In 2021 also I have to file an updated return. 21-22 also I have to file an updated return, so that I can remove the loss. I can remove the loss, make my income more, pay tax more. Pay tax more. Yes or no? Yes. Yes or no? Now, here is where they put a hard stop. They came and said, Rahul, you have cheated me already. You have cheated me already, but still I'm giving you a time. Still I'm giving you a time. Suma guduk mata. The provisions come and say that, boss, if you try to file an updated return, what are you trying to do? You're trying to file an updated return. If you try to file that updated return within 1 year from the end of the assessment year, within 1 year from the end of the assessment year, you have to pay the tax which is eligible. You have to pay the interest also which is eligible, but I want 150% of that. I want 125% of that. How much? So you have to compute the extra tax. You have to compute the extra interest. Add both, multiply by 125%. That is what I want from you. Which means don't pay penalty, that's okay, but pay 125%. Adhukku na penalty pay pannala. Yes or no? Yes. Then they're coming and saying, no, Rahul, you actually filed it after 1 year. After 1 year of what? Assessment year, which means you filed it in the last leg. And the 1 year later, 2 years before. 1 year later, 2 years before. And the leg la file panna, I want 150% of the tax payable and interest payable. 150% of the tax payable and interest payable. This is what the provisions are. Where the updated return results in an additional tax payable, they shall be discharged as follows. If the updated return is filed after the due date of belated return or revised return and is filed before the 12 months from the end of the subject assessment year, you have to pay me an additional 25% of the additional tax and interest. Kudukkarde 25% extra tharno. Then after 12 months if you're filing it, you want to pay 50% of the additional tax and interest, which means 150% of the number has to go. 150% of the number has to go. Rahul, how to compute extra tax? You compute tax as per the updated return. You compute tax as per the return you paid. Minus of those two will become additional tax. Minus of those two will become additional tax. How do you compute additional interest, Rahul? You compute the tax, you compute interest on the normal tax, corrected tax basically. You compute interest on the corrected tax. You compute interest on the old tax. Difference of that will become additional interest. Difference of that will become additional interest. That is what your additional interest, that is what your additional tax. Adhik mala 25, adhik mala 50. Adhik mala 25 or 50. The only thing which is to be kept in mind is, please understand, updated return can also be filed by that assessee who has not filed the return at all. Which means, original file panla, belated file panla. Didina directa updated return file pannar. In that scenario, what will happen? 234A for him will be applicable. Will be applicable from when? From the original due date till the updated return due date. From what date? Original due date till the updated return due date. Rahul, the assessee filed a return. The assessee filed a return. Now he is trying to update return. Will 234A apply? No. Then 234A will not apply because He already filed a return that time. Rahul, that time he filed a belated return, which means that time he paid a 234A. Now he's filing an updated return. What will happen? And the return difference tax irukalla, and the difference tax belated return tax varum, original return tax varum, adoda difference additional tax pay pananum. Okay, but at any point of time the interest on 234A will stop on the date on which he filed the first return. Unless and until he never even filed a return to start with. Notice this. See, if the return was not filed earlier, you will have a 234A which is computed on tax as per updated return up to the date of filing the updated return. Abde right ka, it says if the return was filed earlier, it is computed tax as per original return up to the date of filing belated return, which means return munadi file pannenda 234A belated return ke ninnidum. Return munadi file pannalana updated return variko kondu pogum. Okay, adu mattum da paakano. Balance everything you know. You'll compute tax as per return of new and return of old. Difference of that will become additional interest. Technically speaking, it is not expected that the computation will be asked in exam. At best, they will come and tell you what is the additional tax, they will tell you what is the additional interest, and they will tell me what is the extra tax to pay. You need to check if it is within 12 months or after 12 months. If it is within 12 months, it is 25%. After 12 months, it is. That's all. Okay. At inter level, I'm not expecting them to come and ask you to compute the 234B, 234C, 234A. Very difficult because it is lengthy. You'll have to do two computations. First original ka pannano, adukapra updated ka pannano, adukapra difference paakano. Varadu, kandipa varadu. Yes or no? Yes. So don't worry about it so much. You can be chilled about it. But yes, this might come or should come as an MCQ question. Last I remember mail vandhathu. That is what my students told me. Okay. So this may come as an again question in November. Just be extremely careful about the 25 and 50. Now notice the question very carefully. The question may come and ask you to tell the total tax to pay, or the question may come and ask you to tell the additional tax to pay. If the question comes and tells you to pay the total tax, that means the 125%, which means original tax plus 25%. If they come and say only tell the additional tax to pay, that means you'll only say 25%. That number mattu paathukonga correct. Okay, because I am very sure if they give you that question, both the numbers will be there. Okay, 125 இருக்கும் 25 இருக்கும் பார்த்துட்டு போட்டிங்கன்னா நல்லா இருக்கும். Clear? Straightforward giveaway 1 mark question, just you get the answer properly. All clear? Everyone? Any doubts? Awesome. This completes our chapter of return filing. Generally not a chapter which I like to do, but yeah, that's how it is. Okay, we will try to complete this chapter within a span of 1 hour. Because I know this chapter is lengthy. And it takes a lot of time and efforts from every one of you, right? So what we'll try to do is we'll try to understand this chapter to the limited extent it is relevant from exam perspective. Okay, because I know everyone is not going to read this chapter. 100% not happening. Okay, so to the extent of what you think or I think is important from exam perspective, that alone we will discuss and then we'll end the chapter there itself. Okay, idu mattum exam ku and the day of exam irukolla, on the day of exam you have exam at 2 o'clock something. Yes, that day I will put a timestamp on this marathon today. Okay, and the timestamp la poturuven inga da TDS aarambikudhu. Click pannittu that 1 hour 1.5 minutes la otte paattu you can just look at it. Ennoda speed ku 1.5% inno test undha varave varadu. என்னோட ஸ்பீட்ல 1.5% எல்லாம் பார்க்கிறது கஷ்டம், எனக்கே புரியாது. Okay, the point is let's try. I will try to complete this chapter within a matter of 1 hour. You can use the same 1 hour, go to the exam hall, and the exam hall ka and exactly 2 o'clock munadi you will have some revision time, right? That time just use your earphones, read through this 1 hour alone. Whatever you can remember from that time, go and vomit in the paper and come back, marks will come. If something extra comes beyond that, Anyway, you are not going to read. So it doesn't matter. Okay. Yes. So whatever you can crack in that 1 hour, try it out. Hey, at the same time, just because I told don't stop reading and all, if you're planning to anyway read, please read. Okay. This is only for that lazy asses who are not planning to read this. Okay. In that sense, we will try to complete this chapter in 1 hour. Let's see how much we can complete it off. All right. Yes. I don't want anyone's support. Okay, I will be. If you remember the provision, you can shout it out with me. Otherwise, leave it go. Okay, I'm not expecting that someone has read this chapter and also come. Okay, so no problem. Just stay with me. Just stay with me. Yes, yes, perfect. Okay, we're looking at the chapter called as TDS and TCS. The TDS and TDS chapter comes and says that TDS means tax deducted at source. TCS means tax collected at source. TDS comes and says that whenever you make a payment to someone, you deduct something called as tax before you make the final payment to him. TCS comes and says that before you pay money to someone, you pay extra money to someone in the form of TCS. That is the difference. That is the difference. In the form of TDS, the payer is going to deduct. In the TCS, the collector is going to collect more. Yes, in TDS, deductor is going to deduct more. In TCS, collector is going to collect more. That is what the difference is. That is what the difference is. Rahul, why am I doing this TDS TCS chapter? Because the section is coming and telling you to do. Rahul, what happens if I don't do it? You will have a disallowance under PGBP at the rate of 30% for residents, 100% for non-resident. That is what it is. That is what it is. Before you start the chapter, there are some golden rules to follow. Golden rule number 1 comes and says that TDS should be done on payment or credit, whichever is earlier. But for some cases, they come and say you can do it on payment only, like salary cases, dividend cases, cash withdrawal cases, casual income cases, any kind of government related cases, compulsory acquisition, 194 LA, all those cases. Yes, all these cases you will do only on payment basis. You will not do it on deduction basis. You will not do it on credit basis. You will not do it on credit basis. Then they're coming and saying that best whenever you are making a payment, it should happen at the flat rate which I give you. It should happen at the flat rate which I give you, which means I tell you 1%, it is 1%, no second thought. But yes, if you are going to make the payment to a salaried person, or you are going to make a payment to a non-resident person, then in that case you have to also include surcharge and cess. So any question you see where you have a non-resident coming in or you have a salaried person coming in, mandatory surcharge, mandatory cess to be levied. Any other person, flat rate concept. Any other person, flat rate concept. Now is TDS applicable for everyone? No. TDS is only applicable in case you are an individual or an HUF whose turnover in the last preceding previous year. Which means for your exam it is 22-23, which means you have to check for 21-22. To check for 21-22. In 21-22, if the turnover goes more than 1 crore for business, 50 lakhs for profession, then in that case you're liable for TDS, but this is only for individual and HUF. If you're any other person like company, firm and etc., mandatory TDS. Mandatory TDS. If you are an individual or an HUF who's not covered into this 1 crore or 50 lakhs condition, hijacker is not applicable for you. Hijacker is not applicable for you. What is hijacker, Rahul? H is for commission, I is for rent, J is for professional, A is for interest, C is for contract, R is for the new amendment of business benefits or perquisites. Business benefits or perquisites, HIJACR. Not applicable to you. Balance everything still applies. Balance everything still applies. Then I'm coming and saying that Rahul, if you have a TDS, you have to do TDS whether it is for personal purpose or commercial purpose. But for 2 sections, it is only for commercial purpose, which is your C and your J. C is for contract, J is for professionals. Why, Rahul, it is so? Because these two are getting covered under 194M. It is getting covered under 194M. Then I'm coming and saying that Rahul, whenever you're trying to deduct TDS, I will give you a certain threshold number, and the threshold number keela in the no TDS. And the threshold number mala in the ellathukme TDS. Threshold keela in the no TDS, threshold mala in the ellathukme TDS. But there are some sections where I'm coming and saying no, not required. You have to do TDS only on the exceeding amount. 2 sections, which is 194N cash withdrawal, 194Q purchase of goods. In these 2 cases, limit ka mala da TDS varo, limit ka keela TDS varad. Limit ka keela TDS varad. Yes or no? Yes. Then I'm coming and saying that Rahul, whenever you have to deduct TDS, you ask the other person to give you your PAN number. If he gives you your PAN number, if he gives you his PAN number, then no problem, you can do the normal rate. If he does not give you the PAN number, you have to do the actual rate or 20%, whichever is higher. Actual rate or 20%, whichever is higher. This 20% has become 5% in case you are an e-commerce operator, which is 194O, or if you are into purchase of goods, which is 194Q. Rahul, this is also not happening. Now a new provision which has come, which comes and says that if you have to file a return, who has to file a return? The person has to file a return. If the other person has filed his return for the last assessment year on time, for what? This is an amendment for the current year. You have to file the return of the latest assessment year on time, and the return in that should have been more than 50,000. Return TDS should have been more than 50,000, which means if the latest return which you filed is not filed on time, and I find the TDS in that is more than 50,000, I will come and say that the rate will now become twice the rate or 5%, whichever is higher. Twice the rate or 5%, whichever is higher. Let me repeat this once again quickly. I am coming and saying that the person to whom you are making the payment should have filed the return of his latest year on time. If he has not done, and I find out that his TDS is more than 50,000 rupees, I will now deduct TDS for him at twice the rate or 5%, whichever is higher. Rahul, I find out that the person is not giving me PAN also, he is not giving me return also. What to do? In that case, whichever is highest of all the two. Whichever is highest of all the two. If twice is higher, twice, 5 is higher, 5, 20 is higher, 20. All the three will come in. All the three will come in. This is what the section comes and says. With me till here? These are the golden rules. Now moving to the sections, the first one is 192. You don't have to read the 192 from exam perspective. Just know that if it is a salaried employee, you have to deduct TDS at rates in force. Question may come and tell you that if you have some salary employee, you have to verify certain data. You have to verify certain data. Think your head and tell what is the data to be verified. If it is HRA, you will verify rent, place, rent agreement, landlord or PAN, etc. etc. Yes, abdi in a scenarios irukum. You understand logically what items will you require from a person to verify that he is giving the deductions or not. Adu pota answer vandrum. At the same time, please understand that the employer also may have 115 BSc. Employee may also have 115 BSc. If he opts for 115 BSc, you have to do as per 115 BSc. If he does not opt for 115 BSc, you will do as per normal. You'll have to do as per normal. When you are asking him for declarations, you have to ask for every kind of deductions and declarations. If he gives it to you, you consider. If he does not give, ignore it. If he is giving you losses, you can only consider losses from HP. You cannot consider any other losses because salary against a HP madada panamudio. Salary against a HP madada panamudio. So only consider your HP losses. Any other losses can be ignored. If he gives you any income, you can consider all those incomes. If he gives you an income, you can consider all those incomes. Yes or no? Yes. The next section is at 192A. Next section is 192A, which comes and says withdrawal of PF. Withdrawal of PF. They are coming and saying, boss, in the PF we learned that if you withdraw within 5 years, it becomes taxable. So I am coming and saying that if the person has withdrawn within 5 years and is not falling within the 3 criteria, medical health, company shutdown, he left the company. If it does not fall in any of these 3 scenarios, you have to now deduct. Who will deduct? PF authorities will deduct at the rate of 10% if the threshold goes 50,000. If the threshold goes 50,000, inga exact 50,000 indalu TDS varum. Exact 50,000 indalu TDS varum. Assuming the person does not furnish his PAN number to the PF authorities will do it at MMR. What are MMR? MMR is maximum marginal rate, which in income tax is 30 plus 37 plus 4. 30 plus 37 plus 4. Highest tax rate, highest surcharge rate, highest cess rate. 30, 37 and 4, which will become 42.744. 42.744. Yes or no? Yes. Next is coming 193. 193 comes and says that if you have any kind of interest on securities, TDS is at the rate of 10%. In exam, if you see some weird securities, 10% gold bonds, 6% gold bonds, in the gold bond, national defense bonds, no TDS. Yes. Then you have 194A. You have 194A. 194A comes and says that if you have an interest from a deposit, TDS rate will be at the rate of 10%. TDS will not apply in case the bank deposit interest is not more than 40,000 for a normal person and 50,000 for a resident senior citizen. 5,000 it is from a company. 5,000 if it is from a company. Now when you are looking at this 40,000, 50,000 and 5,000, the rules come and say that if the bank has a CBS, core banking solutions, if the bank has a CBS core banking solutions, you have to look at this 40,000 limit for the whole of the bank. If the bank does not have a CBS, you have to look at per branch. You have to look at it per branch. This is what the rules come and say. At the same time, some exceptions are given to you. The exceptions come and say that you do not have to deduct TDS if it is an interest from a firm to a partner, partner to a firm, interest on income tax refund, interest on registrar general, whatever nonsense. In this 194A, you just have to remember about the bank, 40,000, 50,000. 40,000 is for CBS whole bank, non-CBS per branch. That is what is the idea. Clear? Yes. Then you have something called as 194B and 194BB. 194B and BB is your winnings. Winnings is coming and saying that you have a TDS at the rate of 30% if the winnings are more than 10,000. If the winnings are more than 10,000. Please be extremely careful in these kind of questions. If the question comes and says that there is a winnings, the person would have already deducted TDS. Then the question will come and ask you, should you pay advance tax? What will you do is you will come and compute the whole tax including cess, but the TDS will be only given without the cess. So therefore, you will check whether the surcharge and the cess is going beyond 10,000. If it is going beyond the 10,000, then advance tax will apply. If it is going less than 10,000, advance tax will not apply. Yes or no? Because TDS is only going to be deducted on the tax part, which means they have not deducted TDS on surcharge and cess. So it is your responsibility to pay that in the form of advance tax. If it is more than 10,000, advance tax applicable, less than 10,000, advance tax not applicable. Yes or no? Yes. MCQ question, keep in mind. Yes. After 194BB and B comes 194C, which comes and talks about contract payments. This is a part of your hijacker, the first hijacker, where they are coming and saying that if any contract payments are happening, TDS will happen at the rate of 1% in case the other person is an individual or HUF, and 2% in case the other person is a any other scenario. When will it happen? It will happen in case the individual payment is more than 30,000 or the total year payment is more than 1 lakh. Total year payment is more than 1 lakh. This is what the criteria are for 194C. Now, what is 194C? They're coming and saying that this 194C applies on a contract of work like advertisement and contract labor, subcontracting and all those things. Yes, all those things will be contract of work. When it comes to contract of job work, you are only going to levy TDS on the income part of the job worker. You will not levy TDS on the purchase part because you only gave him the raw materials. Yes or no? Yes. So if you are giving the raw materials, adukku mela TDS varadu. Whatever is his service component, adukku mela TDS varum. But at the same time, job work will only be covered under 194C, provided that you are giving the raw materials to him. What are you doing? You are giving the raw materials to him. If you do not give the raw materials to him, then it is not 194C, it is 194Q. Okay. So condition to job work is that you have to give him the raw materials. And when I say you, it is you or your relatives. It is you or your relatives. Relatives here is PGBP relatives. If you or your relatives give him the raw materials, then in that case TDS will be under 194C. If not, it will be under 194Q. Yes or no? Yes. This is your C. After C comes 194D. D not relevant for exam. DA is life insurance proceeds. Life insurance proceeds are coming and saying that, boss, if at all someone is going to get life insurance proceeds, first of all come and tell me whether the life insurance proceeds is taxable or not taxable. How do you check, Rahul, it's taxable or not taxable? On the 80C line, you have 10, 20 and 15. If the premium goes beyond 10, beyond 15, beyond 20, premium policy is taxable. If it is less than 10, less than 15, less than 20, policy is not taxable. If it is taxable, come and tell me what is the amount you received. What is the amount you received? If I find out that the amount which you received is 1 lakh or more, TDS will apply. If I find out that the amount is 1 lakh or more, TDS will apply. Rahul, in this case, TDS will apply on what? TDS will only apply on the income part. TDS will apply only on the income part. Please understand, 1 lakh is the amount received, but TDS is only on the income. So which means you will have to take the total proceeds received minus the premium paid. That will become your income. Adhikku mela TDS is 5%. Adhikku mela TDS is 5%. For those who don't understand this properly, ICAI has a question, a very good question. Please do solve it at your end. It will be a very good question. You'll understand things better. Okay. But please understand the number of threshold is for the amount received, but the TDS will only happen on the income element. After DA comes E. E is the first non-resident case in our scenario, where I'm coming and telling that, boss, if you are a non-resident sports person, non-resident entertainer or non-resident sports organization, in that case TDS will levy on you at the rate of 20 plus surcharge plus cess. 20 plus surcharge plus cess. If surcharge is not there, then just a cess, it will become 20.8, but 20 plus surcharge plus cess. On what incomes will it be levied, Rahul? If you are a sports person, then it is on your sports games. On your sports game, if you have done any contribution to a news article or if you have done some advertisements. If you are an entertainer, then it will be levied on your entertainment income. If you are a sports organization, it will be levied on your guarantee fees. No threshold given to you. Every single rupee is taxable. This is what is 194E. Yes. After E comes F. F is not there for exam. Double E is ignored. G is lottery commission ignored. H is your commission. Whenever you read the word commission, whether it is D, whether it is G or whether it is H, it doesn't matter. All the rates are 15,000. All the rates are 5%. Threshold is 15,000. Rate is 5%. Threshold is 15,000. Rahul, how do you decide whether it's a commission or not? Check whether it's a principal agent relationship. If there is a principal agent relationship, it is commission. If not, it is C or J. C or J. Yes. Next, 194I. I comes and says you are rent payments. In rent payments, they are coming and saying the overall rent payment to the person should not exceed more than 2,40,000. If it exceeds more than 2,40,000, everything is liable for a TDS. How do you check this, Rahul? This is a hijacker case, so individual HUF should have satisfied the limits. Payment should happen for rent. TDS rate is given in terms of what you are taking. in terms of what you're taking. If you're taking any kind of plant and machinery or equipment, TDS rate is 2%. If you're taking anything else, it is 10%. Rahul, this 2,40,000 has to be checked for both together. Both together. If you have taken from a single person itself, land also and computer also, 2,40,000 will be checked on everything. If the threshold exceeds, the computer will be 2% TDS, the land will be 10% TDS. This is what the simple criteria for 194I. 194I. Rahul, if I am not covered under 194I, I am moving to 194IB. I am moving to 194IB. 194IB comes and says that I am an individual or an HUF who is not covered under 194I, but I have taken a house on rent. I have taken a house on rent. Income tax comes and says if you have taken a house on rent and if you are planning to pay more than 50,000 per month as rent, how much? 50,000 per month as rent. In that case, you are liable to pay TDS at the rate of 5%. You are liable to pay TDS at the rate of 5%. But this is 50,000 per month basis. 50,000 per month basis. I don't care how many months you stayed. I don't care how many months you stayed. At the same time, since it's an individual or HUF, the provisions come and say that you don't have to deduct TDS right away. You can deduct TDS from the last payment. What payment? Last payment. In the Varsha Thoda last payment, whichever you make, adhu lenda 5% putche vachiko. If it is found out that the last payment is not sufficient for you to cover your TDS, whatever is there, fully deposit as TDS, balance will be left off. Balance will be left off, not required to pay. Not required to pay. In simple words, if the last month's payment is 10,000 rupees, but you find out that the total TDS is coming as 20,000 rupees, you deposit 10,000 as TDS to the government, government will let you go. Government will let you go, it will not ask you for the balance 10,000. It will not ask you for the balance 10,000. Yes or no? Yes or no? This is your 194IB. If you are not into 194IB, you have a something called a 194IA. 194IA basically comes and says that you have transferred any kind of immovable property. What have you done? You've transferred immovable property. Income tax comes and says that if you plan to transfer a immovable property which is taxable under capital gains, you have to pay TDS at the rate of 1%. TDS at the rate of 1%. If the threshold limit goes beyond 50 lakhs. Beyond 50 lakhs. But here is the amendment for the current year. The 1% which you have or the threshold of 50 lakhs which you have is not on the actual consideration. It is the actual consideration of stamp duty value whichever is higher. Whichever is higher. So if the actual consideration of stamp duty value whichever is higher is more than 50 lakhs, TDS will happen at the rate of 1% on whichever is higher. Whichever is higher. This is a one very stupid section which has been introduced because 110% has not been given as a criteria. Okay, so it may so happen that your normal capital gains you are going to pay tax only on the actual consideration because SDV is less than 110%, but inge Puerto Rico you have to deduct 1% on the higher amount. You have to deduct 1% on the higher amount. Just be that in mind. Yes. Now, whenever you are deducting TDS, it is including all components of transfer. Including all components of transfer. If you have made the payment for parking charges, water charges, electricity charges, maintenance charges, gym charges, membership charges, include everything and then deduct TDS. Include everything and then deduct TDS. Yes or no? Yes. So I done, IA done, IB done. After I comes J. After I comes J, important section from exam perspective, which is talking about professional payments. Income tax comes and says this is a part of your hijacker. In a part of hijacker, this section covers 4 kinds of payments: fees for professional, fees for technical, royalty payments, and director payments. Royalty payments and director payments. These are covered under 194J. Income tax comes and says for all these 4 items, limit is 30,000 each. Limit is 30,000 each, which means 30,000 for fees for technical separately, 30,000 for fees for professional separately, 30,000 for royalty separately, 30,000 for no limit for director fees. No limit for director fees. If you are planning to deduct TDS, TDS will happen at the rate of 2% for technical, 10% for professional, 10% for royalty, and 10% for director. 10% for director, but here is where 2 exceptions are given to you. One exception comes and says if you are making a payment to call center, then it is 2%. If you are making payment for cinematographic films, then it is 2%. Yes, so let me repeat it again. It is fees for technical 2%, fees for professional 10%, royalty 10%, and director sitting fees 10%, call center fees 2%, cinematographic films 2%. This is what the criteria are. Please understand the only thing important in this section is that 30,000 is per head. 30,000 is per head. It is not for all the heads together. It is 30,000 per head. Yes. After J comes K. K, I think we have discussed in dividends chapter. Mutual funds or interest is liable for a TDS at the rate of 10%. TDS at the rate of 10%. That is happening on payment or credit, whichever is earlier. After K comes L. L is now not there, which is LA. What is L? It is LA. LA comes and talks about compulsory acquisition. They are coming and saying if government is planning to compulsorily acquire your property. Compulsorily acquire your property. They have given a threshold of 2.5 lakhs. If up to 2.5 lakhs is there, then no TDS will come. After 2.5 lakhs, government will have to deduct TDS at the rate of 10%. Government will have to deduct TDS at the rate of 10%. Rahul, If at all this section is there and 194IA is there, which one to choose? LA should choose. LA should choose. If the government is planning to withdraw your money, transfer will not happen as per 194A, it will happen as per 194LA. It will not happen as per 194IA, it will happen as per 194LA. It is 10% on a threshold exceeding 2.5 lakhs. Yes. After LA comes M. After LA comes M. This section is basically coming and saying, boss, you are not covered under C. You are not covered under H. You are not covered under J. Because you have not satisfied the limits. What limits? The 1 crore and 50 lakh limits. The 1 crore and 50 lakh limits. Or if I find out that in C and J you are making personal payments. Or if I find out that you are making C and J personal payments, then the section is coming and saying you can deduct TDS at the rate of 5% on a threshold of 50 lakhs. On a threshold of 50 lakhs, which means 50 lakhs keelinda no TDS, 50 lakhs kamala pocha. Ellathukkume 5%. Ellathukkume 5%. Understand the section will only apply in case the individual or HF is not satisfying the tax audit conditions, or the individual or HF is making a personal payments. This was your 194M. After 194M comes 194N. 194N basically comes and says that if you are planning to withdraw cash from a bank, what are you planning to do? Withdraw cash from a bank. If you're planning to withdraw cash from a bank, you have to deduct TDS at the rate of 2% on a payment more than 1 crore. On a payment more than 1 crore. Please understand, this is the first section where 1 crore variko no TDS, 1 crore kamala 2%. 1 crore variko no TDS, 1 crore kamala 2%. So they are coming and saying, boss, 2 crores, 1 crore kamala, you have to deduct TDS at the rate of 2%. Who will deduct? Bank will deduct. Bank will deduct the TDS. Yes. Now this TDS which is being deposited for you is not an income for you. It's not an income for you. You can use this TDS for claiming against your other taxes. But if I find out that you are an assessee who has not filed your return for the last 3 years on time, please understand it is for all the last 3 years, which means 1 year also you filed on time, no problem. 1 year also you have filed on time, no problem. But in the last all 3 years you have not filed your return on time, the threshold will now become 20 lakhs. The threshold will now become 20 lakhs, which means 0 to 20 lakhs no TDS, 20 lakhs to 1 crore 2%, 1 crore kamala 5%. 1 crore kamala 5%. Repeat it again. 0 to 20 lakhs no TDS, 20 lakhs to 1 crore 2%, 1 crore kamala 5%. 1 crore kamala 5%. This is what yes, nothing else to be remembered in this section, nothing else is important. After N comes O. After N comes O. This O is basically coming and saying that you are an e-commerce operator. Income tax is coming and saying that, boss, if you are an e-commerce operator who is taking goods from an Indian person, and selling this goods to any person, when you collect the money from this customer and give it to the seller, you have to deduct TDS at the rate of 1%. Rahul, the customer is planning to directly send the money to the seller. No problem. Still, I have to deduct 1%. How to do, Rahul? You take it away from his payments. That is how you have to do it, but you have to do it. Mandatory condition. In exam, the only 2 questions which will come is, they'll come and say, boss, the seller has directly made the payment to the customer. What to do? You have to still deduct TDS. Who are you? You are the e-commerce operator. Second, they'll come and say, no, the payment has come to me, then I have given it to him. Then in that case, you will come and say, boss, whatever came to me, in that 1% I'll deduct, and then I'll give him the balance. This section is an overriding section, which means I don't care even if I'm paying professional payments or contract payments or anything. As long as it is happening from e-commerce operator section, it has to happen as per 194O. I will not look at C, I will not look at J, I will not look at M, nothing I will look at. I will only look at O. This section also comes and clarifies that TDS will not apply in case the seller is an individual. Who is the seller? Individual. And the seller is not sold more than 5 lakhs worth of goods from my e-commerce operator, which means I have to at least make a business of 5 lakhs. With that seller. If I'm making a business of 5 lakhs from the seller, I will deduct TDS at the rate of 1% on all his payments. If he's not doing at least 5 lakhs worth of sales from my thing, then I don't care about him. He can go and get lost and do whatever he wants. Okay? Yes, this is your 194. O. After O comes P. P is basically coming and saying that you are a resident super senior citizen. Who are you? Resident super senior citizen. Now the difference in resident super senior citizen is, here it is not 80, it is 75. I find out that you are a 75 years old senior citizen who does not have any income other than pension income and interest income. Income tax is coming and saying that, boss, if I find out that you have pension income and interest income, the bank in which you keep the pension can deduct TDS on your behalf. can deduct TDS on your behalf. Whatever is the money you are liable to pay, bank will compute the money, go and deposit to the government. Go and deposit to the government. If the bank takes the headache for you, then you don't have to file a return. You don't have to file a return. So bank will come and automatically find out the TDS for you. Bank will go and deposit the TDS for you, and bank will tell you that he has deposited TDS, in which case you don't have to file a return. Rahul, what is the rate to use? There is no rate. Slab rates is what will go. Which means the bank will reach out to the person and come and say, tell me what is your incomes, tell me what is your deductions, tell me what is your rebate, tell me what is your exemptions, tell me everything, declare everything to me. I will compute your income tax for you. I will compute the tax payable for you. I will take the whole tax payable. I will deposit it as TDS, and I will tell you the certificate. You take the certificate, don't file a return, get lost and go home. But this section will not apply in case I am having 2 or more banks. Which means if I have more than one bank, then in that case the section will not apply. The respective sections will take care of itself. The respective sections will take care of itself. Yes or yes?
Yes.
Yes. After P comes Q. After P comes Q. This basically section comes and says purchase of goods. Purchase of goods. This section is basically coming and saying that, boss, if someone is planning to purchase goods from you, and you are selling him goods more than 50 lakhs, before making the payment, deduct TDS at the rate of 0.1% on above 50 lakhs. How much? 0.1% above 50 lakhs is what the criteria is. But yes, this will not apply in case the deductor does not have a turnover more than 10 crores in the preceding previous year. If the deductor has a turnover more than 10 crores in the preceding previous year, then only he will follow the section. If not, he will not follow the section. If he is going to follow the section, he has to do TDS at the rate of 0.1% on income above 50 lakhs. Which means the payment above 50 lakhs. Yes or no? In this section, they also come and clarify that, boss, in case the other person does not have a PAN number. It does not matter. Do not deduct TDS at 20%. Deduct it at 5%. Exception given to you. Yes or no? After Q becomes PQR. The most important section from this science exam perspective is called as 194R. Talks about your business benefits or business perquisites. This section is basically coming and saying that, boss, if you are planning to give someone a business benefit or a business perquisite, what? Business benefit or business perquisite, before you end up giving this business benefit or business perquisite to him, you are now liable to deduct TDS at the rate of 10%. But a threshold is given of 20,000 rupees, which means if the benefit is going to go above 20,000, TDS is happening on the whole payment. If the benefit is going to go less than 20,000, TDS will not happen on any payment. Rahul, how to value this benefit? They're simply coming and saying that, boss, value of the benefit is FMV. If you are manufacturing it in-house, then it is your own cost. Okay. So if you're going to manufacture it in-house, it is your own cost. If you're going to buy it from outside, then it's the price at which you bought it. Rahul, I'm going to give him the payment in kind. Income tax is saying, I don't care. If you're going to make him the payment in kind, collect the money, then give him the kind. Or you gross it up and you pay him. Which means you give him extra benefit. The benefit of you depositing tax on his behalf. You can gross it up and also do it, or you can ask him to pay the TDS to you first before you discharge this payment. The same provision is there in winnings also. Where if you are going to discharge someone winnings in kind, you have to collect the money from him, then only discharge it in winnings. Yes or no? One more option I am coming and telling you. The option is I can get a declaration from the other person. What can I do? I can get a declaration from the other person, where if he comes and declares to me saying, no Rahul, I will take the benefit, I will deposit in my return and I will pay advance tax on this. I will take the benefit, I will put it in my return and I will pay advance tax on it. Then in that case also I don't have to deduct TDS. Because then he is anyway paying the tax, I don't have to pay it once again. Yes or no? Yes. Now some examples from your exam perspective for the current attempt. They are coming and saying that, boss, TDS will happen on the amount excluding GST. If there is a GST component, ignore the GST component. Then they're coming and saying, boss, if you're going to have a social media influencer, what are you having? A social media influencer. Then they're coming and saying, if you give the item to the social media influencer and the social media influencer gives it back to you later on, TDS will not apply. But if you give the item to the social media influencer and he keeps the item, then TDS will apply. Then they're coming and saying, boss, if you're going for a business conference, the date on which the business conference starts till the date on which the business conference ends, no TDS. If someone decides to come before that date or stay after that date, for that period, TDS. Yes or no? Yes. Anything else is there in this question? If you are an UN and all, not applicable. If you have any kind of discount given, any kind of sale discount, cash discount, rebates and all given, no TDS. Then they're coming and saying any kind of one-time loan settlement or waiver of loans from bank, not required. Social media influencers we discussed, business conference we discussed, and one more item was there. Out-of-pocket expenses if they are already a part of 194C and 194J. If you are going to have an out-of-pocket expenses, which anyway C and J will take care of, you don't come into middle. This is what the section is. But the most important part in the section is the last table. Understand that this section is only applicable from 1st July. Which means any benefit which you gave before 1st July should be considered for the purpose of 20,000 limit. But should not be considered for the purpose of TDS. Any benefit you give before 1st July, you will ignore for the purpose of computing the TDS, but you will consider him as a part of 20,000. Any benefit which you give after 1st July, you will check for the limit also, you will check for the TDS also. Just be careful about this part of the adjustment. Yes, great. This marks the end of what is called as your TDS. In TDS, you have to also understand two things. The due date for filing depositing TDS is 7th of next month, but if it's month of March, then it is 30th April. Rahul, if I don't deduct TDS on time, what will happen? I will have to levy interest at the rate of 1% per month or part thereof. Rahul, if I deduct TDS but I forgot to deposit it to government, it is 1.5% per month or part thereof. So what will happen is, in an exam question, if they come and tell you that, boss, they should have deducted TDS in the month of Feb, but they deducted only in the month of April, then Feb, March, April, 1%. Then April or a deposit, you should have paid it in May, but you paid it in August. In which case it will happen May, June, July, May, June, July, August. That will be for 1.5%. Yes, April should also be considered, but ICAI does not prefer it, so let's not do it. It will happen from the due date. This is what your interest computations are looking like. Yes or no? Yes or no? Yes, perfect. This is your end of the chapter called as TDS. Coming to the next part of the chapter called as TCS. This part of the chapter of TCS basically comes and says that, boss, if you are planning to buy some goods, when you give the money to the person, I also want you to give him an extra money. Which means if you are planning to give him 100 rupees, you now have to give him 110 rupees. Why, Rahul? The other person will keep the 100 rupees with himself. He will give the 10 rupees to the government, which you can claim back tomorrow in the form of TCS. This is what the provisions are coming and saying. Rahul, how does this work? They basically identified some goods. On the goods against the rate kutrukanga, and the rate ported TCS varum. Now in this also they are coming and saying it is payment or credit, whichever is earlier, but there it was credit, here it is debit, because now you are looking from the perspective of the collector. At the same time, they are coming and saying that, boss, if you do not give a PAN number, the person making the payment, if he does not give a PAN number, the collector will have to collect 2 times the rate or 5%. And if the other person does not file the return on time, it is 2 times the rate and 5% once again. 2 times the rate or 5% once again. Please be extremely careful that the return filing order conditions has been amended in the current year. Last times it was last 2 years, now it is last year. So latest AY mattum paapom, and the latest AY return file pannirukano time, and then you should have not had TDS more than 50,000. If you do not file your return on time and the TDS has gone more than 50,000, then in that case you will have a higher rate of TDS. Most likely for this to come in exam. Coming to the TCS provisions, the TCS provisions come and say there are certain goods where you have to take care of yourself. First item is alcoholic liquor. They are telling 1% TCS. Then Tendu leaves 5% TCS. Timber is 2.5% TCS. Balance every item is 1% TCS. If you are doing a motor vehicle of more than 10 lakhs, again TCS will be at the rate of 1%. Now here understand, this 10 lakhs is per vehicle. per vehicle, and the TCS provisions will not apply in case the sale is happening from the manufacturer to dealer. It is not happening from the manufacturer to dealer. This will only apply in case it is happening from the dealer to customer. Rahul, what will happen from manufacturer to dealer? 194Q will apply. 194Q will apply. At the same time, if the dealer to seller is also not happening more than 10 lakhs, TCS varadu, but 194Q check pannalam. 194Q check pannalam. So please be careful. Whenever you have a question where there is a goods, you have to also check for 194Q. You have to also check for 194Q. These provisions are basically coming and saying that per vehicle should go more than 10 lakhs. This provision will not apply in case the sales is happening from manufacturer to dealer. Will only apply in case it happens from dealer to customer. Dealer to customer. This is what the simple provisions are. Yes. Then they're coming and saying that, boss, if you are taking a loan, I'm sorry, not a loan, if you're going to plan to make a payment outside India, if you're planning to make a payment outside India, income tax is coming and saying that, boss, you can only make a payment up to 7 lakhs outside India. You can only make a payment up to 7 lakhs outside India. If you plan to make a payment outside India above 7 lakhs, I will put a TCS on you at the rate of 5%. This TCS will be collected by the dealer which you have who's going to make the payment. The TCS will be collected by the person who's going to make the payment on your behalf. We call him as AD banker. What banker? AD banker. So if you authorize dealers, we call him as authorized dealers. So if you make a payment up to 7 lakhs in 1 year, no problem. If you make a payment more than 7 lakhs in 1 year, it will become 5%. But at the same time, they're coming and saying, boss, forget all this. If you make a payment for tour package, now the tour package should be an overseas tour package. If you're going to make a payment for an overseas tour package, 5% no limit. 5% no limit. 1 rupee also 5% charge. 1 rupee also 5% charge. That is what the provisions are, with certain exceptions given to you. The exception number 1, they are coming and saying, if you have planned to give this loan outside India for the purpose of an educational purpose, the 5% will become 0.5% above 7 lakhs. The 5 will become 0.5 above 7 lakhs. This is what the provisions are. But at any given point of time, overseas tour package, whether you make the payment directly to the tour programmer or you make it through the AD banker, it doesn't matter. It is always 5%, no limits. 5%, no limits. Yes or no? Yes or no? And the last provision for your exams, they are coming and saying that, boss, if you are planning to sell any goods, hey, you have some amendment in the current year. It comes and says no TCS will be applicable in case the TCS is liable, the section is applicable in any other place, or if you have a non-resident who does not have a P in India, meaning the payment is happening to payment is happened by a non-resident. Payment is happened by a non-resident. Foreign all inge vandittu foreign kaga trip kekkrana summa vachu TDS vechadu. Okay, nothing will happen. They will not be liable for TCS. Last provision is your 206C 1H, the copy paste of TDS. The copy paste of TDS under 194Q. Same provisions. The exception is that now the collector will collect. Now the collector will collect at the rate of 0.1% above 50 lakhs, which means any kind of sale of goods happening 0.1% above 50 lakhs, you will be liable for a TCS only if the seller now is having a turnover more than 10 lakhs. So no, seller is having a turnover more than 10 lakhs in the previous year. Rahul, my seller is having more than 10 lakhs, TCS. My buyer is having more than 10 lakhs. Ulta was ulta. Okay. If the seller is having more than 10 lakhs, it is TDS. If the buyer is having more than 10 lakhs, TCS. Rahul, both are having more than 10 lakhs, TDS. Then TDS will apply. TDS is a more superior section. With this marks the end of your TCS. How much? 45 minutes. சொல்றதுக்கு இருக்கு, but yes, please do go home and look through this once again. Read the whole book and then look through it once again. See if you can understand my pace. Okay, if you can understand my pace, good for you. Otherwise, slow it down. மண்ணுக்கு இன்னும் கொஞ்சம் கம்மியா போ. Okay, 45 க்கு அப்படியே 1 hour ஆகிடு. Okay, 45 க்கு அப்படியே 1 hour ஆகிடு. But please keep this mind. TDS is part of your mandatory questions. Not the first question, but generally a mandatory question, and it easily fetches you 4 mark. And they don't play any rocket science. Okay, they give you that same 194C, same 194J and the amendment questions. So amendment la kandipa padichittu po, plus or C and J and an M. Okay, and the mari in the sections mattum konjam padichittu pona automatically 4 marks can easily be scored. Okay, it's not worth losing the marks is what my feeling is, because it may also come as MCQ question for you. Yes sir, Yes, so till that extent keep it in mind, but yes, don't overburden yourself also. If the other subject itself is automatically taking too much time from you, don't worry about TDS. You can let go of the 4 marks. You can let go of the 4 marks. It will not carry so much weightage as much as your other chapters will carry. So please focus on your other chapters better. Yes, everyone. Perfect. This marks the end of your marathon. We are half an hour early on slot also. We have technically started at 7:30. Yes, and then we took a 45 minutes break for 45 minutes breakfast break, 1 hour for lunch break, and we are at 4:30. Can someone calculate and tell me how much time we have spent? Two hours before breakfast. Okay, and then we came back at 10:15. So 10:15 to 1 o'clock, till 12:30. 12:30. So 10:15 to 12:30 will be another 2.5 hours. 2.5 hours. 2.5 hours plus another 2 hours is 4.5 hours. Then we came back at 1 o'clock. 1:30. 1:30 to 4:30. How much is it? 3 hours. How much has happened? 7.5 hours. Okay, that is 7.5 hours. In the 7.5 hours, somewhere I was discussing illustrations and everything. Therefore, it took 7.5 hours. But normally, it may not take so much. Normally, it may not take so much. The idea is very simple. It is not about me boasting off here and coming and saying that I know everything. Okay, the idea is very simple. It may take 7.5 hours for me to discuss it along with you because you also are repeating it along with me, right? When this is your first time reading, this is your first time reading. In the first time reading, it may take about 7 to 7.5 hours for you. Second time reading, you automatically know which chapters you don't have to read. Third reading, you will not even look at it, which means by the time the third revision is over, you're automatically done with the book thrice. And that too, the time saved is 7:40, which means 11 hours, subject is over. 11 hours, subject is over. Yes or no? Yes. 11 hours is what I am expecting out of you in a matter of 1.5 days. In that matter of 1.5 days, if 11 hours is what you can score for yourself and you can dedicate it to DT, then after that you can spend the whole world in IDT, it doesn't matter. Okay, because you're now done with 50 or 60 marks for you. Old syllabus 60 marks still, good for us. Okay, so old syllabus is still 60 marks, and so 60 marks can easily be scored in a good amount of time. Okay, at the same time, I'm not promising you that Rahul, because you have done marathon with me, you'll know everything. You may know things. You may know things because it looks easy when you read it along with me, right? Going home and applying it is where the challenge is. So income tax law, the big issue which happens is you may know the provision, but sometimes when the trick is asked in front of you, you may lose the idea. You may lose the idea. That is why people may sometimes lose mark. Okay, so the idea is to not just mug up the marathon, keep leading the marathon again and again. Once you are done with the marathon, use the marathon as a benefit for you to solve papers. Understand which chapter you're not doing well. Take those chapters, try to solve some more sums against it. Then come back and again look at a marathon. Then again solve sums. Then see if you're done with the chapter. Yes, automatically what will happen is you are saving a lot of time. Instead of you taking the whole subject, doing the whole set of sums once again, 500 pages, 600 pages, wasting time and efforts there, it is not helping you. Because there are some topics which you automatically know. You sitting and wasting time on those topics is not giving you benefit in any ways. Yes or no? Yes. Spend more time at this point of time in those topics where you don't have the confidence. Okay? Because at the point of time, income tax unfortunately is a subject where one topic you miss, the whole answer will go wrong. Okay, while in other subjects and all, I can always come and tell you, Rahul, ignore this topic, ignore this topic, ignore this topic. Here it is not possible. Here it is not possible. Everything which we did before lunch, is linked to each other. Okay, you miss one topic in that before lunch, your total income will not come out properly. If your total income does not come out properly, your tax will not come out properly, and then you know the sequence. Yes, yes. So I don't want to get there. My point is very simple. My subject is a little complicated subject only to the limited extent of the fact that everything is linked, and so nothing can be let go. There is only some useless chapters like TDS and all, which is an independent chapter which you can ignore and go. But beyond that, every chapter is linked to each other, and therefore every chapter is important. So this whole marathon exercise is just for me to clarify that the subject can be completed within a span of 7 hours with me after repeating. Reading it on your own, it will take lesser than that. Second time reading, it will be half the time. Third time reading will be 1 hour. Fourth time reading, you will not even require it. Yes or no? Yes. If you can dedicate that much for me, that is fairly enough. The only problem is this can come to that position only if you have already done the sums in the past. Okay. If you are planning to not do any sums, planning to not do any application, directly going on that 1.5 days, just a marathon, soltu onnu agadu. Because you may know all the provisions in the world. Ana exam la eppadi apply pannu yarkume theriyadu. Yes or no? Yes, the subject is a theoretical plus practical paper. So practicality is also important. Practicality is also important. You have this 1 month solidly in your hand. I am not expecting you sit only on DT. Definitely not required. Definitely not required. If you can complete 7 hours of marathon with me, 1 more 7 hours marathon, that's all. Okay, you can sit with yourself. You can sit with yourself 7 hours marathon. That evening you write 1 paper. 3 hours. How many time did you spend in the day? 10 hours. That's all. 10 hours you spent, half a day is still available. Half a day is still available. In that 10 hours, you automatically now know which topics you know. That topics, leave it off. Leave it off. Not required. Not required, because then you know how to apply the topic. Yes, that you read before exam also, you will be able to crack it. There is no rocket science in that. Yes or no? Yes. Take the balanced day. The whole balance 12 hours. Obviously, you're not going to sleep. You're definitely going to sleep. Assuming the balance maybe 2-3 hours. That 2-3 hours, you now try to analyze what topics you didn't understand. That topics you revise. Yes, you're done with 1 revision. Now automatically 1 Pragya paper is getting ready. Pragya would mock 100 marks. You know where you're standing. Then you will know what mistakes you're making in the balance questions. That questions you again practice. Okay, slow and steady, you will automatically realize that, Rahul, now I know how to apply every provision. The moment you come to that position, if you are done with this kind of exercise for every subject before November, the day of 1.5 days, you don't have to sit and practice a single sum, because that day you only have to revise. That day you only have to revise, because that day you know how to apply the revision. Yes or no? Yes. This is one mistake which I noticed from most of the students, which takes you to the grave. The problem which you make is 1.5 days you don't have enough time, so you sit and solve sums that time. Doesn't work out. Doesn't work out. Or the second set of people think overconfidently that they don't need to solve sums, they only read provisions and go for the exam hall. When in the exam hall, they know everything. They know everything, but they don't know how to write it. So what they'll do, they'll summa write the as per the provisions of Income Tax Act, idda. As per the provisions of Income Tax, idda. As per the provisions of Income Tax, idda. All the examiner is searching for the answer, he doesn't know where the answer is, because it is not there. The paper of tax has become EIS paper now. Theory mattum dhaan irukku, summe illa. Yes or no? Yes, let's not get to that mistake. Let's not get to that mistake. And the logic which I've told you right now is not a logic which is just for direct tax. It is commonly for every topic. And it is even better for every other subject, because every other subject is unlinked. There at least you can make a choice. Rahul, in the topic purila utru vana. Doesn't matter. Because at this point of time, no one is expecting a rank. Some people exceptions. Some people exceptions. Yes. Some people exceptions. Yes. The point is, at this point of time, no one is expecting a rank. You are at least at this point of time at a motion that you want to get at least 60. And 60 is a good number. It's not a bad number. Yes or no? Yes. Some people are expecting 70. Some people are expecting 80. Which means you know in your head that you only are expecting 70 and 80. Which means you still have a buffer of 20. Yes or no? Yes. Try to target that 60 and 80. No. Why do you want to sit and waste efforts on the 20 or 40, which is not going to come to your head anyways? If you wanted to take that effort, you should have taken it 6 months back. Did you try that time? No. Then why are you killing the goat right now? Yes or no? Yes. So stop worrying about what you don't know. Doesn't matter. Doesn't matter. At this point of time, you worrying about what you don't know is not going to help you in any ways. You will just be crying out of the world. Nothing will care. Okay. At the end of the day, if you pass because of it or you fail because of it, no one cares about the 20 or 40. People are only bothered about pass. Yes. The day of the results when it comes, no one is going to be worried about the marks. You will click on your submit and first thing will go is you will come down. Yes or no? Yes or no? You will start like that only. You will click on the submit. No one is looking at the top. Everyone knows it's a gray color picture. No one is scared. You will suddenly jump to the bottom. Bottom la pass pata, then you'll throw the laptop. Doesn't matter. Suppose something else comes. Then now you will start. Okay, group 1 paapom. Ado varla. Seri group 2 paapom. Ado varla. Seri exemption vanducha. Ado varla. Yes. Yes. This is how the mechanism is. Yes or no? So no one is bothered about it. No one is bothered about it. If you're not bothered about it, why waste your efforts on that also? Clear or not clear? Yes. Think on those lines. Think on those lines. Let's not kill what is not required. Okay. Kill what you have already done. Not for income tax. Income tax, everything to kill. Income tax, everything to kill. Because my logic is very simple. I've told you in the class also. Prepare yourself in such a way that if something in exam comes which you don't know, it is either wrong or it is out of syllabus. Or it is out of syllabus. Yes, this is how the mechanism for my subject at least is. It is either wrong or it is out of syllabus. If it is wrong, no other option but to exempt. If it is out of syllabus, no other option but to exempt. Which means the final answer is exempt. That's all. At best, what will happen? He'll come and say, no, it is taxable. I'm like, okay, give loose 1 mark and go. Big deal. You still have 99 marks to take care of, including IDT obviously. Yes or no? You know, focus on that 99. No. Yes or no? Yes. Don't come in the exam all hi toba varla in the subject topic in the mark varla in the topic Rahul sonna utru na uttiten adukaprom vanduchu mark pochu. What will you do with that? What will you do with that? I have so many people who message me after the exams, Rahul, you told me this topic is not coming but came an exam. I'm like, good, go fail. What do you want me to tell? What do you want me to tell? You at that point of time, do you expect me to write, oh, I'm sorry, 4 marks lost for you. It's okay, pass in the balance 56. If you had that much sense, you would have not even wrote that message to me. Yes or no? If you knew that the 4 marks is not going to impact you, you could have at least come and told me, Rahul, 4 marks I lost, but 56 I passed. I would have been happier. You come and write to me, Rahul, this you told me that you should not read and you lost 4 marks. In this. What am I supposed to do? Okay, go fail. Enna panna mudiyum? Do you think tomorrow you can go to ICI and come and say, no, I read from Rahul's class, Rahul told not coming, so therefore Rahul you sue off. Well, nothing is going to happen to me. Yes or no? Yes, what is the point of you cursing me at that point? At that point of time, if you come and tell me, no, Rahul, 60 marks, 4 I lost, 56 I wrote, IDT also I'll score another 40, 99 is coming to me, who would be happier? Yes or no? Yes, think it differently, right? Hey, I'm not coming and telling, don't come and punish me, I don't care. I will ignore it and go, that's all. The best part about my WhatsApp is it is all unseen. Okay, no double tick is working, no last scene is working. You do what nonsense you want, I don't care. At some point of time, if I don't like the message, I will not reply, as simple as that. Okay, if I get very frustrated, you will be blocked. Simple. Okay, the point is, doesn't matter, people. Doesn't matter. You are at a certain stage where you just have exactly 1 month left in your hand right now. Okay, in this 1 month, at this point of time, the idea is not to prepare once again. Okay, to a certain amount of time, if you can dedicate yourself and you can find out the topics which you don't know, try those. If after that also it is not coming, leave it off. But don't waste time on that. Don't waste time on that. This 1 month is for you to sit on all your papers, whether it is 4 papers or 8 papers, and evaluate yourself in this personal footing. So that when your exam starts, you automatically start working out that and you know what you need to revise in that 1.5 days. Is that clear, everyone?
Yes.
One last request which I have from my side. For love of God, first paper accounts, Rahul, I'll start 10 days in advance. I'll solve all the papers. I'll do every paper. I don't know why this nonsense happens. For some reason, people feel like accounts is the toughest paper. They will, 1st November exam in the 15th October aarambichiruvaanga. From 15th November, suddenly what is happening? Now you're taking every question. Rahul, consolidation poitu irukku, ibdi poitu irukku, appdi poitu irukku. One day you're solving big level questions and everything. 15 days you have done only accounts. Kadasile what will happen? Accounts will come tough. And then that day you have screwed up the paper very bad. Now you're like, oh, gone. Now I don't need to write the whole group itself. இதுக்காக 15 days குத்திங்க. இதுக்கு பேசாம வேற சப்ஜெக்ட் போட்டுருக்கலாம்ல. Yes or no? Yes. Hey, no subject is important, ra. Okay, that is including everything. And at the same time, every subject is important. Okay, don't come and say, Rahul, practical paper மட்டும் உட்கார்ந்து சால்வ் பண்ணினே இருப்பேன். EIS எல்லாம் பாத்துறலாம்டா, கடைசில பாத்துறலாம்டா. ஆகாது. Okay, every subject needs its equal amount of weightage, because no matter how worst that paper is, I don't like that paper also, it is still 100 marks. It is still 100 marks. Every paper is carrying that same amount of weightage. I do respect and understand that you can go and curse ICI coming and saying this paper should have not been there. They heard you and they made it in the next attempt. But this attempt, it is there. Now it's your choice. And then one paper will cost you so bad, because that one paper will be the 39 marks paper and it will hurt you badly. You might have scored every single paper very less, 55, 56, 57, bloody 139 gone. Imagine the pain. Yes, at that point of time, you are now sitting and working on, let's, Rahul, at least or 60 vandirkalam. And that is where ICI will laugh at you. He'll give you 59, correct? I have seen papers like that. I have seen rank holders not getting rank because of this nonsense. One paper, they chose a toss. That person, I remember one of my friends, I think I told you also in the past, one of my friends, we both wrote the same group together. Okay, both the groups we wrote together. I cleared every single paper. No exemptions, 0 exemptions, every paper I cleared, everything 55, 55, 55, 40, 56, something I scored and offset like close at it. That person got 6 exemptions. 6 exemptions. In my time, it was only 7 papers. In 7 papers, he got 6 exemptions. 7th paper, he got 39. Imagine that 1 mark, he could have got a rank. And he lost the rank because of that. It's not just about the rank. The biggest thing which was there is he was such a brilliant person that he had scored an interview clearance in every single Big Four. Before even he had qualified inter, he had applied in every Big Four and every Big Four had given him a position. But the property of Big Four is that Big Four comes and says both the groups mandatory pass. He lost every single Big Four that one single day. Imagine. He ended up going to a very mid-sized firm just to complete that 6 months so that he can write that one single paper. You know what comedy happened? Next attempt, he got 78 in that paper. Does it matter? No, because rank is only important when you get all papers together. It's a different story that he ended up scoring an exam, a rank in finals. Different story, because he understood that mistake. Yes or no? Yes or no? Yes. Every single subject is important in its own footing. Yes. So this 1 month, dedicate yourself to do every single subject in a given amount of time. In a given amount of time, every single subject is equally important. You lose one subject attention, the subject will laugh at you. And then future will laugh at you. Okay, so let's not do that. Let's not do that. At this point of time, I don't want to comment on who's writing single group, who's writing double group, who's writing half papers, who's writing only exemption papers. There are some people who are coming and telling me, Rahul, I'm writing group 1 fully. Group 2, I'm planning for 2 exemptions. ஆகவே ஆகாது. நீ எப்படி நினைச்சாலும் ஆகாது. ஏன்னா நீ எடுத்ததே பேப்பரு FM and EIS. எங்கடா EISல உனக்கு exemption போக போறது? FM இல்ல, சாரி, audit. Both the papers are not possible. FM வாழ்க்கைக்கே புரியாது, audit examinerக்கே புரியாது. எங்க உனக்கு exemption அங்கல? Yes or no? Yes. Don't try all these gimmicks, people. I know all these strategies and all which has come in the market. You do this exemption, you do that exemption. Yeah, அது சொல்றதுக்கு கேட்கறதுக்கு நல்லா இருக்கும். Practically யாருக்குமே வராது. Okay, that you have to really be like a smart ass person who knows that he is going to get 100 everywhere. Ange you have picked and chose saying that okay, this paper I will ignore, this paper I'll ignore. Ingelendla vandrum. This is not for average students like you and me. Yes or no? Yes. If you want to give it a shot, give everything a shot. You never know what may come out. Okay, I was the kind of person who wrote the papers in the impression that I am definitely failing, because I knew tax went worst for me. I told you in the past. Tax went worst for me. I was very sure group 1 anyway fail. Group 2ல எனக்கு ஒரு வாரம் எக்ஸ்ட்ரா எக்ஸ்டென்ஷன் கொடுத்தாங்க, பிகாஸ் ஏதோ எலெக்ஷன் போயிட்டு இருந்தது சவுத் இந்தியாவில். அதில் EIS வேற ஒரு வாரம் எக்ஸம்ஷன் கொடுத்தாங்க எனக்கு. EISக்கெல்லாம் 1 week எல்லாம் நீ உட்காந்து படிக்கிறது எவ்வளோ டார்ச்சர் இருக்கும் யோசிச்சு பாரு. கரெக்டா EIS they're coming and saying, boss, 1 week extension for you because there is an election going on. I'm like, what the hell should I do with this paper? 2 days itself will be a nightmare for you. 1 week and all, if you have to read, gone only. That day I came and I decided, boss, definitely CA inter fail. 100%, no doubt. ஏன்னா group 1 போச்சு, group 2 போச்சு. I went to my dad and I was like, Dad, DG Vaishnav, let's apply. My dad is like, Rahul, 1 year over already, you're very late. I'm like, I don't care, you go talk to someone, get me applied. But somehow I continued. 3 months I waited, I remember. Results for 3 months I waited. 3 months later, I look at my answer sheet. I know I'm failing, so I didn't even look at the answer sheet. I was sitting in my DG Vaishnav, some economics class was going on. I went to my sister and I was like, Dey, you see the paper, you tell me it's fail, it's okay. I am sitting in the class, economic class is going on, someone is calling me again and again. I'm like, Dey, who the hell is calling me? Pata, my sister is calling me. I'm like, Dey, drop a message. No, what is your problem? Fail solradhukku call pannunga nee. She is messaging me, Rahul, you have passed. Go pick up the phone, Ra. And at that point of time, I don't know how to react. Imagine the joy which you'll have, right? When you have decided that you're going to fail and suddenly you pass, no, imagine the joy which you'll have. I went to the economics ma'am, I was like, ma'am, I'm putting a TC right now, can I leave? I was crazy that day, I don't know what to do. I literally went to the economics ma'am, she doesn't even know me, it was a first class, pavam. I went to her and I was like, ma'am, can I leave? She was like, what, in the middle of the class, Rahul? I'm like, ma'am, I just wanted to apply my TC, so I'm just going out. I literally went down, I applied my TC and I came out. Because I was irritated. DG Vaishnav was that pathetic that time. And I only attended the college for 10 days. College started only, it was like July 15th, college started, 1st August results came. 15 days I went. That irritated I was with DG. I applied my TC, that day I came home. I did not tell my dad I passed. I went home and I told dad, TC. And he's staring at my face like this. He's like, Dey, idhukku dhaan you asked me to put so many efforts, sir. He literally went to the chairman and all, he begged and he got me the seat that day. And that time he was like, Dey, idhukaga dhaan na kashtapatta. I'm like, okay dad, pass. Imagine the joy, right? understand every subject carries its own weightage, but at the same time, don't lose your efforts in anywhere. At any point of time, if you feel like you're going to fail, it's okay. It's okay. Let's continue. Let's continue. Let's try it out. Who knows? Right? Maybe you are waiting for some God's grace to come. Some examiner is very happy. Something went right at home also. Who knows? Right? He may end up giving you marks. Why do you care? Even if something goes wrong, examiner will have moderations and all in hand. If they notice that every other paper has gone well, this paper alone is causing a problem, they will pass you out. They will pass you out. That is how it happens. Okay. So trust the process is what I will say. This paper is tough, the subject is tough, the course is tough. But it is made easy sometimes by your efforts. By your efforts. Stick to that efforts is what my request would be. Clear, everyone? Yes. Since I have 5 more minutes, I'm just going to take 5 more minutes. I'm going to show you how the question answer sheet looks like. So just follow that answer sheet and then we can exit for the day. Come here, dog. Why is it not coming here? Yeah. Perfect. Yeah. So this is how generally your exam sheet will look like. Okay. This is an exact replica. It's not exactly the paper format. I just devised it. You can see on the top, my name is the book name and all is given. Okay. So this is some replica which I created based on what I had done in my exams. Okay. It's not an exact sheet, but pretty much the same. Pretty much the same. Now, please understand, when you are writing an exam of tax at least, when you're writing an exam of tax at least, you'll be given 4 booklets. How many? 4 booklets. You'll be given 2 MCQ booklets and 2 written booklets, each for DT and IDT. The same logic will apply in your other papers like FMSM, FM and Echo and EISN SM. Same logic will apply for all those attempts. You will be given 4 booklets, which means you will waste enough amount of time just to that color. Okay, and the MCQ booklet la ukand color panno baru, name ku color panno, idu color panno, adu color panno, ek bada time waste agum. Okay, so complete those colors faster. Complete those colors faster. The moment the paper comes to you, first sit and color those papers and then start. MCQ booklets porthariko, you know it is an OCR model, which means you need to color. You need to color, and my memory serves right. They don't permit you to color using pencils, so don't try that. Don't try that. Only black pens are permitted. Okay, you color through pencil, they will not recognize that. They will not recognize that. Sheet will not get recognized. So only coloring is with black pen, which means you are at a very risky position. You are at a very risky position. One small error you make on the color, you cannot change it again. You cannot change it again. No erasure, no nothing will work. Yes. So which means before you make a choice on the MCQs, please ensure that you know the final answer. If you are confident about the answer, then color. Otherwise, don't touch the paper. Please don't touch the paper. Yes. Yes. Coming to the return part. This is how your booklet will look like. If you have to enlarge it and show it to you, it will be like a page format. Okay, the size will be exactly like your ICI study material, same size. It will be the same ICI study material size for you, where they will have come and given you a margin on the left. Right side, they'll come and say don't write anything on the margin, and then there'll be a QR code. That bar code is basically the code of your paper, which gets to the examiner hall. The rule is very simple. You are not supposed to touch the last margin. You are not supposed to touch this margin. Both the margins are out of area zone. If they find out you using these margins, they will treat it as mispractice. You are not permitted to touch the margins. Mandatory, simple rule. Yes. Next, at any point of time, no matter how God bhakt you are, all this Om, this Jai Mata Di, nothing. These things are considered malpractice. If they find out that any single person has taken all these things, They will tell very clearly that you are touching religious sentiments. I'm sorry, you're trying to test the examiner's patience. Your paper will be immediately treated as malpractice paper and no marks will be awarded for it. So don't touch the paper. Don't touch the paper. No nonsense. At the same time, like Rahul, I wanted to still try something. I did double dash here. In the double dash, and the cross pandrathu, cross to check, bearer check, account pay. Nothing will work. இங்க சும்மா உட்கார்ந்துட்டு அக்கவுண்ட் பே செக் எல்லாம் எழுதுறது வேலை ஆகாது. Nothing. Any single impression on the paper is assumed as malpractice. Is assumed as malpractice. They will straight away reject your paper. No second thoughts. No second thoughts. Is that clear? Yes. Be extremely careful about this. Next, like I told, please avoid margins. Please avoid margins. Generally, if you notice, papers will have the question number and all right. People generally have the practice. They'll write question number 1 here. They generally write question. Now see, no, my pen is not working. Adanala ivlo kevama irukku. Now imagine if your handwriting is the same like this. What have you written? You don't know, right? Idhula, if you try and this becomes like this, then I don't know what you have written. Is this question of questioner? Is a question of 2? It looks like a Q to me. Yes or no? Yes. All these things do not work in exam. Okay. So avoid writing smaller things. You want the examiner to know that you have bloody started a new question. Yes or no? Use the page. Put it in the middle. Be open. It's ICA page. You have paid money for it. Write a big question 1, double underline. Waste page. Doesn't matter. Doesn't matter. Okay. Write it as clear as possible. Write it as clear as possible. Avoid the margins to the extent possible. Not a very healthy move. Not a very healthy move, because what will happen is some questions will have sub divisions. Yes. If you try here, you have written question 1, then you have A, then you have 4, then you come and write here 2, then you write B. Enge nikkuduna theriyala. Idu nee question number eludriya, provision oda clause, subclause, subsection, subclause, adula part rule, part B rule pottunu irukku theriyala. Yes or no? Yes. Avoid margins. Avoid margins. Let the examiner know extremely clearly what are you trying. Okay. If you tell him that it is question number 1, it is question number 1A. Very simple. You put question number 1A and close. That's all. As simple as that. No doubts about it. Yes. Here at least the examiner now knows that okay, you have tried question number 1A. Yes or no? Yes. Best way to do it. If you feel like you still want to do the margin, your choice. I don't mind to, but very risky. Very risky. Let's not do that. Yes. Same time, if you're trying to create all these accounts, tables and all, ledgers and all you're trying to create, don't use the space. No. Your ledger will start here and will end here. It will end here. Rahul, it's a very small space. I cannot write it out. Split the ledger. Split the ledger. Doesn't matter. Okay. I don't know. It looks difficult. The problem is what happens is nowadays it's a self-corrected paper. It's happening on a computer. So what happens is the computer is just like that swiping the paper. I don't think computer can understand portrait and landscape and all. So again risky. Again risky. Generally they will not give you such a question where there is multiple tables to create. What 10 columns? Like triple column cash book is foundation. What 10 columns will be there? Date and all is not going to be important. Next. For face value and all, how much space do you need? Very small. Quantity and all is small number. See, understand. Listen to me. I understand where you're going. Now understand the same example of investment accounts. You have date, right? The best way I can tell you is you put the year on the top itself before the ledger starts, which means now you only have to put the number, that's all, which means you need a small column. Particulars, adjust. Then you have face value, small column, because you need small number. Then you have quantity, small number. Amount porthu varaikum, if the numbers are very huge, but you know that the numbers are not in round off numbers, put it on the top, legend la potuko, in lakhs na potuko, avladhaan. Doesn't matter. Generally when it's a big question like this, ICA itself will come and put it in lakhs and crores only. They will not also ask you. Okay. It is adjustable, people. It is adjustable as long as you try it out. Okay. At no rocket science here. No rocket science here. You will be able to try it out. You test in some papers, you'll automatically understand what you want to do. Yes, this definitely becomes a problem for people who have big handwriting. I'm not going to deny it. People who have big handwriting, they will write in 2 lines like this. Then I don't know. Then it's your choice. In this recommendation model, what I generally recommend is leave a line and then write the next line. Waste ICI's paper, no one cares. Okay, leave one line and then write. If you feel like you are having big handwriting where it's going more than 2 lines, leave that nadu line and then start. Leave the nadu line and then start. Let it look like you're writing half a page. It doesn't matter. Okay, at least you're filling more pages. You will be more comfortable. Okay, but don't avoid cramping the paper, ma. Okay, it should not look like you have written something you don't know what you have written yourself. Okay, because if ICI does not, if the examiner does not understand what you have written, he is also not going to give you marks against it. Clear? Yes. Avoid using the margins. Keep it in the box. Keep it in the box. The margin is only for you to write the subdivisions. Which means if question number 1A has subdivision, that is for the left side. That is for the left side. அது மட்டும் தான் அங்க வரணும். அது தவிர வேற ஏதோ வந்தாலும் it is confusing for the examiner also, because please understand, no, you have put question number 1 there. Okay, அதுக்கப்புறம் your table is starting from here. If it's going till here, you have written some 2021 here. அது தெரியுதா? Are you able to notice that one? இதில் திடீர்னு this table got over, here itself you have put 2. Now what the hell should I understand from here? Yes or no? Yes. Please be careful about this. The more space you leave for the examiner to understand the paper, the more happier he will be to correct the paper. You put more crammed up nonsense for him, he will get frustrated, and the moment he gets frustrated, you will lose marks against it. It is not just your marks. The person after your paper is also getting the equal treatment because of you. Okay, so you have not just spoiled your life, you have spoiled someone else's life also. Because the mentality has become that way. Okay, and I know that because I have corrected your papers, I know. Yes, at certain point of time, I'll be very happy because the paper is going really well. And suddenly one paper will come. That time what happened? Immediately next person, I was supposed to give 4 marks. I'll be very frustrated. I'll give only 1 mark. I'm like, who are you to ask? The point is, at least here in exam class, you can come and ask me, Rahul, why less mark and all those things. Partiality panita, avanukku pathu irukka, enakku paaka maatigira. Okay, but in exam hall, nothing will happen. No one is going to look at it also. Yes, so avoid all these nonsense. Avoid all this nonsense. Try to adjust yourself. Try to adjust yourself. If you have a big handwriting, leave space and write it. If you have a smaller handwriting, no problem. Good for you. Okay, but avoid doing this. Avoid doing this. It will come by practice, ma. Yes, some people have this practice. They feel like 10 columns cannot be adjusted because they give quantity ke per column. Your mistake, no? Yes or no? Yes or no? Try that. Try that. Please do that. Yes. Next, after you have completed a certain amount of question, please leave a space. Please leave a space. Let the ICA examiner know that you have completed the question and you are trying to write a fresh question and he has to evaluate freshly. If he assumes that this is a working note of the previous question, no mark for you there itself. Yes or no? Yes. So when you have completed question number A, if you know that the question number A is completed, don't start here itself. Leave some space. Doesn't matter. Same page la thana irukku. Do you think ICA is going to fold the page and come and look on the top only? Avan motta page thana paaka poraru. If there is 4 lines left also, who is he going to bother about? Yes or no? Yes. So same page la, it doesn't matter. Leave some good amount of spaces so that at least the examiner knows that you're done with the question and you're looking at a fresh question and he has to look at it freshly. Yes. Because the biggest problem with ICA is if you have not got a paper corrected and a question is missed out, it is permanently missed out. It is permanently missed out. You will not be able to go to the examination hall or find the question paper, later on get the question paper, come and say, Rahul, point number 2 did not get evaluated. They will not give you a single mark. If they have done it in the first time, they have done it in the first time. Next time, they will never do it. There is a stupid concept in ICA where they come and say 500 rupees kurta, I will recheck your paper and everything. Onnu agadu. Onnu agadu. They will not recheck your paper. They will recheck your paper, but you will never score anything in it. Okay, so let's not risk it. Let's not risk it. Give some amounts of spaces. It doesn't matter. Please understand the 1,800 or 1,200. How much have you paid? Avlo pocha, sorry. 2,400 rupees, which you have 700 pocha. Nee late filing fee guttiya. Sorry, yedo or number. Yedo or number. 2,400, 2,100. Please understand that paper is not for you to come and appear in the exam. The paper is also for you to get answer sheets. Okay, so answer sheets is coming as a part of the package. So use whatever you can. Use whatever you can. I know all this save planet, save earth and everything. Save everything after you clear. Appo varaiku nothing is saved. Okay, you can save things only after you have money to save it. Until then you are still poor. Let's forget and talk from ICA perspective. Yes, so please utilize the page to the best extent possible at any point of time. Next and the most important rule, if the question is done, leave the page. Leave the page. Rahul, paadi page pending irukku Rahul, avule uttralama, ama uttru. Leave it. Leave it. Please understand, I don't know if you have the habit of reading the instructions which the ICA comes and gives. ICA oda instructions la irukku. They have come and very clearly come and said that every time you start a new question, you are supposed to start it from a fresh page. It is there in the rules. It is there in the rules. You have not read it. Okay. So if you have completed, I'll come. Yes. Basically, that's what they're coming and saying, which means I am in question number 1A. 1A has been done in 1 and 2. Has been done in 1 and 2. Paadi page pending irukku, no problem. Cut it out. You itself put a cross so that the examiner knows that you're not going to touch it. Then you come next one. You put 1B here. You put 1B here. Yes. 1A, 1B also in a new page. 1A and 1B also in a new page. Rahul, 1A kulle 1A 1 irukku. Then and all can be in the same page. That and all can be in the same page. 1A, 1B, 1C, 1D, all new page. 2A, 2B, 2C, all in a new page. Okay. Then please 1A inge, adukapro 2C, then 1C, then 1B, 4, 9, nothing. Question number 1 fulla complete pannu, 2 fulla complete pannu, 3 fulla complete pannu. 1 ku apro 5 poitu 2 varalam, that is okay. ஆனா 1 குள்ள 1 எழுதிட்டு அதுக்கப்புறம் 2 போறேன், அதுக்கப்புறம் 3 வரேன், அதுக்கப்புறம் 6 போயிட்டு 5 போயிட்டு ஒண்ணுமே புரியல சொல்லிட்டு எல்லாமே எழுதிட்டேன், வேணாம். Yes, complete a single sequence. Rahul, I don't know a specific subdivision, I don't know what to do. Leave a page. You come back later. If later on you're able to find the answer, great. If you're not able to find the answer, please don't let it go. Examiner paper kudukudhu, I mean before you submit the paper, please go to that specific paper and please cut it out, so that you tell that examiner that, sir, by mistake a page vitten sir, adutha page la edho irukku paathukonga. Okay, please understand. Now ICA may not fold it up to bottom, but they'll fold it left to right. Okay, avan eppadi fold panni paathan, if you have left this page blank, he will assume boss paper is done, ange utruvaru, which means adukaprom neenga 15 page elnalum appadi utruvaru, and suddenly you will open your exam sheet and you'll see only 5 marks has come to you because he left the page on the second itself. அவனுக்கு ஃபர்ஸ்ட் மார்க்குக்கு ஃபர்ஸ்ட் क्वेश्चनக்கு மட்டும் மார்க் கொடுத்திருக்காரு, அதுக்கு அப்புறம் மொத்தமா விட்டாரு. Don't do that. Please strike out at every point of time. Okay, that is why exam முடிக்கிறதுக்கு முன்னாடி அந்த last 10 minutes stop writing, go through your paper where and all you have left enough spaces. If you're not able to answer that space, please cut it out. Tell the examiner that, sir, by mistake விட்டேன், மன்னிச்சிருங்க, அடுத்த பேஜுக்கு போய்டுங்க. Okay, don't leave that page blank. You leave the page blank, you will lose marks. Is that clear, everyone? Yes, keep this in mind. Next, not for boys, especially for girls, pencil paper edutittu idu the end, goodbye, வேணாம். Okay, pencil and scale is only for you to create columns, not for you to create rows. Okay, in this paper enough rows are there, you don't need to put additional rows, not required. Okay, coloring and all veetla pannalam. Okay, Rahul, I'll carry 3-4 extra pens, one green pen, one red pen, one black pen, or multicolor pen vara paru, ipdi tattunnu irupanga. அந்த மல்டி கலர் பென் எடுத்துட்டு ஃபர்ஸ்ட் பிளாக்ல எழுதிட்டீங்க, அதுக்கப்புறம் திடீர்னு ஒரு ஸ்கேல் எடுத்துட்டு கிரீன் பென் எடுத்துட்டு அப்படியே அண்டர்லைன் பண்ணிட்டு, அதுக்கப்புறம் ஒரு பிளாக் பென் எடுத்துட்டு அப்படியே அண்டர்லைன் பண்றது, தென் அதுக்கப்புறம் தி எண்ட், குட் பை, ஹெல்லோ, பை பை, நத்திங். ஓகே, ஐ அண்டர்ஸ்டாண்ட் யூ மே ஹேவ் எனஃப் டைம், பட் திஸ் இஸ் நாட் ஃபார் எக்ஸாம். You qualify, then you create all posters you want saying I am a qualified CA, this and all, enna creative vechalum all after the exam. I know boys will not do so, adanaல comment பண்ண தேவையில்லை, அவன பேப்பர் முடிச்சாலே பெரிய விஷயம். He will, idiotic person will go to the exam hall and ask the other person pen kutru first. Those people are like that only. They'll go to the exam hall and they'll be like, "Dey, pen extra vechirukeda eludnoda exam." And then that time they'll come and say, "Oh, paper 1 inka accounts illa costing adu theriyaliye." Okay, so not for boys, purely for girls. Avoid all these people. If you want to do all this, it's in the last 10 minutes. Before that, please don't try it. You're wasting time, nothing else. You can use this time and efforts to revise the paper, review the paper, check the paper, understand the paper properly. Things will be better that way. Clear? Yes. So don't try all this. Doesn't work out in exam. At any given point of time, this is not fetching you marks, so you're wasting time on that. Okay. Every time which you have is important. Don't waste time. Yes, you have completed the paper early because you don't know anything. You're wasting time. Adanala pannittirukka. That's your choice. Yes. Last, probably not important, but just to clarify, don't feel fear to ask a supplementary. It's a good thing. Yes, waste how many papers you want, it doesn't matter. Keep on asking supplementary. My recommendation, keep on asking supplementary, not because it is going to help you in any way. It is going to torture someone else on the right side. That person has already sweated his pants off because you have asked him supplementary. He is already like, "Dey, na paadi paper mudikala, adukulla supplementary kettaru." Yes, that supplementary has already taken out your competition. So which means half the population is already gone. So you don't have to worry about it so much. Yes, don't worry. The point is, adukaga summa exam aarambichone first 5 minutes la ma'am supplementary. They will check your paper. மொத்தமா முடிச்சதுக்கு அப்புறம் தான் கொடுப்பாங்க. Okay, don't come and say question number 1A blank, 1B blank, 1C blank, 2A blank, 2V blank சொல்லிட்டு லாஸ்ட்ல போயிட்டு மேம் ஒரு சப்ளிமெண்டரி கொடுத்துருங்க, பார்த்தா மொத்த பேப்பரே blank-ஆ இருக்கு. Fill to a certain extent. The point what I'm trying to make is supplementary is free, but use it wisely at the right time. Okay, முதல்ல ஆரம்பிச்சா then they will know that something is wrong. Last வரைக்கும் வச்சா then they know too much you're writing. கரெக்டா நடுவுல நிக்கணும். 2.5 hours 2 ஹவர்ஸ்க்கு பக்கத்துல போய் அங்க போய் சப்ளிமெண்டரி கேட்டு பாருல, காண்டாயிடுவாங்க எல்லாரும். Because that time they are only coming to that phase. That time they are like பாதி புக்லெட் இப்போதான் முடிச்சிருக்கு, அதுக்குள்ள நீங்க கேட்டு பாருங்களேன். அங்க திடீர்னு இப்படி பார்ப்பாங்க, டேய் என்னடா இவ்ளோ முடிச்சிட்டாராங்க. There half the competition is gone because then they are like, oh you half a paper கூட முடிக்கல, கண்டிப்பா நான் ஃபெயில் தான் ஆக போறேன். அவன் அப்படியே விட்டுருவாரு. He will leave it there itself. He will lie down. He like போதும்டா இதுக்கு மேல தேவையில்லை. He will அப்படியே leave it off. That time you are writing the paper. See, understand, the very good thing about your November 23 syllabus at least is that half the people have already quit. Because most people have moved to May 24. Because they feel paper has become easier, it's become worse. No one cares. Okay, but they don't know. They feel it's easier. So they have moved to May 24, which means இருக்கிற காம்படிஷன்ல பாதி காம்படிஷன் ஏற்கனவே போச்சு. மிச்ச பாதி காம்படிஷன் நீங்க எலிமினேட் பண்ணிட்டீங்கன்னா என்ன ஆகும் சோச்சு பாரு. Think about it. Understand, what is ICA pass percentage? 16. கிட்டத்தட்ட 16. Yes, which means if 1000 people write 160 pass. If 1000 people write 160 pass, in the 1000 500 ஏற்கனவே இல்ல, because they moved to May. How much is left? 500 is left. And the 500 your classroom there will be some 100 people sitting. 1000 people how many are not writing? 500. So which means 500 are writing. And the 500 100 are sitting in your room. 100 are sitting in your room. You have already broken their confidence. Which means how much is left? 400. And the 400 ku ICA still has to pass 160. Yes or no? இப்போ நீ pass percentage யோசிச்சு பாரு. Difference தெரியுதா? The 16 has now become suddenly 40%. And now you are standing with a bracket of 40. Which is more better for you? Statistics work on those logics. Okay? Eliminating competition is not a bad thing. At the end of the day, you want to pass. Yes or no? Trust me, November 23 is the best attempt to pass. Because this attempt, the competition is going to be very less. Half the people have already given up. Okay, so the competition is going to be next to zero. In this attempt, if you crack it open, trust me, nothing can be better. Okay, best attempt to pass your exam, because in this attempt, if you pass, percentage is going to be skyrocket. Okay, you can score anything you want. No one is going to look at it. Okay, and at the same time, because it's the last attempt, you are expecting a little moderate paper. I'm not saying easy paper, moderate level ka varum. And be happy about it. Trust me, be happy about it. I'll tell you why. Last attempt, for those who understand, May 23, easiest paper in tax life. Bloody, not a single person scored more than 60. Every single person got 40, 50, 40, 50, 40, 50. Because I told when the paper was easy, you should have written better. You should have put in flowers on it, put fragrance on it, everything you should have done. They only gave 40 to 50 to every single person, which means the easier the paper comes, the harder the correction becomes. MCQ la dhaan vandirukkum vera adhaan micha correction paper varadu. See, because MCQ they can't do anything, it's a computer aided paper. Ana written paper la enna ago, they have all the rights to do whatever they want. Yes, understand, the paper the easier, the correction the difficult. The paper the moderate, the correction is easier. Okay, so expect a tougher paper this time. You write a tougher paper to the extent you know, it doesn't matter. The person who chooses to leave the paper because it is tough is definitely going to fail. The person who chooses to attempt the paper because it is tough will definitely pass. Because competition ஏற்கனவே போயிடுச்சு. Yes or no? Yes, when the competition has already fallen, the percentage is already increased. When the percentage is already increased, you're already in the pass percentage list. Yes or no? Yes. So notice your people on the left and right very carefully. I will tell you, at least for those who are writing ASSM, you will know. First 15 minutes, that's all you need. And the 15 minutes culture, you will see one head slowly falling. Not because they're dying, because they're lying down. 15 minutes is all they will take. Because in 15 minutes, the best you can do is MCQ, that's all. Okay, so MCQ they will shoot left, right, center because it's no negative marking. So they'll try all nonsense. அந்த 15 minutes முடிச்சதுக்கு அப்புறம் ஒன்றும் தெரியாது. ஸோ தேர்ஃபோர் அப்படியே பின்னாடி இருந்து ஆரம்பிச்சு அப்படியே பின்னாடி இருந்து அப்படியே ஹெட் வில் ஃபால் போயிட்டே இருக்கும். By the time you complete 2.5 hours, because what happens now, ICA has this rule that you cannot leave within 1 hour. 1 hour அப்புறம் தான் எழுக்க முடியும். So therefore they are like they have given up, they don't know what to do. So 1 hour வரைக்கும் வெயிட் பண்ணிட்டு இருக்காங்க, தூங்கிட்டாங்க. ஓகே, பிகாஸ் அடுத்த FM கூட படிக்க முடியாதுல்ல, அதனால தூங்கிட்டாங்க அப்படியே. Maybe they wouldn't have slept last day, they slept off here itself. Yes, 1 hour you wait, 1 hour half the heads are gone. Next 1 hour who's staying back is the one who are going to pass. இது லாஸ்ட் 1 hourல சப்ளிமெண்ட் கேட்கிறாரு பாரு, 100% pass. 100% pass, because you are that last 1 hour, you know the strategy. Yes, that point of time you crack open every single person on the other side. No, you are already winner. And I'm telling with no shame, as a faculty I'm not supposed to tell you that you should cheat the other people, you should make them fail. I don't care, enna vena paniko. Let I say come and call me and come and say Rahul surrender your membership, na kutruven enna vechiko. I don't care. Okay, I'm not bothered about the membership. For teaching me in for a teaching academician, the membership has no relevance at all. They tell me no Rahul, you surrender membership, next day I will start teaching full time classes. Enike nalla I don't care. Okay, so it doesn't matter. Eliminate competition, because at the end of the day you have to be the pass. You have to be the pass. There is one very simple rule which I come and say, be the 99% of this batch which is going to become the 16% of the world batch. Punjada. Yes, hey, there is always this 1% germ in every class. Adu nee onnum panna mudiyadu. Okay, Dettol madri 99% there will be head people. Another 1% will always be a germ. Ena try pannalo fail da aguvaru agumanga. How do you tell in female terms? Whatever it is. Yes, will happen. That 1% germ will happen, you cannot avoid it. For some reason it will happen. Okay, so I'm not promising 100% pass, I'm expecting 99. Okay, be that 99 in this batch which is going to become the 16 in the world batch. That makes a difference. At the end of the day you have to go along with your people, ma. Okay, it becomes very ugly when your people become the seniors and they come and tell you should study like this, you should study like that. Konjo mariya irukum. Okay, because nethu dhaan you would have said you would have gone together in a road kada and had Italy together. They didn't அடுத்த நாள் வந்துட்டு Rahul you should have done it like this, இப்படி எழுதினா பாஸ் ஆயிடுவேன், அப்படி எழுதினா பாஸ் ஆயிடுவேன். All those tips and advices is good from the faculty, not so very good from friends. While they have a true intention, I'm not denying it, but you will feel agitated about it. Yes or no? Yes. So let's not come to that scenario itself. No, why do you want to come to that scenario itself? Let's not get to that position. Okay, pass together, ma. Everyone go together and pass, come to finals, pass finals, and then open up a partnership firm, break the partnership firm also. Because see, half the people here are useless, that I also know. Okay, you all open partnership firm together, CA will go down. Because I have taught you tax, ma, nothing else. Adha prachana. You people at the end of the day will not come and do genuine CA. Definitely I know. Okay, every day you will open up a partnership firm, next message will come to me, Rahul, my client has come, asked me to avoid taxes, help me out. I'm like, dey enada. Yes, so I know you people will spoil the future only, but good for us. Yes, you spoil tax, I also spoil tax, we both will increase the income tax syllabus for our juniors. Just keep increasing the syllabus. Yes, at least it will be more pay for me, no, tomorrow I have to teach more to them. எல்லா பிளான் வச்சிருக்கேன்டா ஒன்னும். Anyway, point aside, please understand, careful about your papers. This is an important paper and this one paper can decide your future. Okay, so let's not be easy going on this paper. What and how you present this paper can decide your fate in life. Okay, so keep it as good as possible to the extent possible for the examiner so that he is feeling happy about it. Okay, make him feel proud and happy to correct your paper, because then you are definitely scoring even if you have written everything wrong. Enna thappa elnalo he has at least got an impression that no, this person knows. Maybe he's not given me the right answers, but he knows how the subject is, which means he is a qualified CA for me right away. Okay, and the impression mattum kuthitena porom. Adukaprom nee enna answer thappa elnalo you will pass. Same example, live example. Okay, so just keep that in sense. At the same time, create the impression from the very first page. Okay, writing a big page and then cutting it out fully, then trying once again, then cutting it out fully, then trying once again, cutting it out fully. You don't even know where to start from. Examiner is still wondering, engada pono? Abde pathine irukar. First page makes the impression. Okay, pick that question which creates an impact for the examiner right away. Okay, at the same time, please avoid picking that questions which will take hell lot of time out of you. Edthone Rahul amalgamation pannalam, consolidation pannalam, gali. You will end up doing the whole amalgamation and consolidation for 3 hours itself. Don't do that. Don't do that. While you may be confident on the topic, it doesn't matter. That topics are not to be touched. Okay, pick up the small questions. Pick up the small questions, the ones which are like 4 marks, 6 marks level questions. Pick those up, complete those up, be happy about it. At least every time you complete an Arno, you'll be confident that okay, 100 marks or 50 poids, 40 poids, 30 poids. You will have that confidence inside you. After 1 hour gets over, if you look at your exam sheet and you know you've written only 8 marks, imagine the kind of pressure you're going to build for yourself. Okay, so let's not get to that pressure also. It's a very ugly phase. It's a very ugly phase. That time you're sweating, everything is happening. ICL, where they'll give you the worst of the schools to go and write an exam. In that atmosphere, it'll be all sweaty. நீ போய் நவம்பர்ல எழுதும் போது கூட அப்படியே ஸ்வெட்டா இருக்கும். ஸ்கூல்ல அப்படிதான் இருக்கும். Okay, the examiner teacher also will come to you know, she'll also have a very weird face and everything and மாரியா இருக்கும். மாரியா இருக்கும். You're already entering the exam hall. You see your face, half the confidence is gone there itself. Yes, இதுல வேற that person will not come and give you the paper on time. 15 minutes later கொடுப்பான், கடைசில வருவோம். அதுக்கப்புறம் she'll go, she'll have a tea, she's talking to someone else. PT teacher அங்கல இருந்து வந்துட்டு hi ma'am, how are you? மர்ஸ்டா இருக்கும். Yes, அந்த அட்மாஸ்பியர்ல நீ போய் எழுதும் போது உனக்கு அந்த பிரஷரே வேற மாதிரி இருக்கு. In that you are not completing a paper on time, pressure is not required. Okay, at least you be confident about it. Yes, so pick the papers and try to complete the good amount of time in that time frame. Okay, so that every time you complete the paper, you are having a certain amount of confidence that you still are on track. The moment you lose track and the moment it goes for a toss, pressure will build. That pressure layer, you will start spoiling your handwriting, you'll start spoiling the presentation, you'll start spoiling your paper, you will take unnecessary pressure on your head and automatically the next attempt will take a toss. Yes, let's not do that. Let's not do that. Clock your time properly, people. Carry a watch with yourself. Carry a watch with yourself. The rule is very simple. Every mark carries 1.5 minutes. Every mark carries 1.5 minutes. Take a stopwatch, put it on, and then wait for that 1.5 minutes for 8 marks, which means almost about you can take 12 minutes something. Maximum 13 minutes. அதுக்கு மேல போச்சா, leave the question. Doesn't matter. Rahul, பாதி answer தான் pending இருக்கு. Rahul, முடிச்சிருவே Rahul. Doesn't matter. Leave it off. Understand, and the பாதி answer will only carry you 2 marks. But because of that பாதி answer, if you're spending another 15 minutes, you're losing 8 marks somewhere else. What is more important? 8 marks. Yes, the 2 marks is not going to fetch you anything in life. That 8 marks will fetch you your pass. Yes, so please clock yourself properly and understand where you are taking time. Leave that question there itself, move to the next one. Anyway, when you come back, you'll have half an hour in hand. That time you can have that pressure in your head and that time you'll do faster. Understand, right now, அந்த பாதிக்காக you will sit and analyze. ராகுல் இப்படி பண்ணா அப்படி இருக்கும், அப்படி பண்ணா அப்படி இருக்கும், இப்படி பண்ணா அப்படி இருக்கும், இப்படி வச்சா அப்படி இருக்கும், இப்படின்னு assumption எழுதலாம். அந்த half an hourல இன்னும் assumption வராது. That time you will be like, டேய் முடிக்கணும்டா சொல்லிட்டு அப்போ that you will write only one assumption and that time you will complete that extra 15 minutes in just 1 minute. Imagine the difference. That same 2 marks which you could have fetched using 15 minutes, now you're fetching it using 1 minute, which is better. 1 minute is better. Yes or no? Yes. Do not waste time on doing things which are not required for you. Make that rule. Very simple. Yes. And that practice will only come if you start right now. Start right now. Take some mock papers. Try to clock yourself. 3 hours, full stop. See how much you're completing. If you're not able to complete on time, stop. Where did I go wrong? Which question did I take time? Stop there. Okay. Plan yourself, people. Plan yourself, people. This is a small, short tricks which generally rankers use. Yes. Now, while rankers use it to get rank, others can use it to pass. Try either ways. But these are some small things which you have to keep in mind. You try this much, you will automatically pass. There is nothing stopping you from that. Okay, the half the reason why people don't pass: one, they don't prepare properly. Second, they're wasting their 1.5 days wasting and doing just one revision. You have to unlearn something and relearn something. Imagine doing that in one revision. Will it happen? Will not happen. Right. Third mistake: while they know everything, they have not sat and prepared for the application of the sums properly. Fourth mistake: you sat in the exam hall, you know everything, you know how to apply, but you're wasting too much time on every single question. You're not completing your paper. Yes or no? Yes or no? Fifth mistake: going to the exam hall hungry. Don't do that. Don't do that. Yes, I've seen a lot of people, Rahul, pressure la ratriye thoongla. Full night we were studying. Enda kaala vanda, no breakfast, no lunch, no nothing. Yes, don't do all that. The moment you do all those things, you're automatically losing your patience. Please understand, empty stomach, you will not be able to think properly. Okay, the moment that happens, your exam will automatically fail. Okay, go with a certain amount of food in your stomach. It's important. At the same time, please don't overload it also. Okay, andanaal now paper nalla pogano solittu or periya or 50 meals சாப்பிட்டிருக்கேன் வேணாம். Yes, the moment you try that, You will feel sleepy in the classroom also. Okay, so that is also not required because on the atmosphere அப்படிதான் இருக்கு. Okay, no AC is working, fan is only working, you will definitely sleep off. Definitely sleep off, so let's not do that also. An adequate amount of food is enough. At my recommendation, avoid rice. My recommendation, avoid rice because rice is the problematic area. Rice is the area where you sleep off. Okay, chapati or what else can you have, ma? Idli or dosa, or if North Indian people, whatever, roti, sabji and all those things. Rice mattum avoid panunga. Rice generally you don't know. When you take a rice now, you don't know what quantity to eat. Okay, so quantity poite irukum. Okay, and then you will overload yourself, you will lose there itself. You lose there itself. So let's not do that. Last recommendation, the reason why people fail, you take it on your heart that one paper went wrong. The moment you take it to your heart that one paper went wrong, next paper will go wrong. Because you don't know what is going to happen with this paper. Forget it. You tried your best. Yes, yes. Let's go to the next paper. Let's try it out. Who knows, maybe because you did that paper well, this paper will get moderated enough. Okay, instead of that, if you sit and you bug about it, Rahul, no, it did not go well, it did not go well, I did not prepare well, let me not write that attempt, let me not write that paper, you will realize that by the time the answer sheet results come to you, that paper you would have passed. And that day you will feel for it. That Rahul, maybe if I have written the balance papers, I would have passed. Yes or no? Yes. Fight till the end. Fight till the end. That's where the issue is. That's where the issue is. You sit and you fight till the end, you will pass. Okay, maybe for some people it may take more than one attempt. I'm not denying it, but eventually you will pass because that's how warriors are. Yes or no? Yes or no? Yes. If you had wanted to lose in battle, you would have not come to today's class. You're trying to fight the battle. Yes, which means you're already at a step where you don't want to give up. Continue the pace. No, what is the issue? Maybe one attempt, maybe two attempts. At best 3 attempts. If something is going beyond 3 attempts, then something is wrong, definitely wrong. Maybe you're some preparation issue. Maybe some preparation issue. Until 3 attempts, it is okay to fail. I mean, it's not a good idea, but definitely it's okay to fail. Okay, if you're able to pass in first attempt, even better for you. But if you're not able to, it doesn't matter. Try one more. 3rd attempt, you should pass. 3rd attempt also, nothing is happening. Hold, stop, relax yourself and understand where you're going wrong. What is that one thing which you probably missed in that 5 things which you discussed? If you try to answer that 5 issues, you will find where you're going wrong. The moment you find that out, you answer that issue, 4th attempt, you will pass. You will pass. Trust me, this is not a group or a course which everyone will fail. I've never seen people do that. I've seen people clear after 16 attempts, 17 attempts and all those things. I'm not telling you take that much time. Okay, but please understand that 16 and 17 attempts, maybe they realize their mistake. Yes or no? Just that it took a slow realization for you. Do you really want to wait that long? Start right now. Start right now. Yes, yes. Every step, realize what the issue is, start over, complete it off then and there itself. Let's not keep waiting and think that no, Rahul, what I did was right. Maybe I said it wrong. No, you did wrong, you failed. Maybe I said it wrong, but you still did wrong. Yes or no? Because if I say pass to someone else and you still failed, then someone else did something better than you. So even if I say it's done wrong, he has done wrong for everyone. And on the everyone, he has done better than you. Yes or no? I always told you in this CA course, while it may seem that you're fighting your own battle, at some point of time you're fighting someone else's battle also, because someone else is trying to win a race better than you. Yes or no? ICA has already determined that there is a pass percentage, which means there is a list of 16 persons which has to pass. Now it's your choice whether you want to be the 16th person or the 17th person. You become the 17th person, you're anyway failed. You try to fight him out and you become the 16th person, you'll automatically pass. Yes or no? No one is expecting you to get a rank and all. No one is expecting you to get an exemption. If you can become capable enough to do it, please try it out. Please try it out. But if you are already at that stage where you want to pass, do better than others. Simple as that. If you can do better than others, you will pass. That's what the logic is. And doing better than others is not by going to him and telling you don't write the exam, you fail in the exam, you tear his paper. No. Scare few people. Sit in your exam. And when you see someone else doing better, you try to put effort more. Okay, that one small effort which you take extra beyond someone else, that is what will help you better. Okay, now that extra effort, I want to recommend it to most of the people. For some reason, there is this problem in this course where someone thinks that extra effort means studying for 20 hours, 22 hours and all those things. No. Extra efforts does not mean that you have to sit for 22 hours. If you sit for 22 hours, you will pass. If you sit for 5 hours, you will not pass. No. Okay, how many hours you sit is not going to impact you in any way, because the person who's sitting for 5 hours is probably doing only those topics which he doesn't know, and the person who's sitting for 22 hours is wasting time on doing the topics which he already knows. Is it impacting? No. Yes or no? Yes or no? So you are just wasting time. You're just wasting time. Don't come and think that one person is sitting for 22 hours, therefore he's passing, he will definitely pass. I am not sitting for 22 hours, so I will fail because my parents told me. Some person who has cleared after 15 attempts is coming and telling me, oh, 20 hours உட்கார்ந்தா தான் உனக்கு பாஸ். அவன் first 15 attempts எடுத்திருக்காரு, அவனுக்கு எது கேட்கறான்? If he was sitting for 20 hours, he could have sat in the first attempt itself and got it, no? 15 attempts கழிச்சிட்டு 20 hours சொல்றானா என்ன யூஸ் அவனுக்கு? Yes or no? Yes, I can come and tell you, I have not sat for more than 5 hours. I have passed first attempt everything. Does not mean that you have to look at me. I'm telling you, sit for what makes you happy. The moment you feel in that day that things are going short, stop. Stop. It's okay. It's okay. Rahul, target இன்னைக்கு அச்சீவ் ஆகல, பரவாயில்ல, அடுத்து பார்க்கலாம். Don't sit beyond what is making you sad. The moment you sit for it, now it has become an obligation. The course was never started with an intention of obligation. Yes or no? Everyone came in this course because you had a goal in mind. You had an achievement in mind. You had a certain happiness when you joined the course. Is there anyone here who's coming and telling, I did it because I wanted big dowry, because my father is asking for it, mother is asking for it? Everyone came with their intentions. You came with the intention that you want to clear with a happy face and you want to become a happy person. Yes or no? Continue that phase. Continue that phase. The moment you feel like you're getting sad, stop. Stop. Something is wrong that day. Maybe the day is not good. It's okay. Skip the day. Go for a walk, talk to your friends, chill out, talk in music, do whatever you want. After a few hours, if you feel like you're getting happy, start over again. If that is also not happening, stop, no problem. Next day, try another subject. Maybe see if that subject makes you happier. If that is also not happening, then you're worse useless. Hey, then you cannot do anything else in life. Okay, எல்லா சப்ஜெக்டும் உனக்கு அப்படி தான் இருக்குன்னா அப்படி அந்த எதுக்கு கோர்ஸ் பண்றேன்னா சொல்லுங்க, அவ்வளவுதான். Okay, at some point of time, you will come to that phase where you will realize that, boss, you are getting happier. You are getting happier. Stick to it. Stick to it. At the same time, don't come and say, Rahul, only accounts is making me happier, tax is not making me happier, அதனால படிக்கவே மாட்டேன். அப்ப நான் fail தான். Okay, at some point of time, you have to come to that phase also. Yes, the point is, don't stretch beyond what makes you happy. You are then coming to an obligation phase. Now you are not using your whole efforts also. You are then sitting for what you could have completed in 1 hour for 10 hours. And then you're trying to show off to the market, coming and saying, I've done 20 hours, 22 hours, but I've still not passed. It doesn't work out. Clear? Clear? Sit for the time which makes you happy and sit for the time which is effective enough. Okay? You have decided yourself that, Rahul, today I have to complete taxation or a marathon plus or a chapter test. You complete marathon, you complete chapter test, the day is over. Now, whether you completed the marathon in 4 hours, 10 hours, 12 hours, 24 hours, 68 hours, doesn't matter. You had a target, you achieved the target. The day you achieve the target, stop the target. That's all. Don't take beyond what is required. Okay, அந்த நாளுக்கு நீ யோசிச்சிருக்க, ராகுல் நான் இதுதான் பண்ணுவேன், இது முடிச்சிட்டுனா அவ்வளவுதான் காலி. Be happy. Spend the life. Spend the day, sorry. Spend the day. Yes. Rahul, no, I should study something else. Maybe I can be proactive. I have not achieved my target. No worries. You have already made a plan. Let's not spoil the plan. Yes or no? Yes. At the same time, if your plan does not get achieved, tomorrow you have to take a little more efforts. Try to complete that thing faster so that you can achieve this target also. Carry forward effect appdi agum. Yes, but do not sway away with the fact that the course is tough, so I have to study for 20 hours. Pannalana kaste, இப்படி பண்ணா அப்படி பண்ணா, சீனியர் எனக்கு எப்படி சொல்லிருக்காரு, ஜூனியர் எனக்கு எப்படி சொல்லிருக்காரு, ஒரு லாங் டிஸ்டன்ஸ் ரிலேட்டிவ் டெல்லியில இருந்து கால் பண்ணிட்டு இப்படி தான் நீ படிக்கணும்ப்பா, இப்படி தான் வரும்ப்பா, இப்படி தான் பண்ணணுமோப்பா. Nothing. Okay, you know what you have done better. If you have come till the level of inter, it means you have cleared 12 years of your schooling plus 1 year of your foundation. Yes or no? Does someone else have to come and tell you how to read for your exams? Hello? No. You now know something about your life. You now know how capable you are. Maybe you are capable in practical, maybe you are capable in theory, maybe you are capable for both. Maybe you are useless in all. You know yourself better. Someone else's strategy is not going to help you in any way. Yes, you decide how you want to study, you decide how long you want to study, you decide how you want to go forward. Clear? Everyone? Yes. Last 1 more month, avoid wasting time in other things which may not be fruitful enough for you. Okay, too much going outside, too much talking to friends, too much chit chatting and all is a good idea if it is productive. Talk to your friends to the limited extent of you studying. Rahul, what are you doing? What's your target? Have you achieved your target? How is it going? Compensation colors of this level is okay. Beyond that, இந்த மூவி பாத்தீங்களா, அந்த மூவி பாத்தீங்களா, இங்க போலாமா, அங்க போலாமா, இப்படி பண்ணலாமா, அப்படி பண்ணலாமா, அந்த ஃப்ரெண்டுக்கு இப்படி ஆச்சுரா, அவனுக்கு கேர்ள் ஃப்ரெண்ட் விட்டு போயிட்டாங்கடா, இவனுக்கு டம்ப் ஆச்சுரா, இவனுக்கு செகண்ட் கேர்ள் ஃப்ரெண்ட் இருக்குடா, வேணாம். Everything can be discussed after November 15th, 17th, sorry, 17th. Everything can be discussed after November 17th. No world is going to change because of you. நாளைக்கு நீ ஒரு gossip பண்ணனா எதுவுமே ஆகாது. Okay? No worries. No worries. Hold the discussions. After 17th, when you go for a big party, that time you discuss all these things, no big line will happen. That day you will have bigger things to discuss. So லென்த்தியாக போகும் பார்ட்டி. எஸ் ஆர் நோ? இப்போ பேசிட்டு இருந்தால் அங்கே பார்ட்டியில் ஒன்றும் பண்ணுறதுக்கு இருக்காது. Then you will sit and booze only, nothing else. Yes or no? Yes. So hold discussions, it's okay. 1 month, dedicate this 1 month. I'm not again I'm telling you, don't mistake me when I come and say dedicate meaning Rahul sit study. No. Chit chat limitedly to the extent it is helping you grow. Walk to the extent it is making you happy. Listen to music to the extent it satisfies your anger. Beyond that, study. And only study. Yes or no? Yes. Don't avoid your sleeps. Don't avoid your food. Don't make pressures on your head which is not helping you in any way. Okay? You may have all the pressures in the world. At the end of the day, you are some stupid, innocent, immature, 21 lesser year old kid. If you think your life is going bad, trust me, you are doing nothing in life right now. We are at a worse position right now. I can tell you. Okay, imagine myself, no, starting at 6 in the morning, ராத்திரி வரைக்கும் கிளாஸ், அதுக்கப்புறம் ஆஃபீஸ், அதுக்கப்புறம் இது பிரச்சனை, அது பிரச்சனை, வீட்டில் இந்த பிரச்சனை, அந்த பிரச்சனை, இது காசு வரல, அதுக்கு காசு வரல, இதுக்கு சம்பளம் வரல, அதுக்கு பிரச்சனை. Everything is going on in life. Okay, I have different stories to tell, but I am not coming and showing my face to you. Have I ever come and told you, Rahul, I'm sad in life, nothing is happening in life, feel me, sympathize me? Nothing. Okay, doesn't matter. Trust me, you are at a very good position than what you are right now. Okay, you had to study 8 subjects once in life. I had to come back after 6 years and study 3 more subjects and take classes for you. Imagine my fate. எப்படி இருக்கும்? For 6 years I have taken one subject, திடீர்னு வந்துட்டு ஒரு 3 சப்ஜெக்ட் கொண்டு போட்டுட்டு ராகுல் இந்தா படிச்சு சொல்லுனா எப்படி படிச்சு சொல்லு? ஒன்றும் தெரியாது. Yes, understand. Things are going very difficult for everyone else also in life. Things are very good for you right now to what you are having right now. Okay, இதில் உட்காந்து டிப்ரெஷன் எடுத்துட்டு ராகுல் இது ஆகலை, அது ஆகலை, இது பிரச்சனை, அது பிரச்சனை. It's okay. It's okay, doesn't matter. பார்த்துடலாம். கஷ்டம் இருக்கா, இன்னொரு அட்டம் பார்ப்போம், பரவாயில்ல. ஓகே, இதுக்கு மேலே உட்காந்துட்டு ராகுல் சும்மா வரல, இது வரல, அது வரல, இது பிரச்சனை, அந்த பிரச்சனை, வேணாம் ராகுல், ஊரே வேணாம், வயிறே வேணாம், ஆளே வேணாம், எதுவுமே வேணாம். Don't require all those things. Yes, be chilled out people. Life is happier that way. Okay, the one reason why I keep marathons during the last 1 month, no, because I know people have already gone down. Okay, அதுக்கப்புறம் இங்கே வந்துட்டு அட்லீஸ்ட் you'll have a happier face. அதுதான் என்னோட இன்டென்ஷன் இருக்கும். அது அட்லீஸ்ட் when you go out of the exam room, no, I mean, you know I'm wasting time right now. You could have used this time for doing better things in life. I know. நானும் அப்படி தான் இருக்கேன். எனக்கோ பண்ணுறதுக்கு ஏதோ இருக்கு. I have too many things to do in life, but I'm also wasting time because I'm also feeling something right now. Okay, the reason I'm standing here right now wasting time with all of you is because I feel like the wind is very low right now. Okay, and the wind ஏத்துனால at least something will be happier. That is why I keep marathons in the very last month, because I feel like that one last month, no, everyone has gone down. Everyone is like, Rahul, this is going wrong, that is going wrong, I don't know what to do, help me out, give me motivation and all. What motivation should I give you? Go fail தான் சொல்ல முடியும். அதுக்கு மேலே I don't know what motivation do you expect from my side. இதுக்கு மேலே நான் என்ன சொல்றது சொல்லு? இவ்வளோ டைம் வேஸ்ட் பண்ணிட்டேன் பாரு, 5:30 ஆச்சு. இதுக்கு மேலே நான் என்ன தான் மோட்டிவேஷன் கொடுக்க முடியும் உனக்கு? Yes, the point is I always feel like this at this point of time now, if you're going with a certain happy face right now, because you're hearing nonsense from me only right now, and the nonsense is lifting your spirits right now. In the spirit lift பண்ணிட்டு, if you can go for the next 1 month, no, life is automatically sorted for you. Yes, 2 days you'll be happy with my spirit, 3rd day you'll automatically come down to the same pace. Then I have to again call you for a second marathon. Why? Right. That is why this time what we decided, no, this time we told boss other faculties will also come and take marathon. Okay, so next Saturday FM போட்டிருக்கோம், அதுக்கு next Saturday SM போட்டிருக்கோம், எப்படி வேணா போட்டிருக்கோம், எல்லாமே போட்டிருக்கோம், because we are like, boss, the more you keep coming to class, no, more you at least you'll be engaged, but not required. We don't want to do that. We don't want to do that. One marathon enough to lift your spirits. Okay, நான் மட்டும் பண்ண போறோம். Yes or no? Yes. Continue this pace, people. Have a happy face right now. I see so many happy faces right now. Let's continue with the same happy face. No, life will be easier. Yes. After exams, come back, chill out, come and tell me, Rahul, life went well. 1 month we did enough in life. Everything wrote well. Maybe we'll pass, maybe we'll not pass. It's okay. Let's come for a cup of coffee. Let's discuss together. If something goes wrong, I'll come and tell, no worries, boss. My friends are going in another academy. I mean, my friends are already there in one more batch. Come and join me. Let's talk together. It's okay. Okay, some small changes are there here and there. Let's discuss about it. That's okay. Okay, ideally I should not do that, but yeah, it's okay. Yes, it doesn't matter. Doesn't matter. Doesn't matter. Just chill out in life, enjoy life, but at the same time be serious about what you're doing also right now. Okay, don't too much chill out also. Don't too less chill out also. Okay, equal balance in life is important, because understand, CA at certain point of time is important to pass, but after a certain point of time your social life is also important. Okay, if you keep on just studying, nothing will happen. If you don't study, nothing will happen. So therefore maintain the balance. Maintain the balance. Everyone in the CA industry is passed, But certain CAs are those kind of serious bloody burgers, nothing doing in life. Okay, all serious in life, no friends, no social connect, no nothing in life. They're summa sitting in one room of the CA office and then they're doing their work all over. They cannot grow, okay, because they don't have people skills and they cannot become a manager. Okay, you can make a choice where you can become a CA just to keep doing the base level job, getting the 10 lakh salary for life. Or you can decide to become a CFO of the company, get 1 crore salary by doing nothing in life. Because his job is not to work, his job is to manage. Yes or no? Yes. So too much studying is also not helping you. Have some people skills. At the same time, too much people skills is not helping you because then you have not passed. Yes or no? A CFO is a person who is qualified CA but does not know too much also. He is neither a non-qualified, he is neither a non-people skill. He is neither non-qualified, neither a non-people skill. You have to be a correct, perfect balance. Okay? Enjoy life to the extent possible. Be serious to the extent possible. Both are important in life. Enjoy to that extent also. Okay. The people whom you have in your surroundings right now are the friends you're going to get with your life. Okay. These people are the one who are going to be with you forever. Okay. Because somehow in this industry, what happens is your junior becomes your senior becomes your junior. Okay. That every combination happens. Okay. So some point of time, the people whom you keep along with you, if they keep passing along with you, some reason you get the special connect with them while you hate them differently. You still hate them. You will hate them to the core because every time in the class they will be like different people only. Okay, that person will come and say, boss, sir test irukku, sir paper irukku, idu irukku, enna gaanda irukum. Okay, but eppadi indalum when you pass along with him, at the end of the day, the batch student, that friend will be that person whom you will always close to your heart. Okay, because even though that person was a nerd for you, when you qualify that CA final along with him, that day you will come and chit chat with him and that day you will become the best of his friends. Okay, because for some reason that's how something special about our course. We create that kind of building connect. Okay, so keep your friends along with you close. I'm telling this because I lost all mine. Okay, it's very unfortunate because I was the kind of person who chilled out and spoke to people to the extent I was there in the course. The moment I completed and I qualified, everyone else failed. So I blocked everyone off. And then now they passed and now they try to connect to me. I'm like, you have become my junior. I'm sorry. It hurts very bad because when they come to me, I also feel very bad that I'm doing that. But for some reason, I have an inflated ego, man ego. Can't help it also. Okay, so therefore I'm coming and telling you what I could not do. Let's not become the next Rahul is what my recommendation is. Okay, chill out with your friends, people. That's important. It's important. These people will carry for you. Okay, at the same time, male, female, or on the gap, vecha okay. Okay, if you have some bonding, that's a different story. Okay, don't force it upon them. That's what my recommendation is. Okay, for a certain amount of bond you keep with them, that's a good thing. But don't force it upon them. Don't force coming and saying you also CA, me also CA, let's CA. Okay, mutual consent is also important. At the same time, keep your friends close, people. These are the friends you carry with yourself in life. Okay, these people will make a huge impact in the future because you don't know when you will be needing them. At a certain point, when you feel like you want to do practice, these people will be the one whom you will have more trust because you have seen them over the while. Okay, at a certain point of time, you will be looking for a job and you don't know where to look for. These people will be working somewhere else where you might be able to get a job better. This will happen the other way around also. Okay, you never know where this useless person will become important for you. Okay, so on the Hindi level comedy solvanga. When required, even you have to make the donkey your god. Okay, other than logic. Okay, I'm not saying they're donkeys, but yeah. Yes, keep that people close. Okay, have that social build, have that social connect. Keep this 1 month importantly enough for you. Enjoy life to the extent possible. Clear exams with a happy face, and then come back in CA final with a gooder spirit because CA final is even worse than what it is right now. Okay, you have better things to or worse things to look at in CA final. So get through this phase faster so that you can enjoy that phase also better. Okay, because your new syllabus has become even worse. 2 வருஷம் articleship, 6 paper, ஒன்னும் படிக்கிறதுக்கு இல்ல. Everything is worse. எல்லாமே லாஜிக்கலா பேசுறாங்க. லாஜிக்னு அவனுக்கே தெரியாது. Okay, so things are becoming worse. So clear this fast so that you can enjoy that phase of life also better. Okay, இது போயிட்டே இருந்தா அதுவோ போயிட்டே இருந்தா then there is no use. Then you are only waiting life and waiting life and waiting life and waiting life. What do you want to do with that life? Yes or no? Yes or no? Yes or no? Yes, போறோம். இன்னைக்கு போறோம். நானும் கொஞ்சம் டயர்ட் ஆயிட்டேன். Yes, let me end for today. I don't think there is anything else to discuss on the marathon. Yes, all done. Perfect. We are not discussing the 115 BSc part because I think we've already covered it in the syllabus. Okay, we've already done it, so you can cover it from your side also. For those who want the PDF, it is already there in the group also. For those who already have your own books, please follow the same books. Try to practice more and more chapters or test papers in the next 1 month. Strong yourself right now so that in 1.5 months you only have to revise for your exams and you crack it better. Yes, everyone? Perfect. I'm wearing a good amount of blazers and I feel a little happy, so I'm going to take a group picture with all of you and then we can exit for the day. Yeah. All right. Thank you, everyone. Have a great weekend and all the best for your exams.